early. Come on, wake up now. Pour that coffee down your throat hole. It's hot. Now you got a hole in your throat. Oh no, just call your boss. Take the crust from out your eyes. So tasty, not a coffee.
Good morning, you knuckleheads. Happy Monday to you both.
Hello.
Hola, Thomas.
Hola.
How are you, my friend?
How was San Francisco?
Awesome.
Yeah, I saw the pictures. Looked like a great turnout.
Huge turnout.
Yeah.
Standing room only. It was good. And the BART system was down.
I saw that Brittany tweeted that out. I saw that. What happened?
They pushed out a software update Thursday night.
Oh, no.
And they actually broke their public
They bricked the system.
Yeah, they did. They did. We were getting emails from people. They're like, we can't get there.
Oh, that's sad.
In San Francisco, a lot of people that come in from like the suburbs or surrounding areas, they
Sure.
want to take the BART in.
Sure, of course.
So that was kind of a bummer. The facility was great. It's the best. It was probably the best facility we've ever had in San Francisco. Really
Okay.
good screen. And
The screen was awesome.
Yeah.
Sosnoff was on fire. He only made like 4 mistakes that I had to fix. It was great.
and we made a little bit of money. We
the
had some
trading
fun.
was good?
Oh yeah. We did a bunch. I don't even know how many trades we made. A lot, probably like close to 40.
Wow.
And then we even made a little money, and
We laughed a little. We cried a little. The
Yeah,
audience was.
it was a really good
engaged.
crowd.
It was a lot of fun. Nice
Yeah.
conversations before and after.
That's good. I think we got some pictures. I think they're working to get put up here, maybe.
well, Garrett was there.
Yes.
There's one trading group that came. Look at those guys.
First of all, love the matching fits. Love the representation. Oh,
Yeah, that's a trading group. That's
She came all the way from Australia to see us.
She was,
wow.
she was go back.
And she's standing there with the dingo.
Go back one slide. Go back one slide. Go back 2 slides, Beth. One more. So that woman, I forgot her name.
Okay,
but
great.
She flew in from Perth.
From Perth, Australia, down under.
Perth is-
Sally.
Sally.
Yeah.
She's
Perth,
wearing a name tag.
I can't read it from here.
Okay.
Perth is a long way.
You have eyes like a hawk.
Super nice woman.
That's amazing. But I guess I guess San Francisco's closer to Australia than the other coast, so
Who knows?
still a long flight.
Perth is far.
Yeah, that is far.
Never heard anybody say anything but great things. That's Craig and Vince. They were helping out the show.
Why is your
CBOE and
quant so
CME.
jacked?
That. Why the show? There we go. There's Tony.
Look at me, intense. Look at the focus, Sosnoff.
Oh
Look
my-
at the focus, for crying out loud.
That's scary. This is me trying to explain to you how to trade. This is me more trying to explain to you more about trading.
And we can't explain anything about trading to them.
Yeah.
There's the crowd.
Who had been at that venue before?
A million bands.
Okay,
Like-
that's cool.
Yeah, it's a really nice venue. Yeah, huge crowd. You can sit there. Who else? Next
It's a
stop.
great time.
Next stop, New York City. And yeah, it was fun. I also did an event on Thursday night, like a private, event.
I'm your private dancer, dancing for money.
It was in Walnut Creek, which was really nice and it was fun. But I missed the Peking duck dinner.
Oh yeah, Ben, how was the Peking duck?
Well, Tom wouldn't know because he wasn't there.
I
had
said
to do
I
all the
missed it.
ordering. It was amazing. It was the best Peking duck I've ever had. I'm going to say that just because Tom
Liar.
wasn't there.
Was it good?
Doesn't matter.
Was it really good? Was it legendary?
The Peking duck was excellent. We had a sea bass that was, in my eyes, was the best thing that we had there. We had a chili with these hot peppers on it. Sadler, did I ever show you the picture of it?
No, you didn't show me. You're not usually like a food picture guy.
But it had these Szechuan peppers, like peppercorn in it.
Yeah.
That numbs your mouth.
Yeah.
It was crazy. It was unbelievable. It was good. It was awesome. It was very, very nice. It was a great meal.
Yeah, no,
So-
San Francisco's Chinese food, it's legit.
Yeah,
And you know what? I knew it was going to be a good meal because we had a round table with a lazy Susan in the middle.
Oh
Have you
yeah,
ever-
that's how you
table-
know.
Yeah, with
Yeah,
big
I didn't-
people, with a big group, 10 people, that's the best. Round table, you can talk. It was fun.
I didn't
It
have
was
any
nice.
food in San Francisco.
I'm sorry, what? You didn't eat the whole, you just had a can of air? Like, what?
I had a can of tuna fish. No,
Are you a street cat? What?
my only meal was at the Pinecrest Diner for breakfast with Tony,
How did you not? I don't understand any. Like, something's not checking
which
out.
is really scary.
You didn't eat at the airport on the way out?
Yeah, I did.
Okay.
But what's really scary is that I've been to the same diner in San Francisco because it's next to all the hotels we always stay at.
Yeah.
Like probably like 20 times.
Okay.
24 hours a day. But other than that, I
I
didn't.
love a 24-hour diner.
Yeah, no, that's good.
Yeah.
Other than that, I didn't have any. I didn't go out to eat in San Francisco. But
Well, that's just poor planning on your part.
no, I gave a show.
Okay.
I gave a speech, and then that was fun. And then Friday we got home kind of late.
Did you flight delays or
did.
just?
No, it's just a long trip back.
Yeah, that's true.
It's a long round trip to San Francisco and back.
Yes.
Yeah, so we didn't get home until kind of late Friday night. So
And it's hard because of all the time zone changes
Yeah.
for your body. Yeah.
but we were busy. We went out last night. We went to dinner
You went out last night?
on a Sunday night.
Where did you go last night?
That's a professional night, Sadnov, going out on a Sunday
I
night.
know.
You gotta-
We went out Sunday night.
Like
We went to a
Monday.
steakhouse,
What steakhouse?
Asador Bastion.
Oh, the Asador place.
Mhm, yeah.
It's
Two assholes going into the ass.
it's
to do
really
it.
good. It's
Yeah.
a Spanish steakhouse.
Yeah, it's fancy though.
It's fancy.
Yeah.
It's
Did you- are you
Sadnov
gonna
wouldn't
become a
know.
member?
Sadnov wouldn't know how fancy it is. His arms, he had like alligator arms
oh my
last
god,
night.
I'm
When
so
the
mad
bill
at him.
came, I mean, I had to take it. It was embarrassing. We were with a friend from Mexico who we were taking out to dinner. You know, I figured we would split the darn thing, but you know, Sosnoff with those alligator arms and those deep pockets, he couldn't get in there to get his credit card. So I just had to pay.
Are you going to become a member?
I don't think they have membership.
I think they do. I think I looked it up.
Oh no, I don't know.
Oh,
But
okay.
I've been there a couple times. It's
No,
great.
we got it in. A dishwasher to Scott's Club, who's a friend of another maitre d' whose dishwasher friend knows somebody at this steak joint. We can get in.
Okay.
It was really good. Really good.
It was great.
Okay.
Yep.
So would you
And,
guys?
and the price was right, Tom?
What'd you guys have? You both? Did you share a steak, or you each got your own
We shared.
cow? Like
We
what?
shared.
Oh, you shared.
Yeah.
Okay.
We shared steak and pig.
That isn't all we had.
We had a pig too.
There was a pig too.
Yeah, suckling.
What's the way that the Spanish prepare the pig?
Suckling.
Oh, because I only know like jamon and like Iberico ham. Like I didn't know like how else they.
Oh, they do it over the fire, same way.
Oh, okay.
Yeah. It's good.
We had a spider crab. We had a lot of good stuff.
Oh yeah.
Spider crab does whatever a spider crab.
Spider crab can.
And tonight's the Bear game. And oh yeah, I went to see Dua Lipa on Saturday night.
This is a busy weekend for him.
Hold up.
He's going to be
And
exhausted by 10 a.m.
And I went to see Dua Lipa.
wow. And you're pledging Theta Chi. It's rush week for you, girl. Okay, I gotta. My brain is all.
When I
over
said
the
I was
place.
going to see Dua Lipa,
How was Dua Lipa?
Brittany laughed for like 10 minutes straight.
I mean, it's pretty funny, like, cause it's okay. How was the show? Did you stay the whole show?
Yeah.
Who was her opener?
Some girl named Seal.
Seal?
Sil.
Okay.
C-I-L.
Okay.
Would you believe Bill?
C-I-L.
Okay. Seal is a black man.
All I know is she came out in jeans and a bra, so I was okay with it.
Okay. Oh boy.
That's literally
All
what she
right.
wore.
Don't make
So-
it creepy.
No, I'm not. I'm just saying it was okay. It was not bad.
So how was Dua?
It was good.
Yeah.
Yeah, she was good. I enjoyed
What did
it.
you wear?
I don't remember. An outfit.
Okay.
No, my wife wanted to see her, so we went, and it was fun.
So then that's nice. That's a good date night.
Yeah, it was
I
good.
cannot believe you went to go see Dua Lipa. I have no
It's
words.
a very strange crowd. It was
It's for the girls and the gays.
it was very gay.
Well, there you go. Sadnov's one of the same.
It was
Perfect.
very gay. There was a lot of girls,
Yeah.
and there were some guys. You know, But it was good. She was good. It was entertaining.
Oh
I knew like 3 or 4 songs.
Okay.
Yeah.
Okay.
Yeah, but you didn't know 3 or 4 songs ahead of time. You had no idea.
Well, I didn't know she sang those songs. I mean,
Right,
I had only
that's what I
heard
meant.
I knew I think 2 or 3 songs I'd heard before.
Because you don't listen to the radio. Like, you just listen to sports radio or, like, talk radio. You don't
I
listen to...
I listen. I mostly no. I do listen to radio, but mostly it's XRT. And they don't play her.
Oh, okay. I got you.
Yeah. They don't play her. But I
That's wild that you still listen to terrestrial radio in 2025, but go off.
Really?
Yeah. I
I like sports radio and I like XRT.
Everyone just listens to their Spotify AI DJs. Like, what are you even doing, man?
I like so I would rate this concert, and this was pretty good. I would say it's pretty good, but it wasn't Jack White quality, but it's good.
But they're different genres.
I know, I understand. Those are the only shows I've been to this year.
Okay.
So that's the only thing you can compare it to.
Yeah.
Okay.
Makes sense.
I cannot believe you went to go see Dua Lipa. Why didn't you bring me back a shirt, man?
Yeah.
I don't know. I didn't even know you liked her.
I'm a pop girly. I love all the pop girls.
And tonight's the Bear game.
See, when I go places, Vanetta, I bring you back.
You do.
t-shirts
I
and
still
stuff.
have my Mariah Carey shirt, and I have a John Mayer shirt from back.
That's right. And
Right.
Anna Casa Bonita.
And a Casa Bonita shirt. Yes, that's true.
Well,
And tonight they're going to
Oh,
honor
good
the
couple.
Bears. It's the 40th anniversary of the 85 Bears. There's going to be special tribute. I can't believe you guys get to see that. That's cool.
Yeah,
Right.
and she's gonna want a T-shirt for
Yeah.
Tuesday. too.
Yeah, bring me Bear swag.
Yeah.
So I'm
something
really
with
looking forward to
anniversary on it,
tonight.
Sazno.
Yeah.
So wait, did
Something
you
in pink too, like Sazno, some pink letters, like Bears in pink anniversary edition for her.
Blinged
She would
out?
love that.
So did you decide do you get to go on are you going on the field or no?
No, we're not.
Why would you pass up that literally once in a lifetime opportunity?
Because it's not as easy as you think. Tonight's like a tough night to get up.
He didn't have enough clearance. Tell her the truth.
Yeah, that's what I
You
said.
have-
Tonight's a tough night. There's a crazy amount of security and stuff.
Oh.
It's not worth it for. I don't want to get
No. He's still got that American Express problem for $1,200 back in 1984, and American Express is a sponsor, so they won't let him on the field.
Yeah, that
That's
tracks.
what happened.
He said we're fine. We're cool.
Okay.
Plus we're sitting like further up.
Yeah.
So
Mm.
plus I don't want to leave my friends. I don't want to leave Scott behind.
You are such a liar. You were going to leave so quick. Clink, it's Clink's tickets. You were leaving him behind.
Never.
Like,
I would never leave a friend behind. Not like you.
you are such a liar.
never leave a friend behind.
Scott for a second said, wow, we're going to leave Clink behind. And you said, what do I give a shit about Clink? That's exactly what you said.
Wow.
Exactly.
That's not what I said.
Wow, way to burn bridges, man.
That's not what I said.
Unbelievable.
I can't believe you get to go to the game tonight. That's very exciting.
Yeah, it's gonna be fun. Yeah. Except
Jason Kelsey's gonna be there. He's calling the game. Monday Night Football is gonna be there. So that's very exciting.
yeah, he said it's Troy Aikman and Joe Buck
Wow.
calling the game. Yesterday.
Is it true? Is it true to any of the rumors, Sazno, that you're
Yes.
thinking about buying a ticket for Josh so that you can get his handicap parking, have Josh sit in the nosebleed seats while you're just off the 50-yard line down in front at head level, and him all the way up in the nosebleeds, because you think it'll be cheaper to buy him a ticket to get his handicap parking than it would be to buy indoor parking alone?
Yeah, but he's a grifter, so he gets to work his way down, because it's taking up
He
those
wheels
steps.
his way down?
Yeah.
Wow.
Oh my God, what if you see Simone Biles?
I always see Simone Biles at the game.
What? How many games have you been
A
to?
bunch. She's there every time.
Yeah, well, she should be.
I mean, she's
But
always
she's so small. She'd be hard to spot.
she's really small.
Yeah.
And she wears heels.
Yeah.
And she I don't know if she's 5 feet tall, but she's
No, I think she's 4'11", like 4'10", 4'11".
but she's at every game.
Yeah, okay.
Yeah. And she's
What
on
a whirlwind influencer! Like if you were better at Instagram, this would be a
and she's
remarkable
on the
run.
field. She's always on the field.
Yeah. How are you getting to the game tonight?
That's the big question. Right now we're driving, but these guys want to walk. So we don't know what we're doing.
Oh. All right. Well, good
There's
luck
an inner
with that.
struggle going on right now between good and evil.
You guys got lucky.
It's supposed to be beautiful, but hopefully, hopefully the game's good. I mean, unfortunately, last night as a Bears fan, I had to watch the Packer game.
Oh, who won? The Packers and the Lions?
Packers look good.
Packers look good.
Yeah?
They killed Lions looked horrible.
Okay.
Packers looked really good yesterday.
Yeah.
Yeah, but we stole the Lions coach, though, right? One of them.
But I'm not worried about the Lions. I'm worried about the Packers.
Oh, okay. Well, I think there's
Lions didn't look
more
that
things
good.
we should be worried about as a franchise, but did you watch any of the other NFL games or college games on Saturday?
I watched some pro games yesterday, but then last night I missed that game,
Oh, okay.
which looked great.
What, the Packers?
No, the
What?
Bills against the
The
Ravens.
Bills versus the Ravens.
Oh, who won that one?
Bills 42-41.
Ooh.
And they were down by like 15 with like 6 or 7 minutes to go.
Yeah, they came back and won.
Yeah, but the
Yeah.
Ravens are missing Isaiah Likely, so it's like a little bit harder for them. They don't have as many targets out there, so.
Isaiah.
I just like his name. he did not play. I'm not wrong. I'm not wrong.
That's why we like the Bears tonight, because what's his face is not playing for Jordan Addison.
Oh, okay. I
Not
didn't know
playing
that.
for the Vikings.
Yeah.
I think he's suspended for drugs or something.
Well, the Swifties are fighting with Chargers player Tier Tart, and it is the funniest thing I've ever seen in my life. I don't know when people.
Listen, he took a swing at Travis.
Yeah, and then he then posted on his Instagram that when I come down to Brazil, I'm too swift with it. And then so Swifties then just lit him up. Online. I was like, I don't know why
Oh, come on,
you
that's
think
fun.
you can come. No.
that's
Like,
fun.
you don't want this, but like, she has nothing to do with it. Like, keep her name out your mouth. Like, keep whatever's on the field. Like, no one else goes after anyone else's wife.
Oh my God, that was just having fun. That was,
No, it's not. It's okay, fine. So people can take shots at your daughter?
No, that's not what it is. It's, just like, it's different.
How's it different?
This escalated.
How's it different then? Go ahead.
He's just a football player making a joke.
Okay. I don't know. But I think it's funny that if you get that Tay voodoo that gets put on you. So anyway. But that's all. And
Did he
it
get
was sad.
suspended for that?
He didn't. No, that's the other thing. Because like Swifties were like, hey, we may be new to football, but then they're like reading the rule book line by line.
I thought he would get suspended.
Right, it was an open. Yeah, he should have. But now the league has egg on their face and they can't go back on it. But yeah, he should have gotten ejected for it, in my opinion.
In your opinion.
Because if it would have gone the other way, if Kelsey would have slapped somebody, he would have been out. So, like, make it equal. That's all.
Look at you.
Wow.
I'm just saying. It's stressful. Also, Kansas needs to work on a lot of things. They're stressing
Somebody's
me
got an
out.
opinion on this.
Oh my.
We got a great show for you today. It's a magnificent Monday. I haven't had to do one of those in a while, but here we are. We're going to try to do a full week. Pray for us. Tempesta for lunch today and sweet green.
I like Tempesta.
They're little sandwiches. They're not like a full sandwich. They're so little.
Yeah, but they're really good quality.
Yeah, but they're so little.
So have two.
I might have a salad. Because that's where I am now. I'm gonna have a salad. I hate that for me.
What a
Hey, we
miserable-
got a great show for you today. At the top of the 8 o'clock hour, we got an options jive. Kai's coming in for his research corner. I don't know that that's an options jive, but I'm just reading the words that are on the screen. But Kai's going to come in, give it his outlook for the week. You can tell him all about the Peking duck that you had. Then 8:40, the Skinny on Options Abstract Application. Dr. Jim, strategically preparing for market surprises. I guess he's going to break down some ways that traders can prepare for some fat tail risk. That's going to be at 8:40. Then 9 o'clock, market measures, easy methods for adjusting and defending a trade. I'm sensing a theme today, basically when stuff goes sideways. But that's good. That's learning for all people. And then 9:20, talking with Tom and Tony. You guys are taking calls. No Scott's?
Scott's tomorrow.
Oh, Scott's tomorrow. Okay. Was he at the U.S. Open final?
No.
Oh, man. I thought he would have been.
I think he might have been at the women's final.
Oh, okay.
I didn't talk to him.
I mean, it was expensive. The tickets are pricey for the men's final. And
I didn't talk to him yesterday. I'm not sure.
okay. All
But
right.
he did. But I think he went to the Who concert, right?
He was at the Who concert last
Are the Who still together? Are they still? No, I'm not. I'm being serious. I thought
The question is, are they still alive?
Right. Yeah. I thought the guy died. I thought.
They are like they're dead, but they're still alive.
Okay. That's cool.
They're not looking.
really.
They're not looking as good as Mick Jagger is at the same age.
What are you gonna do? And that is our run of show for today. Hey, you want your daily dose?
Sure.
Yeah, hit me with my theme music. Let's go.
Our leading
In
story.
today's
Breaking
headlines.
news.
Breaking news.
Across the wire. Our leading story. Top story. Just in.
In today's headlines.
This just in.
Breaking news.
All right, everybody. Today is a magnificent Monday. It's September the 8th. This is the part of the show we like to call the Daily Dose, where we talk about today's financial news and headlines. My name's Vanetta. Are you ready for the news?
Ready for the news.
Are you ready for the news?
Sure.
Okay. Any earnings, Mr. Bat?
Nah.
Nah. All right. Hey, first headline says stock market bulls are banking on rate cuts, but CPI inflation data will have much to say about what comes next. Core CPI reading coming out this week will matter most as investors look for signs of upward pressure on services inflation. Fed funds futures traders on Friday. That's hard. Fed funds futures on Friday. Priced in 100% probability of a rate cut on September 17th. What are you making of what happened Friday and then what could happen this week?
Well, I'm glad that people are finally starting to listen to me because we've been spot on with bonds. And there is a 100% chance of a rate cut. They'll probably go 50 basis points now if bonds continue to go a little bit higher here, if they get over 117. But
Okay.
I don't think it means anything. I mean, it's already priced into everything. The bonds already trading there.
116.21 right now is correct.
I know, but I mean, bonds, all the short-term, like whether it's 10-year notes or 2 years or 5 years, it's already reflecting it. I don't know that there's anything there.
Okay. We will see. And of course, Kai will give an overview to what the market is looking at in terms of a expected range for the week. Hey, congratulations! After getting passed over multiple times, Robinhood finally added to the S&P 500. AppLovin and Robinhood got the call, the nod to go up to the big leagues. The changes will go into effect before the beginning of trading on September 22nd. Datadog and DoorDash entered the index earlier this year. Caesars Entertainment is one of the stocks that's getting removed because, like, Vegas is dead. It's not. I know it's not. But Caesars is getting removed, and
Caesar.
AppLovin and Hood are going in.
AppLovin up around 10%, which is about a $40-ish move to the upside, 536 and change. And Hood is up around $8 or so, just under 10% move to the upside.
Those are big moves. What say you?
I couldn't care less.
Okay. You don't care at all.
I could not care less about any of those stocks.
Okay. All right. I'm going to keep it moving. Hey,
You
Treasury
care?
Secretary... What?
No, do you think he cares a little?
No,
I could not care less about AppLovin or Robinhood.
Hey, speaking of market risk, though, Treasury Secretary Scott Bessent is warning of massive refunds if the Supreme Court voids Trump's tariffs. I didn't know that this was a whole thing, but it did come out on the news shows over the weekend. So a bunch of states obviously challenged the legality of the tariffs, and that is now being challenged. But if the Supreme Court decides that the tariffs weren't lawfully enacted, I didn't know that the Treasury would have to issue a refund. That's something. Do you think that the market has priced that in?
No, because I doubt that this is going to happen. But the issue that, listen, the tariffs, let's be really clear about who pays the tariffs.
Sure.
U.S. consumers pay the tariffs.
No, I know that. I know.
So that's why they have to, if the tariffs are illegal, it's no different than if Comcast charges you, an extra $20 a month, and then they have to refund it at the end of the year.
Comcast skims me all the time.
Okay, but I'm just saying. And then if they're found guilty of,
Sure, yeah.
It's the same thing here. If the Supreme Court does void the tariffs, they're going to have to give the money back.
Right, yeah.
But I don't know how they're going to do it, but they're going to.
That's what I'm saying. I was like, I don't think we've ever been in a situation like this.
There's a lot of arguments for the tariffs being constitutionally illegal.
Sure.
But I just can't imagine at this point that the Supreme Court's going to void them so that they have this issue with massive refunds. Because I don't know how you do massive refunds. What if somebody, I don't even know how you would figure it out.
Yeah, but I just couldn't figure out, like, one, if the market had priced this in, and then two, like, what this means in terms of volatility.
This would not be bad for the market, but it would be.
How could this not be bad for the market?
Why would it be bad for the market?
Because if the, like, U.S. government, like, whenever a company has to do, like, a massive write-down for something that happened, like, that's never good. So if America has to...
If they stole the money, they got to give it back. Okay? I mean,
Why are you yelling at
it's
me?
all the consumers in America that got ripped off by these stupid tariffs.
Sure.
It's not hard to figure out.
Sure.
Hey, buy American.
It's still, you are getting ripped off by the tariffs. Doesn't matter.
But there's also, though, things that we don't make, though, in America, though, like, we don't make, like, massive amounts of coffee, like, on
We don't make avocados.
Yeah,
so
right?
You know.
Like, or bananas.
Well, who's going to make my guacamole?
Since when does Sadnov care if I have coffee or not?
I don't care if he has coffee. I care about my guacamole.
Okay.
Who's going to make my
guacamole.
avo toast?
My guacamole. Hey, keeping it moving here. Japanese market up 1 to 1.5% because Japan's Prime Minister Ashiba Shiguru says he will step down after an election setback. The Japanese market responded favorably to the news because it could get someone else in there that's like more pro-business. What are you doing in the yen?
We are long the yen.
Hooray!
It's down small this morning, down 180, which is kind of a small, but it's trading 160.
Which is weird because the Japanese market is up like 1%, 1.5%.
Yeah.
Yeah.
The yen has been trading in the tightest range imaginable for the longest period of time.
Okay.
We just sell puts in there. That's all we do.
It's been going sideways. It's been working. You actually could be selling both sides too if you really wanted to.
You could. Sure.
Any other currencies that are popping up, like the euro or the pound?
The euro's actually a small higher this morning.
Okay.
And the yen is, like I said, yen's lower, euro's higher. Currencies are mixed today.
Okay.
Last night, Mr. Vecchio made a very strong case for shorting the Canadian dollar. I haven't looked at it. 6C.
Why are you mad at Canada?
I'm not mad at Canada. I'm just listening to Vecchio, but
why do you want to take your tariff BS all out on Canada?
No. I'm just listening to Vecchio, but here's the problem. I don't think you can trade it. I don't think there's enough volume in there. I mean, I see a couple of one lots trading.
17,000 traded so far.
I just don't think it's that interesting a trade.
I mean, the yen 102,000 have traded. So yeah, it's 1/10 or one.
Yeah, the Canadian dollar just doesn't trade that much on. I mean, if you want to trade it using the spot market, that's great.
Okay.
Using our FX platform, but using the options on 6C,
Mm-hmm.
You say it.
Yeah, it's a little thin for me.
OPEC Plus has agreed on a further oil output boost in October to regain market share. OPEC Plus has been increasing production since April after years of cuts to support the oil market, but the Sunday decision to further boost output came as a surprise amid a likely looming oil glut in the northern hemisphere for the winter months. What is happening in the crude market this morning?
It's up pretty big.
Yeah.
Well, you would think on a
Which is antithetical to what this headline is.
Exactly. So it's up $1.34, but it's been pretty weak as of recently.
Okay.
Saz is right. Oil's got an IV rank of 24, but he's right. I mean, it's off of its most recent lows it made just the other day.
Anything going on in natural gas?
Yeah, it's up this morning. Natural gas actually is up 9 cents. It's kind of the highest it's been. While we've been trading natural gas on the long side, so I have no issue with this, but it's up to like 313.
I turned on my seat warmer in my car this morning because it was 48 degrees when I left my house.
Really?
Yeah.
I do not like.
And I'm not wearing pants.
I
have a dress on.
Whoa, TMI.
I have a dress on.
I like seat warmers and I like steering wheel warmers.
Yeah, I have both. And I have a heated windshield. Ooh.
Doesn't everybody?
Mm-mm.
Oh my God, you guys are so bougie.
I have a Toyota RAV4. Leave me alone. Anyway, hey, Bitcoin is climbing after dismal jobs report fuels rate cut hopes. Let's take a look at digital assets. And is this headline still true from when I pulled it last night?
Yeah, it's up a little bit.
Hey.
It's this kind of trading. That's again also trading in a very narrow range.
Okay.
Not narrow to sideways range, really kind of tight.
Yeah, sideways range. Up $400 today in the futures market. Not much going on in the world of crypto this morning. Pretty quiet.
What about Coinbase with Robinhood getting the nod? I don't know if that means anything to Coinbase.
Coinbase is up $1.
Okay.
He's correct. Maybe $1.50, but it too has been going sideways.
Yeah, it's $300. It actually got under $300 on Friday.
Hey, here's an interesting headline. It says AI is not just ending entry-level jobs, it's the end of the career ladder as we know it. Postings for entry-level jobs in the U.S. overall have declined 35% since January of 2023, according to labor research firm Revelio Labs, with AI playing a big role. Job losses among 16 to 24-year-olds are rising, but forecasts that AI is just going to wipe out entry-level roles post a larger question. So if you can't even get onto that first rung of the career ladder, what does that mean? Like, especially for that 16 to 24-year-old demographic.
Well, I'm not sure 16 to 24 is demographic. I mean,
Hold on 1 second. Don't worry. You're all going to be able to serve ice cream at Dairy Queen. No AI is taking that job.
First of all,
to be fair, Vinny quit that job.
16 to 22.
He's a camp counselor now. That's what he's going to be.
I think it's a little premature to talk about this.
How is it premature when 35% of there's been a reduction in just 2 years?
I know what they're saying, but we haven't.
I don't think you do.
We haven't seen any of that in the world of finance. So I'm just trying to wonder where all this is because I haven't seen it in the world of finance.
We don't have a ton of entry-level jobs.
Well, we have some, and I haven't seen.
Look at me.
I haven't seen AI yet replacing too many entry-level jobs, but we'll see. I thought Dylan made a really good point 2 weeks ago when he brought up that it's just going to change the paradigm. It's going to bring back a lot of skills that were kind of, that were lost in the whole crazy STEM movement.
Okay.
And I think it brings back a lot of the other skills.
Yay!
And things like that. And
like what did you say? Like what?
Like writing. and I think Dylan said it very eloquently. I think he's right. I think there's going to be a little bit of a resurgence and a renaissance in a whole different world and of education and careers and things like that. So I'm actually not bearish because of AI.
I think his optimism is adorable, but we'll see what happens. Well, here's someone who doesn't even need a career ladder because this is just exploding. You missed this news maybe on Friday, but Tesla's board is asking investors to approve a new pay plan for CEO Elon Musk worth almost $1 trillion. The full award would give Musk more than 423 million additional shares. The company will also ask shareholders to vote on whether the automaker should invest in Musk's AI company, xAI. What are your thoughts on these tranches as Tesla faces more and more sales woes?
I am everybody is replaceable guy.
Okay.
And so I wouldn't give him $1 trillion. This is the dumbest thing I've ever seen. I mean, 400.
So it's 12 tranches of shares to be granted if Tesla hits milestones over the next 10 years.
I understand that.
Okay.
I read it, but it's so ridiculous. Nobody needs 400 more million.
Hold on 1 second. You said just the opposite when Tesla was a small fledgling company. Like you said, offer whatever he wants. I mean, if he makes it there, everybody would be happy.
Yeah, that's true. When it's a small company, but now it's a big company, and now any operator could come in and run Tesla. So it's different.
Really, you think anybody could come in and run any company?
Not any company, but Tesla, yeah.
Oh.
What's Tesla doing this morning?
Plus, I think Musk is out of his mind, so I would not.
Okay, what's Tesla doing?
I want to tell you, but Tesla's up $4, $3.50, $4.
Hey, Google led a monster week for tech, pushing mega caps to a combined $21 trillion in market cap. Alphabet and Apple shares rallied last week following a favorable decision for Google, and Broadcom got a big boost from its OpenAI $10 billion partnership. And you added up, and tech's $8 billion companies added 400 billion in combined value, and they now make up 36% of the S&P 500. What could go wrong?
You tell me.
That's bonkers.
21 trillion in market cap?
Yeah.
Yeah. What could go wrong?
So what are your plays what are you still doing, if anything, in like a Broadcom this week or in a Google, Apple, Nvidia?
Well, Broadcom, we actually got caught a little bit long on Friday because the stock opened higher, but then it went lower.
Oh, okay.
To the opening. So Broadcom, we actually need a little bounce this morning. I think it's up like $5.
Okay.
It is up $5.
But the IB rank in Broadcom dropped to like 5 or something.
Single digits, 5.
Single digits. So I'm going to get out of Broadcom on the opening today. We lost a little money in there on the earnings.
Apple looks unchanged, and Google.
Yeah. So Apple, we're short.
Okay.
Google, we have no position. Broadcom, we're a little long.
What about Nvidia?
Nvidia, we have no position. Oh, we're a little bit long.
Okay.
We need Nvidia to go to. Where's Nvidia?
Nvidia's 167 and change, up around 30-40 cents.
169, 171 would be perfect for me for Nvidia. But I just happen to be long a few of those stocks. But I am short the NASDAQ.
Okay.
So NASDAQ's up 77. It was up 100 this morning.
Oh, wow.
But the NASDAQ was actually really strong on Friday. When the market was down all day, the NASDAQ just wouldn't. When we were doing our live show, we bought NASDAQ and sold S&Ps, and it was actually a good trade.
Nice. Well, speaking of Google, Google has been hit with a $3.45 billion fine from the EU over ad tech practices. EU antitrust fine came out saying that Google is engaging in anti-competitive practices in their lucrative advertising technology business, and then that was followed by the threat of sharp sanctions from the Trump administration. So,
I don't know anything about this.
do with that what you will. Hey, this is interesting. Mark Zuckerberg got caught on a hot mic asking Trump if his made-up U.S. investment amount was okay. During a recent White House dinner, Zuckerberg spoke with Trump about his company's future investment plans, shortly announcing to the room that Meta will spend $600 billion in the coming years in the U.S. He then can be heard, because his microphone is still open, admitting that he wasn't sure what number he should have said. All of these numbers are fake.
Zuckerberg has become such a sellout. He's pathetic.
What are we doing? What are you doing in Meta?
Nothing. No position. We want to get. I want to get shorted, but I was hoping it got.
It's up $3 to $7.55.
I know. I was hoping to get a little bit higher, maybe around 770, 775.
Yeah.
Hoping.
Okay. Hey, Anthropic looks to settle a lawsuit, and they are agreeing to pay $1.5 billion to settle a class action lawsuit brought to them by authors whose works were stolen by the company. Anthropic told a San Francisco federal judge that they had agreed to pay $1.5 billion to settle the class action lawsuit from a group of authors accusing the AI company of using their books to train their AI chatbot Claude without permission.
Good for them.
Yeah, but then you don't know how many authors that is. It could just be a scant amount. Like if it's your life's work and it just gets
I don't
sucked
know.
up by a LLM, and then they just give you like $10,000. I don't know.
You know how much of our stuff these guys have stolen?
Okay. Well, take them to court, I guess. I don't know. NVIDIA says the GAIN AI Act would restrict competition, and they liken it to the AI diffusion rule. I guess there's a new GAIN AI Act. It's short for Guaranteeing Access and Innovation for National Artificial Intelligence Act. We have to get better at naming these things. And it was introduced as part of the National Defense Authorization Act. How much oversight should there be in the AI space?
I don't know. Like, it's
Like make a scale, make a spectrum. Like none, some, a lot.
when you say how much oversight should there be, it depends.
Like should there be a department that oversees it? Is it the FTC? Like what? Who
No.
is looking over?
No.
Yeah, okay, well go ahead then.
The challenge in oversight, okay, is that you have to have it. Really have to have it defined. Like, what are you
What are you overseeing?
Yeah, what are you overseeing? Even like
Sentience.
What are you overseeing, really?
Right.
But you're not going to
You're overseeing the protection of IP holders. You're overseeing the abuse by like companies of personal data.
Okay.
You're overseeing
Those are all reasonable.
Right, okay.
Right.
You're overseeing the implicit biases that AIs can have and the implications of what that means.
I'm not sure you can regulate biases. I'm not sure that you can restrict software development. But yes, you can protect somebody else's IP.
Yeah, okay. And what about personal information?
And you can protect that as well.
Okay, so then there should be regulation.
And I'm just saying, I don't know how broad this is.
All right. Well, I'm abroad. Hey, Apple is launching. Apple's launching their event. It's tomorrow, a little mini binary event. Here's what we are expecting. Apple's expected to unveil at least 8 new products at their event tomorrow. Could be the iPhone 17 series, the thinnest iPhone ever, a new Apple Watch Series 11, Apple AirPod Pro 3s, some new iPads. But again, the event is tomorrow. And again, sometimes it's a mini binary event. Apple was a little bit of a laggard compared to the other tech stocks. It's caught up a little bit. What are you doing in Apple?
We're shorted.
What's the anticipated move for Apple?
Oh, I don't know.
Apple has a $4, almost $5 expected move for the week.
Okay.
$7 for 11 days, but yes.
Something.
I'm just naked short 245 calls in there.
Okay.
I don't love the position, but
Ivy rank only 13, yeah.
Yeah, I don't love the position because I think volatility is too cheap in there. I think it's going to go higher by tomorrow.
Okay.
But we'll probably put a little more. Usually Apple disappoints.
Sure, but Bat needs a new phone.
That does need a new phone.
So you got to figure that in.
I do.
He's going to be the first in his block to have Apple
one.
18. He's going to have the 18.
Microsoft's cloud service Azure got restored after reports of cut cables in the Red Sea. This seems like a real problem. Microsoft said their Azure cloud platform had returned to normal service after an incident of cut underwater cables that played out on Saturday. What are you doing in Microsoft?
No position.
Okay.
I didn't know their service was down.
Well, you weren't doing work on Saturday. You were at Dua Lipa with the girls.
We don't expect you to remember that.
Right. Some of us were working.
Working Saturday night?
No, I work on Sunday, though. Anyway. Hey, U.S. clothing retailers are testing full price strategy because rich shoppers keep spending. You guys got to cut that out. A handful of apparel retailers, including Levi's and Aritzia, are teasing more full-priced products, seeing how much wealthier shoppers are willing to pay despite the sobering effect of tariffs. Companies like TJX and Ross had pretty good earnings because they say even wealthier clients now are looking for a deal or a bargain. But I don't like this strategy of, let's see how much we can keep charging people. Not a fan. But I do like Levi jeans, but I like to buy them on sale. So do with that what you will, I guess. Hey, sad news.
You gotta go to the rack with Sosnoff, get stuff on sale.
Go to the rack.
Sad news for everyone who at least lives here in the state of Illinois, because the Powerball lottery is $1.7 billion jackpot. It did finally get winners. And that's right, I said winners. 2 tickets sold that matched the numbers, one in Missouri and one in Fredericksburg, Texas. We don't know yet where in Missouri, but both states do allow winners to collect anonymously.
Ooh, 2 winners.
2 winners, and that happens sometimes. So
Yeah.
So check your tickets if you
I
live
didn't buy any tickets.
If you live in Mizzou or Tejas.
I didn't buy any tickets.
It followed 41 consecutive drawings where no one matched all 6 numbers. So that's pretty good. It's a pretty good payout.
Bummer.
I think after taxes, it's $826.4 million, but then that gets divided in 2, I guess. So
okay.
it's okay. Still enough money. I saw this over the weekend, and I was like, you know what? This is pretty awesome. I'm a fan, but I like old school things. Fran Brown made Syracuse run sprints on the field after Syracuse did beat UConn in overtime, but they struggled with UConn all day. They did find the way to get the dub in overtime, but it wasn't good enough for head coach Fran Brown. So even while people were still in the stadium, he had his team running, man. This is unheard of in the NIL era where kids are soft and they're just going to transfer out of there because they don't like to be challenged like this. But I love to see it because your girl had to run her fair amount of suicides back in the day. So this is great.
It's great.
It's great. It's like you don't play hard enough, you don't bring it, you're gonna run. So I like this.
They should have lost that game actually.
No, then they'd still be running. Anyway, finally today for my viral video of the day. I like animals. I just like animals better than people for reasons. Here's a funny video about animals. Watch this. Who's eating all the chicken eggs?
Yeti, are you inside? Yeti, come here. Hey. How the...
Oh, man.
Are you the one that's eating the chicken eggs?
That dog weighs 130 pounds.
Yeti, are you inside? Yeti, come here. Hey. How the... Are you the one that's eating the chicken eggs?
So farmers or ranchers will keep Pyrenees because they're great protection dogs. They're great
That's not a Pyrenees, is
guard
it?
dogs. No, it's a Pyrenees.
That looked like a yellow lab.
It's a Pyrenees. I like how you're arguing with me when I literally have the woman's account in front of me and I'm reading her comments.
Oh, I love those great Pyrenees.
Yeah, so they're great Pyrenees because they're good protected dogs that get, the animals want to eat, like your chickens and your other animals. But when the call is coming from inside the house, though, because she also used the hashtag Great Pyrenees of Instagram. So anyway.
Well, yeah, those are cool dogs.
Yeah. He's so fluffy.
That's what TP has.
Oh, he has a Pyrenees?
Yeah.
Are you sure? I thought they were Staffies.
No, he has a Pyrenees.
Oh, okay.
That's what Slimmy is.
Oh, Slimmy.
Great Pyrenees.
Great. Hey, I'm done. Pat, what's coming up next?
Great job out of you, but we're going to take a quick 90-second break and come back. We got a little bit of confirm and send next. We'll be back in 90 seconds. Let's Tasty Live. Bye for now.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tasty Trade. So spread the word and earn rewards. Terms and conditions apply.
Your crypto needs a wallet. And crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
The future of trading is here. Join Mike and his whiteboard, plus the Tasty 2 live crew for 90 minutes of probabilities, punchy portfolio mechanics, and trade tactics. It's totally free and unreasonably fun. Come early to enjoy a drink with the crew and stay for a Q&A after the show. Space is limited, so register today at tastylive.com/events.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Tasty Trade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
We are back, my friend. You know what that means. Time for a little bit more Tasty Live. That's right, with confirm and send. But before we do, let's take a quick look at the market. Even the S&Ps, sad enough, they're up $14 and change. They were up around $7 or so last night on the opening. They've rallied a little bit, really mostly this morning that I saw, trading just about $4 off of their highs. Tight move still to the upside. NASDAQ up 85, Russell up 7, and the Dow up 81. All four indices are up, and volatility is down to 16 as volatility collapses. Usually the market keeps its head above water. We'll see how that continues today. Bonds up 12, 116.26. Look at this run the last 4 days, sad enough. Who has been short putties, long bonds? That's right, you, me lord. Bitcoin up almost $600 to 112.5 or so. Oil up $1.26 after making recent lows, flirting with those. Gold up another $6 and change. Gold has had a big run to the upside consistently, with silver doing the same thing, up 33 cents. Nat gas has had a nice run after trading under 280 or so. Gesundheit, trading up to 311 or so. Sodding off the big movers this morning. They talked, Vanetta talked about it, Hood getting into the S&P 500, Apple and getting into the S&P 500, both up significantly, almost 10%, 8 to 10%. That's all I got. No
Sure.
earnings.
Okay. I think there are some earnings later this week, but nothing.
Later this week, but not for tonight.
Yeah.
I mean, there are a few obscure companies.
I think the big thing to watch for early this week, for me at least, is if the S&Ps get up anywhere close to where they kind of fell from on Friday. That's going to be kind of interesting to me. Right here, not as interesting at 65.03, but at 65.20 or 25 or 30, I think that's a pretty interesting level. We'll see if they get there.
Yeah, they got as high as 40 or 41, Tom, from
I don't think they're going to get that high again, but maybe up to like 20 or 30 in that range. I think that'd be pretty interesting short up there.
What do you think the expected range is for today?
I have no idea. 28.
Expected range for today is just about 17 handles, Sosnoff, so we shouldn't get there for the full day.
17 handles today? That's what the SPX is? Wow.
17 handles.
All right. That seems really low. I'm Tom Sosnoff. He's Tony Batista. Thanks for spending your morning with us. And thank you, everybody that came out to San Francisco on Friday morning. Huge crowd, amazing event. Really loved it. Thank you guys so much. It always, like, when we get on a plane, it's always like, oh man, this is going to be a long round trip and 9 hours of flying in 2 days. And then when you get out there, you're like, oh, this is awesome. So
it was up to its expectations. Yes.
Yeah, it was really good. Fun event. Got to see everybody and talk to everybody. It was awesome. We have an event coming up in New York City, and it's 2 weeks from last Friday. So not this Friday, but the next Friday. And it's on Triple Witching, Friday, September 19th, Triple Witching at Webster Hall. There are, I think, 20 spots left. Only 20 spots left, and then it goes to wait list. So it'll be completely sold. It'll be completely full by today. So if you want to get in there under the wire, please do it now. tastylive.com/events if you'd like to go to the New York show. tastylive.com/events. Can't wait to see all you guys there. But like I said, it'll be waitlisted as of tomorrow. So if you want to get in that last few slots, just go sign up. Anyway, Webster Hall's a cool place. Done shows there before. It's awesome. See you there. All right. Confirm and send.
Let's do it.
Monday, September 8th. Is there a way to tell how my buying power currently in use will be affected by a change in the VIX For example, if the VIX doubled, how much would my buying power go up by?
Affected a change of VIX, for example. So it's not going to change. It's not really going to change at all, Thomas. I mean, especially if you're trading equity options or anything like that, not going to change at all. Correct?
Not exactly.
It'll be a small percentage. I mean, I don't know the exact number, to be honest with you.
Here's the good part. I don't have it. I didn't post the link here, but I did send the link to the person that wrote me this email. We've done 2 studies in the past. Exactly. You couldn't have written it up any better. We did 2 studies that essentially showed, what happens if the VIX goes up and what happens to your buying power. And now understand how the rules work. Tony's right in that the requirements don't change, but usually when the VIX doubles, because remember, VIX doesn't double very often. If it went from, if it goes, where's the VIX right now? What price is the VIX, Tony?
Well, futures are 16 and change. VIX is probably 1544.
Okay, so 1544. So the VIX was to double and go to $31, right? The VIX is only going to $31 like, 10 times in the last 10 years, or maybe 10 times the last 15 years. So it's really rare. The rule of thumb, based on our research and everything else, is that when the VIX doubles, now remember, it doesn't double that often. When the VIX doubles, your buying power can go up by as much as 50%. But that's because it's usually because your positions are getting squeezed because you're losing money on different types of things. It's not because the requirement goes up so much. It's usually because of what the market's doing. If the VIX was to double, the market's going to be in crash mode. And so what we found is the VIX doubles, your requirements go up. So if you're using 50 grand, it will go up to about 75. If you're using 25, it'll go up to 37.50.
That's significant. That's more than I thought.
Yeah, well, that's what our research, and our research is pretty good on that. Let's go next slide. If you want to do a covered call, is there an advantage to using a poor man's covered call with a deep in the money call versus using stock and then selling an out of the money call?
Is there an advantage to using a poor man's covered call with a deep in the money call or using stock? I mean, it'll be less buying power. You're gonna have a little bit. You're not going to have as great a theta decay as you would on the stock side. That's going to be a little bit cleaner, but you're going to use significantly less buying power, like maybe 90% less buying power. So I think the gimme for the gotcha is well received on the poor man's covered call.
Yeah, if you want to do a covered call, is there an advantage to doing a poor man's covered call with a deep in the money call?
And if it pays a dividend, you'll get the dividend, which you won't get, but that's baked into the options. I don't know.
I mean, personally, if I'm doing a poor man's covered call, I don't want to do a deep in the money call, because if I'm doing a poor man's covered call, the whole reason I'm doing it is for capital efficiency and for, mostly for capital efficiency, but also to take advantage of, some premium and that kind of stuff. I don't know why you'd want to do it deep in the money. It doesn't make much sense to me. I mean, you certainly could, but it wouldn't be my first choice.
Okay.
Let's go next slide. I don't think there's a wrong answer there. Not my choice. I'm relatively new to trading. At first, my profits were big. Then I went through a period where I had consistent losses. Is this how it always is, or am I seeing these types of swings because I'm doing something wrong?
I mean, it's not. I mean, I don't know. Like, everybody's experience is different when they first started trading. So I don't think, but it is your experience, right? I mean, I don't know if you're putting on trades that have a high probability of success, or you're trying to guess the direction in the market. So that's the first thing I would look to see what you were doing. Like if you were getting more directional than selling premium, I would say to you, well, let's try to see if we can reverse that trend. This is too obscure for me to answer, I think.
Yeah, this is a tough one. I probably cut some stuff out of this just to, I mean, it was probably a much longer email. I don't remember it specifically, but it's probably a much longer story. We have to pare down the questions sometimes just to make them make sense and to fit them on the screen. I think the thing that scares me about this is that when you say I went through a period where I had consistent losses, it's totally fine to go through a period where you get a little cold. And we all do this. And we just, there's like this, every trader goes to this period where you can't do anything right. You're like, what the hell, But I don't love the fact that you're seeing these big swings. At first, when you first start trading,
to have big swings, you have to have a large delta, right? I mean,
yeah. When you say that's exactly right. When he says here, my profits were big, that scares me too, because you're just relatively new when you have big profits and then your big losses. Yeah, I'd say you're probably taking too much risk, and I'd say you're probably not sticking the mechanics very well.
Right.
Let's go next slide. What are your thoughts on monitoring insider buying? I know you don't think selling matters, but what about when industry insiders buy? Would you sell puts in liquid stocks based on insider buying?
Not on the surface. I mean, if the stock was beat up and that was something that you read or you saw, and believe me, if you read and you saw it, then everybody already knows it, and that play's probably over. But if it gives you the confidence to then get long delta, I don't have a problem with that. Again, I wouldn't be doing it with the stock at all-time highs, but I would be doing it if the stock was, near its recent lows. I guess maybe that's one more reason to make me put on the trade, but I'd have to have that feeling myself, that directional feeling.
Yeah, I agree with Tony on this one. If you know that there's insider buying, then so does everybody. You're not the only person. I think that there's a number of people out there that do look for insider buying and insider selling, and then they adjust their positions accordingly. I think it's a lot more difficult to tell. Sometimes when insiders sell, they're just getting out. Like, we've been insiders before and we've sold stock, not because we didn't like the company, just because you might have a tax liability. There's just a bunch of different reasons. They might be buying something else. You don't know. Insider buying is to me way more interesting than insider selling. Because insider buying, means you're taking money out of your pocket and you're buying something. I just think it's probably already priced into the market, but it's more interesting to me than insider selling for sure. Let's go next slide. There are a couple of stocks I've heard you say that you're hesitant to sell calls in because the stock could split like Netflix. But I don't understand why you'd hold off. Is it because of increased unit risk, or do you think that the stock price is more likely to run higher because of a split?
I think all of the above. I mean, all of the above is something to consider. I mean, for us, when from my experience at least, even though it seems to be a phenomenon that I can't understand why, when a stock splits, it does get bid. So yeah, for all of those reasons that you mentioned, agreed.
Yeah, I agree for all the reasons. The increased unit risk definitely is something. And I mean, listen, but the whole thing is we actually don't even know. Just because we say that we're nervous about the split, they've been a split for 2 years. But
sure.
I think in this market, as hyped as this market's been, I can't think of a stock that said they're splitting that went down. I mean, there are stocks that split that that didn't go higher after a while.
We're not talking about a reverse split here. We're talking about a regular split.
No. Like Chipotle, when it split, it opened up like $5 higher, like around $60, and now it's like in the low 40s. It never went higher than the split price. But on the split, they tend to run higher.
Mm-hmm.
Plus, the thing with Netflix, to be fair, the markets stink. I hope they split, because then it'll be tradable again.
Right. I mean, Netflix is a $1,200 company with $2 wide markets. Makes it a little bit harder for option trading for sure. 2+ wide markets.
Let's go next slide.
Now, if they did a 10-for-1 split, everything being equal, they'd have 20-cent or less wide markets. Now you got something to talk about.
Can you remember a time where an interest rate cut was priced into the market, but the Fed didn't cut rates?
Yeah, I mean, it's happened before. I don't know the exact time, but sure. You mean like the Fed Watch tool had an here. I'll say this. I think we looked at this. If it's over 60%, it's never not happened. And if it's under that, it only happened very seldomly. So the Fed Watch tool usually gets it correctly. So it's happened, but it's rare.
I can't think of one off the top of my head, but I can guarantee you there's been probably a dozen of these. Like, because you know what? We didn't used to follow like a Fed Watch tool like we do now. And we kind of looked at things a little differently in the past. But I bet you there was at least a dozen times when there was an interest rate cut priced in and the Fed didn't cut rates and they reverted back. So yeah, if you're thinking that this is may not, or it's a weird time, no, it's happened a gazillion times in the past. I mean, over the last 30 or 40 years, oh yeah, all the time.
Very good, sir. You know what time we have to take? We have to take a quick little break to get our friend Kai in here. So I don't know if he's got a little bit of a weekly recap and option jive for you. We'll be back in 90 seconds. It's Tasty Live.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
What's up, everybody? Check out my new series, Life Cycle of a Trade, where I show you my real-time trades with insights into strategy selection, adjustment mechanics, all the way to the closing order for all of the tastylive core strategies.
I'd started to disrupt my trading career like really early on, probably 4 or 5 years into it. I started thinking there's got to be more than just this. Thinkorswim we built in 1999, 2000 when the market was crashing, and Tasty was in the middle of 2010, 2011 when markets were kind of in turmoil. So yeah, it's always best to start things when it's worse. When I speak in front of a large crowd, I usually say right up front, I'm going to try to give you a takeaway every 15 minutes because I think it's important. You came out for a reason, and we respect that, and it's humbling in its own sense. So we have to deliver our part. Like, you can't just give somebody, hey, here's a one-liner, and you take it home, and then you try to figure out what to do with a one-liner. You have to challenge people to think.
If the VIX is over 40, we'd like to see an allocation of about 50%. The reason you allocate more when the VIX is higher is because when you have a higher VIX, you have the opportunity to make more money.
The amount of time I spend interacting with our customers via email or anything else is pretty much my entire life.
To be so powerful
and so valuable, and then to be that approachable, just amazing.
Where else are you going to be able to email a CEO, get response back?
But you know what? Before he even knew who I was just some idiot trying to learn how to trade. And he still would email and help me learn and everything like that.
Some people say it's nuts. Some people say it's insane. You know, that's what I do.
Traders, start your platform. Tom Sosnoff and Tony Batista are hitting the road for their first ever live trading event, At Work by 11. It's unprecedented, unpredictable, and unlike any other financial event. Watch these masters make real trades in real time. Doors open at 8, the action starts at 9, and we'll have you back at work by 11. Sign up today at tastylive.com/events.
There's a beast in the financial world, and it's not the bull. If that's you, join us on Tasty Trade. Genius loves company.
It's options. Jive. Tomas, we are back, my friend. You know what that means. Time for a little bit more Tasty Live. That's right. With this man, Kai in the house. Kai, welcome. Welcome to the show.
How are you doing on this beautiful Monday?
How you doing?
I'm doing great.
Good. Glad to hear.
Yeah.
Sadno,
Good
Kai,
attitude for traders.
You're doing wonderfully. It's a wonderful day.
I'm doing wonderfully this morning. Yes. I mean, I'm not sure what doing wonderfully. I mean, I got out of bed without pain.
It's a good day for you.
It's a good day. I'm painless.
Yes, it's painless.
Although I came in and I looked at Beth and she looked at me and she said, "What's wrong with you?"
Not exact words.
Those were your exact words. She goes, "What's wrong with you?" And I'm like, "Nothing. I feel great." She's like, "Oh, you don't look great."
Again, not true.
I'm paraphrasing, but that's kind of what you said.
Well, I'm sorry I even asked. Kai, how are you?
I'm doing great.
All right, let's go then. Bring it on. What do you got for us?
For sure. All right, so the little bit summary from last week, and definitely last week was a kind of volatile market. The VIX jumped to almost 20 on Friday, but from a weekly basis, the indices didn't even move for all four indices. None of these move more than 1%. So can we go? Yeah. And also the Friday, we have extremely weak job reports. The Fed watch tool you're just talking about, you don't use it anymore, or not very frequently, but it's jumped to 92% on Friday, pushing the yields down, and all the bonds product price increases on Friday.
So volatility increased on Friday?
No, intraday, right? It's the jump.
I mean, it did for sure in the morning, but I don't know. But Tony and I were on an airplane by the afternoon.
Yeah, that's why I was asking. Yeah. Mm-hmm.
Oh, yeah. And of course, for equity market, one of the biggest news is Google, right? They avoided the antitrust breakup. So the price actually went up 11% in a week, where they're already at the historical highs. So the market cap increased more than $230 billion. We're going to see more details in the following slides. And this week, I know you don't care about the macroeconomic news, but CPI, PPI is pretty important. It can move the market, especially for zero DT traders. If you want to put on a trade in the morning, definitely you want to wait for these news coming out. It's Wednesday and Thursday. And for earnings, we have Oracle and Adobe. These two are probably the biggest name for this week.
So today is, what's today, September 8th?
8th is tomorrow.
So it's after the close tomorrow, Oracle?
I have the sheet following down. I think it's after market close.
Oracle's
Tuesday.
on the 9th, which is tomorrow after the market closes.
Oh, yeah, we have here. So on Tuesday, we have Oracle, GameStop, and LMNR, which is pretty popular trading recently. Chewy, Wednesday morning, Adobe, before Friday market opens.
Yeah, you got to be really careful trading. I don't know LMNR, but GameStop, Chewy, and Kroger. Those are three, like, you know, $20-$30 stocks that are all with crappy markets. Oracle is, I would give it like 3 stars, so it's definitely tradable. And Adobe, I would give like 2 3/4. It's also tradable, but I think Adobe and Oracle are the two that, if you want to do an earnings trade, I would stay away from GameStop, Chewy, and Kroger.
Okay.
Just based on my own experience with those, unless you were just selling puts or something. But those are 3, you know, cheap but not that liquid. The option markets aren't that liquid.
Sure. Yeah. So talking about the indice performance, we can see in the past 2 weeks, we saw some volatility inside the week, but eventually at the end of the week, and the market didn't even change. S&P 500 the past 2 weeks only down 0.1%, 0.3%, pretty much ended at the same price, right? Russell probably the best performer, but only up like 0.5% last week. So nothing changed.
Yeah, that's pretty surprising because.
Yeah. So then leading to the next slide, which is not surprising again because the expect moves 1%, exactly same as last week and this week, 1.1%, and the actual move is only negative 0.3%. Let's see what's going on this week. And VIX is very close too, starting with the 16 the week before and 15 at least yesterday. I didn't check this morning.
Yeah, the actual move for the week was down 0.3%, but the move on Friday alone was almost, 1.5%. So it's like, it's a little misleading because the range has been pretty wild.
Yeah, that's what I was trying to talk about. It's pretty volatile inside the week, but
it was on Friday.
We went nowhere when you look at it, from
yeah. It's one of those things you just got to go into we have to do a self-induced coma for you, Tony. In order, if we could self-induce a coma for traders, they could make a lot of money.
True.
Looking at the IVR weekly changes, the past week we have some mixed signal. S&P 500 almost the same level. Bonds definitely increased because we saw the yield coming down toward the end of the week. The rest of the important assets, they have mixed signals. So nothing major changed last week.
Nothing major changing at all-time highs, right?
Yeah, right.
But these are,
unfortunately,
these are very low across the board. There's not,
volatility's low.
Yeah.
Yeah, gold was a little bit higher, hitting all-time highs again and again. So GDX probably have the one of the highest IVR on the board right now.
Yeah.
Okay, looking at some interesting assets moving last week. Definitely gold and silver keep climbing higher. Now we see the all-time high again in gold and almost 15 years high for silver. It's already surpassed 2012, so hitting the level in 2011. So this is pretty amazing.
Yeah, gold's been a thorn on my side for sure.
Yeah,
we're pretty flat. I'm pretty flat gold. Like I said, we bought on Friday. We bought gold and sold silver, and it actually turned out to be a nice trade. Intraday.
That was actually a nice trade.
Intraday.
Okay. Okay. So, but looking at the ratio, I believe you checked on last Thursday too. So the ratio, gold to silver ratio is only 88. So I remember you started to trade like 99 all the way up to 105 or something. And the past 5 years average is 83. So if we look at the next slide, we have the data. So right now it's 88 and the 5-year average 83. So it's you cannot say this very high level. It's pretty just above the average.
Yep.
Yeah. Okay, so next one.
That was a tough hold.
It's been a while. So yields, definitely bond treasury yields is a big topic last week, and also a lot of speculation going on recently. So a 10-year 10-year yield has actually dropped to 4.08, very close to the bottom since the trade war. We almost come back to the end of 2024 level.
Mm-hmm.
And you short a lot of puts in the bonds last week, right?
Yeah, but not now. I covered. So.
Oh, okay.
And I only had a small position on the 10-year, but we took that off too. I mean, it was a good trade, so no complaints. But we're flat the 10-year here. I actually don't like the 10-year today. I think you can sell it for a trade. It's up 5 ticks. I think you can sell it. I haven't sold it yet, but I better put my money where my mouth is. But I think it's a sale here.
Fair enough. Fair enough. So the last one is Google. Google's up 11%. I just put some stats there. It actually gained 11%, which worth 230 billion market cap in 1 week. So that's actually the almost equivalent size the whole Chevron's market cap, and bigger than Netflix and Disney, Intel, and IBM.
Yeah, that's stupid.
Stupid, but it is what it is, right?
Right.
Yeah.
No, agree. I mean, we didn't. Yeah, we didn't get in front of that train, but I very well might this morning. What's Google doing?
Google, if I remember correctly, was up like 1.
Small, up 70 cents.
Yeah.
I think Google might be a sell this morning. I'm gonna do it. Mr. Batista. Sell this stock till your hands bleed.
There you go.
Okay, sorry, I'm offering notes too. What's
next? Nice. Looking at the top and bottom 5 performers in S&P 500, WDC, Western Digital, up 12%, and Ivy rank all pretty low, and AVGO filled.
Google.
AVGO
short of the low
12%. Google 11%, MU 11%, STX 10%. So all these hardware and AI related stocks get a boost last week. And the bottom, definitely the top one is Lulu, down 16%. Dollar Tree, down 9%. AMD, LVX, and CVS. It's a mixed week.
Yep. Question about it.
Okay. All right. So earnings. The big movers from last week, definitely something interesting. The Macy's up 21%. Give the retail a lot of confidence after that. AEO, it's unbelievable, up like 40% at a certain point. We didn't listen to the previous slide because it was not in S&P 500. And Lulu down 19% on that day. I did it the day after.
Yeah, Lulu's got to hire Sydney Sweeney now so that they can get their act together.
You got to hire Sydney Sweeney.
If I hire Sydney Sweeney, my wife's going to leave me. Plus, it's creepy. I think she's younger than my kids.
Tom, I know you don't like Lulu, but at this level, do you consider long some delta in this underlying?
Unfortunately, I am long delta in Lulu because I had an earnings play on. But I mean, personally, listen, this is what happens when you're.
Oh, I give you the earnings trade, right?
Well, your earnings trade sucked. With all due respect.
No, it was right at the short strike, 170.
No, that ratio spread did not work. Those ratios.
165, 160.
No, those the Lulu ratio spreads for earnings did not work. It was 2 times the expected move. It didn't work. But I already had some short puts in Lulu and a few short calls too. It was fine. It was a scratch. But Lulu is a crappy company run by crappy people, and they deserve to be bankrupt. So I don't care.
Okay.
But I'm a little bit long it, but I hope they go bankrupt.
Oh, don't talk to Liz and Jenny like that.
I'm not talking to them. I'm just saying, you know what? Good things happen to good people and bad things happen to bad people. And Lulu is bad people.
All right. So looking at the long terms, so we've seen almost 3,500 companies announce the earnings, and we didn't do research corner last week because of the holiday, but in the past 2 weeks, the the winners losers is very close to 50-50. And the average return is getting very close to 0%. So this is another earnings season that the post earnings 1 day move is on average is unched.
Okie dokie.
Okay. Makes sense.
Yeah. Okay. That's it. The last slide we already saw it.
A lot of so really what you're saying here, Kai, is a lot of opportunity intraday, and we went nowhere, which is great for premium selling. A lot of opportunity for people themselves. So even though we have low implied volatility, you've got an environment here that's presenting a lot of opportunities. So time to take advantage of them.
Okay. All right. Thanks.
You got it, my friend. Let's take a quick 90-second break and come back. We got the opening bell next. We'll be back in 90 seconds. Tasty Live.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that 1-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
My dad, who was trading options in retirement, introduced me to options trading. He said, you have to check out this tastylive site. The way they taught options was very accessible and easy to pick up. I think a lot of people think that options trading is gambling, but it's not. It is simply probability and taking an educated guess. It's more like insurance. People should watch Tasty Live because you can pick up a lot of information in a short amount of time, and it's actually practical. You can use it to make money, most important part.
Calling all traders. Are you using Tasty Live mechanics and enjoying awesome results? Are you an up-and-coming options savant? We're looking for you. For over a decade, Tasty Live has shared the most inspiring stories of traders teaching themselves a new skill, using probabilities, and experiencing new levels of success. If you think your trading journey should be shared with Tasty Nation, we'd love to hear from you. We are always on the lookout for the next class of rising stars. Email us at risingstars@tastylive.com if you would like the chance to share your trading journey and inspire others.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
Tomas, we are back, my friend. And you know what that means? Time for a little bit more Tasty Live. But the opening bell is imminent, Sadnov. Even the S&Ps holding near their highs. Just about 3 handles off of their highs, Sadnov. But yet, about 30-ish handles off of their highs made on Friday. What do you think here, Sadnov? You looking to get a little bit short? Volatility in by 22 cents, looking at /VX. Or you're going to do some individual stocks as opposed to like what you started with a little bit with Google today.
Am I looking to get a little bit short? I've only made two opening trades today. I sold some Google pre-market, and
You got 30 cents in Google right now. Sosnoff might want to take it.
Nope, I'm not taking anything less than $1. And I also sold some 10-year notes, and I haven't been short the notes in a long time, but I just feel like they're up 5 right now. I feel like they're going to be down today on the day.
I saw that too. Pushed it through. Everybody else saw it too.
That's all I've done so far this morning.
You sold them right here at 113.17 and a half.
Yeah. I don't know. I gotta see where I got problem children today.
Let's take a look at what's moving the market to the downside. Those buckers, Sosnoff. MSTR down $7. MicroStrategy's been on a little bit of a slide here, not getting its wings up at all, losing over about $150 since about July, which is a short period of time. Adobe down 2 or 3, CRM down $1 or so. Not too many big names here. Your beloved Starbucks down 70 cents, and on the upside, well, you got AppLovin up 48 after going into the S&P 500. Hood up 10 now. AVGO up 9. AVGO had a monster day on Friday, trying to keep up, keeping its wings up there for after earnings. AVGO. Baidu up $8. Sosnoff. Tesla up $6 and change. And
Baidu
Reddit
up $8. That's weird.
Baidu, Baba up $4. Baidu up $8. They're coming for all the Chinese stocks that they've been beating up over the last couple of days.
Well, got to figure out. Just looking at our positions here, trying to figure out.
Take that back. Baidu's been on a tear. I missed that one.
Baidu?
Yeah. After meandering in the 90s, it's 110 in a week.
That is a huge move in there. I agree.
Yes, it is.
Well, I didn't get anything I wanted to get done this morning so far. Let's see.
No ding-a-ling-a-lings out of you.
No.
Dow's down, Sosnoff. Dow goes down, down goes down, down goes down. Dow down 77. On the other side of the screen, you've got the NASDAQ up 116. That's your weakest and strongest of the groups. Even the S&P's up 12.
I am trying to figure out what to do.
What are you trying to figure out? Because I can smell the wood burning over there. What are you doing?
I know. I'm trying to figure out a couple things here. Excuse me. I'm trying to figure out a couple things. I'm not
live cattle you're trying to figure out?
Live cattle. No, live cattle I'm not trying to figure out. Thank you.
Well, that's what you just did.
I hope I did the right thing because I heard a lot of beeps going off.
You rolled a little bit.
Yeah.
You got it.
I gotta tell you something. That's a tough underlying to trade. Like I don't know if I'm up money in there, down money, whatever.
Well, you can search pretty easily.
I know.
Sorry to bring facts into the.
Sorry. I'm just trying to get some fills here just to put some stuff on the board. All right. Let's see.
That's a little TLT you're rolling. So far, no opening trades. The market's just sitting at the moment.
Yeah. Agreed. Let's take a look here and see. Well, Mr. Batista, what do you got? Reddit's up $1.
You've got a market with contracting volatility and expected move that's extremely tight. So if you're trading 0 days, trade them small. Take your profits quick, in my opinion. 16, 17 handle move does show that we're not going to move much today, but man, it's a tough game to play.
Yeah, this move in AVGO this morning, not making Tom happy. What do you think here about the broad market?
AVGO up $12. The market itself up $12. Sadnaf, I see no indication of anything changing. Volatility down 25 cents. Bonds are now up for interest rates to be cut. I don't know. When you least expect it. I'm a little bit more worried today than I've probably ever been. But you know what? If there's no sign of anything, wait for volatility to expand, and then maybe something happens.
Yeah, I think you could be right.
Sailing.
I'm just looking, man. I have to make some adjustments. Some of these markets are pretty wide.
Some of these markets are pretty what?
Some of these markets are pretty wide.
Okay. It'll happen.
Let's see what else do we got going on here. See if there's anything else I can interest you in. Can I interest you in this car? So I have a position on in JD, and all these Chinese stocks are up.
Stocks are on a tear to the upside. They're coming for the pigs. Enough. Even JD, which is up 42 cents.
Not really coming for that. But
That's your big one when you got like, Baidu up huge. Baidu's up $8.50, $8.60. Baba's up big.
I don't have
up 4 change. You got JD.
I have a Baba position on, but it's yeah, I haven't had to do much this morning yet. Positions are fine. I'm gonna go through everything at the next break and just take a look and see what we got to do.
Russell's down 1 now. Dow's only down 8 after being down around 80 or so. Even the S&Ps are up 16. The Nasdaq's up 140. Volatility in by 30 cents now. Sound enough. Volatility continues to be wacky poo-pooed.
Yeah, I agree. All right.
All right, my friend. And listen. If you got nothing to say, I got nothing to say.
No, I'm just looking for trades. I really need to put on trades.
Well, you know what? I can't help you there, because it's Monday. You know what happens on Monday, right? We got to slap you in the face. Nothing says Monday like this, man. That's right. The Skinny on Options, abstract applications. Dr. Jim bringing his juice next. We'll be back in 90 seconds with Tasty Live.
Bonds 170.
At Tasty Live, we live and breathe the markets. But when the live show's over, are we out of breath? If you want to inhale the latest breaking market news, we've got you covered. The Tasty Live research team and on-air personalities post refreshing content updated daily covering earnings, economic reports, trade ideas, and much more. If you want a breath of fresh air and not stale takes, visit the News and Insights tab at tastylive.com.
The future of trading is here. Join Mike and his whiteboard, plus the Tasty 2 live crew for 90 minutes of probabilities, punchy portfolio mechanics, and trade tactics. It's totally free and unreasonably fun. Come early to enjoy a drink with the crew and stay for a Q&A after the show. Space is limited, so register today at tastylive.com/events.
Global markets never sleep. Explore them with Forex, now available on Tasty Trade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on Tasty Trade.
Dear Karen, thank you so much for the relationship advice. Of course, since you met your husband in high school, I should obviously just go back to high school. Can't wait to win the Nobel Prize for my development of a time machine. Signed, Regina.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live taunting.
You're mistaking me for someone who cares.
From the smart mouths at Tasty Live.
If you missed the live show, here's our cherry on top weekly recap.
I'm serious though. No, this is all seriousness. Go on you have Amazon, right?
Oh my God. Stop. Well, it's a legitimate question from Tom, because Tom doesn't have Amazon. Tom doesn't have Amazon. It's a legitimate
I don't have Amazon.
question.
Got the need for speed? No problem. At Tasty Trade, you can turn smart ideas into real trades with just a few clicks. Wow, that's fast. Tasty Trade, make your move.
Now, don't screw up. You're the weakest link here.
You guys introduce yourselves.
I'm Tony Batista. He's Tom Sosnoff. You didn't know that? I don't have any idea why you watch.
I'm Tony Batista. He's Tom Sosnoff.
41, you got it.
See that? We knew it. Pretty good. Baseball field.
Baseball game.
It was a wonderful evening.
It was a warm summer day, 1982.
It was around
82, 83. I don't know, sometime around there.
Yeah, 83.
83, let's say.
It was 83. I remember because I was dating somebody else at that time. 1983, yes. It was a wonderful day.
No, we were playing. We played softball on the same team.
16-inch?
12-inch.
With gloves. Because we were hand models at the time.
Yes. I played third base, Tony played right field.
You've been dying to say that, haven't you?
We took him to use a charity case.
In the world of investing, a beast lurks between the numbers, ready to pounce. Some traders hide from it, some ride it. If that's you, join us on Tasty Trade. Genius loves company.
Tomas, we are back, my friend. And nothing says Monday like this, man. Dr. Jim, the skinny on options, abstract applications. Welcome to the show.
Man, what's going on? Did you guys, listen, guys, did you guys see my Chargers get it done in Brazil? Did you guys see that on Friday night? I mean, I've been telling you guys about the Chargers for it's months, it's years at this point. And they just went out there, they got it done. It's been Harbaugh since day one. I mean, look at my boy Herbert. You guys been sleeping on the Chargers, man. That's all I'm saying.
It's not the Dolphins anymore.
I've never been a Dolphins fan. No, never. But my boy Daniel Jones, I've been telling you guys about him too for a while, and I mean, this is his time. This
Daniel
is 100% his
Jones.
time.
So you're Indy Chargers now.
I'm mostly Chargers, but I like Daniel Jones, and then obviously, I mean, I was really concerned for my Bills last night, but at the last second, they got it done. You know, they pulled it out.
You're a that's like a Phillip Rivers combination, Chargers Indy.
Yeah, that's a good pull right there. Yeah, that's a good pull. Phillip Rivers.
You know,
was he in the same draft as Eli Manning? I think he was, right?
He probably about the same age. Yeah.
Yeah. Wow.
Anyway,
That's crazy, man.
Here's the crazy thing. I know you're just kidding with the Chargers because the Chargers actually.
No, I got memorabilia all around the studio. You need me to pull something out?
The Chargers.
I mean, I got a LaDainian Tomlinson jersey right next to me.
Chargers actually don't have any fans, and they're a little like the Clippers. Neither of those two teams have any fans.
Yeah.
But here's the crazy thing. Since my son moved to LA, he is a Charger fan.
He is the only one. He's the lone man standing.
He bought season tickets. He's a Charger fan. I can't believe it. And I went with him last year to the playoffs to see the Chargers when they played in Houston.
Yeah, because they're back in LA now, right? Like they're the LA Chargers, right?
Yeah, they're playing SoFi.
Okay, all right, cool. I mean, they've been San Diego for so long; it's hard to get used to the LA.
They haven't been in San Diego in 10 years.
10 years? No, it's been no. Look. I've been following this team for too long. It's been maybe 5 years at the most, maybe more like 4. It's a very, very recent thing. Tony, you can get your people to look that up for us, but I know it hasn't been 10.
When did the Chargers move to LA, you ask? They moved in 2017.
Okay, so 8 years. Okay, so we're right on the mid price there. There you go. Okay. How are you guys feeling about your Bears tonight? That's what I want to know.
We're long.
I mean, you got your guy, you got Ben Johnson, you got Caleb Williams. I mean, this is it, right?
We're long them. We bought them. We bought them this morning. Bought the Bears.
Sosnoff is long them. I am neutral to bearish.
I bought the Bears. I bought the season. I bought the Bears.
I sold the season.
Everybody is so bearish on them. Everybody is so, this team stinks, blah, blah, blah. Caleb Williams stinks, blah, blah, blah. And all the negativity, I love it, finally. Because every year there's too much hype. Now, this time we got them.
Really? You wow. I mean, obviously you guys were there. Is that right, Tony? Because I felt like just like talking with, I mean, the people at the studio and whatever with Ben Johnson and whatever. It's like everybody's super hyped. Is that not right? I think
Yeah,
Tom's completely wrong on this.
Tom sees the world from a different place, and it's one that's not necessarily the right one. So everybody's very optimistic on the Bears.
That's kind of what I thought. And the over under is 8.5.
I have never
8.5 for the
seen
season?
this city less optimistic about the Bears than this year. This is probably the worst that I've seen them, and I feel like this is the year you got to bet them.
So they were more optimistic back in like the Jay Cutler days?
Oh my God, yeah. When they traded for Jay Cutler, it was like, oh my God, we finally have a quarterback. That's what people thought. And then the people in Denver were laughing at us. They're like, you give us 3 first-round draft picks for that stiff? He's all yours.
Oh, that's too funny.
But-
oh my gosh, that's too funny.
No, you know, I'm excited. I think it's gonna be good.
Yeah, no, I think it's going to be fun, you know. And they got
And
the
they're a
Vikings tonight.
home dog on Monday night. How do you not like a home dog on Monday night?
I mean, historically speaking, isn't that like the best bet on the board, historically speaking?
How about a home dog on Monday night to a
Home dog on Monday night supposed to cover, but you know what? They got to win another. Even if they win tomorrow, they got to win another 8 games for Sosnoff
How about a home dog on Monday night against a quarterback that has never thrown a pass in the NFL?
That's right. That's right. Everything is stacked.
Oh yeah,
If the
that's
Bears
right.
lose this game, they might as well pack it up and leave. Come play with Vinny's little Pop Warner team.
So it's JJ McCarthy is starting tonight for the Vikings, right?
Yeah, Chicago kid.
Yeah.
He's a Chicago kid.
Yeah. Well, no, he's not a Chicago kid. He's a U of M kid. Like, at least, I mean, put some respect on his name. You don't want to tie him to Chicago. You got time to U of M.
Isn't he? He's a Chicago kid, I thought.
Who cares? It doesn't matter. He's a Wolverine. Tom, come on now. But did you guys see my Buckeyes though? My Buckeyes are rolling, man. My Buckeyes are rolling unstoppable.
I thought JJ McCarthy's
Forget about
from,
Arch
like-
Manning.
Isn't JJ
It's all about
McCarthy?
Marshall Manning. Yo, Marshall Manning is where it's at.
Isn't JJ McCarthy from like the suburbs in Chicago? I'm pretty sure he did.
I have no idea. Tony.
Jenny or Liz, I think, went to school with him.
Well,
Oh, really? Wow.
I mean, she went to the same school. They're not exactly. They're
No. They know each other. I'm sure.
Oh man, that's so good. Well, hey, good luck tonight. I hope it goes pretty well and for you guys. But I have a feeling that
We're
gonna
going
be
to the
another
game.
Bears season.
We're going.
LaGrange.
Oh, you guys are going to the game?
Yeah, he's from
Nice.
LaGrange, right?
Born in Evanston.
Yeah. Yeah, there was this.
Evanston? Wow, that's where we lived. We lived in Rogers Park.
Yeah, there you go.
Evanston was right there.
Okay, Rogers Park is not Evanston.
Well, I know, but it's right next to it, obviously. I got it. I understand.
That's like saying Homer Glen is like Glencoe.
I understand. I understand, but I'm just saying it was like less than a mile away. It was half a mile away. And so, Evanston. Oh yeah. Yeah, out there by Toohey and Western, and yeah, those are my stomping grounds. But anyway, speaking of my stomping grounds, man, let's do some finance this morning. You guys ready?
Sure.
Let's go. So Beth, go ahead and get us going here on the intro slide or the title slide. Strategically preparing for market surprises, gentlemen. We need to be strategic with how we get ready for market surprises. I mean, you know, we dodged NFP last week. We've got CPI and PPI this week, and then you've got Powell next week with, you know, the interest rate decision and whatever. I mean, apparently, you know, the Fed funds futures are now pricing in a 99.9% chance of a cut. I mean, do you guys think there's any chance he doesn't cut? I think there's more than a 0.1% chance he chooses not to cut. What do you guys think?
I say there's 0 chance he doesn't cut.
Oh, really? Okay.
I mean,
Tony,
listen,
where are you
a
at?
lot can happen with the bonds between now and whatever the cut date is.
Bonds 117, you're getting a cut. And they're 117.
I mean, right now you're getting a cut, 100% chance. You might get 50 basis points right here. But
wow, that's
okay. But you're getting
is that bullish? I don't know if that's bullish for the
Oh,
market.
I don't think it's bullish at all.
25 or 50. I don't think it's bullish for the market.
You don't think 50 is bullish, or you don't even think 25 is bullish?
I don't think either
I
of
don't
them.
think either one of them is actually bullish for the market where it is right now. I think we get a little bit of a sell-off after they announce the rate cut.
Okay, all right.
An initial bump and then sell it.
Yeah. Okay. So a little sell the news action. Okay. All right. Well, either way, let's talk about how we can strategically prepare for whatever surprises the market might throw our way. So go ahead and get us going here, Beth, on the intro slide. So one thing that all traders can agree on is that markets move and things change, and the next outlier move can come out of nowhere, whether it be next week with Powell or this week with inflation or some other random number. So even as high probability premium sellers, this is the thing that we want to most guard against, and to best prepare for these outlier moves, it's helpful to go back to the source of these volatility shocks. So let's talk about some volatility shocks this morning, something that we have addressed before on the network, but it's been a while. So I thought we might go ahead and kind of bring up an oldie but a goodie. So Beth, go ahead and hit us on the next slide. So we're going to go back to geometric Brownian motion, and we're going to talk about some expected values via the geometric Brownian motion model. So the two equations that you see here on the slide, the top equation, the bottom equation is geometric Brownian motion. The top equation is more of like a Markov model that kind of illustrates or demonstrates how expected values behave given a certain set of information. So if I'm trying to find the expected value of some random variable x at some later point in time, so today is time equals t, and then some later point in time will be time equals t plus s. If I'm trying to find the expected value of x at some future point in time, given all of the information that I know right now, so that's I at time equal t, it's going to be equal to whatever value x has right now, plus whatever the positive drift component is in the marketplace, if we're talking about a financial markets world in a vacuum. In a perfect world where nothing disrupts the apple cart, like everything just goes smooth sailing, it's essentially just positive drift from A to B. But we all know that we don't trade in a vacuum. Like we all know this is not how the markets behave. There's all kinds of volatility shocks. There's all kinds of random events. There's all kinds of market movements. So this is where a geometric Brownian motion can be so helpful, because the geometric Brownian motion model combines the two elements that occur in the marketplace: the positive drift and also the volatility shocks. And so when you're trying to measure the actual change in the value of X, you have to capture both of these elements, the positive drift and the volatility shock. And I want to focus on the volatility shock element here this morning. So would you guys agree that it is the volatility shocks that essentially give us both A, the most opportunity, but also B, can cause the most harm?
Yeah, sure.
To existing positions, you mean by harm?
Of course, because if the position doesn't exist yet, then it can't be harmful, right?
Then it's actually a benefit that it goes to the other side of the equation.
That's correct, because now I'm selling higher volatility and things like that. That's correct.
Yep.
Right, to existing positions, right. And which, by the way, it's interesting you brought that comment. That's actually why it's so important, right? To keep a lot of capital on the sidelines and to not overextend yourself, because you want to have a mixture of things working for you now, but also capital that you can deploy when volatility expands. Right, Tony?
Yep, 100%.
There you go.
But position sizing is so paramount.
That's right. Position sizing and then overall capital allocation. I mean, they go together. They go together like peanut butter and oatmeal. They go together like tuna fish and applesauce. I mean, they're just nature's, natural pair.
For sure. For sure.
Yeah. You guys ever had tuna fish and applesauce?
No, I can't say I have. Dr. Jim can't say.
So you want to hear a story before? You want to hear a story? I've actually never shared this story before. So Autumn and I went on our first date.
Oh God.
No, it's not that story. This is actually no. I haven't told that one before though, but I'll save that for another time. No, this is the tuna fish and applesauce story. So when I was in college, when I was a freshman in college, that's when I first discovered bodybuilding, and I first discovered like competing, and I was so into it and whatever, like it was amazing. So I started eating a ton of tuna fish because I was like, it's good for you, it's healthy, it's whatever. And so I used to just pop open the cans and eat it. And I wouldn't get like the good stuff. I would buy like the chunk light in water stuff that you get like 75 cans for like $1.50, right? Mm-hmm. But it was so nasty. It was so nasty. I was like, I can't do this anymore. So I tried to find everything to mix it with. And I was mixing it with obviously mayo. I was mixing it with whatever. But I needed to find something that would help me out calorically. So you know what I settled on? I started mixing it with unsweetened applesauce. What do you guys think about that?
I don't like the idea. I think it's a travesty. I really do. I think the fact that A, it's a travesty. B, I have to listen to this story. It's even a bigger travesty.
Hey, man, I've had to listen to all of your stories over the years. You can give me a tuna fish and applesauce story, and I'm not even done yet. So I used to carry my little cooler around campus. I had this yellow and black cooler. I would have Tupperware full of tuna fish and applesauce. And this was like 2000, right? So this is back in the day in the bodybuilding world when, it was common knowledge you had to eat every 90 minutes, keep the metabolism stoked, whatever, which is all complete garbage, but we didn't know that at the time. And so I used to have like 4 servings of tuna fish and applesauce.
Oh, God.
And I would eat it in class. Like I would crack it open, and I mean, I'll tell you something. It is nasty. Like it's not as bad as tuna fish by itself, but it's only slightly better. And so I didn't make a lot of friends. I didn't really have any friends in college.
Yeah, because you smelled bad.
I mean, if you're eating tuna fish and applesauce in class, you're not going to have any friends for sure.
Yeah, but it was good because it kept people away from me. So that way I could solve the Black-Scholes option pricing model, and I could work through the derivations, and I was well energized because of all the tuna and applesauce.
Didn't you have a famous tuna fish sandwich at your place by the CBOE when you had that quote unquote front of a lunch spot?
I mean, I love tuna fish.
I mean, what's the ratio tuna fish to mayo? Isn't it 3 to 1?
No. You're thinking of the other place that we invested in. Oh yeah. We have a great tuna fish story. So a friend of mine, we put up the money for him to have a franchise, and in the franchise, they sold like cheesesteaks, but they also had tuna fish, and the tuna fish ratio was 3 parts mayonnaise to 1 part tuna. But you had to let it sit for a while because that way it got the,
Yeah, that way it got
something with the mayonnaise and the tuna. It actually figured it out after a couple of days. And so that was their ratio. Yeah, there was some pretty bad stories. I was like, that can't possibly be the ratio. He's like, yep, that's the ratio.
Well, getting back to my story, which I would like to take my thunder back, thank you. I would say the ratio was about 2.5 parts applesauce to 1 part tuna fish. That was the optimal ratio. And so there you go. So Beth, let's go back to some finance though. There's a little tuna fish and applesauce. So if people need lunch ideas today, you're welcome. So positive drift, volatility shock. So there you go. So Beth, hit us on the next slide. So when we look at volatility shock, like graphically, and inside the Tasty Trade platform, you can actually bring up like the probability cones and it'll kind of show you something similar. But, just to remember that at any given moment in time, right, the expected move in the market is always going to be that positive drift. It's always going to be that positive drift over the next time increment of whatever you might be looking at. But nothing is guaranteed. Nothing is promised. These volatility injections come into the marketplace all the time. So when you start thinking about the actual distribution around the positive drift, this is where the volatility shock really comes into play. And you have to understand that, all right, if I'm trying to prepare for a market surprise, I'm trying to do so strategically, it's the volatility shocks that I really need to prepare for. So Beth, hit us on the next slide. So that's just a visual thing of volatility shocks. But this is where I think it might be the most helpful. So I just pulled up some NVIDIA options, right? You got the stock at 167. You got the call options on the left. You got the put options on the right. Inside the Tasty platform, you've got the blue dashed lines that correspond to the actual standard deviation levels. And in my opinion, you've got 1 standard deviation. You've got 2 standard deviations. We're not typically going beyond 2 standard deviations. Tom, when's the last time you sold a strangle beyond 2 standard deviations?
I doubt I have. I don't
like ever.
I mean, there may be an earnings play, to be fair, where I have, but I don't think it's not something I do.
So, I mean, how far would you say, and Tony, you're probably in the same boat, right?
Yeah, never. I haven't done one all year. Tom might have done one in some, like a Meta or something like that, some $1,200
an earnings play. Yeah, an earnings play.
Right. Got it. Right. So you're typically clustering around 1 plus, give or take a little bit, right? 1 standard deviation.
We're usually clustering around that 20 delta, which is kind of like close to that 1 standard deviation.
Yeah, that's a little inside. That's a little, yeah, but it's pretty close. Okay. Well, here's what's interesting. So look at the actual 2 standard deviation levels and this is NVIDIA. This is a mover, right? This is a stock that has, lots of premium, lots of juice. Look at how the premiums basically fall off the map once you get around 2 standard deviations. And then, of course, if you went out to 3 standard deviations, there would be nothing there. Like, if you're really trying to protect against the blackest of black swans, like, it's just not going to be worth your while at all. And so going out to 2 standard deviations, even the premiums fall off the map. But here's what's interesting. So, Beth, go to the next slide. So what do we do? Right? Well, our preference continues to be something around the plus or minus 1 standard deviation level, like as we just talked about a couple of seconds ago, because the risk return is most balanced. If you want to go slightly inside the 1 standard deviation level, you're going to get higher credits. You're going to be able to collect a little bit more. So this would be the 20 delta strangle. You can have a lower probability, but it's still going to be relatively high, definitely greater than 50%. But you do have increased shock risk. So again, if you're like right now, we're again very close to all-time highs. I mean, the market was strong before we came out. Is it still strong right now?
It is. It's up 12, even the S&Ps. NASDAQ's up 160.
Yeah, okay. So so market's looking good, market's looking strong, right? If you really want to guard against that shock risk, then you have to be aware that if you go 20 deltas, you have a little bit more increased shock risk than if you went slightly outside the 1 standard deviation level. So now maybe you're doing a 10 delta or a 12 delta, right? You're going to get lower credits, higher probability, but decreased shock risk. So, as we see pretty much every single Monday morning, it's a gimme gotcha balance, right? It's a gimme gotcha exchange. But here's one thing that's really interesting, as I thought about this a little bit more. What if volatility spikes even just a little bit? Now, Tom, you mentioned kind of doing the 2 standard deviations around earnings, which generally speaking are higher volatility events. Well, if the VIX spikes, if volatility futures spike, you're actually going to start to see that those 2 standard deviation levels are now going to become somewhat attractive again. I don't want to say attractive. That might be too strong of a word, but they'll become options for you.
Yeah.
They'll become actually alternatives for you. Whereas right now, it's just not even on the table. So this is another, like we talked about earlier, keeping capital dry, like being mindful of capital allocation. This is why it's so important to do that, because you don't want to get caught with your hand in the cookie jar when volatility is low, because then when it does spike, you don't have the optionality to guard against the really big shock risk. Because, we all know the VIX going from 14 to 17 is not a huge volatility shock.
No,
that's not going to be something that's going to put you out of business. It's going to be the VIX going from 17 to 36. That's going to be the thing that's going to potentially be a lot more damaging.
Let me explain one thing, though, that I think you just left out. The reason we don't sell cheap premium is because it doesn't come in. It's not because we hate the trade as much. It's because when you sell something that's it has less than a 5 delta, then most of the time those options don't move. Like they stay bid because people have to buy them. So it's a crappy option to sell. That's number one. Number two, the only reason we do that occasionally around earnings is because they do come in. So it's the whole difference is that earnings speed up that whole process. So they actually do go worthless that next day. So when you do it for earnings, it makes a little bit of sense. When you do it any other time, it makes no sense. I just want to bring that up so people are aware.
Well, and do you know there's actually a second reason as to why the 5 delta options are just not a great option? Do you remember? I've taught you this several times over the years. Do you remember?
No, I don't remember your reason.
This seems like a test, Thomas.
So right around the 5 delta mark, right, Tom? This is where VAMA, right? The volatility of volatility. This is where VAMA is at its peak. And what is VAMA again, Tom?
It's volatility of volatility.
That's correct, right? And so if I sell a 5 delta put, like, yeah, it's going to be strawberries and sunshine. I'm going to Bonefish 6 days out of the week. But that 7th day, it's going to be tough, man. I'm going to be stuck with tuna fish and applesauce because when the market goes down and volatility expands rapidly, right, that volatility is going to kick in. And now it's not even about volatility coming in. It's about, man, the applesauce might even be gone at that point.
You know what's
just
bad?
got chunk light tuna.
You know what's bad is that I actually love tuna fish because I buy it all the time.
Not anymore. No, it's over now. It's over.
I buy it all the time.
It's over, Johnny. It's over.
In the deli, I buy tuna fish all the time because I don't want to make it. So I love tuna fish and I love applesauce. And you just ruined both for me.
No. See, you just
and sounds like the guy who actually owned that shop he wrote into me and said, you got the story backwards. It was 3 times tuna, 1 time
No.
mayo. And you said the price was going to be too expensive. We couldn't make any money. So you reversed the recipe and made it 3 times mayo, 1 time tuna.
No.
He just wrote me.
He's doesn't. It's a little, he doesn't remember.
Whatever.
I remember like it was yesterday.
I don't believe you do.
I'm a
That's too funny.
yeah. I'm a food trap. Like I remember things like that.
Well, I'm just saying. All I'm saying is, I mean, I've been to Bad Coffee, right? I've seen the menu at Bad Coffee. It's a bit lacking. So now you have a delicacy that I'll give you the rights to it. Like 25 cents per order is all I'm asking for a royalty, which I think is really fair. And so put it on the menu and let's make it happen.
I like it. Is that it?
Boy. Okay.
I think we're good. I think we're good.
All right.
You did good. Even the NSPs are doing good. But go ahead. You got takeaways in your last slide.
Yeah, let's get them a few takeaways. I wasn't even sure if we could do it. I thought everybody was kind of chomping at the bit or champing at the bit to get some tuna fish and applesauce. Outlier moves will always be the number one thing we have to guard against as premium sellers. And remembering how volatility shocks feed into the geometric Brownian motion model can help us better understand the gimme gotcha relationship across strikes on the option chain.
Sadnov, what do you have to say for yourself?
I mean, I think for the most part, he's pretty much spot on.
And that's about the best I can hope for on a Monday morning. So I pretty much, I hit the upper bound of the expected move for sure.
Yeah.
You're past that 5 delta. I agree with you. Let's take a quick 90-second break and come back. We got more Tasty Live. Sadnov, what comes up next?
I don't know.
That's right, a market measure. Good job out of you. We'll be back in 90 seconds. Thank you, Dr. Jim.
Mm-hmm.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
As a kid, I used to always tell my mom, I think I was born with speed and intelligence. She still reminds me of that. And I'm like, yeah, I definitely have no speed. But on the intelligence side, I think I figured a couple things out. My mom was a stay-at-home mom, and my dad really provided. He was a very blue-collar worker. In fact, my family lived paycheck to paycheck. And so I saw that. I actually said, I want to be financially independent one day. For the better part of my undergraduate career, I was convinced I wanted to be a stockbroker. I actually worked an internship at a major financial advising firm, and they offered me a job. They said, Jim, just go graduate, come back. But then I actually had an experience. So for all 4 years of my college career, I tutored students in accounting, economics, and finance. And most of the time, the students would come to me and basically to do their homework for them. And I would usually send those people on their way because I wanted people that really wanted to learn. Senior year, young girl comes to me. Her name's Carolyn. She needs help in microeconomics. She is completely lost. Her graduation hinged on her performance in this class. Obviously, she wanted to graduate, but I could feel this natural desire, this yearning to actually know and understand the material. I mean, I had to explain marginal revenue to her at least 38 times before she finally got it, but she got it. We go through the whole semester, we say our goodbyes. A couple days later, I'm standing outside waiting for my friends to come pick me up. I get a phone call and I missed it, but I felt my phone buzz to tell me I had a voicemail. And I looked down and it's from Carolyn. And literally, that 60-second voicemail changed the entire course of my life. So she basically said, Jim, I just want you to know that I'm gonna graduate this Saturday, and I'm only gonna do it because of what you did for me. I'm only gonna do it because of the patience and because of the time that you took with me. I never would have made it without you. I will never forget what you did for me. I hung up the phone, and I had a feeling inside of me that I'd never felt before. And I said, wow. I said, I need to explore this. I canceled plans with my friends immediately. I went to the computer lab. I started researching PhD programs. I said, I want to have more of this experience. I said, I think this may be what God wants me to do. most of financial media is all based off of story and direction. And it's really interesting because it's either you try to find the story to predict the direction, or after the direction happens and you realize you didn't know anything to begin with, you find a story to attach to the direction in a very ex post type of way. We acknowledge, we own up to the fact that nobody knows anything from a market direction standpoint. So what do we know? What can we rely on? And it's the math, the statistics, the probabilities. It's changing the landscape of investments forever. And to be a part of this team, I count that as a tremendous blessing.
Class is in session. Dr. Jim Schultz is bringing the heat to Options Crash Course Live. This 90-minute show features Dr. Jim in his professional prime. All of the gimmies, none of the gotchas. Come early and grab a drink with Dr. Jim before class and stay for Q&A. The event is free, but space is limited. Register today at tastylive.com/events. It's not a lecture, it's a lifestyle.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Today's episode of Market Measures is brought to you by SIBO. SIBO is partnering with tastylive to provide educational opportunities for traders at all levels. Did you know index options like these can provide opportunities for diversification, lower volatility, liquidity, and other benefits? To continue your education on some of the mechanics learned in today's Market Measures, check out SIBO's Retail Trader Suite at www.sibo.com/minis.
Tomas, we are back, my friend. You know what that means. Time for a little bit more Tasty Live. That's right, with a market measure. Even the S&P is up 14. We had very little movement. Volatility in by 30 cents. Russell and the Dow are both down small, and the even the S&Ps are up small. Nasdaq's up significantly, 175 handles in the Nasdaq, about 0.75 percentage point. It's a decent upside move, in my opinion. Bonds, 117.10, Sadnov. That's your big leader in the clubhouse. Maybe not on a percentage basis because you got net gas up almost 3%, but that's a big move in a notional value in the bonds.
I couldn't agree more. And there's actually, well, I mean, if you look at some of these NASDAQ stocks, I mean, other than Apple pretty much being unchanged, Reddit, Coinbase, Amazon, Palantir, Roku, NVIDIA, Meta. I'm just looking at some of the stocks on my screen.
Yeah, AVGO's up another $17. Apple Oven's up $54.
Microsoft, Google, Netflix.
It's all the big players.
Bobalicious.
Even NVIDIA's up $3. Right?
IBM, TSM, you name it, it's up. Everything except your Costco and AMD. Yeah, this is a strong. I mean, I'm surprised that Robinhood's up as much as it is. I'm surprised that Apple Oven is. I mean, I think those are big numbers for just going in the index, but
a 10% move. Yeah, I would say so.
It feels like it.
Yeah, 11% move in Apple Oven. Yeah, sure.
Yeah, Beth. Just so you know, the headline that came out is Howard Stern trolls fans with a gag that Andy Cohen took his spot.
I fell for it.
You did fall for it. She called me this morning. She was like, I can't believe
Howard. Did you really? Oh, you guys got a little, I'm going to call you, you call me kind of thing?
Oh, relax.
Nobody
relax,
called me. All
relax.
Right, Beth, I know where your bread is buttered. I get it. It's fine.
Oh, my God. I forgot how jealous he is.
Yeah, way to go.
Fine. It's fine. It's fine. It's fine. It's okay. You girls got your thing. Doesn't matter to me. I don't need to be part of the cool club, the cool kid club. You and Beth sharing things. Hey, listen, ladies and gentlemen, if you'd like to share things with me, well, you can call in immediately following this segment at 855-238-2789 or 855-BE-TASTY. We'll have 4 or 5 lines open, and you cool kids can be part of my club since we're never going to be part of Beth and Tom's club.
Oh,
Way to go, Tom.
Nice job, Beth. Hang on one second. Let me just get this. All right. Anyway, what time is it? 9:14. Wow. Got a lot going on. So, let me think about this for a second. It is, what do we got going on this week? So a bunch of stuff. So it's Monday, September 8th. And this week, I will be here Monday, Tuesday, Wednesday, Thursday. On Friday, I'm going to New York to do a conference. Do we have free tickets for that? Beth, do you know?
I'll find out.
Let me find out. I think this is we don't ever charge for it. Just to be clear, we never charge. But sometimes we speak at other events where other people charge. So I need to check and see if we've got any free tickets. I won't take any money for anything. But there's an independent.
You took my money at dinner last night. You had no problem doing that.
I'm going to talk to you about that later because you embarrassed me in front of my friend.
I embarrassed you. I mean, you could have thrown your card in there too if you wanted to. I mean, nothing stopping you.
Oh my God, you are unbelievable.
Unbelievable.
You are unbelievable. And you forgot to give me my gift too.
I did. I reminded you. You forgot when we left.
Anyway, so I'm going to be in New York this Friday, and if I can grab some free tickets, I will for people. But I don't know. I just don't know what their story is. I'll find out. And then a week from this Friday, or 2 weeks from now, on September 19th, which is Triple Witching, the Bat and I will be in New York. And after today, this will be wait list only. We had about 25 spots left open at Webster Hall in New York City. And can't wait to see everybody. It's been a year since we've been out there. So doors open at 8 o'clock. The show starts at 9. The market doesn't open until 9:30. This could be our first East Coast show dealing with, a little bit later opening in the market. We'll figure it out. We'll get it done. There's some stuff we can do pre-market, Bat. Not a lot you can do pre-market, but it is Triple Witching. There's a lot of stuff going on that day. We will have, I promise you, a lot of fun. We have yet to disappoint at any of these live trading shows. So far, we're 5 for 5 at the last couple, but it's hard to do. Give up the bid ask.
It is hard to do. We're bound to, something's bound to happen one way or the other.
There's going to be a train wreck at some point, but we haven't had it yet. So if you want to come out to the show, we'd love to see you in New York, and please sign up today because we're going to go to waitlist tomorrow. And then once it's waitlist, you'll probably still get in, but you never know. We just want to make sure. Anyway, that's it. So let's see what else we got going on. That's what we got going on for this week. And that's what we got going on for next week. And then after that, the next show is going to be in LA. We're going West Coast, then we're going East Coast, then we're going back to the West Coast. So LA will be at the Fonda Theater on Friday, October 3rd. That is 2 weeks after the New York show. And there may be a guest appearance by my son. We don't know.
How cute.
He's never come to a single event. He's more likely to come to dinner with us than he is to go to the show. Actually, he has a job, so I don't know if he could go. But we'll see. Anyway, we'll be at the Fonda Theater. We've done it before. It's in Hollywood. It's a great place, really cool place. Amazing old theater. And they got a great screen in there, too. So does the New York show. So, and the San Francisco show had a really good screen. Easy to see, lots of stuff to do, and so appreciative for everybody coming out. And then we will have 2 shows left after the Fonda Theater, one in Charlotte and one in Austin, Texas. I think it goes Charlotte first, then Austin, Texas. And then we'll wrap up.
Oh, beautiful.
wrap up the year of live shows. And then Tony and I are not going to be traveling together for a while so we can get a break from each other.
Is that really why? Tell everybody the truth, Tom.
The truth is, honestly, I think your real wife is jealous.
You know what? She did mention that this morning. She did, because you went out to dinner. You never take me anywhere. You go out to dinner with Sosnoff last night. You've been with him all weekend. You do this to every guy who has a solid relationship with his wife.
I mean, you did go on. This is the last 2 weeks of me and Tony together. We went on vacation together to Mexico. We went.
Right. She did say that, and then you go, yeah. Like I came home and I said, Mexico City's a beautiful city, great like that. But I don't know what I would do there, like with you. You don't play golf. There's nothing we could do like together. Like maybe we can go see a couple of pyramids or something. But
Oh, no.
She goes, yeah, sure, right. Don't take me anywhere. Don't go everywhere with Tom. Go ahead. She did say that. You ruined it.
So Tony and I go on vacation together to Mexico. Then we go to San Francisco together. And then last night we were at dinner together. I mean, it does seem like there's something going on. Maybe, you know what we should do? We should tell her we're going on a cruise together.
A trading cruise. A trading cruise.
We're going on a trading cruise together. Just see what she says. That'll be great.
You wouldn't want to go.
Yeah.
You hate cruises.
You don't want to go. It's all traders. You don't want to go. Oh my God, a trading cruise. That'd be. I want to just see her reaction. That would be awesome. Yeah, we're going on a trading cruise together. So I'm going to take a little break from my vacations with Tony. Now, my wife, on the other hand, doesn't care. She's very happy. She's like, oh, good. She's like, as long as I don't have to go, I don't care. But all right, hold on. Let's see what we got here. S&P's up 8. They're probably going to
as low as they've been all day, Sosnoff.
I know. I'm hanging in there, Mr. Bat. I'm hanging in there. All I did today was sell some Google. So I'm short some Google, and I'm short some, what other stock did I sell? Reddit. So I shorted Google. Yep. I shorted Reddit, and I don't know. I need the market. I just don't think this. I think Friday's sell-off was real, and I don't think this market. They're trying. It's like it's going to run out of steam.
Okie dokie. We'll see.
All right. Let's see what we got here, Beth. Market measure. Easy methods of adjusting or defending a trade. What happens when a good trade goes bad? Every time I think of something that says, well, remember The Far Side, the cartoon The Far Side?
Yeah, sure.
Well, in my head, it's always lived in my head rent-free. The Far Side, when the caption is, when mayonnaise goes bad, and a guy's opening his refrigerator and there's a jar of mayonnaise in there, and the mayonnaise guy's got a gun. It's when mayonnaise goes bad. And I just can't get that out of my head. So this is when trades go bad. Like a short put goes bad. Let's see what we got here. Easy methods.
Yeah, and Beth, everybody's writing in that you're sucking up to Tom. This is bad.
What do you mean she's sucking up to me?
She's everybody can see it. They can read between the lines.
Thanks, everyone.
Anyway, when the market becomes extremely volatile and your positions get tested, it's good to know what you can do depending on the situation you're in. In this segment, we'll review 3 methods for adjusting a trade, a short put, and the reasoning behind it. Okay, Bat, off the top of your head, a short put goes bad. What are your 3 things you can do?
Roll out to the following month, depending on the amount of time left in the trade. Sell a call to reduce delta by 50%. That would, that would use no extra buying power.
That would use no extra buying power. That would use no extra buying power. That would use no extra buying power. That would use no extra buying power. That would use no extra buying power. That would use no extra buying power. That would use no extra buying power. That would use no extra buying power. That would use no extra buying power. That would use no extra buying power. That would use no extra buying power. That would use no extra buying power. That would use no extra buying power. That would use no extra buying power. That would use no extra buying power. That would use no extra buying power. That would use no extra buying power. That would use no extra buying power. That would use no extra buying power. That would use no extra buying power. That would use no extra buying power. That would use no extra buying power. That would use no extra buying power. That would use no extra buying power. That Okay, so you could sell a call.
Sell a call spread if you wanted to get smaller. I mean,
You can
that would
roll
be
out
my
in
way to
time.
do it. Right?
Yeah, what's the third one?
Sell a call spread. That would be my next one. Sell a naked call spread. Roll the put.
That's 2.
Yeah, I don't have a third.
Okay, well,
I mean, unless you're going to go somewhere else and sell, short delta.
no. I think the third thing, just off the top of my head, would be buy a put. So like, you can spread it off.
Not something I do.
Not something I do either. I would sell the call or roll it out in time. Anyway, let's go to the next slide. Let's see what we got here. So this is the Tasty platform. On the platform, adjusting or defending a trade is relatively simple. We begin with a short 40 delta put. So let's dive in. Now you can see here we're just kind of showing we're showing a position short of 40 delta put, and we're showing a little bit of the the buying power. On the right hand side of the screen is the buying power, the price, and then you can see the strike there. That's all, and all the Greeks. Let's go to the next slide. So the situation, the buying power available is near zero because you've used up your capital by shorting the put. So since nearly all the puts are being tested, the buying power of an existing put position goes up and the buying power of the account goes down. That's what we talked about before when volatility goes higher. So you could add a far out of the money put wing, which would reduce the buying power of the trade while maintaining similar exposure. Adding a short call spread can fully finance the put wing. So this is not a bad idea. You could add a short call spread and buy a put with it and totally reduce the amount of buying power that is required to make the trade. You can see here, we kind of outline the whole thing. Short 40 delta put, add a 10 delta put wing, and short a 20-10 delta call spread, and you basically end up, not having to put very much money in, and you reduce your buying power dramatically from 4,300 to 1,700.
I get it.
Not a bad thing.
No, not a bad thing. Not a bad thing at all.
Not bad at all. Okay, let's go to the next slide. Situation number 2, the portfolio delta is too long. You're short a put. So for short puts that are tested and or in the money, their delta has most likely increased a lot. Adding a short call, like Tony said, or a call spread, like Tony said, or rolling down an existing one will flatten out your delta while adding to the net credit of the trade with no increase in buying power reduction. This is typically our go-to move. We're gonna, against a put, we're gonna sell a call or call spread. It doesn't require any additional capital, and it will by taking an additional credit, it will reduce. It will give you some additional buying power.
Mm-hmm.
Because you've taken an additional credit.
Yeah, but it's a small amount of buying power, right? I mean,
it's a small amount of buying power. Agreed.
It can actually reduce it too. It could work a small amount against you too. I mean, if you're doing this on a relatively small price stock, like a $30, $40 stock, selling the call might actually use more buying power, but it's de minimis.
Yeah. Let's go to the next slide. So situation number 3, expiration is too soon, but I want to keep my in the money put. So most people may be leaning directionally long, but not just in their portfolio delta, but also their overall assumption. So rolling out the short in the money put out a month or two to give yourself more time is the least evasive way to maintain long exposure, collect credit, and not add to your buying power reduction. That's right. It'll reduce your risk by 25 to 30% is the bottom line. It'll reduce your delta, and it will just give you more time to be right. So this was the other thing that Tony said, and here's a perfect example. Your buying power starts with 43.65, and you roll it out in time, and it goes down by $195, but you also pick up some additional credit.
Mm-hmm.
And that's it. Let's go to the next slide. With markets going lower and vol staying well above its historical average, adjusting existing positions can change your risk of a trade and actually increase the net credit you receive. Increase the net credit takes down your buying power requirement. Keeping track of BPR usage, credit, debit paid, and net delta effects of the adjustment are the most important metrics to compare when looking to adjust a trade. Our real focus, because right now we're not using all our capital, so our focus is always on delta adjustments. I think that when you get comfortable with delta adjustments, the BPR thing is secondary, but you get very comfortable with that too. The real reason you adjust a trade though is for delta adjustments.
Agreed. That's the reason why you can do it. It's all about delta.
Yeah.
Sadnaf, I always tell you, I've tried for so many years to make you better, but you always just miss by, just a little bit, you're just a little off, which is not, it's not bad. It makes you quirky. It makes you kind of fun and interesting. But again, it was potato salad, Sosnoff, not mayonnaise. It's when potato salad goes bad, not mayonnaise.
I think you're right.
I'm 100% right. I got a picture of it to prove it. I was waiting for you to argue with me again.
It's got to be like 30 years old, so I'm just remembering.
San Francisco.
I think it's just about 30 years old, so I'm marking it. Do you have a picture of it?
I have a picture of it. My friend James can put it up there if he has a moment, or we could put it up when we come back from this break. That might be a little bit easier for everyone. But
when potato salad goes bad.
If you'd like to vote online, you could too, probably, but it's definitely potato salad. I have a picture. Sosnoff, what comes up next? There you go. Here's your picture, Sosnoff. You ready?
That's it. That's it. It's great. That thing has lived
the ketchup and the mustard, right?
That's lived rent-free in my head for 30 years.
Well, you had it wrong. You were blaming mayonnaise.
Well, it's the mayonnaise, but when potato salad goes bad. Yep, there you go.
We're going to take a quick break, but before we do, I need you to call this number right down there below, 855-238-2789 or 855-BE-TASTY. That's right. That's the phone number to call. It's free to call. We'd love to hear from you. We're going to go with your phone calls till 10 a.m. So we got almost a half an hour of phone calls. The sooner you call in, the sooner I can stop Tom from making mistakes. We'll be back in 90 seconds. You got more Tasty Live after this. Give us a buzz. Call-ins next.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that one-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
Global markets never sleep. Explore them with Forex on Tasty Trade. Get in on 80-plus Forex pairs, 24 hours a day, 5 days a week. FX marks the spot. Trade it on Tasty Trade.
People are always asking, where can they find my podcast? There it is, son. Look at that. Option Trades Today. You can listen here. And everybody's waiting for my podcast tomorrow. Option Trades Today, every Tuesday and Thursday around noon. If you want to learn, sir, every Tuesdays and Thursday, Option Trades Today. You can find me on YouTube or wherever you find your podcast. Option Trades Today. You listening to me? Option Trades Today comes out every day around noon, every Tuesday and Thursday. You too can stick with the bat. Hi, I'm Tony Batista, and I've been trading for more than 30 years. I've picked up quite a few shortcuts along the way. I call them trade hacks. Traders for all eternity have been looking for the reason to make a trade. Whether they were looking at charts or they were looking at fundamentals, they just had to figure out what direction the trade had to be. With the research that we provide now, we kind of take the direction out, because it's just a 50-50 shot, and say, what's the best strategy that we can apply? By the nature of the strategies I pick, I'm going to have a high probability of success. And I think my expertise comes from managing those trades, when to take them off, how to maximize the profit on them. I think that's what sets me apart from the novice trader.
Tasty Trade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Traders, start your platform. Tom Sosnoff and Tony Batista are hitting the road for their first ever live trading event, At Work by 11. It's unprecedented, unpredictable, and unlike any other financial event. Watch these masters make real trades in real time. Doors open at 8, the action starts at 9, and we'll have you back at work by 11. Sign up today at tastylive.com/events.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're number 1 for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
Got trader's block? We've got the cure. Get data-driven trade ideas with Cherry Picks, our weekly newsletter that gives you insights into the market. Sign up at tastylive.com/newsletters.
Damn! Wow. Long live the trader nerd!
Man, you're a turd!
Trade junkie!
Hey, it's fun, see? Tom and Tony in the morning.
Tomas, we are back, my friend. You know what that means. Time for a little more Tasty Live. That's right, but phone calls, 855-238-2789 or 855-BE-TASTY. Give us a buzz. I see you, Florida. I see you, Detroit. Got a couple more lines open. Got 3 or 4 more lines open. Sosnoff, potato salad versus mayonnaise were not your first mistake of this calendar week if we start on Sunday. What else did you do this weekend that was kind of a rookie move, if you remember correctly?
Oh, I mean,
Oh no, what'd you do?
do we have to spill the dirt?
We shared everything on this show, Tom, remember?
I did something I've never done before.
In San Francisco. Enough said. Our imaginations are running wild. Imaginations are running wild. I'm glad I wasn't there. I'm glad we had to separate. You had another appointment to make. I would have saved you and told you, no, Tom, no, you're better than this. You don't have to do that. Not even just one time, but okay.
I left my laptop.
We should probably go to the phone calls. It's okay.
I left my laptop on a United Airlines 1998 757.
It was an old plane. It was an old plane. That's not the first laptop. That plane was actually built before laptops were popular.
It's possible. It's possible that plane could have been older than a laptop. But older than laptops. But yeah, I left it in the seat pocket. And this is my computer with everything I have on it. Everything.
Your social security, those dirty pictures, everything.
Everything.
I know.
And
it's a rookie move, dude. And you didn't even know about it until you got back into the hotel, which is really the bad part, because you carried that stupid backpack around knowing it didn't weigh anything. I mean, you got one T-shirt in there.
I mean, I went out to do a show that night, and as soon as I picked up my backpack, I'm like, oh my God, my computer's not in here. And then I realized it wasn't in the room. I realized instantly I left it on the plane. And then it was like, oh my God. But luckily, they found it, and they're shipping it to me.
$40 later, and your mistakes can be fixed. That's usually what it costs me, about $40 a trade to fix your mistakes.
Best $40 I ever spent, if I get it back. But anyway, we'll see. Anyway, that was kind of my lamest rookie flight move ever.
You're getting old. 855-238-2789 or 855-BE-TASTY.
All right, let's go through them. We'll go through them quick today. We got 1 million people on. Let's see what we got.
Florida, Greg in Florida. What's up?
Oh no, the Bills. I can't listen to this. Josh Allen,
He's the greatest. What?
Hey, there's a reason why he's the MVP, right?
Of course there is.
And you're saying you missed the game.
Unfortunately, we were out to dinner because we had plans, and I didn't. I missed the game. I watched the highlights this morning of the last drive, which was really cool.
Where they slowed down the clock so that they can get the 1 second on the clock so that the Bills could then do the play. If you watch it in slow motion, the clock ran out to 0.
Oh, they had plenty of time.
His ass hit the ground before they ran out.
No.
Anyway, I thought it was a cool last drive. It obviously must have been an amazing. On the radio this morning, they were saying it was one of the best regular season games ever.
Do you know what the odds were? I think they did that since 2000. So over the last 25 years, with a 15-point deficit at like that point in the fourth quarter, I think it was like 3,000 or something like that.
Makes sense.
Yeah, it makes sense. Makes sense. I mean,
That's why you never bet against the Bills.
Oh, that's why you never leave early.
My God, you know what? You were texting me during the game, and you were crying like a little baby biatch. Okay, I have the text. Don't make me post them.
I didn't think we were going to win. I didn't think we were going to win,
like a
but
baby biatch.
Not really. I wasn't saying much.
I was running all over you guys.
You were sending me those texts, those stupid ass texts with those silly themes about like trying to stop a car or whatever the hell that was.
You know what? I can't handle Buffalo fans. I can't handle them when they're.
They are setting you up for the Super Bowl.
No, that's going to be the big rematch. You know that is the NFC Championship game.
Yep.
Oh, we'll see him in January again.
Well, I think those are the two best teams for sure.
Well, too bad we can't stop Henry. I mean, it's we got to figure that out.
Yeah.
Okay, Coach. Thanks. Is this all you got to tell me?
What else you got?
Turnovers. That's sometimes, for all the good work and the great performance, that's all it takes. You always talk about choking, but look who choked.
All right, what else you got?
What else do I got?
How many Super Bowls you guys won?
We're gonna get there. Marv Levy's 100 years old. I think he's gonna get to see it in his lifetime.
Chicago boy.
Guy.
Chicago boy lives right down the street from me.
Yeah.
Yeah, he's still doing well.
He's great. He's on the radio occasionally. He's great.
Yeah, where would you rather be than right here, right now? Best fans in sports, second to none.
Oh my God.
Final year at this magical stadium where amazing things have happened over the years.
I mean, with all due respect, that's because there's nothing else to do in Buffalo except think all year about a Bills game.
Well, welcome back to football.
After you had a crappy wing and looked at Niagara Falls from the ugly side of the falls, there's nothing else to do but go to a Bills game.
All right, we got to go. Greg, we got a million people on.
Right.
Goodbye.
All right. Okay, take care.
We got a million people, or we have just one. We're going to go to Detroit. Gomer in Detroit. What's up? Phone line's open. Give us a buzz.
Hey, good show, guys. Got two quick questions. You showed the 3 ways to defend a trade when you get in the money. What happens if you get assigned? I got Chipotle and Lulu got assigned, so I'm trying to see what to do with those two.
That's a different when you have a position on and you let it get to an assignment, then you obviously that's a different story. So
you're using more buying power, but your position hasn't changed.
Yeah, the position hasn't changed. You just are using significantly more buying power. So in that case, I mean, we obviously sell calls against that position, or we take the long stock and turn it back into short puts and then sell calls against it.
Probably at the money puts or something like that. But let me say something, sir. You had time, even if you did short dated options to roll that position before it turned into stock. Meaning you may have had only a day, but you had time to roll that position. So we roll our positions at 21 days. But if we did like an earnings play on the weekly options or something like that, we would have rolled to the back month after that earnings event when we got the in the money option. So that didn't happen to us. That's how we would avoid it.
Yeah, my second question is, I don't know, that's probably for another show. If you guys can review this Economist article, they wrote about if the AI trade blows up $21 trillion, what is going to happen? Because Economist had a really good article on that. So if you get a chance, just read that.
That's a super interesting. I mean, personally, I think that's a super interesting story. What happens if the AI trade blows up? I mean, and when you say AI trade, you're talking about the whole sector, right?
Yes.
Tony? And what happens if fly out of my tickers? I mean,
what happens if the AI trade blows up?
What happens if it expands by tenfold?
I understand that, but we're talking about the other side.
Okay, but I mean, you have to present both sides. I mean, it's an interesting argument, but I don't know. I worry about today.
So I'll tell you, it does scare me, and Gomer, I think the AI trade is very different than like the internet trade of 2000, because I think the internet trade of 2000, these companies didn't have deep enough pockets to support the foundation that they were building. So I think the problem in 2000 was that a lot of the people that built the foundation for the internet ultimately went out of business, because unless you were Intel or Cisco or some of those other companies, but Lucent, Global Crossings, WorldCom, all those companies that truly laid the foundation, all went out of business. And I don't think anybody thought that was possible.
Like you said, we're still using their pipes today. I mean,
yes, sure. In some cases we are, but I think I think it's different now, because most of these AI companies, they're relatively flush with cash. So or at least they have the ability to still raise more capital. So I think the story now is, can they pull back significantly? I don't think that there's a risk of what happened in 2000, but I think there's a risk of price. Like they're grossly overpriced relative to where I think they can, relative to where I think their future is. So I think they're all extremely rich right now.
Yeah, I agree. Thank you, guys.
Thanks.
Thank you, man. Appreciate your time. Sadov, we're going to Italy right now. We got Erasmo?
Yes, and that's right.
How do you pronounce your name? I'm sorry.
Erasmo, just like that, just like you did.
Okay, awesome. Thank you so much for calling in. I appreciate it.
Just want to say that, didn't mean to bother you. I just want to say that I had the honor of meeting you, Mr. Sosnov and Mr. Radigan, Mr. McDonald.
Thanks so much.
In Italy when they came to Milan.
Thanks so much for coming out. That was awesome. Good to see you.
And I really enjoyed the time. It was like a surreal experience. Seeing a person like Mr. Sosnov trade like that was very, very enlightening.
I'll take it. Thank you.
You're ruining my day, sir, but I'm happy you got benefit.
Mr. Batista, you didn't come. I was expecting you to come. You're more Italian than anybody in there. Come on.
Yes, I agree with you. I wanted to come, but Sosnov doesn't like to have both his girlfriends in the same room at the same time. So Dylan was there, and he got the nod, so I couldn't be there.
Well, thank you very much for everything that you guys do. Honestly, it's what gives me the confidence and empowers me to keep on trading. Thank you so much.
Thank you, man.
Awesome.
I appreciate the phone call. Appreciate the support. I really do. Tom, say something nice to the gentleman.
I mean, it's just a beautiful note. Thank you.
Bye. Nice to see you. Bye.
Ciao. See, Sadnaf, you got to assimilate, speak the language a little bit when they call in. You know, it makes them feel good. They made you feel good. He even made me feel good, and he didn't even say anything about me because I wasn't there because you didn't allow me.
Ciao for now.
Sadnaf, as are we stumbling into the close here? Even the S&P is up 22, trading near their highs.
Well, I wouldn't say stumbling because it truly doesn't.
Volatility in by 40 cents. That's a big move. Nasdaq's the leader in the clubhouse, up almost 1%, to almost 200, 197. Well, you know what? The hell with what you think. Washington, Kim in Washington. What do you have to say?
Good morning, guys. How are you?
Good morning.
Hey, Kim.
Hi. Thank you for doing some more segments on adjusting trades. I really, really appreciate it.
Awesome.
So
Cool.
I wanted to give you an example of one that I've done now that I'm trying to adjust, and you can tell me what to do.
Okay.
So on Core Weave, I have the October 17th 80 put. Right now it's at 48% P&L, but I've rolled it twice. So on the platform, under options with 2 rolls, the P&L says negative 163.
You're talking about in
But
the
on
in the order chains?
Yeah. So this is where I get stuck, is I don't know if at 48% right now, if I should close this trade because it's just around 50. But I don't understand because it on the option change thing, it still says I'm down 163.
Okay, so the option chains aren't fail-proof. So maybe there's a problem with one of the rolls or something like that. So what I would challenge you to do is go back to old school, and you can do this right from your activity page, which is the third column down. You got positions, trade, and then activity, and then I would put in the symbol CRWV, and that will give you all of your Core Weave trades over whatever date you want to put. Like if you look to the right of that, they've got, today, yesterday, 7 days, 14 days in the drop down. I would go wide, like, year to date or something like that, and look at the two prices. Yeah, look at the 2 prices that you sold those puts. So if you sold one put at $5 and the next put you rolled for a $4 credit, you would have $9 in credit, and that put that you're short is trading around $3 or so. So you would have, in my example, a $6 profit or something like that. I might think about taking that trade off if that were the case. Now, if you look at those 2 rolls, do you see what they were? Do you know what the prices are?
I got to the page where I did 100, or I did year to date out, and I've got that pulled up.
Okay.
It's going to take me a minute to digest this page, so.
That's okay. Okay, so take a look at the 2 last trades that you did, because you said you rolled it twice, and look at the credits you received, and just add those credits that you received up. If you have a problem with this, you can send me an email. I'm BAT at tastylive, or you can send an email to support@tastytrade, and they can go over it with you, and they can actually go over it in real time with you if you call them, so that you can be real versed with it, and they can see your account. I can't see your account, obviously, but they can see your account and go through it step by step for you. But you got to add those 2 credits up, and then minus whatever you would pay for that put. So for argument's sakes, if you're trying to get 50% and you got $6 in total credit, that puts trading for $3, you're right there. You're probably time to take it off or roll it to the next month or something like that if you want to stay in Core Weave.
Perfect. I really appreciate it, guys. If you have time, and I know you have other calls, I would love an example of one of Tom's adjustments today, because he said the real reason he adjusts a trade is delta adjustments. So if he could give us an example on air of one of his adjustments today, and why he did the delta adjustment. That'd be great, but only if you have time. Thanks.
Sure.
Okay, thank you so much. I appreciate it. So
I'll give you a bunch. Well, I didn't do that much today. Delta adjustments today.
You just did a Roblox one. You did a Reddit one. I want to do a simple one.
Yeah, I was looking. I did one in the euro. I did one in live cattle. Hold on.
AVGO, you did one.
I did one in TLT. I rolled up the 80s. I rolled up my short 85 puts to 90. That's just a straight delta play.
Sure. So
in Lulu.
Here, I'll do it right now, real quick for everybody. You were in October. You were short the 85 puts, correct?
In which, what are you doing in TLT?
In TLT, you were short the 85 puts.
That's right.
And you rolled them to the 90 puts, right?
And the reason for that is because I'm also short calls at around like 87 or 88. I'm not sure exactly, but 80. Let's say 88s. Yes, that's exactly it.
So you would do that by selling the 90 puts and buying the 85 puts, and that gives you 42 long deltas. Now, if you did, 5 contracts on that or 10 contracts on that would give you 420 long deltas. So you must have had, let's say you did a 10 lot, just for argument's sake. It doesn't matter the size here, but you got to remember you're not trading one contract.
Yeah.
But let's say you're doing 10 contracts here. You're bringing in 428 long deltas. So that means you must have had, over 500 short deltas in TLT to mitigate some of that short delta you had. You rolled up that put to give yourself some long delta.
Yeah. I mean, in Lulu, I bought back my 195 calls and sold 185 calls to give myself a little bit of delta. In AVGO, I rolled up my 327.5 puts and sold the 335 puts to adjust my delta.
I know, but they want to know why. So in that TLT example, you would have had over 500 short delta to roll at if you did a 10 lot.
In RBLX, I rolled my short 140 calls down to short 135, and the reason for that is because I'm short puts in that area, so I wanted to flatten out my deltas. So I made probably 7 or 8 delta adjustments this morning. That's all. Nothing. Don't overthink those. Just neutralize a little bit, get to where you want to be, and that's it. I don't overthink them.
Awesome. Maybe we can do a little market.
Thanks, guys.
You're welcome. Or or an option jive so we can have it in slides and you can see it. I appreciate your call, Kim. Thank you so much. Appreciate all the calls. We're gonna take a quick 90-second break and come back. We got more Tasty Live with Liz and Jenny next. A piece.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
What's up, everybody? Check out my new series, Life Cycle of a Trade, where I show you my real-time trades with insights into strategy selection, adjustment mechanics, all the way to the closing order for all of the Tasty Live core strategies.
It was a great show, very inspirational and motivating. I feel like I got to know each of the traders a lot better on a personal level. It was awesome.
A 10th or 11th live event. I thought the math was really complicated, it wasn't, and then it just made sense.
They've opened my eyes to many different strategies.
And I realized there's a reasoning and strategic planning that you could do. I love all you guys.
If you've ever been curious about where to start with crypto, join me, Ryan Grace, for the Tasty Crypto Show. Alongside co-hosts and industry guests, we'll break down what's going on in the market and show you how to take advantage of crypto. No crypto. No hype, no shills, just crypto, no just live. Join the chat and fill your bag each week on the Tasty Crypto Show.
Global markets sleep. Explore them with Forex. Now available on Tasty Trade. Get in on over 80 Forex pairs. 24 hours a day, 5 days a week. With the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on Tasty Trade.
Clip thy waxen wings, thou economic Icarus. Discard these feathery adornments, thy flight's too vigorous. Rather, garb thyself with the soft fur of the bear, and dwell in low burrows of the valley fair. Forsake thy previous highs and perilous summit, for lo, I am short, so I must needs thee plummet. O market, I implore thee, make no high. Like some comic Fozzie, unclip thy bow tie. If thou dost tumble, I shall offer thee up a succulent hoagie. So, ye markets, remain as bearish as beloved Yogi. Follow thee the lead of Kipling's Baloo, and may the move be sweet as honey to Winnie the Pooh. With joy I watch descending chart lines straighten, run down with quickness and sweetness, like Lord Walter of Peyton. Let curious traders admire thy Berenstein way, and joyfully stealing some porridge, let us now say, sweet bearish market, never would I cage her, but admire her drop like some terrestrial Ursa Major. Come down, ye markets, to this sylvan glade, and let the bears have their day at Tasty Trade.
Beat the opening bell. Get trade ideas and market insights before the open. From the creator, Tom Sosnoff, and our chief market strategist, Tom Preston. Every weekday. Sign up at tastylive.com/newsletters.
This is Chicago. We invented the skyscraper, the Italian beef, and the standardized options market. SIBO is not only the birthplace of options, it's also where Liz and Jenny got their start. In an industry first, 2 female former floor traders broadcast live from the floor. Hear the sounds of live market action and feel the electricity as they present real-time trade ideas and research-backed market studies live from the SIBO's SPX pit. Watch Liz and Jenny live from the SIBO, only on Tasty Live.
We are ready to build. This is make or break for this team.
It's down to the last 2 minutes, and it's time to rock and roll, baby.
That's all I got is 2 minutes. The Nets on a good night.
I don't know if they're going to be able to make it, but I think they can just slip right on by and maybe take it through to overtime.
I think we're going to overtime. Here it comes.
Shalaka! Man, he hit the boards hard on that. Wait, this is football, right? Woof! Woof!
Hey, baby. I like the looks.
There's a beast in the financial world, and it's not the bull. If that's you, join us on Tasty Trade. Genius loves company.
Tom versus Tony. Round 1.
Surplus. Shoot. The fall. Volatility boost. Killer trade. Resistance. Straddle support. Order sold. You win.
Global markets never sleep. Explore them with Forex, now available on tastytrade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on tastytrade.
Hello, everybody, and welcome to the Monday edition of the Liz and Jenny Show. My name is Liz Deerking, and I've got two of my favorite people with me. One, Jenny Andrews, and one, Dan the Crypto Man. Thanks for joining us, Dan.
Yeah, thanks for having me. I really enjoy doing this segment on Monday morning with you both. There's a lot going on in the markets, especially crypto markets, and just here to share the knowledge we have.
Absolutely. There is a lot of stuff going on in the crypto markets.
I know, definitely. It's good to see you. It's nice having you on Mondays. Liz and I always have a bunch of crypto questions. I know last week we were talking about one of the products, and we said, "Oh, well, we'll ask Dan when he comes on Monday." Do you remember that, Liz?
Yeah, but I don't remember what it is.
It was SBET. It was that SBET, and we couldn't remember exactly what that was. All I know is that after you were on the first time, I bought some. And then last week, I think I asked Liz, do you remember what was in this? And we figured you would know today.
Yeah, so SBET is the Ethereum treasury company. There's this big trend going on, in case people haven't really been paying attention, but it's basically crypto people acquiring these publicly traded companies and going out and buying up the spot by issuing shares of the public companies. So kind of using the money they raise from the public company shares to go out and buy the spot, put it on the balance sheet, and it trades at either a premium or a discount. That's that MNAV we talked about in the past. So SBET is one of those. It's the one ran by a person called Joe Lubin. Joe Lubin was like an early Ethereum guy. So that one is popular, as well as Bitminer. And Bitminer is BMNR is the ticker. And that's Tom Lee. So our favorite financial entertainer, Tom Lee, he kind of goes on and sort of, he's the chairman and main guy behind Bitminer. So yeah, those are the two that are Ethereum focused. And now, you know, the floodgates have opened and everybody's kind of flooding in to do their own like flavor or version of these treasury companies. We wrote about it in the Tasty Crypto newsletter too this weekend. Because I actually see this as a sign, ironically, that altcoin season, or this like rotation from Bitcoin, ETH into these more out on the risk curve altcoins, is happening, right? And the reason I say ironic is it's starting in the traditional finance markets, right, with these like holding companies. So yeah, I mean it's really high level, but I sort of see that as an indication that, you know, risk is on, and we'll get this rotation into your, I guess, further out on the risk curve altcoins, meaning coins other than Bitcoin and ETH. So
I
yeah,
like altcoin season. That's kind of fun.
yeah, yeah. So yeah, SBET is one, and actually, you know, if you guys have been tuning into the Tasty Crypto Show, or our viewers rather, we have on a recurring guest almost every week. His name is Greg Magadini. He was a former options trader at DRW, and he's now a crypto options specialist at a company called Amber Data. So we have him on, and he gives us a trade every week. And right now, because he's deep in the weeds on volatility, I mean, he's doing like crazy deep, complex, like institutional level research. So he's been giving us a really interesting trade. And that's been taking the taking the premium on MicroStrategy, so selling the premium, so selling calls on
Let's go to the platform. Can we go to the platform
Yeah.
and take a look?
Yeah.
Take a look at this.
So am I in it?
You can do mine because I actually have this position on.
Okay, let's great. Let's take a look.
I can't see it. Can you see it, Jenny?
There it is. Okay. So if you take a look, I did this last week, so expirations will be a little bit off and strikes will be a little bit off, but for illustrative purposes, October 17th, 2025 strike on MicroStrategy, I went out and sold the 400 410 call spread, and I took in about at the time it was like 150 or 1.5. I sold it for like $1.50 credit. And I was using that to finance ETH or an ETH, one of like the ETH upside trades, because I still think there's a lot of bullish momentum in ETH. So taking the premium you're earning off that call spread, selling that call spread for a credit on MicroStrategy, and going out into ETH, or you could even do SBET and using it to finance like an upside call spread, or even just going outright and buying calls. That's been something that we've been showing on the Tasty Crypto Show with our recurring guest, because MicroStrategy's, and I hope I get this right, MicroStrategy's implied, the realized vol is always lower than the implied vol because of the way the MicroStrategy is set up. It's basically like a volatility dampening vehicle for Bitcoin. And if you go and you look at, and I track this, the BVIV, which is the Bitcoin Implied Volatility Index.
Okay, whoa. What is it? BBIV?
BVIV on TradingView. You could see that like Bitcoin has been at this like all-time low for volatility. It's sitting at like 38 right now. So basically, this MicroStrategy premium is this implied vol is trading pretty high. So you can sell that credit. And then use it to finance ETH, because ETH is, with all these treasury companies, Bitminer, SBET, there's demand for it. So that's been just kind of a interesting trade we've been putting on the last couple weeks. So I know I didn't do a great job explaining that, but basically,
So so here's my question. You sold the 400 410 call strat at MicroStrategies and bought ETH.
And basically bought ETH, yeah.
Yeah, so you got $1 for it, and ETH is trading about $33. So are you doing 1 for 1? Are you going out there and buying 3 ETHs for every call spread you sell?
Yeah, I'm matching the Delta dollars.
Okay, matching Delta.
Yeah,
got it. Perfect.
Yeah.
I got it.
Yeah,
we get it, and we'll take a look at that trade when you. That's what I love about having you on. You're in your platform, and we'll take a look and see if we can put it on in ours, because it's not too much. We're going to do 1-to-1
for sure.
But again, so the quantities. So when you
that's what I asked. He's getting $1 for the call spread, and then he's doing delta quantity to quantity, meaning if ETH is $32, he's buying 3 shares of ETH then, right?
Yeah.
Okay. Right. So if you get $100, you're using that $100.
Yes.
Exactly. Or you can actually go and do that and do a call. Like you can either buy ETH outright, like or you can do a call spread in ETH. And if you do the call spread in ETH, then you still want to match that Delta dollars, right? So like on the platform, if you're doing the 40-41, it's a it's a delta of 3. So you're multiplying it by 33, and then the number of contracts would match what your Delta dollars is on that you sold on the MicroStrategy. So you're just matching Delta dollars, like I said.
Okay, I think I get that.
Oh, that's why I'm still confused. So what do you mean when you're matching Delta dollars?
Well, that's why, Dan. So if you're selling one call spread for $100, you're buying 3 ETH because that's $100, correct? Is that correct? Is that what $100 means?
Yes.
That's like total collection in and total collection out. But when you're saying Delta dollars, like the call spread is almost like no deltas.
Yeah. So if I'm looking at MicroStrategy and I just the 400 to 410, if I go sell that today, it's a delta of minus 2.68. I'm multiplying that by the last price of MicroStrategy, and I'm getting the dollar delta for that position. And then I would go into ETH and match that with if I'm doing a call spread or whatever. But Liz, Liz had it right. Like you just have to make sure the ratio is correct on the delta dollar. That's like the easiest way to think about it. So I don't want to like confuse too many people, but just make sure you're
That's a
matching
new
it.
term we've never had. That's why I was like, wait a minute. Okay, so you're just basically using very high extrinsic premium to finance the purchase of Ethereum.
Exactly.
Right. And I don't want to get people confused because I know you said like take that delta of 2.68, multiply it by the cost of MSTR.
Yeah. That should give you like a rough dollar amount. This is the way it was explained to me. It should give you like a rough dollar amount, and then you go out into ETH A, and you're trying to match that, right? So if it's you're trying to match the delta on that. So that's I'm just trying to kind of, for illustrative purposes, the dollar amount that you're selling that credit spread in MicroStrategy, you just the ratio needs to be the same in ETH, in what you're doing in ETH. So, it can't be 1 for 1. It needs to be like 3 for 1, like Liz said.
Okay, we think we got it, and we just keep it super simple on this. I was like, we're gonna go notional value to notional.
Yeah.
Yeah, right.
Exactly.
Like if we're taking in $100, we can spend $100.
Yes.
Basically, yeah.
Okay, perfect. I like it. We'll for sure look at this. And I was pulling it up. I mean, I know we're in your platform, but I was pulling it up too. So it's the 400, 410. So you're pretty far up there too. That's a very high probability call spread.
Yeah. The reason why I was doing it there is typically the way MicroStrategy's been trading, or like the way volatility on Bitcoin has been trading, it has like really high IV, but the realized vol is really low. And that's because the product MicroStrategy, like the way they go out and they're like buying Bitcoin, it's volatility dampening. So that relationship for the last couple months, it's basically realized vol has been way lower than the implied vol. So we're just trying to capitalize on that. That's, I guess, relationship where the implied vol is way higher than what the realized vol is, sell that premium, use it to go out and play some upside in ETH, which I think, with these treasury companies, right? The relationship with these treasury companies coming out, supplies coming off the market in ETH, right? So the less supply, the theory is the less supply, the price will go up. There'll be more demand. So we're just playing for that, right? We're just playing for that upside in ETH. So it's just kind of I don't know if I explained it the best way, but I'm just saying, like, the relationship between the implied volatility and realized volatility in MicroStrategy the last couple months, realized vol has been coming way lower. So take advantage of that high premium and then try and play for upside in ETH.
It's so funny because I think they just use different verbs. They're saying, your IVR is pretty high. Like it's high for itself. It's high volatility for itself in MSTR.
Yeah. So.
Okay. And then what else? Okay, before the show, you were telling us about something in Solana as well.
Yeah. So I covered this on the show last week, Tasty Crypto Show, and I covered it in the newsletter. I think we're getting a rotation into sort of what I call altcoin season. Altcoin season is like that last leg. I consider it that last leg or last phase of crypto bull markets where people, I explained this before, people get really rich in Bitcoin. There's a wealth effect there. They take their gains that they made in Bitcoin, they go out and they do stuff in ETH, or they move it on chain, they do more risky things, right? And then they make more money in ETH. ETH went up, from April to July, went up 60%. We have crazy crypto companies, all that. They take those gains and they go further out, right? That's what gives us like meme coins. That's what gives us NFTs. So the next phase of that, I think, is Solana. And you can take a look and you can see that there's already signs of that, because Solana companies are coming out. These crypto treasury companies are coming out now, and they're going to buy up Solana. So one of them is UPXI. It's called UPXI. They've been around for a little while, buying up Solana, spot Solana. Another one is Sharps Technology, which is STSS. And then the third one is Galaxy Digital. Actually just announced something where they're sponsoring a company, and I forget the ticker, but the ticker for Galaxy is GLXY. So again, there's this kind of same play as the ETH treasury companies. Solana is being bought up by these, public companies. So I think that there's going to be a bid in Solana. And I can also, confirm that with the Sol to ETH ratio. So again, there's signs there that I think Solana is the next rotation. So I'm just trying to position myself for that. That's all.
I like it.
I do like it. I do like, but just so people are clear, like if you have positions in STSS and GLXY and UPXI, those are all, it's kind of like all in the same bucket, would you say?
Exactly.
Those are all,
Yeah.
so don't, like, if you allocate X amount of dollars per position, you've got to realize what you're putting in those three, they're all similar positions.
But what's interesting here is like UPXY is $6, but Solana is $2.15. So those companies are a smaller. That's a smaller. I mean, you could take a portion of Solana too, but they're smaller values, right?
Yeah, and I mean, I wouldn't even overthink it like that. I would just be playing for upside, playing for that bid. The value of the holdings on the balance sheet are going to go up, and just kind of position yourself for that. Obviously, like some of these have options. I think they're pretty thin, so I would be careful there. But even just kind of like I'm front running the rotation into Solana. That's what I'm doing, right? And there's these treasury companies here that are positioned with Solana on the balance sheet. The other confirmation I have on that, or the signal I'm looking at, is if I go back over to my trading view chart and I look at Sol ETH ratio. We usually cover the ETH Bitcoin ratio, but if I look at Solana Ethereum ratio, it's kind of in this uptrend here. So you can see it bottomed out at like 0.04. It's back up to like 0.5, right? So
yeah.
Last year we had this big meme coin craze that all happened on Solana. Got way, way high. It was up at 0.08. And then basically since April, it's just been down only because ETH went on a run. So now I think we've broken that trend and we're back on an uptrend where people are rotating into Sol. They're realizing, there's a play here for that. Obviously, we have these companies coming out announcing they're going to buy up, these treasury companies coming out, they're going to buy up Sol. So I'm front running and playing the next rotation. That's all I'm doing.
Hey, this is exactly what we're looking for on this show, Dan. Just an opinion that you're doing right now, because you have more of a pulse on this crypto stuff than we do anyway. So I like it. We'll take a look at those companies as well.
Would you say you're better off just buying Sol than buying those other names?
I mean, I always prefer holding the spot just because I do things. I transfer it out to wallets. I do things in DeFi that are, kind of maybe outside of what we would do for the show, but I just like holding the spot. I mean, it's kind of like, would you rather have a certificate from some company that own like a gold miner, or would you rather have physical gold? Like, I don't know. I kind of would rather have physical gold in some ways. So I like holding the spot just because I can do more with it. But these treasury companies I see as an interesting play just because, some of them have options. Like, the options are pretty cheap and pretty wide. Like you could you can get filled on some stuff and play for that upside, play for that asymmetric bet. That's kind of what I'm thinking. And, if you're just paying, if you're half paying attention, all these companies are coming out announcing $400-500 million raises to buy Solana, right? So all I'm doing is front running it, right? It's really simple. And like, it's funny because, obviously options and the futures and Forex, even to some extent, like I always consider that very, sophisticated, right? Like professionals do that stuff. That's, what we're trying to do here. Crypto's not that, honestly, crypto's not that sophisticated. Just, hey, I'm front running people, right? Like I just have some information. I've been paying attention to the market. I kind of see some signs like, hey, I think the rotation next is into Sol. Buy up some Solana, maybe play some of these treasury companies. They trade in really high volatilities. There's this last phase of this bull market that I call altcoin season. That's usually comes with high volatility, some, crazy swings. I'm just positioning myself for that. Does that make sense?
Yes.
That makes perfect.
All right, Dan, the crypto man, thank you so much for your time. I know you're a busy guy. When you get off, I think Liz and I are going to jump into the platform and see if we could sell puts in any of those products. We're going to take a look.
Yeah, for sure.
Take a look at all that. And I wrote it all down like a lunatic. So I've got all.
It's all in my notes. It's all in my notes.
I know. That's why as he's talking, I'm looking down. I have it all written down. I'll see if I can digest it. But Dan, thank you very much for joining us. We appreciate it. Next week, can we have you back?
Yeah. 100%. I'll come with more slides and stuff next week too.
Oh,
and,
this is
yeah.
great. I actually love this. This was perfect. We're good with discussions.
Okay.
All right, thanks, Dan. We'll see you next Monday.
All right. Thank you.
That was a great segment. Okay, so if we want to pop into my platform, what do you think, Jenny?
Yes, I want to see if we could sell puts in STSS or GLXY or any of those Solana products.
Okay, yeah, it's pretty crazy because take a look at, hold please, I just have to give it a second and then I can use my mouse again, but it won't let me type right now.
Oh, remember that was happening to me?
So yeah, it just keeps covering it. I'm gonna make this bigger. I'm gonna make this bigger and see if we can do this. Okay, UPXI. That's the one that when he actually smiled when he said this. Because do you remember I put this in my IRA when we were on the train a couple days ago?
Oh, yeah, we've got it. We all have it. This has been months ago because even Logan has it in his account from summer.
That's when I was watching. I got this from the chat. Do you remember this? I was watching Jamal's show and the chat asked, "Why aren't what about UPXI?" And then we both put it in there.
Yeah. So, okay, let's take a look. So if you look at the chart, it did have a run up from, yeah. No, wait. No, you're on the day-minute chart. Come on. We'll go back to.
I love the day-minute chart. Okay, wait a minute. What am I going to do?
Gotta go 1 day.
20 years.
20 years.
1 day, 20 years. There we go.
Okay, yeah, because I feel like when this got brought up to us,
it did have a little run up. This hasn't been doing that bad, but now it's down. So this is all that Solana stuff. So let's go backwards. Okay, so what he is doing too, we're going to talk about this real quick. I'm going to go to crypto. Here's Solana. While he was talking, I went in. Solana was about 216. That's one coin.
217. Load up, Liz. Put in your 217 bid and load up.
I know, I'm going to load the float total at 217. But that's how much Solana is. And then he was mentioning those 3 companies. And I'm not going to lie to you. We on this show, I love having Dan on here, but we know nobody knows anything, right? But he is a little bit more, he's more in tune with the news than we are. So I have no problem jumping on his bandwagon. Do you know what I mean?
Yeah, sure. I mean, again, does he know more than we do about crypto? Yes. But if someone says this is going up, do they really know? No, nobody knows. We've learned that from trading for decades, right?
Oh, yeah.
So if we put long positions on, we know that's a risk. There's a risk for sure. There's risk in all these trades. But I'm interested in selling puts, and I know we bought some. We have this, but I'm curious to see what kind of premium is in these.
Well, it's so cheap. I don't know if they had options when we were doing this. You can go to the 5. Look at this. You can sell the 5 put. Now it's holding up everything, but you can sell the 5 put for 50 cents. That's pretty good.
Hey, how much do you remember the one guy was like, "Hey, how many of these do I need to sell to pay my mortgage each month? How many?"
But so UPXI is lower. I was typing them all in. STSS, as he was talking, is a $10 stock.
No options.
See? And then GLXY, let's look at that one. I think that was $20. GLXY was $20. And that does have options. So I'm not trying to say avoid the $6 one, but sometimes you're going to get a little bit more premium if you go into something. Yeah, here. You take a look. You got the 22.5, so it's $2 down.
Yeah, but you know what? It's still cash secured. So let's go to the $6.
Yeah, but you can always buy something.
Yeah, right.
You can always buy something. That's what I didn't like about the $6 stock is that there was nothing to buy because you'd have to go $2.50 down. You know what I mean?
But it was only using so let's think return on capital. You're getting 50 cents using $450. So you're looking at over a 10% return on capital. Here you're getting, if you do the spread, $1.50 using 600. So you got like 20% return on capital here.
More return on capital using GLXY.
But you're always going to have a higher return on capital when you're doing a spread.
But take a look at this. So it's interesting because I just chose the 15 only because it's got a bid and ask. So I can take it up to the 17 if we want to get $1.30 using 370. That's a good return on capital.
Yeah, sure. And we're just going to put in a GTC to take 50% out of this.
So this will pop if, but this is what I was going to say. Jenny, I'm just talking, just the 2 of us in the room now. Nobody else is listening. If Solana's going to pop, I want more than a dollar. I want more than 50% of $1.30. You know what I mean? So you could do.
I've got an idea, Liz.
What do you want to do? I was going to say diagonal, but what do you got for me?
Yeah. I mean, you could buy you could buy the 22 and a half. Listen to this. You buy the 22 and a half call, and I know that's $1.60 in extrinsic value, and then sell 3 of those puts for 50 cents to cover the extrinsic value.
I'm selling the puts.
Right? You know what I'm talking about? The UPXI puts?
Yeah, so when you said, it's funny because you're like, and sell 3. I was like, I'm not selling 3 calls in the near term, Jenny. No way am I doing this. I thought you were going to do
No, so like you could buy this call and then cover the extrinsic value with 3 UPXI puts.
Now that's a way to use as much capital as we possibly can for a bullish position because all 3 of those are cash secured.
No, but those puts were only like $400.
So you'd use $1,200 to get $1.50.
But you know what? Buy a call spread and sell 1 put. I
like that. I like that idea. I think you get a gold star for effort. I'm just saying for the cash securedness, that doesn't make much sense. But what you could do, if you think it's going to pop, is do you can do a longer term diagonal too, right? So you could go. Oh, you can't really hear.
I mind these are all the same, right? Like they're all similar, so we don't need to. You don't have to do them all. Like, go to UPXI one more time, and it's so cheap. It's only $6. How much is it to buy a call there? Like, you could buy that. You could do the combo here. You can do the combo here for $400. Oh, 5.
What? Yeah.
I mean, buy the 2.5. You can. But you can buy the 2.5 put.
I'm telling you, I don't want to buy the 2.5 put. I want to buy the 2.5 call. That's what I want to do. I want to use $365 for unlimited profit potential to the upside for the next 29 days.
Sure. I still kind of like the idea of getting the 50 cents on the 5 put. I'm gonna go home. I am home. I'm gonna go home and load up.
I'm out of here. That 5 put isn't bad. Okay, so
yeah, buy the 2.5 call. Buy the 2.5 call. And as the stock, right? But the 2.5 call is stock.
Here we go. That's what I'm doing. We're using 346. So I'm sorry, 343.
Okay. Yeah.
So we are paying a little bit for it, but we do have the I'm buying the call, I'm selling the put, we're watching extrinsic value, and then I bought something just to release capital to the downside. We're paying $300 with unlimited profit potential. Deal?
And I'm curious. So since we set this up, like, see if you set this up in Galaxy, how much more it is, because percentage wise, if they're always like, if that's up 1%, it's weird. So that's up 1% and Galaxy's up 2.5%. Like, if you think we've got more room to run in Galaxy because it's a higher priced product and if it moves 1%, it's going to go up more. Yeah, 185. Oh, but it's using 900. Bring that 15 up to the 17.
That's not bad.
202 debit using 700.
That's not bad.
Bad.
I'm shipping it. We're going Galaxy. GLXY for the win, Jenny. Let's see if we can get filled. They're 10 cent, 20 cent wide markets and 5 cent wide markets. We'll see if we can get filled.
Okay. Right, and I know we're filled immediately.
Okay, so we'll push this out to the follow feed. Okay, so that's good. I wanted to take a look at our account real quick. We're going to take live tweets, put the hashtag LAZJNY on there. I don't know that we have a lot of earnings. Let's take a look at our core week position. We switched it to the put. We made money on it, switched it to the put, and we're up $123.
Yeah, I think like vols come in core weave. It's up $5. I guess move up, vols come in maybe.
I mean, look at SPOO's up 25.
Because I doubt, and maybe we didn't pay attention, but I doubt we would he have sold a put if it were 0.9 rank?
What here? We had the buffer trade on and then moved it to the put.
And then we were gonna So we made money on the buffer trade, and now we made money on the put.
I'm closing this. So, and we can get back in another day. We're taking $100, running like a thief in the night.
That's gonna give us, how much buying power did that give us back? That gave us enough to cover our Galaxy trade.
Yeah, it did.
Yeah, basically, like we spent $700 in Galaxy, and now we got $800 back in core weave.
That's right. That's how we do it. Hold on, I'm gonna go to core weave, push that through. Yes. Okay. Let's see what else needs to be managed. I'm only looking at the positives right now. Our IBIT, take a look at this. We are just a bit about 50%. And it's
we've been putting in 50% and getting filled at 50%. So I kind of
I know we're 46.8. That's the only reason we could move this trade.
Yeah, sure. Go ahead and close it, and we can put on a new one in the next week. That's
Because
fine.
we are, I mean, we're a pennies away from our GTC. We'll see if that gets hit. I'm not going to penny it up because that's 50%, but that's been a good weekly trade. 50 cents, 50 cents, 50 cents.
Oh yeah.
Yeah. Okay, so there's our IBIT trade. We've got our Galaxy. I love that they're right next to each other. Here's our ETH A position. We've got quite a bit of stuff going on in here.
Yeah, I don't even know what we have going on here.
I know we have.
Look
I
at
know one's from Fausia where it was.
If you look at days open, then you can separate it. So the one that's 3 days open, highlight that, and that's one trade.
So this is the IBIT trade where it's the jade lizard type thing. So it's a big lizard with a fat tail.
It's a big lizard, and if we hit,
it's a big lizard with a fat tail. I just put 50% in there just because.
Okay, and just leave that.
But I just wanted to have a closing order in for it.
No, I know with the big lizard, we're never looking for 50%. We're usually looking for 20%.
I know. I was just saying, I just threw it in there so we can separate them and see what's going on there. Oh, we're filled in IBIT. Good. Okay, so then we'll go back into IBIT, but let's take a look at these. There's the 24 day. So this is the one we did with Fausia, where we sold the call and put the zebra farther out in time.
Yes. So we've got.
And we could buy this call back. The SEP 40 call.
Sell a new one. So that's in the 11 day.
And we could sell another one because our zebra is in the 74 day.
Okay, and it's the 30-35 zebra.
Now, our trick of the trade is going to get ruined when
that's why I would say you've got the closing order in for the one, so we know that's a trade together.
Yep.
It's fine. Yeah, we roll it, but we need to make sure we get enough for it. So
it's 12 cents right now. So let's take a look. I'm going to close the 9-day. I'm going to try not to cross cycles. I'm going to go to the 32-day.
No, let's do it. See if we could go shorter term, because so we could have like sale.
Okay, let's try that. So hold on. Let's close this.
That was in the 11-day. Let's just go out a week further, the 18-day.
In the 18-day, you're only getting 30 cents.
And no matter where we go, we're not gonna be able to get to the 40. We have to bring it down, but you can go to like the 37.5 and get 70.
Oh, you got pretty far if you went to the 40 in. Let me close these. The 32-day, you can go all, but you're right. You can get
66 cents.
Oh, I thought it was 90. Sorry, I was looking at the offer.
I mean, I don't love it. Like, I'm tempted to wait for a little more of a run in ETH before we throw in a new call.
Let's buy this back.
Yeah, let's just buy that back and wait for a little bit of, because 3 days ago we sold that for what, $1, and now it's 12 cents.
That's what I'm saying. We've got a zebra in, and I'm okay with just a zebra in ETH, and we will sell calls against it at another time.
Yeah, right. I'm okay with just a zebra and ETH. And if we wanted some like extra premium against it, we've got that big lizard, which could give us some extra premium against it. I think that's okay. We still have, it's not the zebra is like 0 theta trade, and then that big lizard is giving us positive theta. So we should still have positive theta in ETH.
Can I show you something that came through this morning when the markets opened? So this morning, I was like, what the heck was that? JD was buying this morning.
What is it?
No idea. And so I texted him, it's like some cloud net or whatever, something like that. But I was like, what are you doing? He's like, somebody told me to buy it. So
oh, how cute. All right. So now we all have, let me put that on my list. Net. If JD's in, I'm in.
It's so funny because then that same thing. So he went and bought, whatever, I think a share or 2 shares. And then, so I just went out to the 4-day because I wanted to get in, and I sold the 217 put, but it holds up a ridiculous amount of capital.
Oh.
Yeah.
Let's see the chart.
Oh, it doesn't look like something you want to get in now. But because he's in, I'm in.
Why don't we just do like standard October put spread in there, or diagonal or something like that to get in with JD?
You could do a put spread. We could just go baby.
There's a $1 and a $5 wide.
Yeah, I'm gonna be a little more conservative because it was 1 or 117. Let's do this. We'll do $1 and a $5 wide in October. I don't know that we should be,
I don't know.
I don't know that we should be listening to a knucklehead teenager. I mean, I put it in my account to keep an eye on him, but that's it. Okay. And then Jenny, take a look at this.
I know, that's crazy. Finally got into the S&P 500.
They will. Haven't they almost gotten in a couple times?
Yeah, every time. And then let's go to the chart. So every time they would think they were getting in, it would go up, and then they would say, we're not, and they would drop down. So it's not making all-time highs, but it's pretty much back to its all-time highs.
Yeah. Oh, yeah.
Yeah.
So that is pretty interesting news in Hood.
Right. Right. Let me see what was moving in my account today. It's not Hims. Hims was finally having a rally. I don't know if it still is or what it
We
is.
don't have Hims anymore.
Oh, we don't.
No.
Okay.
Hims is up. Yeah, Hims is up 5%. I mean, this is pretty interesting. The market is up. I don't know what I expected this week, but I didn't expect this. I want to take a look at the VIX too.
15.
The VIX isn't really moving much. Our little baby MCL that we put on 3 days ago is doing pretty good. 28%. Oh,
20%.
basically.
Let's just take it off, right? It's a naked put in MCL. We've got 28% in 3 days.
I agree.
Yeah.
And that's what we did on Friday, right? Yeah. Yeah, you know what, Jenny? And then I will go into Twitter. So
I'm going to post something on Twitter right now that I saw, and I took a picture of it for you, sending it for you. Because I know this is isn't this JD's rush week or fraternity week?
Yeah, rush starts today, supposedly.
Okay, so this is for JD. I just sent it to Twitter.
Okay.
It should, yeah, if you refresh, it should be there. I just sent it.
Oh my goodness. I sent this to him yesterday. Did you see this on LinkedIn? Because these guys look like high earners.
Study shows joining a fraternity is linked to higher lifetime earnings.
Well, he's in. He's having the time of his life down at UK. So, yep, it starts this week, and the madness shall begin. I'll keep you posted.
Good luck to him. Good luck to him. I mean, he is, tell me again, 6'6"?
6'6", yeah.
6, what fraternity wouldn't want him?
He's 6'5", but you put him in shoes, and then he's that tall. Do you know what I mean?
Who wouldn't want him for all their intramural teams?
Well, they already have him playing for the basketball teams.
Oh my gosh.
Logan, their teams are terrible. I was like, it's fine.
Logan tried out for the it's so funny, my kids never played golf as a sport, and now Lily's on the high school golf team, and Logan tried out for the Miami golf team.
Did he make it?
No, he didn't make it.
That's gotta be hard. I mean, that's a college golf team. That's gonna be hard to make.
I mean, he said people golf in the 60s. He went and practiced the course, and he had to he went and practiced the course the day before and got an 82, which is still good.
Right. Yes.
But he said every single kid would once they were, within chipping range to the green, everyone would only get 2. It'd be one chip to the green and then 1 putt. He couldn't believe how good they were.
Yeah, I mean, that's a college golf team, so I would imagine it being pretty good. Yeah. It's not like the intramural golf team. It's the college golf team.
I don't know what possessed him to think he could actually try out for it.
Hey, try, right?
Yeah.
For sure. That's so fun. Okay, let's go on to Blue Wackadoo. Eric, done for the day. No, seriously, no more 0 DTEs today. Collected $12.72 after fees. Thank you, Mr. Market. I love this. I'm going to retweet this.
Oh my gosh. So, Eric and Jack, I was telling my husband about you guys over the weekend, and he's like, why don't you do this every day?
The first time you told your husband about it?
Yeah. He's like, I don't know why you're not doing this every day.
I mean, I aspire to be like them. I do try to put a couple in every day, but I think this is their exclusive. Like I said, I want to, how nice it would be to be Blue Wackadoo and have nothing in your account now? You're done.
I know, but it's kind of like his morning job, right? It's kind of like his morning job. And I do throw in the 0 DTEs, but not it's not my job every morning. This is Eric's and Jack Tucker's morning job.
Well, because you and I love this. I love them. And they've made me very, very greedy, these 0 DTEs. But I will tell you, I am obsessed with the markets. We do. This is what we do. We've been doing it forever. And I like looking at everything else. So I can't have just 0 DTE SPX.
And honestly, I've said this before. We trade, but we also have the show and we commute, right? So if we're on the train, we trade from the train, but if we're in our cars, we can't trade from our cars. So there's
Frowned
like
upon.
there's
It's
a
frowned
balance.
upon in trade and drive. It really is. It's hard. It's hard to do it. But yeah, we have, I mean, we have big portfolio, or big, like, and because we've been doing it for so long, it's just who we are. Do you know what I mean?
I'm not going to throw in 40 lots of an SPX 0DTE and then get in my car and drive downtown.
No, you
but my husband can't imagine, Liz, why we're not doing this every day.
I mean, I can't imagine why we aren't either. And that's just it. That's why I've got JD doing it, and I'm happy for him for doing it. I mean, he's taking a little bit of a break. He's taking a couple hits per me, but like, it's fine.
Well, it happens, right? And that's what I was trying to explain to him. Like, there are going to be losses, there are going to be full losses, and what if you start and your first trades are, loss? It's hard when you get started. Like, I'll never forget your father-in-law. We were telling him about this trade, and we're like, Larry, this trade's great. And his first
What this trade? It was the at the money. It was the at the money iron condor.
Yeah, but it wasn't. Was it 0DTE or was it?
Yeah. But this was when they had him only on like Monday, Wednesday, and Friday.
Yeah, like only on certain days of the week, or like only when we had the weeklies, and it was just on Fridays. So we're like, all right, Larry, you're on Thursday, you're gonna put this trade on, or Friday, you're gonna put this trade on.
A loss. Yes. Okay, look at this. The Todd father. I love actually.
I love it. Yeah.
On the SPX Ironflies Condors, if you let them go to the end of the day without closing and they settle to cash, is there any sort of fee? Is it the same with XSP?
The Todd father. Okay, so if it's out of the money, no. If it's in the money, then they become like exercised or assigned, even though they settle to cash. So I'll get those emails saying like, you are assigned, you are assigned. So I don't really know for sure.
Well, exercise and assignment fees are $5 per line. They used to be. So that's the only thing that will happen. And yes, it is the same with XSP. So everything out of the money just is yours. You get to keep everything.
And I'm not sure what the exercise and assignment fees are in SPX. I really don't know.
I actually don't know either. I just know they're for regular options. I think it was $5. We could fit. I mean,
I don't know if it's changed, honestly. Like, we don't keep up with it. All I know is I do keep an eye on my fees in my portfolio. I see net P&L year to date and net P&L year to date with fees. So I'm always aware of my fees. And like I say, they're always about 10% of my net P&L.
And take a look at this. I just went back up to Eric because I like that he does this. Here's his commissions, here's his fees, right? So you're taking a look at whatever those fees are. Now he's out of these. These are nothing. He's not showing. This isn't what happens when you get exercised or assigned. This is the fees into and out of each trade.
Yeah.
But yeah, you have to take, it's part of it. You have to take that into account. And thank you very much, Frank the Great. It is $5 for exercise and assignment. No charge. Yeah. Thanks, Frank. I haven't looked at it in a while. That's what it used to be. Okay, now Bob on Fire comes in. Good morning, ladies. Here are this week's potential earnings plays. So today, none, but tomorrow, Oracle, GME, AVAV, SNPS, and Chewy.
Yeah. Hey, did you see, I'm going to post this on Twitter too. And I didn't want to scare you with this, or maybe I won't because it didn't really happen. But my brother sent me this over the weekend, and I was going to save it for the show, but OKLO is opening a new plant, going to be building this like massive plant and putting a lot of money into a new plant. And one of the options for where they were going to build it was Lamont, Illinois.
A nuclear power plant? It's like, we're going to be like the Simpsons.
It was like it was like a nuclear recycling plant.
Like the Simpsons. Remember in the beginning of the Simpsons, they have that.
And the reason for Lamont was because they do a lot of business with Argonne, and Argonne is in Lamont. So Argonne National Labs is in Lamont. And so it was literally on one of the other news networks, and they had a picture of Oklo, and they had like Lamont, Illinois, like highlighted on the picture, but they ended up going with a location in Tennessee. So you don't have to worry about it coming.
No, thank you. That wouldn't have scared me. I'm actually fine with that. I like The Simpsons.
But hey, I want to get back. I want to make sure we're in Oklo, which I don't think we are.
Yeah, we will pop back in there. I just wanted to get to Ajit real quick because we love Ajit. He's the best. Okay, names with highest IVR, IVP, and high V, and he gives his, ACN, which is my old alma mater, is a nice short, nice for the short condor, given it got caught in a lot of political crosshairs due to an Indian outsourcing of immigration concerns. I did not know that.
I didn't know that either.
That makes sense, though. Okay, so we'll take a look at that, Ajit. I love that you send these. We really appreciate it. And then I want to see this extra happy Monday when your hood Super Bowl printed over the weekend. Already peeled off a one lot to lock in some lunch money. So congratulations on that. Look at that Super Bowl.
Yeah, he's on fire. Eric's on fire.
Yeah. Yeah, so Eric is on fire. I'm going to retweet all of his stuff so everybody can see it. Repost, and then we're going to jump into Oklo because it is already 10-2.
I know, we're running out of time. But as I really, if they were really coming to Lamont, we would have had to get Longmore Oklo. We don't have a position here, and we usually do.
So
we know it uses a lot of buying power. And check the margin. Has the margin changed?
Nope.
So let's just sell a put spread. How about the 65.60?
So do you want, 65.60 makes sense. Let's see what we're going to get for it. So you're getting 166. That's your tried true vanilla put spread. That's fine.
Yeah, that's fine.
It's got a 3 rank.
Well, I know.
Would we ever want to kind of do what we did in Etha with it? So
with Fazia's trade, we went all the way out to November with the long.
Yeah, we could go out farther in time. So $1,200 is kind of a lot.
A lot for a zebra, but you'll get some money. Why don't you try to knock $2 off of it?
$2. I want my $2.
Yeah, so that'll knock $2 off of it, and then we could sell again and sell again and sell again.
This is only 11 days.
Right, that's what I mean. And this is going to come off in 11 days, so then we could sell. Then how many sales will we have in between? If it goes up, so how many? So we've got the 11-day, the 18-day, the 25-day, 32-day. We've got like 4 sales in there.
And what you're looking for is we're looking for a bullish trade. We're washing extrinsic value in here. Are we even washing extrinsic value? Paying 1. No, we're paying some extrinsic value.
But with the extra 2, we are. Like with the extra money with that call sale, we are. So basically what we want when you're doing this, when we're putting in a zebra and then selling a short-term call against it, is in the next 11 days for it to like creep up towards 75. So when that's coming off, we can roll that out the next week to a higher strike, to maybe the 78, and then creep up to 78, and then roll that to the next higher strike, maybe up to 80 or so, to keep moving up that call. That's why if we're going to sell a call against a zebra, I want the short call short term, not in the same cycle. And that we learned that in DocuSign, and that kind of, I don't want to say like screwed us in our DocuSign position, but we've kind of learned that if I'm selling a call against a zebra, I want those calls shorter term and not in the same cycle.
Not the same cycle, because then the ratchet kind of messes with everything if you're trying to roll it up. Oh, but you don't have to ratchet because you're still saving yourself. The ratchet is just like long-term positions if you don't have things sold against it, I think.
Right. Yeah.
But we do want to be in Oklo, and we did get some buying power back. So these are our options. You can do the zebra with the short term against it. We can sell the put spread, which is actually probably not a bad idea either. We could literally just sell the 70.65 because you're getting 233 and it's almost a chicken.
Right. That's fine. Yeah, sure. Just sell that.
Let's just do this. We're going to keep it simple.
We're using $200 instead of $1,000.
Yeah, we're using 200 instead of 1,000, and it's very, very simple. So we're back in the Oklo game, even though they did not put the plant in my town.
Oh my gosh. When my brother sent it to me, I thought I should send this to Liz, but I was going to save it for the show. And then in between him sending that to me and the show, they announced that they're going to build it in Tennessee.
We're in Tennessee.
Rowan County, something like that. I don't know. I'm not sure. I can't remember. There, you can watch it. You can find it if you look up like Oklo new nuclear recycling plant. It all comes up. It was just announced over the weekend.
Oh, I will look it up.
Or like last week.
I will definitely look that up. Okay, anything else we need to do to manage? We've got a couple minutes left in this show, Jenny Andrews, and then we are going to be in our studio. This week, we are not going to be live from the SIBO.
Yes, I know. Well, they're so busy. They've got a lot going on, and then they're gearing up for Munich. I leave this weekend. I'm leaving Saturday for Munich. Can't wait.
Well, I leave Sunday, right?
Yeah, you leave Sunday. I leave Saturday. You leave Sunday.
Yeah, it's going to get here so fast.
Oh, yeah. I mean, we have barely like just this week and then we leave. So we're not going to be live from the SIBO this week. They're busy. They've got a lot going on and they're packing up and moving all their gear because our show next week, next Tuesday, our show is going to be live from Munich.
I know, that's crazy. And we think it'll be a little bit of a different show. We will be doing some trading and you will see anything that we do in this account will be pushed through. But it will be a little bit of a different show.
Yeah, and I don't want to scare them in case they're listening. We're not going to be trading on the show. Our show is going to be a different show. But when Liz says we're going to be whatever trades we do next week, we'll push everything out on the following.
Everything a little bit. That's the one thing Jenny and I are very, very, very good about trying to do things live on the show. If we have to manage anything, it will be taken care of, but it might be a little bit of a different format for our show when we're live in Germany.
And we'll have some regular shows.
And it will be 5 p.m. So we might have a pint of beer in our hands too. We'll see. 5 o'clock somewhere, right? Yeah, I'm really excited for it. But I am sad. I'm going to miss the SIBO for 2 weeks.
I will miss the SIBO, but we're going to see all of our SIBO people.
Well, that's true. But not the floor. We won't see the floor guys. I'm going to go back into Twitter, make sure we got to everybody. I think we did. Oh, yeah, there we go. Mikey! Yes. I love when Mikey puts this on because it is from Flash. He's 6'5", but he's actually 6'9" with the afro, which is awesome. That's totally my kid.
Oh, Mikey, after heading downtown to tailgate before the Bears game. Nice, have fun. I'm kind of jealous of all the people going to the Bears game. It's beautiful weather, and it's going to be fun. And I hope
gorgeous day for the Bears game. Did you get your numbers from our train conductor?
I did. A random recommendation for a funny show to watch on Netflix, Resident Alien. Okay, I'm always looking for a show, Mikey, so I will put, let me add that to my notes, Resident Alien. Yeah, and my guy, Jared Goff, didn't do well at all, ice cold this weekend. And I bet on the Detroit Lions to make it to the Super Bowl, and the payout wasn't that great, like $600 for every $100 you bet. So I might double down if my odds, if I'm got better odds now.
So you were cold this week on your fantasy football? See, I think it might have been a one-hit wonder, Jenny. I didn't want to tell you that. You were all high and mighty about your football picks, but it might have been a fluke.
You know, Jared Goff, it's if your quarterback doesn't perform, your team's not going to do well. So he had a rough game.
Yeah, that'll do it. Okay.
Oh, Jackie, do they have free lunch at SIBO? No, Jackie. No, they don't. At Tasty, we have free lunch. At SIBO, we pay for our lunch.
We go to the basement, sit in the basement, and eat our lunch.
Okay, but I want to take this back because I'm pretty sure for like SIBO employees, they have, and I think I talked to one of our guys about this before. I think for SIBO employees, they might have some kind of like lunch credit or a stipend or whatever. But for us, we're not SIBO employees, so when we go and film there, we just buy our own lunch.
Yeah. But Jenny and I take turns. So half the time it's a free lunch for me. How about that? No, but we do love being down there. It's fun. I don't mind paying for lunch because we do. The reason Jackie's asking this, because he must have seen what happens at Tasty. Tasty, free lunch. We'll get free lunch tomorrow, Jenny.
Yes.
What do you think the lunch is going to be tomorrow? Tacos?
It's Tuesday, maybe. I don't know. Maybe tacos. I will say, though, when we buy our own lunch, we eat much healthier. Like we eat so much healthier on our SIBO days than our Tasty days.
The only saving grace about the Tasty Studio for me is, okay, so we've moved 3 times to 3 different studios, and every time they brought in lunch. The thing that helps me out about the studio that we're at right now is that the food is half a block away. So you have to walk to go get it. Otherwise, when we were at 19 North Sangamon, I'd be done with that. I'm like, I'm just going to go.
Oh, it's right there. I know.
It's right there.
I know. So you're right. We have those long walk. We don't see the food. We have to walk and like it. You're not getting up for seconds.
Yeah, you're not gonna. No, it's too long of a walk for seconds. So otherwise, I'd be like, I'll have some more chips and guac. I'll have some more of this. 19 North Sangamon was terrible for me. This one's a little bit easier because you got the walk. Then you plate whatever you're gonna do. You walk back. You're not going back for seconds.
I hope they have salads tomorrow because I'm on my Munich diet. 1 week till Munich, I'm on my Munich diet.
You got to start carb loading so you're ready for the beer and schnitzel. You got to start carb loading.
All right, we're out of time. Spoo's up 22.
Spoo's up 22. I mean, they've kind of been staying here since our show. You know what I was going to say? We are out of time, but let's go have something fun real quick. I wanted to see, because we were just looking at something chart. I'm going to go back to my minute.
Oh, back to your minute.
Minute, 1 day.
Yeah. 1 day, 1 minute.
1 day, 1 minute. So we opened here, and so right around 9 is the time that the studies say to put it on. Well, we're up a lot from there.
Well, but I could see how like people who were on early on could have gotten out because you see after that dip down, then we kind of came right back up to this level, and then and then that point too. Sure.
Yeah. So 9 and 9. So here, if you put it on here, you might have gotten out just a couple minutes.
Like Eric out.
Like 9 minutes ago, like Eric out. So so you're saying there's a chance. All right, Jenny, good luck with your earnings trades today. We didn't put any earnings trades on, but good luck with your trading today.
Oh, I don't think there were any today. But have a wonderful, wonderful day. I will see you at Tasty Live tomorrow.
I will see you live from the studio. Everybody remember to trade small, trade often.
With us, learn with us, and watch the Liz and Jenny show. See you tomorrow.
All right, everybody.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tasty Trade. So spread the word and earn rewards. Terms and conditions apply.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
What's up, everybody? Check out my new series, Life Cycle of a Trade, where I show you my real-time trades with insights into strategy selection, adjustment mechanics, all the way to the closing order for all of the tastylive core strategies. Your crypto needs a wallet, and crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
I have made a deal with the devil and I'm long UNH.
What's your most controversial market opinion?
Well, my newest phrase of the year is until proven otherwise, which basically means buy every dip because they've been gobbled up pretty quickly. And even like the tariff stuff, at the bottom of the tariff stuff, I was like, ooh, maybe things are different. And now here we are at all-time highs, like 2 months later. So I think you still got to keep your size in check, but I think the dip buying is here to stay.
Well, I mean, I already told you my UNH trade. I have made a deal with the devil and I'm long UNH. So I think that is pretty controversial. I don't know a lot of people that know about that stock, let alone trade it, let alone want to be long it. And so I feel like it's a whirlwind of just heinous attitude that has to be to the upside now. Good morning, everyone, and welcome back to the show. This is Option Trading Concepts Live. My name is Nick Batista. Got my man Mikey Butler with me as always. And if you want to come join us, hop over to YouTube, type in Tasty Live, come to our channel, give us a like, and subscribe to our videos because it helps us immensely. But more importantly, just come chat with us live because we'll be taking questions throughout the show. Whatever you got questions on, from strategies, concepts, trade ideas, trade management, whatever. Just come hang with us for the next hour of the day. My favorite hour of the day. It's spent with my buddy, Mikey Butler. Good morning, sir. How are you? Beautiful shirt you have on.
Thank you. Appreciate it.
The big day.
It is a big day. I was telling Ryan, the funny thing about this shirt is I got this in Japan at a vintage shop.
Yes, because I see it is a starter.
Yeah.
Starter shirt, which is, that's 90s, baby.
Can't get out of the way of the microphone. There you go.
Yeah.
But yeah, the beautiful thing of going across, down underneath the world where we are now.
Yes.
Across the entire globe.
Yes.
Is that you go to a vintage shop and there's Bears gear, Bulls gear, Cowboys, like all the stuff that you would want to see at a vintage
It's
shop.
not like local.
Yeah.
You get like
Because if this was in a Chicago vintage shop, it would be gone immediately.
yeah.
So that's the nice benefit of going to a vintage shop overseas, is you might find something fun. So yeah, this shirt's like a triple XL.
Yes.
And it's incredible.
It's a great shirt.
I feel it.
Great shirt. Yeah, I was going to wear my Bears jersey, but it had some like stains on it. I think I didn't wash it last time, so it's got some. The last time we were out for the Bears, it's got a little remnants of that. So I wasn't prepared.
Hey,
fortunately,
win some, you lose some. But hopefully we win tonight.
Yes. If we
I
don't,
think we will.
If we don't, the ball rolls back down the hill. Sisyphus.
Yeah.
We have been pushing this boulder up the hill for years and years and years, and maybe we'll push it over. If not, purgatory.
Well, one of my core picks over the weekend was that Green Bay was going to win against Detroit, and Detroit looked bad.
They looked bad. They didn't look good.
So if that's the power of Ben Johnson, we're going to see it tonight.
Yes.
I think that's the case.
Yes, I hope so. I hope
And our
so.
defense is legit, so.
I hope so. I hope so.
Yeah.
Yeah.
It'll be fun.
Yeah. JJ's first real action, you know.
A lot of picks.
Hopefully.
Lot of picks.
Hopefully. The vibes are high. The vibes are high. Of course, the Bears won the offseason, as they always do, you know. They always get those headlines. Bears won the offseason.
Now the real season starts.
So, yeah.
But yeah, it's gonna be fun. Can't wait to watch it.
Yes.
I need this market to go down.
No, never. No, never gonna happen.
Yeah, I don't think it is.
Never again.
I do have the 0-day Iron Condor I put on last week.
Oh yeah, that one's probably great.
No, it's not.
Really?
My short strike's at 6,500, and we are at 6,500.
So you're right there.
62. So I'm right there. If we get a little sell-off into the close, it'll be perfect. But as of right now, we are dancing.
Yeah. Yeah, it's been chopping around the 6,500 mark. You got E-minis up 18 right now. We're at 6,507 on the E-minis, SPX at 6,500. You've had about a 36-point intraday range, so it's been a pretty tight range relative to some of the action that we saw last week. I know we do have a couple of events this week. I believe we have PCE at some point. We have PPI and CPI middle of this week. Next week, you get into triple witching, September expiration, quarterly expiration there. So maybe that has some volatility to it. But right now, it's basically a nothing burger. E-mini sitting just off of highs. NASDAQ up 165. You've got the Dow up 14. The Russell basically unchanged here. It's down 1. Oil catching a little bit of a bid, /CL up to 62.47. It was very weak last week. You have volatility futures in the down near the lows. They were down about 50 ticks at one point. We got to 1630. We're at 1641. The VIX itself at 1519. Bonds up over just about a full point here. They're at 117. Been a massive move in bonds. Gold continuing to reach new highs, up 24.70, 36.78. That has been just a face ripper, along with silver up 43 cents here. Bitcoin bouncing a little bit with the risk on sentiment here to start the session, up 1,000 on the futures. Spots up 1,500. Ethereum as well, taking a little bit of a bounce here, up $54. Very much a chop fest again.
Yeah, same story as last Friday. Chop fest with
Yes.
single names ripping.
Yes.
Not as crazy as last Friday, though.
No.
More muted, for sure.
Yes.
I did close some positions, took off some risk. That's the MO with really low vol, market at highs, just taking chunks out of these positions, not putting myself in a position where a big market sell-off would be disastrous. So closed a DAL strangle.
Yes.
55-65 strangle. That was nice. That was like a 50% winner. $113.
I had that one. I closed it last week.
Lovely.
Didn't get as much as you.
It's all right.
I know.
Microsoft. This was just a buy the dip last Friday.
Yes.
The 500-510 call diagonal spread.
Did that on the last call, right?
Yeah, like last minute.
Yeah.
And then we got the bounce today. Small bounce, $130 winner. Took that off the table. And then Rocket Labs. This was from, I think, the YouTube chat.
Yeah.
But that I put on the stupid. Sold the 40 put in October to finance the 45.50 call spread in September. Routed that for net credit. And then I sold out of it for another net credit because the call spread appreciated as the short put depreciated. So that was a $152 winner in like a couple days.
You're now 2 for 2 on the Super Bowl, aka the stupid.
Yeah.
So this might be a turning point. Very
Feels good. I like that strategy.
Yeah, I mean, if you're trying to buy a dip, it's a strategic way. It's a high probability or a higher probability way than just an at-the-money call spread because you're selling that put spread or put to finance that call spread. So you have your break-even is below the stock price.
Yeah, it's below
you do
your
need
short
the
put.
move. You need the move to happen.
Yeah, you're shifting your out-of-the-money short put max profit to a debit spread to the upside.
Yes.
So it's a more directional trade.
Higher upside.
Higher upside. You can in a lot of scenarios you can have a much higher max profit than just the short put alone.
Yes.
Obviously.
Yes.
So, feels nice to be 2 for 2.
Yeah, I did some cleanup as well today. I closed out of a put in HIMS. I still have the call ratio on, so I just bought in some risk on the downside. HIMS is up, $5-6 from when we put that trade on. In like the mid 40s, it's now trading in the mid 50s, so took off some risk there. Closed out of an IBM call diagonal spread. Again, it's kind of similar to Mikey's Microsoft position, just kind of taking a winner off the table. I closed out of this AI short put, having a little bit of a bounce today. Took a small loser on that, but it's one that's you got 11 days to go till expiration. I don't really feel like holding it there. Close out of some short premium that we had in ETH. So ETH, which is the Ethereum ETF, having a little bit of a bounce here. So close out of that. I close out of some Intel positions. So I bought back a put in Intel. I have a call ratio / free butterfly on the upside there. Close off my Euro short put spread. The Euro ripping higher today. We can look at some of those FX positions after this because we've got a mixed bag there. Some good ones, some bad ones. But currency certainly flying around. I closed out the AMAT. That was another small winner. CoreWeave, I bought in some risk. SoFi, I scalped out of a put. SLV, I bought a call just to cap the upside and reduce some buying power on a call ratio that I have that's kind of at the money. So just like cleaning up positions, buying in or buying some vol. A lot of these positions are long vol, so to speak, in terms of like buying this call in SLV reduces my upside risk, but it's also a long vol position. It will hedge my position if the stock continues higher. Same sort of thing with Intel. Closing out of the put is kind of a long vol trade. You're buying a put. Some of the other adjustments I did, like the HIMS trade, it's all kind of a synthetically long vol. You're getting some short delta because you're buying in long delta as well. So just kind of massaging through some of my positions here. But we do have some FX trades. I was going to close out this USD Japanese yen trade that we had. These were all looking really nice on Friday. We probably should have taken the money and run on that.
Sometimes it happens so quickly and you just think you're like it's going to continue and then it doesn't. But the dollar yen I'm still up $20 on it.
Yeah.
Nothing too crazy, but yeah. The other two positions are pretty flat.
You don't take the money and run?
I think I'm just going to hold on
for you?
No. I think I'll hold on. These positions are so small, I'd rather hold on. Just keep checking day to day. We are
get into more euro.
It is.
The euro's.
It is up there.
Moving.
It's about to breach that upper band.
Let's see. Is there a euro pair that's the euro yen is up big.
Mm-hmm. I mean, I'm already short the euro dollar, so I'm right there. I'm in it already.
I'm up there too. I'm basically a scratch. All right. We'll let it sit because I have the 6E position too.
Yeah.
The call spread, out of the money call spread. So
I mean, I think we wait, and if it goes above the band, then we short again.
Size.
Hammer.
Size. In size.
Yeah.
Trade once, trade huge.
That's one way to put it. This week, it is the 8th. Somehow it's September 8th already.
It's crazy.
We have Oracle tomorrow after the close in terms of earnings. Adobe is on Thursday after the close. That's pretty much it. Oracle and Adobe are probably the only two I would look at this week.
Mm-hmm.
FedEx is next week, the darling of earnings trades.
What are you like?
But FedEx
10
is
for
like
10 there.
Close, but no, it's in the dumps.
Yeah.
Does that mean it's primed for an absolute pop? We'll see. But yeah, Adobe and Oracle will definitely check out, starting with Oracle tomorrow after the close. So keep your eyes peeled for the Tasty Live News and Insights tab. We'll have some earnings previews there as well. So yeah.
Cool.
If you want to join us on the YouTube channel, we're streaming live there. Just pop over to Tasty Live. You'll see this video streaming front and center. I'm going to put the Cherry Picks newsletter at the top of the YouTube chat. And you can get that for free before it comes out tomorrow.
Yes. Haven't decided what we're going to do. We'll see what happens.
Either way, it's going to be good.
I'm trying to work with our great big minds.
Nucleus of brains.
Yes, the brains, the brain children. I'm interested to see the movements on Fed rate decisions, like when they actually raise or cut rates. How we look that day, a week later, a month later. I think all of that, those occurrences are relatively small because for 15 years, we basically didn't have, for 10 years, we didn't have any sort of movement on rates. So it was really only like COVID time and then pre-08.
Yeah. I hear you.
Right around 08.
Yeah. Whoa.
What?
So now there's a 0% chance that we stay the same for September 17th, but now there's an 11% chance we get a 50 basis point cut.
Yeah. No, that's why bonds are, you look at the bonds, they're 117. They have rallied 3 points.
Yeah. And I was thinking to myself, like, how is the market ripping higher, but also gold ripping higher? Precious metals plus market ripping higher is not a typical sign you see. And I think this is likely it. If you get a 50 basis point cut, that's an emergency cut, I would say.
Yeah.
Which is not good.
Yeah, but you would expect markets to not be as strong as they are.
But I think the markets might be waiting. If they actually do a 50 basis point cut, I think that's when you get the 200-point sell-off in the market.
Ooh.
Yeah. 25 basis point, I think you still get a sell-off in the market.
It's funny because 200 points now is 2.5%.
Yeah.
It's like
back to all-time highs from last year.
Yeah, 2.5% gets us to like a month ago. The lows of a month ago.
It's just insane.
Yeah, the numbers get bigger.
Numbers do be inflating.
Yes.
But that's interesting to see. Pricing in a 50. Potential of a 50.
You gonna take your SPX off? Just got a 5-point move.
Ooh.
What do you got? Where you're at
6,500.
6,505, 5 points wide.
Yeah, it's a scratch right now.
Yeah. What's your put spread?
6,430. Worthless.
Yeah.
But yeah, 6,500, 6,505. It's going to be a barn burner.
Could roll the put spread up. Ooh. You just want that.
I just want that. the preem.
Yeah.
Yeah, I'll keep an eye on it, but I don't want to roll
6,500,
it.
Nice little round number for you.
Oh, it's scary.
You'll be fine. They'll pin it right there.
That's the nice thing. I did collect $1.90, so my break even 65.01, 65.02. Little cushion.
There you go.
But cash settled either way, so we'll see what happens. I'm gonna hold on to it, and then I'll throw on another one for tomorrow.
Yes.
Cool. Let's pop over to the YouTube chat. See what we got going on here.
I also wanted to mention I got an email, and I'll post this in the chat as well. But I got an email from someone who was looking at Robinhood option premium into the close on Friday. So Robinhood is one of the stocks that got added to the S&P 500. It was part of it'll go in on the next rebalance. And so they were looking at the options, the 0-day options, and there was premium into the close. So there was out of the money, the out of the money options, let's say 5 points out of the money, were marked at like $1 or something like that. And they were like, what gives? This
as the old adage says. Yeah.
This was about to expire. They were like, I was looking at this 10 seconds before the close, and here's it 10 seconds after, and it's still marked at $1. And that's because, and with Robinhood, and I think APP is another one, there was one other stock, but that's why these two stocks are just mooning today, or at least part of the reason why. But the reason those options still had extrinsic value is because you had a sort of binary event into the close. So there was a lot of speculation that Robinhood would be would be one of the stocks that would make it into the rebalancing. And so there was premium in those options because the stock trades for 30 minutes after the close. So you still have what is called the expiration risk. And I posted this in the chat on YouTube. If you're interested, you can read more about it. If you go to tastytrade.com and then type in expiration risk on the Tasty Trade side, they have a help article that talks about it. But basically, because the stocks trade for 30 minutes after the close, those options still have value and they can be exercised or assigned in that overnight session. And when you look at Robinhood today, it's up $15. I think it was up 6 or 7 after the close on Friday. That's why those options still had some premium left. If you were to sell those options, you could be assigned stock in the overnight session, which is that 30 minutes after the close, and then you would be short stock today, which would cost you another, $7, $8. So there's no free money. Like the question was sort of like, why wouldn't I just sell all of these options 10 seconds before the close? And that's because there is expiration risk, and it happened to apply to the upside. Now, if it didn't get in and the stock was down $10, you'd have put risk. You'd have risk on the put side.
Yeah. So a unique situation.
Yes.
That doesn't come around every so often.
It's a binary event. It's just like earnings. Like if you look at I know there's no earnings or very few Friday after the close, but that's why earnings premium is so high in the weekly, because you have this, kind of risk, this binary risk.
What do we think about moving the IBIT short call to the 70, 71, or 72? You totally could.
On your strangle?
On my strangle, yeah.
What do you got now?
65.75.
In October?
Yes. So it doesn't yield that much premium. That's my only thing. Yeah. It's like moving the 75 down to the 70 only gives me 60 cents. I'd rather have that freed up because there's so much premium in the 65. I'd rather have an upside bias, which is what I want to have anyways. There's nothing wrong with moving it to the 70 though, because if your plan is if IBIT goes to 70, I just move this whole thing up and out to November. That's crazy to say, November.
I know, right?
And you maintain that bullish bias. That's totally fine. But with Bitcoin trading near the low of its channel, I don't want to compress my delta in this environment. If we were trading a little bit higher and that premium adjustment was a little bit more, then fine. But we're at the bottom of the range here. I want to be bullish.
Could buy back the call.
Could just buy back, yeah.
At 40 some odd cents. I mean, the Bitcoin volatility has traditionally been on the upside. So if you get like a big move in Bitcoin, you typically see volatility expand. And so, buying in that 40 or 50 cent call, it might give you the opportunity to sell it for $1 or $1.20 or something like that into a big up move.
Yep. But yeah, there's still plenty of call skew here, which is why the roll down is not that great. If this option was worthless or close to it, and I was able to collect $1 rolling to the 70, I would do it. But because this option still has 50 cents, that's because of the call skew here. It leans me towards not doing it. ZIM, 400 shares down big. Thought a buyout might be in play. Bought at 15.05. Should I try and do covered calls? Worry about the actual buyout happens as soon as I sell the covered call. I mean,
that's I don't know anything about this company, so I don't know if there was some sort of rumor or something like that. So, I don't know what that probability is, but
yeah. I mean, you're down. You're not down. I mean, you are down if you bought at 15 and it's at 13.
Yeah,
but
200 bucks per lot.
I wouldn't. Yeah, I wouldn't sell a call below 15. If you sell the 15, you put yourself at a break-even situation if it goes above 15, and that's selling October. January is too far out, and there's not much premium there either.
Yeah.
The premium is in October, January, April. These are all trading for like $1. So that implies that maybe there's something going on, I would say.
Where are you thinking?
Just like the 15 strike has no premium, even out in April, the 220 day. Like all these options, 300 days out are only trading for $1.
Yeah.
So there might this market might imply that maybe something's still brewing. Just the fact that the 15 strike 300 days out is trading for $1.50. October it's trading for 30 cents. The ratio isn't necessarily there. But yeah, I personally wouldn't cap it, especially if you think there's going to be a buyout. I would just hold on to it. But it's up to you. Thoughts on Skull?
No, I think they're Skull Vikes. They're trolling you. Is that a ticker? No, it's not a ticker. That shout out to whoever Andrew, you are now.
You got me.
You're on the naughty list here, Andrew. That's brutal, Mikey.
I know it's bad.
Brutal.
That's real bad. But thoughts are, Bears are going to win this game. It's either going to be a fun shootout.
We're dogs. We're one.
Yeah, we're dogs.
Point. Yeah,
home dogs. Smash.
Monday night home dogs.
Smash. Yeah.
Smash.
I think you're going to see a fun shootout game with both quarterbacks doing well, or you're going to see a Bears onslaught.
Ooh.
Where you got, the majority of the action coming from the Bears side. Because, you have an unproven QB in Minnesota, and Justin Jefferson eats candy for his nutrition. So
yeah.
That's why his hamstring's always messed up.
Yeah.
So we'll see. Can't wait, though. Any studies comparing 1-day to 0-day trades for small accounts that need to get around day trading rules?
Oh, I would say patience and acquire capital.
Yeah.
And then, worry about that in the future.
Yeah.
I think especially if you're like sub 5K or even something like 10K, just do the mechanical trading and, do put spreads, iron condors, go a little bit further out in time. Your P&L volatility will be far lesser. And, once you get to the point, or if PDT finally ends, which, we hope will happen early next year, then you'll be in a much better situation. The mark, I know it's like sexy right now, but the 0-day isn't going anywhere. It'll be here in a year, 2 years, 5 years, 10 years from now. It's never going away.
Yeah. So the 0-day premium selling on the open reflects no overnight risk, smaller standard deviation, smaller expected move.
Yeah.
If you want to kind of skirt around the day trading stuff, you have to hold overnight risk. So that's the only thing. The problem is you can get overnight moves that all of a sudden you're just in the money.
Yeah.
But you do get a bigger range. Like at the close today, if you put on a 1-day trade for tomorrow, you're going to have a bigger range than someone who does it in the morning on the open if the market just opens flat.
Yes.
But the market could open 50, up 50, down 50. So I would say, if there's like this week, you have on Wednesday and Thursday, you have a CPI and PPI report. So maybe those days I don't do it. Because I feel like those might be announcements that create turbulence pre-market, and now you can't do anything about it. There's a lot of nuances.
The odds are stacked against you.
Yeah.
Because you just don't have the flexibility. I mean, one of the obviously trade sizing and liquidity are things that we can control, but that sizing component and the risk component, you're too binary with those sort of trades. And if you don't have the capital to withstand some of those, then it's a tough trade.
Closed my UNH at about 88% P&L after 4 freaking months. Hey.
It's nice. Better than an 88% loss, I mean,
Yeah.
It stinks to
some interesting stuff going on.
Hold through these, but
they're juicing up these leap premiums.
Yeah, they got
into this small move. They're getting gassed up.
Yeah,
which is interesting. I think this one's gonna be crazy. If the DOJ is like, can't find anything, all good, I think you see a 100-point move in the stock in a week. But if they find something, more turbulence. What a crazy stock.
Mm-hmm.
But yeah, sitting at the high end of the range since the sell-off. We'll see if it can blast through. If we're setting up a put diagonal and we're short the front contract with a higher strike price and long the lower strike, is that bullish or bearish? It's everything.
It's like neutral.
Yeah.
That's a Sosnoff put.
Yeah, we don't like doing them because you're just using a lot of buying power, and you want like nothing to happen, so your short option expires, and then your long option to go in the money.
And you have no delta to start with. I mean,
it's just you're using a lot of capital for little profit potential.
Yeah.
Which is why
the way this would look, I'll just like.
Yeah, we like to go with the debit route, the strict debit route, so that we don't have that issue.
Like this.
Yeah.
Where you're doing this for a 40-cent credit, you're hoping the short option expires out of the money, and then you're left with this long option. But it's an everything all at once sort of trade, and it's just a lot of risk on the table relative to the amount of capital you're using.
Mm-hmm. Call ratio on Hood. Ooh.
Oh no, I have a strangle in Hood that has absolutely ripped my face off.
September, a short-term one. 117, 123. Yeah, for 50-cent credit.
Yeah.
Yeah, you could.
Buy the 40 call.
Yeah, just to find the risk.
Yeah.
I think that makes sense.
We need to do the 35 for a small debit. I'll do that. It's a double-edged sword, because if this moons again, now I'm going to be taking pain on this trade and my strangle. Yeah, that strangle took off a lot of good trades. All right, I'm in for 30 cents. I did the 17, 23, 35. So you got $700 in buying power on that one.
Love it.
30-cent debit, so tiny little debit.
It makes sense to define the risk into this kind of move. You just don't know what can happen here. I mean, Hood, we've said this before. Hood is, with this move, like $100 billion stock. Why not 300? Why not 400? Maybe it's on its way there. these companies are pretty small relative to everything else. Everything's on its way to $1 trillion.
Everything.
So-
Just make it all $1 trillion.
So if this is
Make
going
it
to
all
be
$1
$1 trillion,
trillion.
this is going to be $1,000 stock in no
Yeah.
time.
Yeah.
But yeah, I mean, you're stepping in front of a train that people, I think a lot of people are going to be buying into, as you're seeing right now. So I think defining the risk makes sense.
Yeah.
Oracle synthetic strangle for earnings.
Got an upside butterfly here. This was one that I bought in the risk on. I think this was like a fast market trade. We did a wide butterfly on the upside, and then I bought in the risk. So I have this butterfly on for 50-cent debit. It's marked at about $1. Kind of play into that. So they're thinking, what? A strangle?
Yeah, synthetic strangle. So maybe if you're
In the weekly?
I assume you're going to like October, but maybe yeah. If you're in the
Certainly could.
weekly, if you're in the weekly, if you just go to like the expected move, 220, 260, and then you're defining risk. I don't know, 20 points wide, something like that. That's kind of where the premium drops off. 15 points wide.
Or try and double down.
What you gonna do? Little butterfly.
I was going to do a broken wing butterfly.
Yeah. The world is your oyster.
When is earnings?
Tomorrow.
Okay. So we'll check this out tomorrow.
Yeah.
If it's higher, then I'll put a broken wing butterfly on, because then my butterfly that I have will be like right at the money. So I'll
Market's selling off here.
Ooh, spooky. Only up 11.
Only up 11. This 0-day Iron Condor I've got on, I put in an order to close it for 90 cents, which is a $100 profit. So if this market goes to flat, it'll fill, most likely. So we'll see. Rocket Lab.
Mm-hmm.
So yeah, Rocket Lab was my stupid.
AKA the Super Bowl.
Yeah. Sold the 40 put in October, bought the 45.50 call spread in September, and that was into this 2-day rally pretty much. So closed that one, but yeah, it's a $47 stock with 80% implied volatility. You can do a lot in here.
It moves.
It does move.
It moves.
Buying power is still very low relative to risk, so just keep your eye on that. But yeah, it's a fun little vehicle. Jonathan, trading question.
Sure.
45 to 60 days only gives us 1 to 2 cycles. How do you avoid underusing buying power when capping risk at 3 to 5% per position with put spreads across assets? Still far from the 30% max given the current VIX.
I don't think you're missing out on buying power.
Yeah.
I think people get caught up with the idea that not having all of your capital deployed is that you're underutilized. Most of the time with options, especially if you are trading naked positions, but even with spreads, your overall exposure is going to be a multiple of what your cash value would be cash secured. So like when you look at your SPY beta weighted delta and your, SPY currently trades at what? What are we at? 650, we'll just say. So 100 shares of SPY, if you have 100 deltas, is notionally the same as 100 shares of stock. So 100 SPY beta weighted deltas is equal to $65,000 if you were just to cash buy SPY. And so if you're in a $100,000 account and you have 200 delta, you're leveraged over 1-to-1. And you can get that very cheaply in terms of how much capital it takes to put that sort of position on. I mean, you could do out of the money call diagonal spreads or at the money called poor man's covered calls, stuff like that, where you get 70, 80 delta per contract, per one lot. So you do four of those, you got 200 deltas, you're fully cash secured. And so if you're using 30% of your capital, you're probably still, relative to the notional value of your account relative to SPY, you're still probably fully allocated.
Yeah. And if you're far from 30%, I think you're in line with what you would want to do anyways. The market's at all-time highs. Volatility's in the dumps.
Yeah.
Like you don't want to have 30, 40, 50% on, because if your strategy is specifically put spreads, you want to have a ton of cash on the side for a situation where the market is down 200 points in a day. If that happens, now you have a lot more opportunities, assuming that products you want to sell put spreads on are down big.
Yeah.
Now you have better opportunities with higher implied volatility. You can get further out of the money. And if the market behaves the way you want it to, where the dip is bought, you're going to be in a much better scenario than kind of chasing for the market to continue higher in low VIX environments where you're going to be closer to the market anyways.
You going to take your SPX trade?
I'm staring at it. It's fluttering around 60, 70, 80%, or 60, 70, or 80 bucks.
Yeah.
Yeah, I need this.
That's lunch money.
I need the E-minis to be up 3, and then this will fill.
All right.
So I have the order in. We're 25 cents away. I'm feeling frisky. Uh-oh, it's rallying. Oh, God.
Oh, no. I missed it.
Google Calendar, 2:30. Short September, long October. Ugh. Iron Condor.
Iron Condor? Or
I have an Iron Condor.
I have an in the money call spread now.
So downside Google Calendar.
I would move it to the 27.5 just to have a little bit of delta to it.
Yeah.
It's not much. I mean, you pay 70 cents more, and if the stock is down $10, you're going to make money, whereas the calendar, you're probably losing money.
Yeah, you can see that in your Theo risk profile. You have way more profit potential to the downside if you just slightly diagonalize it, versus if you have a straight up calendar, your window is really narrow.
Yeah.
So yeah, I think moving it, I agree with Nick. Move it to the 27.5 or even the 225 if you want to put up a little more capital, and now you have no issue to the downside. Yeah. How exactly is buying power reduction calculated? Is it based on your account or the underlying? It's based on your account and the underlying. IRA accounts have different buying power calculation. It's all cash secured. Then a margin account, and margin accounts have different calculations than portfolio margin accounts. But if you're on the platform, you can click the little question mark in the bottom of the toolbar, and that will bring you to the help center on tastytrade.com, and you can search for buying power calculation, and you'll see articles that explain how it is calculated. But generally speaking, in a margin account, if you're selling an option, it's usually around 20% of the strike price. Sometimes it's higher, sometimes it's lower based on implied volatility. The higher the implied volatility is in the product, the more buying power is going to be used because it's a volatile product.
Yep.
That's pretty much it.
Also status. So like if it's hard to borrow or not, can influence it. And it can change. Broker to broker restrictions can be increased or decreased, not usually decreased, but increased. And then exchange also can, dictate some of that. So 20% is usually a good benchmark.
Yeah. Is it not better to have 100K or 200K in account size? I have a small account of 10K. I trade 100% of my buying power potential. Too risky for a small account. I mean, it's just tough to get smaller in a small account.
Yeah.
Like if you have a 10K account and you're selling 5-point wide spreads, that's 5% of your account. That's like where we would say is the max exposure. So if you have a couple of those on, you're going to get closer and closer to 100%. Doing that certainly has more blow up risk. If you were doing that in a 100 to 200K account and you were using 5% or less, you are likely undefined risk. You have more management opportunities. Spreads are kind of binary in nature. You don't have a lot of defense with them. So yeah, there's definitely more blow up risk if you're using your whole account.
Yeah.
And the market goes haywire.
Yeah. You have to have both sides. Like you have to either do iron condors or have some that you're, short put spreads and some that you're short call spreads so that you have that. It's the only way for you to participate and also be able to take positions off into those directional moves. Market goes down, you close out of your short delta positions.
Yeah.
Gives you capital to sell put spreads at better prices.
But yeah, if you're using all of your account right now with like all iron condors, if the market exceeds its implied move, you're gonna have a lot of losers on your hand. So it's tough.
Yeah, it's tough.
But yeah, that's why we say keep 50% of cash, no more than 5%. Those are the things you can do to help yourself before things go crazy if they do. Nick, close the SPX. Okay. Oh, I'm all of a sudden flat.
You stink.
I'm glad you closed.
Yes.
Now I'm sweating. AVGO, similar earnings play to Nick's. September, 315, 320, 330, 340. Close the debit portion, so the 315, 320 for 455, which is what we would do.
Yeah.
Close to max profit. Now I've got the 330, 340.
So now you got to, you're right there. I mean, this would have been a good hindsight, but you probably should have been rolling this last week when we were at 334. I rolled mine into that move. I know when you're looking at it, you're like, oh, this stock's gonna, fill this gap and be down. You had an opportunity at the mid 330s to roll it out and then sell a put spread. It doesn't, it's not a great position. I still have the position on it. I do not like this position. I wish I had a different one, but it was the mechanical thing to do, and it, buffered me a little bit. Gives yourself a lot more time. But now you're kind of stuck because you're fully in the money.
Yeah. When do SPX options actually close? I know the risk you mentioned with equities. When do SPX or NDX options actually close? So I've got this CBOE fact sheet pulled up. I'll put this in the chat.
Yeah.
But 8:30 to 3:15 expiring SPX weeklies and end of month.
Yeah. So
all non-expiring SPX weeklies continue to trade until 3:15. So you have a 15-minute window.
Yeah. But SPX doesn't have as much of that gap risk.
Yeah.
As a Robinhood.
Yeah.
Like there is runoff. That's a settlement period. But generally speaking, unless something crazy happened, you're not going to see much move. The weeklies expire, anything with a W or the quarterly expiration here, end of month, any of these that have the yellow marking here that are like, the darker shade of blue, these are all PM settled options. So they settle to the close plus the runoff, the 15-minute runoff, which is just the settlement of all the stocks within the S&P 500. The AM options settle in the morning via the set price. Those are the standard monthly expirations. We don't really trade those as much because the last day to trade them is the Thursday prior to the morning that they settle, which they settle at like 10 a.m., I think, Central, or 9 a.m. Central, like 30 minutes after the open. Something along those lines.
Yeah, the set, yeah. It's 10 a.m., I believe.
10 a.m. Central.
That's when it prints, I believe.
Okay.
Let's see. See if it's in here.
They settle to, that takes all the stocks on the open.
Yeah. Searching for set doesn't help me.
Yeah.
There's 22 sets in this document. But yeah, certainly important to understand the set price and how that's different than the PM. Take a look at Octo stock. That's a fun one.
Oclo?
Octo.
Octo?
Yeah.
Octa?
OCTO.
OCTO.
Ding.
I don't 8Co Holdings.
Don't even know.
What is?
Couldn't tell you.
It's got a $4 million market cap.
Perfect.
Prior to this. Yeah, I don't know what this is. I
love to
only
see it.
Shares.
You love to see it.
I wouldn't touch this with a 100-foot pole. Let's see what the borrow rate on this is. 13%. That's not that high.
Huh.
Probably be a lot more tomorrow.
Yeah, that's crazy.
Yeah.
Long 100 shares of Chipotle at 50.
Okay.
Would it make sense to buy a December 95 put and sell weekly 20 delta calls against it?
December 9th.
December 35 strike put.
And sell, buy it?
Buy that.
Okay.
For $1. And then sell premium against it with calls to the upside.
Kind of, yeah, doing everything all at once sort of thing.
Yeah, I mean, I actually don't mind buying the put. I don't mind buying the put for $100. It's $100 for 100 days of protection below 35. But I wouldn't sell calls against it. If you're buying the put, I would not sell calls against it.
Yeah, you're down 30% on the stock, and now you want to buy puts?
Yeah.
It's like, ugh.
I get it.
You know.
But $100 to protect 100 shares for 100 days, a lot of hundreds there. I don't hate it. But yeah, I would not sell calls against it because if you're buying the put and then you're selling calls against it, if you're selling one call, you have to be below your basis. And then if for some reason Chipotle rips higher, you have a loss. So I think if you're buying the put, you're just buying it naked and you're hoping the stock recovers. But it's a tough one for sure. YPF. Opened an iron condor. YPF. Interesting. October. Markets aren't actually that crazy. 27, 28, 24, 23. So a small chicken iron condor. I'm surprised that these markets aren't as bad as they are, but still, for a 1 point wide, it's a pretty bad market because your max profit could be eaten up quite a bit by the width of the bid-ask spreads when you're closing this. But it's a small little trade.
Yeah, this doesn't look all that liquid. I mean, to Mike's point, the markets are not horrible, but you only have monthly expirations. I don't know if I'm ready to jump in front of this one.
You can also get around PDT by boxing the trade off. Doesn't work on an iron fly, but would work on any other spread.
Yeah.
Yeah, you could do that.
You gotta use all puts or all calls. So instead of doing an iron condor,
that's the way around it.
You would do a condor.
Yeah.
So you sell the put spread and buy the in the money put spread.
Yeah. Yeah. So you're doing like a condor or butterfly, and then you're doing the other side.
You do the other side. But it's so many, like at that point, exercise assignment. You have commissions. Like, is it really worth doing?
Probably not. How to prepare for an oil spike in price if sanctions on Russia are tightened?
MCL, sell put spread in crude. I'm long.
Yeah, I'm long that micro crude. You're long the micro crude, right? You did a put spread?
I have an iron condor, but the put spread is much closer.
But yeah, the answer is if you want to place a bullish trade, you can do that through the micro crude contract, through the regular one. Just a matter of how much you want to risk.
Yeah.
SMR 35 put strike for October.
And I haven't been out in this one in a while. We saw, is it Katie's cousin?
Katie's dad.
The dad or the cousin?
Katie's dad was the SMCI.
SMCI, but her cousin.
SMR.
was
Oh no, that was Jimmy who you met.
Jimmy,
He's SMR boy.
Yeah. Oh no, that was.
Yeah, Brittany's cousin.
Yeah. Okay.
New scale.
Yes. All right.
Nuclear.
So what are we doing in there? We're doing the 35.
Yeah. $4 for $600 in buying power. Why not? Sell a little
Can we
putty
do
in there.
something on the call side? Do you want to do something on the call side?
No.
No?
Could do the stupid.
Could.
You actually could.
I don't know if I'm going to sell the 35. I think I might do the 30.
I kind of like the stupid here.
I'm gonna be a little more risk averse and do the 30.
It's fair.
I'll try and let's see if I get 179.
I just sold the 35 for $398. I'll just keep it that. I don't need to do the stupid.
No.
I'll just keep it there. But there is a lot of premium on the upside.
You're 50.
If you want to do it.
I got filled while I was adjusting. All right. I did the 30.
There you go. Okay, we're in. Love it. Yeah. Taif Tozy, Octo, 4 million market cap, scam company, overvalued meme stocks. Now we're searching for trash, lol.
Yeah.
This is the vibe that confirms the setup thesis. Puts are going to pay. I mean, this is pure froth season. We'll see. I do have a hard time seeing the market going higher after the interest rate cut. I think it does the exact opposite.
It would just be
especially if it's 50.
It would just be too easy.
It's too easy. It's been too easy for the last 6 months.
It's been too easy for a lot of years.
Yeah.
It's just been straight up.
It's been insane. But I think the fact that they're now pricing in a probability of a 50 basis point cut, which I know Vecchio and Ilya will likely go on about on the afternoon sessions here.
I don't know if we're gonna have Vecchio has a tree down, little internet connectivity problems. We'll see.
All right. Well,
but they will be back. Hopefully,
either way
this week. Yes.
Either way, they've said before, 50 basis point cut, emergency cut, not good for markets.
Yeah.
So we'll see. All right. APLD. Wow. It's a lot of random stocks today. Applied Digital.
Okay.
12.5, 11.5 credit put spread for September. Put on earlier at near lows. 12.5, 11.5.
The cheap.
Yeah, it's just a small one. Don't mind it. But, yeah, 16 cents. It's tough. Unless you're doing it in size. If you're adding a short call spread to in the money puts, is 30 delta and $5 wide good, or do you adjust according to the put? So I guess if you're turning your short put into a big lizard, I think the width of the call spread depends on how much credit you have. Ideally, if you're selling a call spread on top of a short put, your net credit is equal to or close to the width of your call spread. That way you don't have upside risk.
Mm-hmm.
But if you're not doing that, you're adding upside risk, and it's a tougher trade. But if you have enough credit to exceed the width of the call spread, I think it's fine.
Very good. Should we end a minute early so I can get to this little meeting I got?
Yeah. Good to do that.
Beautiful.
Lovely. Well, thanks for tuning in. If you got any further questions, you know where to reach us on the Twitter land. I'm at Trader Mikey B. Nick's at Trader Nicky Bat. We got plenty more content coming your way on the YouTube channel as well as tastylive.com. So stay tuned. Sign up for Cherry Picks, pinned to the top of the YouTube chat, coming out tomorrow. Go Bears.
Big day.
Big day. I think we're going to have a big day.
Make or break.
I think we're going to have a big result also.
Very good.
But yeah, we'll see you same time, same place, 11 a.m. Central tomorrow. Peace.
It's option. Jive.
Tomas, we are back, my friend. You know what that means. Time for a little bit more Tasty Live. That's right. With this man, Kai in the house. Kai, welcome. Welcome to the show.
How are you doing on this beautiful Monday?
How you doing?
I'm doing great.
Good. Glad to hear.
Yeah.
Sadnov,
Good
Kai's
attitude
doing
for
wonderfully.
traders.
You're doing wonderfully. It's a wonderful day.
I'm doing wonderfully this morning, yes. I mean, I'm not sure what doing wonderfully. I mean, I got out of bed without pain.
It's a good day for you.
It's a good day. I'm painless.
Yes, it's painless.
Although I came in and I looked at Beth and she looked at me and she said, "What's wrong with you?"
Not exact words.
That was were your exact words. She goes, "What's wrong with you?" And I'm like, "Nothing. I feel great." She's like, "Oh, you don't look great."
Again, not true.
I'm paraphrasing, but that's kind of what you said.
Well, I'm sorry I even asked. Kai, how are you?
I'm doing great.
All right, let's go then. Bring it on. What do you got for us?
For sure. All right, so the little bit summary from last week, and definitely last week was a kind of volatile market. The VIX would jump to almost 20 on Friday, but from a weekly basis, the indices didn't even move for all four indices. None of these move more than 1%. So can we go? Yeah. And also the Friday, we have extremely weak job reports. The Fed Watch tool you're just talking about, you don't use it anymore or not very frequently, but it's jumped to 92% on Friday, pushing the yields down and all the bonds product price increases on Friday.
So volatility increased on Friday?
No. Intraday, right? It's the jump.
I mean, it did for sure in the morning, but I don't know. But Tony and I were on an airplane by the afternoon.
Yeah, that's why I was asking. Yeah. Mm-hmm.
Oh, yeah. And of course, for equity market, one of the biggest news is Google, right? They avoided the antitrust breakup. So the price actually went up 11% in the week, where they're already at the historical highs. So the market cap increased more than $230 billion. We're going to see more details in the following slides. And this week, I know you don't care about the macroeconomic news, but CPI, PPI is pretty important. It can move the market, especially for zero DT traders. If you want to put on a trade in the morning, definitely you want to wait for these news coming out. It's Wednesday and Thursday. And for earnings, we have Oracle and Adobe. These two are probably the biggest name for this week.
So today is, what's today, September 8th?
8th is tomorrow.
So it's after the close tomorrow, Oracle?
I have the sheet following down. I think it's after market close.
Oracle's on the 9th, which is tomorrow after the market closes.
Oh, yeah, we have here. So on Tuesday, we have Oracle, GameStop, and LMNR, which is pretty popular trading recently. Chewy, Wednesday morning, Adobe, before Friday market opens.
Yeah, you got to be really careful trading. I don't know LMNR, but GameStop, Chewy, and Kroger, those are three $20, $30 stocks that are all with crappy markets. Oracle is, I would give it 3 stars, so it's definitely tradable. And Adobe, I would give 2 3/4. It's also tradable, but I think Adobe and Oracle are the two that, if you want to do an earnings trade, I would stay away from GameStop, Chewy, and Kroger.
Okay.
Just based on my own experience with those, unless you were just selling puts or something. But those are 3, cheap but not that liquid. The option markets aren't that liquid.
Sure. Yeah, so talking about the indice performance, we can see in the past 2 weeks, we saw some volatility inside the week, but eventually at the end of the week, and the market didn't even change. S&P 500 the past 2 weeks only down 0.1%, 0.3%, pretty much ended at the same price, right? Russell probably the best performer, but only up 0.5% last week. So nothing changed.
Yeah, that's pretty surprising because.
Yeah. So then leading to the next slide, which is not surprising again because the expect moves 1%, exactly same as last week and this week, 1.1%, and the actual move is only negative 0.3%. Let's see what's going on this week. And VIX is very close too, starting with the 16 the week before and 15 at least yesterday. I didn't check this morning.
Yeah, the actual move for the week was down 0.3%, but the move on Friday alone was almost 1.5%. So it's a little misleading because the range has been pretty wild.
Yeah, that's what I was trying to talk about. It's pretty volatile inside the week, but
it was on Friday.
We went nowhere when you look at it, from
yeah. It's one of those things you just got to go into we have to do a self-induced coma for you, Tony, in order, if we could self-induce a coma for traders, they can make a lot of money.
True.
Looking at the IVR weekly changes, the past week we have some mixed signal. S&P 500 almost the same level. Bonds definitely increased because we saw the yield coming down toward the end of the week. The rest of the important assets, they have mixed signals. So nothing major changed last week.
Nothing major changing at all-time highs, right?
Yeah, right.
But these are
unfortunately
these are very low across the board. There's not,
volatility's low.
Yeah.
Gold was a little bit higher, hitting all-time highs again and again. So GDX probably have the one of the highest IVR on the board right now.
Yeah.
Mm-hmm. Okay, looking at some interesting assets moving last week. Definitely gold and silver keep climbing higher. Now we see the all-time high again in gold and almost 14, 15 years high for silver. It's already surpassed 2012, so hitting the level in 2011. So this is pretty amazing.
Yeah, gold's been a thought on my side for sure.
Yeah,
we're pretty flat. I'm pretty flat gold. Like I said, we bought on Friday, we bought gold and sold silver, and it actually turned out to be a nice trade. Intraday.
That was actually a nice trade.
Intraday.
Okay.
Mm-hmm.
Okay. So, but looking at the ratio, I believe you checked on last Thursday too. So the ratio, gold to silver ratio is only 88. So I remember you started to trade like 99 all the way up to 105 or something. And the past 5 years average is 83. So if we look at the next slide, we have the data. So right now it's 88 and the 5-year average 83. So it's you cannot say this very high level. It's a pretty just above the average.
Yep.
Okay, so next one.
That was a tough hold.
It's been a while. So yields, definitely bond treasury yields is a big topic last week, and also a lot of speculation going on recently. So a 10-year yield has actually dropped to 4.08, very close to the bottom since the trade war. We almost come back to the end of 2024 level.
Mm-hmm.
And you short a lot of puts in the bonds last week, right?
Yeah, but not now. I covered. So.
Oh, okay.
And I only had a small position on the 10-year, but we took that off too. I mean, it was a good trade, so no complaints. But we're flat the 10-year here. I actually don't like the 10-year today. I think you can sell it for a trade. It's up 5 ticks. I think you can sell it. I haven't sold it yet, but I better put my money where my mouth is. But I think it's a sale here.
Fair enough. So the last one is Google. Google's up 11%. I just put some stats there. It actually gained 11%, which worth 230 billion market cap in 1 week. So that's actually the almost equivalent size the whole Chevron's market cap, and bigger than Netflix and Disney, Intel, and IBM.
Yeah, that's stupid.
Stupid, but it is what it is, right?
Right.
Yeah.
No, agree. I mean, we didn't.
Looking at
we didn't get in front of that train, but I very well might this morning. What's Google doing?
Google, if I remember correctly, was up like 1.
Small, up 70 cents.
Yeah.
I think Google might be a sell this morning. I'm going to do it. I'm going to do it, Mr. Batista. Sell this stock till your hands bleed.
There you go.
Okay, sorry, I'm offering notes too. What's next?
Nice. Looking at the top and bottom 5 performers in the S&P 500, WDC, Western Digital, up 12%, and Ivy rank all pretty low, and AVGO filled.
Google.
AVGO
short of the low
12%. Google 11%, MU 11%, STX 10%. So all these hardware and AI related stocks get a boost last week. And the bottom, definitely the top one is Lulu, down 16%. Dollar Tree, down 9%. AMD, LVX, and CVS. It's a mixed week.
Yep. Question about it.
Okay. All right. So earnings. The big movers from last week, definitely something interesting. The Macy's up 21%. Give the retail a lot of confidence after that. AEO, it's unbelievable, up like 40% at a certain point. We didn't listen to the previous slide because it was not in the S&P 500. And Lulu down 19% on that day. They did the day after.
Yeah, Lulu's got to hire Sydney Sweeney now so that they can get their act together.
You got to hire Sydney Sweeney.
If I hire Sydney Sweeney, my wife's going to leave me. Plus, it's creepy. I think she's younger than my kids.
Tom, I know you don't like Lulu, but at this level, do you consider long some delta in this underlying?
Unfortunately, I am long delta in Lulu because I had an earnings play on. But I mean, personally, listen, this is what happens when you're.
Oh, I give you the earnings trade, right?
Well, your earnings trade sucked. With all due respect.
No, it was right at the short strike, 170.
No, that ratio spread did not work. Those ratios.
165, 160.
No, those the Lulu ratio spreads for earnings did not work. It was 2 times the expected move. It didn't work. But I already had some short puts in Lulu and a few short calls too. It was fine. It was a scratch. But Lulu is a crappy company run by crappy people, and they deserve to be bankrupt. So I don't care.
Okay.
But I'm a little bit long it, but I hope they go bankrupt.
Oh, don't talk to Liz and Jenny like that.
I'm not talking to them. I'm just saying, you know what? Good things happen to good people and bad things happen to bad people. And Lulu is bad people.
All right. So looking at the long terms, so we've seen almost 3,500 companies announce the earnings, and we didn't do research corner last week because of the holiday, but in the past 2 weeks, the winners and losers is very close to 50-50. And the average return is getting very close to 0%. So this is another earnings season that the post-earnings one-day move is, on average, is unched.
Okie dokie.
Okay. Makes sense.
Yeah. Okay. That's it. The last slide we already saw it.
So really, what you're saying here, Kai, is a lot of opportunity intraday, and we went nowhere, which is great for premium selling. A lot of opportunity for people themselves. So even though we have low implied volatility, you've got an environment here that's presenting a lot of opportunities. So time to take advantage of them.
Okay. All right. Thanks.
You got it, my friend. Let's take a quick 90-second break and come back. We got the opening bell next. We're back in 90 seconds. Tasty Live. Tomas, we are back, my friend. And nothing says Monday like this, man. Dr. Jim, the skinny on options, abstract applications. Welcome to the show.
Man, what's going on? Did you guys, listen, guys, did you guys see my Chargers get it done in Brazil? Did you guys see that on Friday night? I mean, I've been telling you guys about the Chargers for it's months, it's years at this point, and they just went out there, they got it done. It's been Harbaugh since day one. I mean, look at my boy Herbert. You guys been sleeping on the Chargers, man. That's all I'm saying.
It's not the Dolphins anymore.
I've never been a Dolphins fan. No, never. But my boy Daniel Jones, I've been telling you guys about him too for a while, and I mean, this is his time. This
Daniel
is 100% his
Jones.
time.
So you're Indy Chargers now.
I'm mostly Chargers, but I like Daniel Jones, and then obviously, I mean, I was really concerned for my Bills last night, but at the last second, they got it done. You know, they pulled it out.
You're that's like a Phillip Rivers combination. Chargers Indy.
Yeah, that's a good pull right there. Yeah, that's a good pull. Phillip Rivers.
You know,
was he in the same draft as Eli Manning? I think he was, right?
He probably about the same age. Yeah.
Yeah. Wow.
Anyway,
That's crazy, man.
Here's the crazy thing. I know you're just kidding with the Chargers because the Chargers actually.
No, I got memorabilia all around the studio. You need me to pull something out?
The Chargers.
I mean, I got a LaDainian Tomlinson jersey right next to me.
Chargers actually don't have any fans, and they're a little like the Clippers. Neither of those two teams have any fans.
Yeah.
But here's the crazy thing. Since my son moved to LA, he is a Charger fan. He is
the only one. He's the lone man standing.
He bought season tickets. He's a Charger fan. I can't believe it. And I went with him last year to the playoffs to see the Chargers when they played in Houston.
Yeah, because they're back in LA now, right? Like they're the LA Chargers, right?
Yeah, they're playing SoFi.
Okay, all right, cool. I mean, they've been San Diego for so long; it's hard to get used to the LA.
They haven't been in San Diego in 10 years.
10 years? No, it's been no. Look. I've been following this team for too long. It's been maybe 5 years at the most, maybe more like 4. It's a very recent thing. Tony, you can get your people to look that up for us, but I know it hasn't been 10.
When did the Chargers move to LA, you ask? They moved in 2017.
Okay, so 8 years. Okay, so we're right on the mid price there. There you go. Okay. How are you guys feeling about your Bears tonight? That's what I want to know.
We're long.
I mean, you got your guy, you got Ben Johnson, you got Caleb Williams. I mean, this is it, right?
We're long them. We bought them. We bought them this morning. Bought the Bears.
Sosnoff is long them. I am neutral to bearish.
I bought the Bears. I bought the season. I bought the Bears.
I sold the season.
Everybody is so bearish on them. Everybody is so, this team stinks, blah, blah, blah. Caleb Williams stinks, blah, blah, blah. And all the negativity, I love it, finally. Because every year there's too much hype. Now, this time we got them.
Really? Wow. I mean, obviously you guys were there. Is that right, Tony? Because I felt like just like talking with, the people at the studio and whatever, with Ben Johnson and whatever, it's like everybody's super hyped. Is that not right? I think Tom's completely wrong on this.
Tom sees the world from a different place. And it's one that's not necessarily the right one. So everybody's very optimistic on the Bears.
That's kind of what I thought. And the over/under is 8.5.
I have never seen this city less optimistic about the Bears than this year. This is probably the worst that I've seen them, and I feel like this is the year you got to bet them.
So they were more optimistic back in like the Jay Cutler days?
Oh my God, yeah. When they traded for Jay Cutler, it was like, oh my God, we finally have a quarterback. That's what people thought. And then the people in Denver were laughing at us. They're like, you give us 3 first-round draft picks for that stiff? He's all yours.
Uh-huh.
Oh, that's too funny. Oh, my gosh, that's too funny.
No, I'm excited. I think it's going to be good.
Yeah, no, I think it's going to be fun, and they got
they're a home dog on Monday night. How do you not like a home dog on Monday night?
I mean, historically speaking, isn't that like the best bet on the board, historically speaking?
How about a home dog on Monday night to a
home dog on Monday night supposed to cover, but you know what? They got to win another. Even if they win tomorrow, they got to win another 8 games for Sosnoff.
How about a home dog on Monday night against a quarterback that has never thrown a pass in the NFL?
That's right. Everything is stacked.
Oh yeah, that's right.
This game, they might as well pack it up and leave. Come play with Vinny's little Pop Warner team.
So it's JJ McCarthy is starting tonight for the Vikings, right?
Yeah. Chicago kid.
Yeah.
He's a Chicago kid.
Yeah. Well, no, he's not a Chicago kid. He's a U of M kid. Like, at least, I mean, put some respect on his name. You don't want to tie him to Chicago. You got time to U of M.
Isn't he? He's a Chicago kid, I thought.
Who cares? It doesn't matter. He's a Wolverine, Tom. Come on now. But did you guys see my Buckeyes, though? My Buckeyes are rolling, man. My Buckeyes are rolling unstoppable.
I thought J.J. McCarthy's
Forget about
from,
Arch Manning.
Isn't J.J.
It's all
McCarthy?
about Marshall Manning. Yo, Marshall Manning is where it's at.
Isn't J.J. McCarthy from, like, the suburbs in Chicago? But, like, I'm pretty sure he did.
I have no idea. Tony.
Jenny or Liz, I think, went to school with him.
Well.
Oh, really? Wow.
I mean, she went to the same school. They're not exactly. They're.
No. They know each other. I'm sure.
Oh, man. That's so good. Well, hey, good luck tonight. I hope it goes pretty well and for you guys, but I have a feeling that
we're going to the game. We're going.
LaGrange.
Oh, you guys are going to the game.
Yeah, he's from LaGrange, right?
Born in Evanston.
Yeah. Yeah, there was this.
Evanston? Wow, that's where we lived. We lived in Rogers Park.
Yeah, there you go.
Evanston was right there.
Okay, Rogers Park is not Evanston.
Well, I know, but it's right next to it, obviously. I got it. I understand.
It's like saying Homer Glen is like Glencoe.
I understand. I understand, but I'm just saying it was like less than a mile away. It was half a mile away. And so, Evanston. Oh, yeah. Yeah, out there by Toohey and Western. And yeah, those are my stomping grounds. But anyway, speaking of my stomping grounds, man, let's do some finance this morning. You guys ready?
Sure.
Let's go. So, Beth, go ahead and get us going here on the intro slide or the title slide. Strategically preparing for market surprises. Gentlemen, we need to be strategic with how we get ready for market surprises. I mean, we dodged NFP last week. We've got CPI and PPI this week, and then you've got Powell next week with, the interest rate decision and whatever. I mean, apparently, the Fed funds futures are now pricing in a 99.9% chance of a cut. I mean, do you guys think there's any chance he doesn't cut? I think there's more than a 0.1% chance he chooses not to cut. What do you guys think?
I say there's zero chance he doesn't cut.
Oh, really? Okay.
I mean,
Tony,
listen,
a
lot can happen with the bonds between now and whatever the cut date is.
Bonds 117, you're getting a cut. And they're 117.
Yeah. I mean, right now you're getting a cut, 100% chance. You might get 50 basis points right here. But
wow, that's okay.
But
is that bullish? I don't know if that's bullish for the market.
I don't think it's bullish at all.
25 or 50. I don't think it's bullish for the market.
You don't think 50 is bullish, or you don't even think 25 is bullish?
I don't think either.
I don't think either one of them is actually bullish for the market where it is right now. I think we get a little bit of a sell-off after they announce the rate cut.
Okay, all right.
An initial bump and then sell it.
Yeah, okay. So a little sell the news action. Okay, all right. Well, either way, let's talk about how we can strategically prepare for whatever surprises the market might throw our way. So go ahead and get us going here, Beth, on the intro slide. So one thing that all traders can agree on is that markets move and things change, and the next outlier move can come out of nowhere, whether it be next week with Powell or this week with inflation or some other random number. So even as high probability premium sellers, this is the thing that we want to most guard against, and to best prepare for these outlier moves, it's helpful to go back to the source of these volatility shocks. So let's talk about some volatility shocks this morning, something that we have addressed before on the network, but it's been a while. So I thought we might go ahead and kind of bring up an oldie but a goodie. So Beth, go ahead and hit us on the next slide. So we're going to go back to geometric Brownian motion, and we're going to talk about some expected values via the geometric Brownian motion model. So the two equations that you see here on the slide, the top equation, the bottom equation is geometric Brownian motion. The top equation is more of like a Markov model that kind of illustrates or demonstrates how expected values behave given a certain set of information. So if I'm trying to find the expected value of some random variable x at some later point in time, so today is time equals t, and then some later point in time will be time equals t plus s. If I'm trying to find the expected value of x at some future point in time, given all of the information that I know right now, so that's I at time equal t, it's going to be equal to whatever value x has right now plus whatever the positive drift component is in the marketplace, if we're talking about a financial markets world in a vacuum, in a perfect world where nothing disrupts the apple cart, like everything just goes smooth sailing, it's essentially just positive drift from A to B. But we all know that we don't trade in a vacuum. Like, we all know this is not how the markets behave. There's all kinds of volatility shocks. There's all kinds of random events. There's all kinds of market movements. So this is where a geometric Brownian motion can be so helpful, because the geometric Brownian motion model combines the two elements that occur in the marketplace: the positive drift and also the volatility shocks. And so when you're trying to measure the actual change in the value of X, you have to capture both of these elements, the positive drift and the volatility shock. And I want to focus on the volatility shock element here this morning. So would you guys agree that it is the volatility shocks that essentially give us both A, the most opportunity, but also B, can cause the most harm?
Yeah, sure.
To existing positions, you mean by harm?
Of course, because if the position doesn't exist yet, then it can't be harmful, right?
Then it's actually a benefit that it goes to the other side of the equation.
That's correct, because now I'm selling higher volatility and things like that. That's correct.
Yep.
Right, to existing positions, right. And which, by the way, it's interesting you brought that comment. That's actually why it's so important, right? To keep a lot of capital on the sidelines and to not overextend yourself, because you want to have a mixture of things working for you now, but also capital that you can deploy when volatility expands. Right, Tony?
Yep, 100%.
There you go.
But position sizing is so paramount.
That's right. Position sizing and then overall capital allocation. I mean, they go together. They go together like peanut butter and oatmeal. They go together like tuna fish and applesauce. I mean, they're just nature's, natural pair.
For sure. For sure.
Yeah. You guys ever had tuna fish and applesauce?
No, I can't say I have. Dr. Jim can't say.
So you want to hear a story before? You want to hear a story? I've actually never shared this story before. So Autumn and I went on our first date.
Oh God.
No, it's no, it's not that story. This is actually no. I haven't told that one before though, but I'll save that for another time. No, this is the tuna fish and applesauce story. So when I was in college, when I was a freshman in college, that's when I first discovered bodybuilding, and I first discovered like competing, and I was so into it and whatever, like it was amazing. So I started eating a ton of tuna fish because I was like, it's good for you, it's healthy, it's whatever. And so I used to just pop open the cans and eat it. And I wouldn't get like the good stuff. I would buy like the chunk light in water stuff that you get like 75 cans for like $1.50, right? Mm-hmm. But it was so nasty. It was so nasty. I was like, I can't do this anymore. So I tried to find everything to mix it with. And I was mixing it with obviously mayo. I was mixing it with whatever. But I needed to find something that would help me out calorically. So you know what I settled on? I started mixing it with unsweetened applesauce. What do you guys think about that?
I don't like the idea. I think it's a travesty. I really do. I think the fact that A, it's a travesty. B, I have to listen to this story. It's even a bigger travesty.
Hey man, I've had to listen to all of your stories over the years. You can give me a tuna fish and applesauce story, and I'm not even done yet. So I used to carry my little cooler around campus. I had this yellow and black cooler. I would have Tupperware full of tuna fish and applesauce. And this was like 2000, right? So this is back in the day in the bodybuilding world when, it was common knowledge you had to eat every 90 minutes, keep the metabolism stoked, whatever, which is all complete garbage, but we didn't know that at the time. And so I used to have like 4 servings of tuna fish and applesauce.
Oh, God.
And I would eat it in class. Like I would crack it open, and I mean, I'll tell you something. It is nasty. Like it's not as bad as tuna fish by itself, but it's only slightly better. And so I didn't make a lot of friends. I didn't really have any friends in college.
Yeah, because you smelled bad.
I mean, if you're eating tuna fish and applesauce in class, you're not going to have any friends for sure.
Yeah, but it was good because it kept people away from me, so that way I could solve the Black-Scholes option pricing model, and I could work through the derivations, and I was well energized because of all the tuna and applesauce.
Didn't you have a famous tuna fish sandwich at your place by the CBOE when you had that quote unquote front of a lunch spot?
I mean, I love tuna fish.
I mean, what's the ratio tuna fish to mayo? Isn't it 3-1?
Oh, no. You're thinking of the other place that we invested in. Oh, yeah. We have a great tuna fish story. So a friend of mine, we put up the money for him to have a franchise. And in the franchise, they sold like cheesesteaks, but they also had tuna fish. and the tuna fish ratio was 3 parts mayonnaise to 1 part tuna. But you had to let it sit for a while because that way it got the, you know.
Yeah.
Like
that way it got
something with the mayonnaise and the tuna. It actually figured it out after a couple of days, and so that was their ratio. Yeah, there was some pretty bad stories. I was like, that can't possibly be the ratio. He's like, yep, that's the ratio.
Well, getting back to my story, which I would like to take my thunder back, thank you. I would say the ratio was about 2.5 parts applesauce to 1 part tuna fish. That was the optimal ratio. And so there you go. So Beth, let's go back to some finance though. There's a little tuna fish and applesauce. So if people need lunch ideas today, you're welcome. So positive drift, volatility shock. So there you go. So Beth, hit us on the next slide. So when we look at volatility shock, like graphically, and inside the Tasty Trade platform, you can actually bring up like the probability cones and it'll kind of show you something similar. But, just to remember that at any given moment in time, right, the expected move in the market is always going to be that positive drift. It's always going to be that positive drift over the next time increment of whatever you might be looking at. But nothing is guaranteed. Nothing is promised. These volatility injections come into the marketplace all the time. So when you start thinking about the actual distribution around the positive drift, this is where the volatility shock really comes into play. And you have to understand that, all right, if I'm trying to prepare for a market surprise, I'm trying to do so strategically, it's the volatility shocks that I really need to prepare for. So Beth, hit us on the next slide. So that's just a visual thing of volatility shocks. But this is where I think it might be the most helpful. So I just pulled up some NVIDIA options, right? You got the stock at 167. You got the call options on the left. You got the put options on the right. Inside the Tasty platform, you've got the blue dashed lines that correspond to the actual standard deviation levels. And in my opinion, you've got 1 standard deviation, you've got 2 standard deviations. We're not typically going beyond 2 standard deviations. Tom, when's the last time you sold a strangle beyond 2 standard deviations?
I doubt I have. I don't
like ever.
I mean, there may be an earnings play, to be fair, where I have, but I don't think it's not something I do.
So I mean, how far would you say? And Tony, you're probably in the same boat, right?
Yeah, never. I haven't done one all year. Tom might have done one in some like a Meta or something like that, some $1,200
an earnings play. Yeah, an earnings play.
Right. Got it. Right. So you're typically clustering around 1 plus, give or take a little bit, right? 1 standard deviation.
We're usually clustering around that 20 delta, which is kind of like close to that 1 standard deviation.
Yeah, that's a little inside. That's a little, yeah, but it's pretty close. Okay. Well, here's what's interesting. So look at the actual 2 standard deviation levels and this is NVIDIA. This is a mover, right? This is a stock that has, lots of premium, lots of juice. Look at how the premiums basically fall off the map once you get around 2 standard deviations. And then, of course, if you went out to 3 standard deviations, there would be nothing there. Like, if you're really trying to protect against the blackest of black swans, like, it's just not going to be worth your while at all. And so going out to 2 standard deviations, even the premiums fall off the map. But here's what's interesting. So, Beth, go to the next slide. So what do we do? Right? Well, our preference continues to be something around the plus or minus 1 standard deviation level, like as we just talked about a couple seconds ago, because the risk return is most balanced. If you want to go slightly inside the 1 standard deviation level, you're going to get higher credits. You're going to be able to collect a little bit more. So this would be the 20 delta strangle. You can have a lower probability, but it's still going to be relatively high, definitely greater than 50%. But you do have increased shock risk. So again, if you're like right now, we're again very close to all-time highs. I mean, the market was strong before we came out. Is it still strong right now?
It is. It's up 12, even the S&Ps. NASDAQ's up 160.
Yeah, okay. So market's looking good, market's looking strong, right? If you really want to guard against that shock risk, then you have to be aware that if you go 20 deltas, you have a little bit more increased shock risk than if you went slightly outside the 1 standard deviation level. So now maybe you're doing a 10 delta or a 12 delta. Right, you're going to get lower credits, higher probability, but decreased shock risk. So, as we see pretty much every single Monday morning, it's a gimme gotcha balance, right? It's a gimme gotcha exchange. But here's one thing that's really interesting, as I thought about this a little bit more. What if volatility spikes even just a little bit? Now, Tom, you mentioned kind of doing the 2 standard deviations around earnings, which generally speaking are higher volatility events. Well, if the VIX spikes, if volatility futures spike, you're actually going to start to see that those 2 standard deviation levels are now going to become somewhat attractive again. I don't want to say attractive, that might be too strong of a word, but they'll become options for you.
Yeah.
They'll become actually alternatives for you, whereas right now it's just not even on the table. So this is another, like we talked about earlier, keeping capital dry, like being mindful of capital allocation. This is why it's so important to do that, because you don't want to get caught with your hand in the cookie jar when volatility is low, because then when it does spike, you don't have the optionality to guard against the really big shock risk. Because, you know, we all know the VIX going from 14 to 17 is not a huge volatility shock.
No,
that's
but-
not going to be something that's going to put you out of business. It's going to be the VIX going from 17 to 36. That's going to be the thing that's going to potentially be a lot more damaging.
Let me explain one thing, though, that I think you just left out. The reason we don't sell cheap premium is because it doesn't come in. It's not because we hate the trade as much. It's because when you sell something that's it has less than a 5 delta, then most of the time those options don't move. Like they stay bid because people have to buy them. So it's a crappy option to sell. That's number one. Number two, the only reason we do that occasionally around earnings is because they do come in. So it's the whole difference is that earnings speed up that whole process. So they actually do go worthless that next day. So when you do it for earnings, it makes a little bit of sense. When you do it any other time, it makes no sense. I just want to bring that up so people are aware.
Well, and do you know there's actually a second reason as to why the 5 delta options are just not a great option? Do you remember? I've taught you this several times over the years. Do you remember?
No, I don't remember your reason.
This seems like a test, Thomas.
So right around the 5 delta mark, right, Tom? This is where VAMA, right? The
VAMA.
volatility of volatility. This is where VAMA is at its peak. And what is VAMA again, Tom?
It's volatility of volatility.
That's correct, right? And so if I sell a 5 delta put, like, yeah, it's going to be strawberries and sunshine. I'm going to bonefish 6 days out of the week. But that 7th day, it's going to be tough, man. I'm going to be stuck with tuna fish and applesauce because when the market goes down and volatility expands rapidly, right, that volatility is going to kick in. And now it's not even about volatility coming in. It's about, man, the applesauce might even be gone at that point.
You know what's
just
bad?
got chunk light tuna.
You know what's bad is that I actually love tuna fish because I buy it all the time.
Not anymore. No, it's over now. It's over.
I buy it all the time.
It's over, Johnny. It's over.
In the deli, I buy tuna fish all the time because I don't want to make it. So I love tuna fish and I love applesauce. And you just ruined both for me.
No. See, you just
and sounds like the guy who actually owned that shop, he wrote into me and said, you got the story backwards. It was 3 times tuna, 1 time mayo. And you said the price was going to be too expensive. We couldn't make any money. So you reversed the recipe and made it 3 times mayo, 1 time tuna.
No.
He just wrote me.
It's a little, he doesn't remember.
Whatever.
I remember like it was yesterday.
I don't believe you do.
I'm a,
That's too funny.
yeah, I'm a food trap. Like I remember things like that.
Well, I'm just saying, all I'm saying is, I mean, I've been to Bad Coffee, right? I've seen the menu at Bad Coffee. It's a bit lacking. So now you have a delicacy that I'll give you the rights to it. Like, 25 cents per order is all I'm asking for a royalty, which I think is really fair. And so put it on the menu and let's make it happen.
I like it. Is that it?
Boy. Okay.
I think we're good.
All right.
You did good. Even the answer P's are doing good. But go ahead. You got takeaways in your last slide.
Yeah, let's get them a few takeaways. I wasn't even sure if we could do it. I thought everybody was kind of chomping at the bit or champing at the bit to get some tuna fish and applesauce. Outlier moves will always be the number one thing we have to guard against as premium sellers. And remembering how volatility shocks feed into the geometric Brownian motion model can help us better understand the gimme gotcha relationship across strikes on the option chain.
Is that enough? What do you have to say for yourself?
I mean, I think for the most part, he's pretty much spot on.
And that's about the best I can hope for on a Monday morning. So I pretty much, I hit the upper bound of the expected move for sure.
Yeah.
You're past that 5 delta. I agree with you. Let's take a quick 90-second break and come back. We got more Tasty Live Sadlov, what comes up next?
I don't know.
That's right, a market measure. Good job out of you. We'll be back in 90 seconds. Thank you, Dr. Jim.
Mm-hmm.
Tomas, we are back, my friend. You know what that means. Time for a little bit more Tasty Live. That's right, with a market measure. Even the S&P is up 14. We've had very little movement. Volatility in by 30 cents. Russell and the Dow are both down small, and even the S&Ps are up small. Nasdaq's up significantly, 175 handles in the Nasdaq, about 0.75 percentage point. It's a decent upside move, in my opinion. Bonds 117.10. Sadnov, that's your big leader in the clubhouse. Maybe not on a percentage basis because you got nat gas up almost 3%, but that's a big move in a notional value in the bonds.
I couldn't agree more. And there's actually, well, I mean, if you look at some of these NASDAQ stocks, I mean, other than Apple pretty much being unchanged, Reddit, Coinbase, Amazon, Palantir, Roku, NVIDIA, Meta. I'm just looking at some of the stocks on my screen.
AVGO's up another $17. Apple Oven's up $54.
Microsoft, Google, Netflix.
It's all the big players.
Babalicious.
Even NVIDIA's up $3. Right?
IBM, TSM, you name it, it's up. Everything except your Costco and AMD. Yeah, this is strong. I mean, I'm surprised that Robinhood's up as much as it is. I'm surprised that Apple Oven is. I mean, I think those are big numbers for just going in the index. But
a 10% move, yeah, I would say so.
It feels like it.
Yeah, 11% move in Apple Oven, yeah, sure.
Yeah, Beth, just so you know, the headline that came out is Howard Stern trolls fans with a gag that Andy Cohen took his spot.
I fell for it.
You did fall for it. She called me this morning. She was like, I can't believe Howard.
Did she really? Oh, you guys got a little, I'm going to call you, you call me kind of thing?
Oh, relax.
Nobody
relax,
called me. All
relax.
right, Beth, I know where your bread is buttered. I get it. It's fine.
Oh, my God. I forgot how jealous he is.
Yeah, way to go.
It's fine. It's fine. It's fine. It's okay. You girls got your thing. Doesn't matter to me. I don't need to be part of that the cool club, the cool kid club. You and Beth sharing things. Hey, listen, ladies and gentlemen, if you'd like to share things with me, well, you can call in immediately following this segment at 855-238-2789 or 855-BE-TASTY. We'll have 4 or 5 lines open, and you cool kids can be part of my club since we're never going to be part of Beth and Tom's club.
Oh,
way to go, Tom.
Nice job, Beth. Hang on one second. Let me just get this. All right. Anyway, what time is it? 9:14. Wow. Got a lot going on. So, let me think about this for a second. It is, what do we got going on this week? So a bunch of stuff. So it's Monday, September 8th. And this week, I will be here Monday, Tuesday, Wednesday, Thursday. On Friday, I'm going to New York to do a conference. Do we have free tickets for that? Beth, do you know?
I'll find out.
Let me find out. I think this is a pay. We don't ever charge for it. Just to be clear, we never charge. But sometimes we speak at other events where other people charge. So I need to check and see if we've got any free tickets. I won't take any money for anything. But there's an independent.
You took my money at dinner last night. You had no problem doing that.
I'm going to talk to you about that later because you embarrassed me in front of my friends.
I embarrassed you. I mean, you could have thrown your card in there too if you wanted to. I mean, nothing stopping you.
Oh my God, you are unbelievable.
Unbelievable.
You are unbelievable. And you forgot to give me my gift too.
I did. I reminded you. You forgot when we left.
Anyway, so I'm going to be in New York this Friday, and if I can grab some free tickets, I will for people. But I don't know. I just don't know what their story is. Find out. And then a week from this Friday, or 2 weeks from now, on September 19th, which is Triple Witching, the Bat and I will be in New York. And after today, this will be wait list only. We had about 25 spots left open at Webster Hall in New York City. And can't wait to see everybody. It's been a year since we've been out there. So doors open at 8 o'clock. The show starts at 9. The market doesn't open until 9:30. This could be our first East Coast show, dealing with, a little bit later opening in the market. We'll figure it out. We'll get it done. There's some stuff we can do pre-market, Bat. Not a lot you can do pre-market, but it is Triple Witching. There's a lot of stuff going on that day. We will have, I promise you, a lot of fun. We have yet to disappoint at any of these live trading shows. So far, we're 5 for 5 at the last couple, but it's hard to do. Give up the bid ask.
It is hard to do. We're bound to, something's bound to happen one way or the other.
There's going to be a train wreck at some point, but we haven't had it yet. So if you want to come out to the show, we'd love to see you in New York, and please sign up today, because we're going to go to waitlist tomorrow. And then once it's waitlist, you'll probably still get in, but you never know. We just want to make sure. Anyway, that's it. So let's see what else we got going on. That's what we got going on for this week, and that's what we got going on for next week. And then after that, the next show is going to be in LA. We're going east. We were West Coast, then we're going East Coast, then we're going back to the West Coast. So LA will be at the Fonda Theater on Friday, October 3rd. That is 2 weeks after the New York show. And there may be a guest appearance by my son. We don't know. How cute. He's never come to a single event. He's more likely to come to dinner with us than he is to go to the show. Actually, he has a job, so I don't know if he could go. But we'll see. Anyway, we'll be at the Fonda Theater. We've done it before. It's in Hollywood. It's a great place, really cool place. Amazing old theater. And they got a great screen in there, too. So does the New York show. So, and the San Francisco show had a really good screen. Easy to see, lots of stuff to do, and so appreciative for everybody coming out. And then we will have 2 shows left after the Fonda Theater, one in Charlotte and one in Austin, Texas. I think it goes Charlotte first, then Austin, Texas. And then we'll wrap up.
Oh, beautiful.
Wrap up the year of live shows. And then Tony and I are not going to be traveling together for a while, so we can get a break from each other.
Is that really why? Tell everybody the truth, Tom.
The truth is, honestly, I think your real wife is jealous.
You know what? She did mention that this morning. She did. She says, you went out to dinner. You never take me anywhere. You go out to dinner with Sosnov last night. You've been with him all weekend. You do this to every guy who has a solid relationship with his wife.
I mean, you did go on. This is the last 2 weeks of me and Tony together. We went on vacation together to Mexico. We went.
Right. She did say that, and then you go, yeah. Like I came home and I said, Mexico City's a beautiful city, great like that. But I don't know what I would do there, like with you. You don't play golf. There's nothing we could do like together. Like maybe we can go see a couple of pyramids or something. But
oh no.
She goes, yeah, sure, right. Don't take me anywhere. Don't go everywhere with Tom. Go ahead. She did say that. You ruined it.
So Tony and I go on vacation together to Mexico. Then we go to San Francisco together. And then last night we were at dinner together. I mean, it does seem like there's something going on. Maybe, you know what we should do? We should tell her we're going on a cruise together.
A trading cruise.
Trading cruise. We're going on a trading cruise together. Just see what she says. That'll be great.
You wouldn't want to go.
Yeah.
You need cruises.
You don't want to go. It's all traders. You don't want to go. Oh my God, a trading cruise. That'd be. I want to just see her reaction. That would be awesome. Yeah, we're going on a trading cruise together. So I'm going to take a little break from my vacations with Tony. Now, my wife, on the other hand, doesn't care. She's very happy. She's like, oh, good. She's like, as long as I don't have to go, I don't care. But all right, hold on. Let's see what we got here. S&P's up 8. They're probably
It's
going
as
to
low as they've been all day, Sosnoff.
I know. I'm hanging in there, Mr. Bat. I'm hanging in there. All I did today was sell some Google. So I'm short some Google, and I'm short some, what other stock did I sell? Reddit. So I shorted Google.
Correct. Yep.
I shorted Reddit, and I don't know. I need the market. I just don't think this. I think Friday's sell-off was real, and I don't think this market. They're trying. It's like it's going to run out of steam.
Okie dokie, we'll see.
All right. Let's see what we got here, Beth. Market measure. Easy methods of adjusting or defending a trade. What happens when a good trade goes bad? Every time I think of something that says, well, remember The Far Side, the cartoon The Far Side?
Yeah, sure.
Well, in my head, it's always lived in my head rent free. The Far Side, when the caption is, when mayonnaise goes bad, and a guy's opening his refrigerator and there's a jar of mayonnaise in there, and the mayonnaise guy's got a gun. It's when mayonnaise goes bad, and I just can't get that out of my head. So this is when trades go bad, like a short put goes bad. Let's see what we got here. Easy methods.
Yeah, and Beth, everybody's writing in that you're sucking up to Tom. This is bad.
What do you mean she's sucking up to me?
She's everybody can see it. They can read between the lines. They can
Thanks,
see
everyone.
That's anyway. When the market becomes extremely volatile and your positions get tested, it's good to know what you can do depending on the situation you're in. In this segment, we'll review 3 methods for adjusting a trade, a short put, and the reasoning behind it. Okay, Bat, off the top of your head, a short put goes bad. What are your 3 things you can do?
Roll out to the following month, depending on the amount of time left in the trade. Sell a call to reduce delta by 50%. That would use no extra buying power.
Okay, so you could sell a call.
Sell a call spread if you wanted to get smaller. I mean,
you can roll out in time.
Right?
Yeah, what's the third one?
Sell a call spread. That would be my next one. Sell a naked call spread, roll the put.
That's 2.
Yeah, I don't have a third.
Okay. Well,
I mean, unless you're going to go somewhere else and sell, short delta.
No. I think the third thing, just off the top of my head, would be buy a put. So you can spread it off.
Not something I do.
Not something I do either. I would sell the call or roll it out in time. Anyway, let's go to the next slide. Let's see what we got here. So this is the Tasty platform. On the platform, adjusting or defending a trade is relatively simple. We begin with a short 40 delta put. So let's dive in. Now you can see here we're just kind of showing we're showing a position short of 40 delta put, and we're showing a little bit of the buying power. On the right hand side of the screen is the buying power, the price, and then you can see the strike there. That's all, and all the Greeks. Let's go to the next slide. So the situation, the buying power available is near 0 because you've used up your capital by shorting the put. So since nearly all the puts are being tested, the buying power of an existing put position goes up and the buying power of the account goes down. That's what we talked about before when volatility goes higher. So you could add a far out of the money put wing, which would reduce the buying power of the trade while maintaining similar exposure. Adding a short call spread can fully finance the put wing. So this is not a bad idea. You could add a short call spread and buy a put with it and totally reduce the amount of buying power that is required to make the trade. You can see here, we kind of outline the whole thing. Short 40 delta put, add a 10 delta put wing, and short a 2010 delta call spread, and you basically end up, not having to put very much money in, and you reduce your buying power dramatically from 4,300 to 1,700.
I get it.
Not a bad thing.
No, not a bad thing. Not a bad thing at all.
Not bad at all. Okay, let's go to the next slide. Situation number 2, the portfolio delta is too long. You're short a put. So for short puts that are tested and or in the money, their delta has most likely increased a lot. Adding a short call, like Tony said, or a call spread, like Tony said, or rolling down an existing one will flatten out your delta while adding to the net credit of the trade with no increase in buying power reduction. This is typically our go-to move. We're going to, against a put, we're going to sell a call or a call spread. It doesn't require any additional capital, and it will, by taking an additional credit, it will reduce, it will give you some additional buying power.
Mm-hmm.
Because you've taken an additional credit.
Yeah, but it's a small amount of buying power, right? I mean,
it's a small amount of buying power. Agreed.
It can actually reduce it too. It could work a small amount against you too. I mean, if you're doing this on a relatively small price stock, like a $30, $40 stock, selling the call might actually use more buying power, but it's de minimis.
Yeah. Let's go to the next slide. So situation number 3, expiration is too soon, but I want to keep my in the money put. So most people may be leaning directionally long, but not just in their portfolio delta, but also their overall assumption. So rolling out the short in the money put out a month or two to give yourself more time is the least evasive way to maintain long exposure, collect credit, and not add to your buying power reduction. That's right. It'll reduce your risk by 25 to 30% is the bottom line. It'll reduce your delta, and it will just give you more time to be right. So this was the other thing that Tony said, and here's a perfect example. Your buying power starts with 43.65, and you roll it out in time, and it goes down by $195, but you also pick up some additional credit.
Mm-hmm.
And that's it. Let's go next slide. With markets going lower and vol staying well above its historical average, adjusting existing positions can change your risk of a trade and actually increase the net credit you receive. Increasing the net credit takes down your buying power requirement. Keeping track of BPR usage, credit, debit, paid, and net delta effects of the adjustment are the most important metrics to compare when looking to adjust a trade. Our real focus, because right now we're not using all our capital, so our focus is always on delta adjustments. I think that when you get comfortable with delta adjustments, the BPR thing is secondary, but you get very comfortable with that too. The real reason you adjust a trade though is for delta adjustments.
Agreed. That's the reason why you can do it. It's all about delta.
Yeah.
So enough, I always tell you, I've tried for so many years to make you better, but you always just miss by, just a little bit, you're just a little off, which is not, it's not bad. It makes you quirky. It makes you kind of fun and interesting. But again, it was potato salad, Sosnoff, not mayonnaise. It's when potato salad goes bad, not mayonnaise.
I think you're right.
I'm 100% right. I got a picture of it to prove it. I was waiting for you to argue with me again.
It's got to be like 30 years old, so I'm just remembering.
San Francisco.
I think it's just about 30 years old, so I'm arguing. Do you have a picture of it?
I have a picture of it. My friend James can put it up there if he has a moment, or we could put it up when we come back from this break. That might be a little bit easier for everyone. But
when potato salad goes bad.
If you'd like to vote online, you could too, probably, but it's definitely potato salad. I have a picture. Sosnoff, what comes up next? There you go. Here's your picture, Sosnoff. You ready?
That's it. That's it. It's great. That thing
He's
has
holding
lived
up the ketchup and the mustard, right?
That's lived rent-free in my head for 30 years.
Well, you had it wrong. You were blaming mayonnaise.
Well,
and
it's
it
the
wasn't-
mayonnaise, but when potato salad goes bad, yep, there you go.
We're going to take a quick break, but before we do, I need you to call this number right down there below, 855-238-2789 or 855-BE-TASTY. That's right. That's the phone number to call. It's free to call. We'd love to hear from you. We're going to go with your phone calls till 10 a.m. So we got almost a half an hour of phone calls. The sooner you call in, the sooner I can stop Tom from making mistakes. We'll be back in 90 seconds. You got more Tasty Live after this. Give us a buzz. Call-ins next.
Wolf! The first half of this year's market has been giving the good guys the business.
It's certainly been back and forth for sure, Pete, and I'm getting whiplash over here.
With good mechanics, we can see Team Tasty stay strong in the second half.
Absolutely. Let's check out our starting lineup.
Tony Bat Batista, the John Jay College of Criminal Justice. Number 69, because it's one standard deviation plus one. And you know, I'm the Bat.
John McLaurin, Wisconsin, number 2, because I'm Beth's right-hand man.
Vanetta Logan, the Indiana University. Number 3, because that's how many shots of bourbon it takes to make it through the first hour.
I like the looks of that lineup.
Well, Be Mechanical is always better than just trying to run plays and see what sticks, Pete.
When you got skin in the game, you stay in the game.
That's right. Now get off the couch and get into the game.
Watch Tasty Trade.
I did not like the close yesterday in the NASDAQ or the S&Ps for the good kids. I hung in there all day until right at the close.
I am not an animal. I know that. Don't say I'm.
We're live, dude.
Is this good for the good kids?
But generally speaking, when we're talking about risk-free returns, they're 1 or 2% around the globe right now.
The U.S. government has filed. Do you not care about what I'm doing over here?
I care.
Ignoring
okay.
the person speaking to
I
you.
knew-
That's at 7:53 on Friday, and I don't want to say it, but I got bingo. Sazlo bingo. I won, John. Can you come in and validate this, please? I would like to have. I have the times and the references.
Yay!
Good for the good guys.
Woo! We got a winner.
Pounds
winner,
and claps
chicken
on his
dinner.
desk. You get the free square of the bat in the middle. Accordion hand gesture. You take it right here, John, and then ignores person speaking to him.
All right, who do we need to fire for this?
I'm Jim Schultz, and this is From Theory to Practice. Welcome to the Monday edition of the program. Welcome to the show today. Welcome to the broadcast of what it is that we are trying to do. Man, I'm glad that you're here. It's only because of you all that we are able to do what it is we are trying to do. So thank you guys so much for being a part of the network. If you're watching over on the Tasty Live network, now it actually bounce on over to YouTube because you can join the conversation and join the discussion and communicate with your brethren who are also watching the program live here in real time. And of course, if you have any questions for me, you can drop them in the chat. I typically get to between 0.6 and 0.9 questions per show. So get in early because it increases the delta on your question, which then, of course, increases the delta that I might have an answer to your question. But Josh, go ahead and bring us in to the market today. Man, let's take a look at what's going on out there. We got some things cooking. EMI S&P is up 3. You got the risk-free instrument, also known as the NASDAQ futures, extremely high risk product if you are brand new to the markets, up 98. You've got the boomers down a little bit, and you've got the Russell 2000 futures down about 4 points or so. You've got bonds up, you've got notes up, you've got oil up, you got UB40 up. Obviously, gold up another 20 points, which is crazy. Silver up another 27 cents, which is crazy. You got the British pound is up, you got the euro is up. You've got the Bitcoin bros are celebrating. So lots of green on the screen. The market, by and large, is pretty excited. Now, why is the market excited? It could be my Chargers. Right? It could be my Bills. It could even be my Raiders. Man, my Raiders looked good, man. They looked really, really good. Who's our quarterback again for the Raiders? It's Rich Gannon, right? Rich Gannon's our guy. Yeah, that's my man. Man, he looked good on Sunday. Man, he looked good. I'll tell you what, they're going places this year. You got volatility down 29 cents. Obviously, with the market being up a little bit, and then the spot volatility is going to be down. It's probably going to be down. Maybe it's up. Who knows? Wow, look at that. It's up. How about that? So you've got the VIX spot volatility up 28 cents on the day, up to 1546. And so there's your market commentary. What I want to do today is let's take a look at a few things happening in the portfolio, and then I want to get to you all and see where you guys are at. Man, the days of monovision are over. We are now on to our second project. We're doing the multifocals now, guys. And let me tell you something. I can see everything so clearly. It's almost too clear. Like I can see things so well. I can basically see what the market is going to do next. So you're going to want to stay tuned for all of that, all of those insights and commentary coming up here in the next few minutes. But if we take a look at what's going on here in the portfolio, we've got it's very clear and also a little bit fuzzy. And so we've got Best Buy, Chipotle, Google, Hims, IWM, Meta, Oscar, Palo Alto, and Starbucks. All right. So quickly, let's take a look at Best Buy. Man, it's looking pretty good. You know, you've got Best Buy at 77. You've got our 100 shares, of course, that we've been holding since the busted earnings trade from just recently, a couple of months ago, I should say, not that recent. I see you guys trolling me in the chat. I'm talking about Dolphins fan. Man, I don't know what you're talking about, man. You can check the tapes. You can check the tapes. I'm just saying, it's been Chargers since day one. Right. I'm just saying I'm going to bring out my Vincent Jackson jersey if you guys keep trolling me on this YouTube chat. But anyway, I just got to get it out of the wash. It's been dirty for quite a while because I wear it so often. But Best Buy up 85 cents up to 77. So that's helping out on the P&L Open a little bit, right? So the P&L Open bros, they're going to have to slow the roll a little bit. Today is not going to be their day. We're up 85 cents on the trade. Now, what are we going to do? I still kind of have aspirations of maybe scratching this guy. I mean, that would be, man, quick little shout out to my life cycle of a trade fans that might be out there. All of my Nick Batista fans that might be out there. There are many of you that are out there in the shadows. Man, this would be a nice little anatomy of a trade. This would be a nice little life cycle of a trade if we were able to bring this guy back from essentially the brink of extinction and earn a scratch on the trade. But again, we don't want to be dumb. We don't want to be foolish about it. I mean, if Best Buy prints 80, that's probably going to be a pretty nice looking off ramp that we're going to go ahead and take on this position. So that's Best Buy, and those are my thoughts around that. And then I don't want to go through every position necessarily. Although I don't know. Actually, no, let's do that because we've been doing the educational stuff last week. I'm not going to do any of that this week. We'll probably bring that back around next week. I'm probably going to do, at least for the time being, kind of like an every other week type of thing, where I spend probably a couple of days that week, not even necessarily every day that week, kind of doing some educational stuff. And again, you guys, let me know in the chat. Let me know in the chat. Is there something that you would like to see me focus on? Is there something that you would like to see me do? Now, most of the time, at least for a while, I'm going to focus on more beginner-like content, something that's going to play a little bit better to somebody that maybe has never seen us before, somebody that maybe we are brand new to them. And so I don't necessarily want to, lead off with, all right, today we're going to talk about straddle swaps. All right, day number 1, this is a call, this is a put. Day number 2, let's get you in a straddle swap. Let's get you in a straddle strangle swap here today. We're not going to do that right out of the gates because I think that's a little bit too further along the learning curve. So anything that's kind of like beginner-ish or beginner-esque, go ahead and toss it in the chat because I would love to know kind of where you guys think we should go with this content. But Chipotle, so there's Best Buy. Chipotle, man, I'll tell you something. This Chipotle, wow, man. I mean, did salmonella break out again? What's going on with Chipotle? Guys, help me out. Chipotle down another $1.47. And I see you guys in the chat, man. Hook it up. Data Trader, Andrew Cortado's in the house. Ash Finn's in the house. Ash Finn talking about my boy Todd Marinovic. That's what I'm saying. He knows. He knows. That's my boy. Sergio Samuel's in the house. Bad Doe's in the house, man. Wolf's in the house. Night Moves just popped in. Look at that. Man, let me know what's going on with Chipotle. What is going on? Because it's down another $1.47. And we are just stuck with these long 100 shares, and that's just the way that it is. So that's Chipotle. I'm not going to say anything else about Chipotle because it's just this is a classic stew in the bathtub of filth moment. This is a very, very classic you do nothing. You do nothing, you cross your fingers, and you hope for the best. Right? I mean, that is going to be the strategy. But again, I mean, we joke about it, but this is actually a huge advantage to the short put. This is a huge advantage to the short put. If you sell a put on a stock that you would not mind holding longer term, that's a huge advantage. There's a million things that you can do from an active standpoint. There's a million things you can do to adjust and kind of zig and zag and kind of wiggle around the position. But if you want to just take the shares and hold them, you can do that too. And so that's essentially what we're doing now for Chipotle, at least for the time being. Google, we have a short call spread on. It's not looking too good. It's looking like this guy's most likely going to go away. And by go away, I mean be maximum value fully in the money. It's going to go away at maximum loss. So it's not exactly going to wither away into the ether, into nothingness. It's going to be a good amount of somethingness. And so Google at 234, we're short a 205, 210 call spread. You can see that right there. And yeah, I mean, the maximum value, I mean, this is actually a very good teachable moment. Look at the mark price right now, 495, right? Look at the width of the spread, 205 to 210. So my width of the spread is $5. So this is $5 wide, right? That's the vertical that I have. That means that by definition, its maximum price, the maximum price is going to be $5. That's the maximum price that it could possibly sell for. It cannot sell for more than that. It can't sell for $6. It can't sell for $7. Now, at expiration, if it's super deep in the money, or even just really any level of in the moneyness might also suffice. Could it sell for 501? Could it sell for 502? Yes, that's possible. And that's because the markets are a living and breathing thing. And you have to find someone who's willing to take the other side of your trade. And so somebody might not be willing to take the other side of your trade for $5. You might need to entice them with 501 or 502. That can and will happen if you trade long enough. But it's not going to sell for $10. It's not going to sell for $8. I mean, the defined risk nature of the strategy is indeed going to kick in. And so when you look at that and you also trace it back to the current mark price of the strategy, it's like, man, 493, there's only quite literally, let's grab our magenta. There's only quite literally 7 more cents that we could lose. That is it. It doesn't matter if Chipotle keeps going, or not Chipotle, but Google. It doesn't matter if Google keeps going up. It doesn't matter if the position never comes back. It doesn't matter if things get way, 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 way worse from a stock price standpoint. The most we can lose from this point forward is another 7 cents. And so, because of that, there is really no good reason to take this trade off right now. There's no good reason to not just hold this trade for the next 11 days until it expires, come September 19th. Now, is it going to come back? Probably not, right? Is it most likely going to assume maximum loss? Yes. But again, there's just no good reason to take it off because if you trade long enough, you're going to see there could be some crazy black swan event. I mean, this is actually, wait a minute. Oh my gosh, it's perfect. This is unbelievable. So this week, not only do we have CPI and PPI, and these are not any old CPI and PPIs. These are the most important CPIs and PPIs that you will ever experience in your trading lifetime. They're coming up this week. But then the following week, we've got FOMC. Like the next week, we've got Uncle Jay, I think, on Wednesday, right? So that would be September 17th or whatever. I mean, there's a lot of potential dynamite here that could lead to some type of explosive move on one side of the market or the other. And so we have lots of things that could potentially be a catalyst to the market moving lower, and maybe Google follows suit. But again, even if it doesn't, we've already absorbed, the maximum blow, essentially. We've already absorbed, the maximum amount of pain here in the hurt locker on this position. So there's no reason to exit early here today. So that is some Google commentary. We've got HIMS. HIMS is so interesting because, we were just tested on the downside. If I bring up, let me bring up a chart of HIMS. Let's see here. Oh, we got some probability cones. Yeah, I was doing some stuff. I was actually looking at these. So if you saw this morning's piece, so if you didn't see this morning's piece with Tom and Tony, definitely go back and check it out. The skinny on options, abstract applications. We kind of talked about geometric Brownian motion. We talked about some Markov modeling in a very, very what I hoped to be a practical way in terms of how that actually translates into strike selection, strategy selection, kind of controlling volatility, shock, risk, and things like that. But one of the ways you can visually look at this is by using these probability cones that are on the charts. And so it's one of the indicators here. You just click on the indicators and it's going to be right in there. And so I'm not going to use it now only because that's going to distract from what I want to get to for today's program. But the reason why that was on there was because I was doing some research for this morning's piece. But for HIMS, you can see that, man, we were just at, look at that, man. Like we were right around 40, 40, 42, 43. I mean, we were not looking so good. And now Hims has come back and rallied back up to right around, 49, almost 50. And so for my money, I mean, this is a testament to being a bit more patient. This is a testament to kind of like, all right, I've got a plan for my adjustments. I've got a protocol that I follow and a checklist and things like that. But it's like, man, don't necessarily feel like, you can't also exercise some patience and tap into the do nothing strategy, the best strategy that we know of here on the here on the From Theory to Practice. I was gonna say the From Theory to Practice network, but I'm like, that's not right. Definitely not right. But anyway, we're doing nothing, and it's looking okay so far. So for Hims, we're in a decent spot, and I think because we didn't aggressively roll the untested side, that puts us in a better spot here. But again, I mean, you don't know what's going to happen. I don't know what's going to happen, and so for those of you that like to adjust a bit more aggressively, then that could be the move that that you should make. But Hims here, there's our Hims position. IWM. We're at, you got the stock at 237. We've got a 219, 233 strangle on. And this is going to be similar from a standpoint of what we're going to do, especially after having just gone over, kind of a soapbox style lecture for you all in terms of being patient, in terms of, not necessarily over adjusting. That's not generally how I like to trade. And so I'm going to sit tight on this. I know that we're tested. We've even gone through the test a little bit, maybe failed the test a wee little bit on the call side there, but I'm going to sit tight. I'm going to sit tight. I kind of like the fact that we have all this real estate between the put and the call option. I want to leave that intact. I don't necessarily want to upset the apple cart when it comes to rolling the put side up just yet. Because again, PPI, CPI, FOMC. I think we have PPI. We actually have PPI before CPI this week, which that's not right, man. That's not right. That's like back on Monday, chest on Tuesday. It's like you can do it, but should you do it? I don't know, man. Like everything is kind of off center. Everything's just a little off kilter if you're going back on Monday, chest on Tuesday. Because then what do you do on Wednesday? Well, I mean, obviously Wednesday is still leg day, so it's an off day. But still, it's just a weird type of setup. And so I think that PPI is I think it is Wednesday actually, and then CPI is Thursday. And so everything is kind of off center. But Meta obviously going up, so we're getting hurt on Meta. So we're gonna do nothing there just because I don't feel like talking about Meta today. And then Oscar, we've got our strangle on that I think you guys brought to my doorstep last week, maybe just on Friday. So thank you guys so much. Oscar's looking good so far. We're just at a scratch right now, but that's neither here nor there because you've got the stock perfectly centered between the strikes, which is kind of what I'm focusing on here. So you've got the stock at 19, almost 20, and I'm at a 17.22 are my strikes. And so that is looking pretty good. It's funny with these multifocals. This is my first day being on the show with the multifocals. And when I started the show, everything was super clear. Now it's like getting a little fuzzy. And so that's kind of what's throwing me off a little bit. So I've got to get used to these multifocals. But I think you guys are just going to see me with some glasses here in the next couple of weeks. But if you guys are rocking multifocals, let me know in the chat. Like I everything that everybody tells me, i.e. really just grok, it's going to get better. Like it's going to improve. And so let me know. I'm very curious now because I'm like, ooh, yeah, I don't know about this. Everything is like crystal clear, like around me, which is good. But like the numbers and stuff, it's like sort of clear and like sort of fuzzy. Like I can kind of see and like I kind of have no idea. And so let me know where you guys are at if you're wearing multifocals out there. But Oscar looks okay. Palo Alto looks okay. We're getting close to the call side. So we're probably going to want to do a little something on that at some point soon. But right now we sit tight. And then Starbucks is getting absolutely bamboozled. But we'll sit tight on Starbucks. That's our long-term investment style covered call. I don't want to sell premium now because there's no premium there. I'm not really interested in selling premium below where I bought the stock originally. So we're going to sit tight. Let's play for a Starbucks bounce and see if it can't conjure up a little bit of Best Buy magic in the old SBUX there. But what I want to do, though, let's go ahead. So, man, gold is on such an unbelievable tear right now. Like such an unbelievable tear right now. Being a short-term contrarian trader, I've been dead wrong on the metals. Dead wrong, right? Short at 3,200, short at 3,300, short at 3,400, short at 3,500, short at 3,600. But I think today is my day. I think today, we're never wrong, just early, right? I wasn't wrong. It's just a wee little bit early. And so I think for gold today, it's got to be the day, man. It's got to be the day. So for GLD, I think, man, let's go in here. We've got October 17th, 39 days away. I don't really think we need to overthink this, guys. I really, really don't. I think you've got gold here at let's see, let's grab yellow. Got gold at 334. What if I went in here and I sold like a 338, 343 call spread in gold? I know it's crazy. Fading the metals. I know it's totally crazy that you're kind of stepping in front of a freight train. You're doing this, you're doing that, which that's kind of what my Bills were doing last night, stepping in front of Derrick Henry until the very end. And so 338, 343 here is looking pretty good in my opinion. Again, looking through the multifocals, so you never quite know what that means. But a 338, 343, it's $1.90, man. It looks like it could be $1.90, so we'll call it $1.90. You got a probability of profit of 59%. You've got a P50 of 67%. You know, obviously you've got your max profit at 190, which is going to trace right into the credit collected, and then a max loss of 310. And so everything about this trade looks pretty good from a stats standpoint, from a metrics standpoint. And so I certainly like all that about it. Now, again, you know, maybe you think that, you know, playing gold to the upside makes a lot more sense here. Then you could, of course, sell a put spread if you wanted to, you know, play gold to the upside. Again, if you're brand new to the show, you should do the opposite of everything that I do. If you are brand new to the program, if I take a directional trade, you need to be on the opposite side of that trade. And if I sound like super convicted, you need like double down, triple down, quadruple down on the opposite side of that trade. That will take at least 6 to 12 months off of your path to financial independence. If you are brand new to the show and you don't believe me, just watch. It will sell itself. But with this short call spread in gold, this is how I see it, man. As a short-term contrarian trader, the momentum side never really made sense to me. You know, buying the breakouts and selling the breakdowns. You know, apparently a lot of people have made a lot of money that way. I'm sure that they have. I mean, the internet would never lie to me. Would it lie to you? I don't think so. And so the short-term contrarian side makes more sense to me. But again, you got to do you, boo. It's going to 100% be your call. So 338, 343, short call spread. And there it is, $1.87. Boom, done. So we're short on GLD. Now, what I think I want to do is let's go into, I'm going to double up on some gold here, but we're going to do it a little differently. We're going to be a wee little bit strategic, I think. Let's go to GDX. This is going to be one of the gold miners. Obviously, GDX also been on a tear, much like gold itself. I mean, you can see just from, you know, Liberation Day, rallied all the way up from a low of 40 all the way up to present day is 67. So that's quite a rally on a $40 stock. That's almost that's like a 75% return, 70% return in 4 months or 5 months. That's an incredible return for GDX. What I want to do for GDX, I mean, you've got an IV rank of 37.7. It's difficult to find, you know, good high volatility opportunities right now, right? It's difficult to find things to do where there is some volatility to sell, especially if you're looking in like equities or the broad-based indexes. You've got the VIX at 1415. There's just not a ton to do. So this is where going into some other products, going into some other assets makes a lot of sense. You could go into the metals. You could go into energy. You could go into international. Like there's a number of ways that you could really play this. But for me, I think for GDX, let's go in October. And what if we just sell a strangle? Like, let's not be directional on this one too. Let's not double down on, you know, the short side to gold, because I have a feeling that that's potentially going to burn us in a big way. But let's sell both sides on a GDX strangle. And the great thing about this trade is if you have a modest size account, I mean, we've only got 30,000 in this account, so it's not a huge account to begin with. But even if you've got, I mean, if you've got 20,000 or even 15,000, I think this trade is going to fit from a position sizing standpoint into account sizes like that. But if I go in here, GDX at 67, what if I sell a 62 and then I sell a 70? So you can see some unbelievable call side skew. Well, sort of. Not exactly, because we're a lot closer on the call side just because of the strike. If you look at the strike kind of, I don't want to say placement, but just look at, you know, the strike availability, let's say. You've got the stock at 67, right? I would really like to do a 62.72, which on the put side is no problem because you have dollar-wide strikes. But on the call side, it's a big problem because I go up to 70, but then I jump to 75. And I don't really want to do a 62.75 because I'm not really collecting anything on the call side. I mean, I'm still collecting about 80 cents or so, but I really like the thought of selling the 70 call and collecting about $1.95. That looks really, really nice. And so I sell a 62, I sell a 70. Looks like I'm going to be able to do the whole thing for about 290. So man, that's a good looking package. Like that's a good looking trade just from an overall stats kind of metric standpoint, right? You've got a pop of 62, P50 is 74. My delta is also slightly negative because I'm skewed more to the downside because my short call is so much closer to the stock price than the short put is. My theta looks good. My maximum profit again is going to track with my credit collected. Maximum loss is negative infinity. I would need the gold miners to print positive infinity for that to actually take place. And then your buying power effect is going to be $1,000. So again, that's about 3% of my account, a little over 3%. So that's a very good from a position sizing standpoint. Typically try to stay between 3 and 7%. There are times when I will stretch the bounds and the boundaries on the upside, and I'll be at 8%. I'll be at 9%. I'll be at 10.5% as long as nobody tells Tom. But here, this actually fits pretty easily within the 3 to 7%. For you out there, if you've got 20 grand, this is 5% of your account. Like this is a perfectly sized trade if you also are kind of within that 3 to 7% window when it comes to undefined risk positions. And so I like the trade. I like a lot of the things about the trade. Let's go ahead and do this trade. And then I'm like right at the halfway mark of the show. Wow, it's almost like we've done this before. Man, it's almost like we've been around the block a couple of times. And man, here we are. So GDX, I should say, GLD are the two new trades for today. Both very, very, very fadeable. And so let's see, where are you guys at though? Let me see here. I'm gonna try to surprise and delight somebody. Oh, here's a good question. Ash Finn says, "Why not sell some way out of the money covered calls on some of these stocks?" I think you're asking me there, Ash. I don't know if that might be an inside conversation with another viewer. Which, by the way, you guys should all be having. Like again, look at the show. There's 600 people watching. That's crazy to me to begin with. But then secondly, there's 600 people watching. Now, yeah, I mean, 300 or 400 of them, it was a misclick and they'll be gone in a couple of seconds. But the remaining couple of hundred, man, they're all trying to do the same thing that you're trying to do. Like they're all trying to like trade. They're all trying to actively, take over their portfolios and monitor and manage their portfolios. So, man, you guys need to be connecting. You guys need to be making friends. You need to be building relationships because, a lot of the time in this arena that we're in it by ourselves, man. It's just us. Like the people in like our direct network or the people like in our direct circle, family, friends, even coworkers, whatever, they don't do what we do. So it's hard to have conversations with people about this when they're not doing what you do. And not only that, but even in the trading world, what we do, we've kind of carved out of more of a specialty niche. Like this is very much like a niche of a niche. Right? Not that we're the only people that sell options. Like, I'm not trying to say that at all. But again, to kind of throw a little shout out to my momentum bros that are out there. Like, I love each and every one of you. I'm going to fade almost every trade that you take, but man, I love you nonetheless. The momentum bros, they're a lot bigger in population than what we're doing. Kind of the short-term contrarian, selling volatility, like those kinds of things. So, I mean, you are in a space right now on YouTube in this chat where there are so many other people that are trying to do what you do. So I would take advantage of that in a really, really big way. But Ash Finn says, why don't you sell some out of the money calls against your stock? Well, if you're talking about Best Buy or Starbucks or even Chipotle, because these are the three share positions that we have on. And this is a really, really good question. I'm going to start with Starbucks because Ash, I know you've been following for a while. So my answer to this specific stock is not so much geared towards you because I think that you're pretty clear of what we've been trying to do with Starbucks for the last few months because you've been watching pretty much every day. And so I thank you so much. It's really for anyone else that might be popping in for the first time. Starbucks was a stock that we bought back in December. And in fact, here, let me bring up the activity page for Starbucks. I know I bring this up a lot, but I think it's really helpful for somebody that might be popping in for the first time. If you go back to, like here, so here are basically all the trades that we did. So we bought Starbucks on December 27th. So you can see that right there on the bottom, right? If I scroll up now you have every single trade that we did in Starbucks since that time. I have not done any trades since August 21st. If you take a screenshot of this, if you notice all of the timestamps on all of these trades, look at all those timestamps. They're all during the window of the show. So all of the trades were live on the show. So that means you got to hear my thoughts. That means you got to hear my analysis before, during, after we made the trade. And so this was intended to be an investment style covered call. This was intended to be, how do I sell calls against a stock that I plan to hold for a really, really long time? That's exactly what we tried to do here with Starbucks. And that's what we've done. And it's really been kind of fun, honestly. Now that it's September going into the fall now. It's like, man, this is cool. If we can make it all the way to the end of the year in this position, which I see no reason why we can't do that, but you never know. Let's say we make it all the way to the end. That's going to be an awesome little 12-month case study on like how do you manage, short calls against a position that you don't really want to get rid of. And I mean, we've seen everything across the board, throughout the duration of this trade. It's been deep in the money, it's been out of the money, it's been at the money. We've had periods where we've had no premium against it, like we have right now. We've had plenty of periods where we've had premium against it. And so we've done a number of different things. So if you go back in and you watch like March 11th, April 3rd, April 29th, and so on and so forth, you can get caught up to speed in terms of, what I was thinking all along the way for this Starbucks position. But the reason why I'm not going to do it now, Ash, is simply because it's too far down. And so same thing with Chipotle. The great thing is when you have shares, right? When you have shares, again, kind of tapping into that short-term contrarian nature, right? I don't want to sell calls on weakness. I don't want to sell calls when the stock is down. I don't want to sell calls when the stock is falling. I want to sell calls on strength. I want to sell calls when the stock is up. I want to sell calls when the stock is rising, right? Because that's going to give me a much better price for the calls that I sell, and it's going to give me a better buffer if the stock does indeed retreat after kind of moving up. Because stocks go up and then they go down, and stocks go down and then they go up. It's almost like they mean revert a little bit. But again, don't tell Tom that we said that. This is our little secret. And so that's Starbucks and that's Chipotle. And then Best Buy, Best Buy would be the one that you could actually make a case. Maybe we sell a call. I mean, let's take a look at it. So we were assigned at the 85 strike, and we've sold some premium against it. And so our basis on the position is not exactly 85. It's probably 83 or something like that. And so looking at Best Buy at 77, I don't really want to sell a call underneath my basis. And so 82.5 would be really the only option. And that's probably around our basis, give or take. And so I could sell that for $1. It's not a terrible idea. I think I'm going to wait though. I want to wait a little bit. I want to tap into some more patience. And man, if we get Best Buy up to 80, maybe we take it off, or maybe we just sell a call against it. Like maybe we just bring in some premium against that position, and that allows you to hold the shares for kind of a longer duration of time. So those are my thoughts around that there, Ash. Very good question though. And this is something that I know a lot of you out there are trying to figure out, how to do it. Should you do it? What are you going for? What are the gimmies? What are the gotchas? You have shares. You're considering selling calls against those shares. And so those are some things to think about. But if you're in that position, if what I just said describes where you are, which I actually think is going to be a lot of you that are watching the show, especially if you're brand new, number one, welcome aboard. I hope that you stick around. Whether it's my show or any of the other amazing shows, there's so many amazing shows to choose from here on the network. Like, man, take your pick. Like I would start with Liz and Jenny, obviously. But then you can navigate, out from that point. You can check out our little Chris and Ilya. Like you can check out, the Options Trading Concepts live crew. Man, if you really are a glutton for punishment, you could even watch Tom, right? You could even listen to Tom. Now, again, not my advice. Nothing that I would ever endorse. But if you want to go for it, man. That's what makes a market. And so thank you for being here. But then secondly, if you're in a position where you have some shares and you have some positions and you're like, man, I'm kind of considering cover calls on these positions. I'm kind of considering selling some calls against the shares. Then going back to watch all the segments with that Starbucks kind of investment style cover call, I think it could be useful for you. I think it could be helpful for you. And if for no other reason, your boy needs that watch time. And so I appreciate you. And so let's see. Andrew Cortado says, Night Move says definitely B minus humor. I agree. Andrew Cortado says he's bullish on B minus humor. Bullish on B humor. No, I'd be bearish on B humor. I'd be neutral. I'd be neutral on B minus humor. I'd be selling iron condors on B minus humor all day. And so let's see. Where are we at though? Let's go to the beginning. Let's go all the way to the beginning, man. I appreciate you guys. Appreciate you guys so much. So Wolf says, how was your trip to Best Buy this weekend? Was I supposed to go? I can't remember. I didn't make it out there, and so no trips to Best Buy this weekend. But there's actually a Best Buy not too far from our house, and you know how like wherever you live, there's like one or two like common paths that you follow out of your house to kind of get wherever you are trying to go. Most cities neighborhoods are kind of like that, right? Like if you have to go to like one bucket of places, you go down A route. If you have to go to a different bucket of places, you go down B route, right? Well, the Best Buy that is very close to us is down our A route. Like I see it everywhere, every time I go somewhere for whatever reason. And so every time I drive by, there's not usually too many people in the parking lot. So it's not a great sign, but man, they're still there. And most of the letters in the sign work. So it's a good sign. You know, that alone, I think, is a decent little sign. And so let's see, Scrubber, everything says, well, Dr. GM, with the first pick of the draft, those fins have it unlocked. Let me tell you something about the Dolphins, man. They look lifeless. Lifeless. I'll tell you what's going to get me fired up, right? As a Dolphins fan, of course. It's been a Dolphins fan since day one. We got to get rid of McDaniel. McDaniel's done. It's over. You can get rid of Tua too. That's fine. You can get rid of Tyreek. Get rid of clean house. I don't even care. We got to get Gruden. That would be amazing. If we got Gruden, man, that would fire everybody up, myself included. Like, let's get Marino GM and let's get Gruden head coach. Like, that would be pretty amazing indeed. And so, I mean, we'll see. I mean, obviously, the powers that be in the Dolphins organization, like, they don't miss an episode of From Theory to Practice. So, hopefully, they'll listen to me and we'll see some changes being made. But Ashfin in the house, I appreciate you, my friend. Hopefully, my answer earlier helped you out a little bit. Bad Doe says, what happened to Futures Power Hour today? I don't know. I know there was a VOD, but I'm not sure exactly. But I'm sure those guys will be back really soon. Emmett Morrison says, hey there, Dr. J. I'm looking forward to today's lesson. Man, I appreciate you. Wow, there's 10 minutes left. That's crazy. Man, I thought it was fast when we had the educational pieces in there. It's like even faster when they're out of here. That's what's crazy about it. Man, that's wild stuff. 10 minutes left in the show. Thank you, Emmett. I appreciate you. Thank you so much for being here. Sam L's in the house. Happy Monday, Doc. Hope you had a great weekend. Had a great weekend markets. Caffeine in, that's a check. And 45 minutes of P&L pump incoming. I don't know about that. We're doing what we can. Time to see if we get some gains, some DOMs, or both before the market closes. Yes, which, of course, the best answer to that is definitely both. But yeah, P&Ls, we've seen better days. I mean, you look at that. It's not looking too great. I mean, you look at that next to it. Whew, man, look at that. Wow. Wait, I didn't even see this. Look at this. Wow, I didn't even see this. So, guys, we've been so focused. I mean, I have been laser focused, like just locked in, tremendously locked in on Best Buy. But that is not even the leader in the clubhouse with P&L open. Look at this. Who cares about Best Buy? It doesn't even matter anymore. Look at this. Chipotle has unseated Best Buy as the ace in the rotation. It's the Garrett Crochet. And then Starbucks is now a comfortable number 2. It's your Brian Bayo. Wow, that's crazy stuff. Man, look at that. And obviously, you got Meta, you got Google, whatever. But man, the P&L Open bros, they got a few different things to work with today. So man, that's some brutal stuff. But nevertheless, we move forward. Sam L says, Doc, YouTube's algo knows me too well. Serving up your epic top 3 drivers of extrinsic value video right alongside The Rock, supposedly dropping 60 pounds. That's awesome. Guess he's topped the ultimate PED strategy. Maybe next up he'll be trading premiums instead of dumbbells. Yeah, The Rock, man, he really tightened up. Like, I don't know. I mean, he's obviously he's probably doing a little Ozempic vitamin S stack, right? Which, I mean, obviously that should be the stack, that he should be going to naturally. And so, yeah, I mean, he looks completely different, which is kind of wild to see The Rock looking kind of frail, honestly, looking a little something. And so, but thank you for checking out the 3 drivers of extrinsic value. Obviously, you saw it live here on the show, but that's the basic idea behind the educational pieces, where we get to do it live. You guys get to see it, experience it, absorb it live. But then Ryan, our YouTube guy, who's phenomenal, by the way, he's going to help us kind of cut it out and put it on YouTube so it can live forever. It can live off into, infinity on the internet, because the internet never forgets. The internet absolutely never forgets. And so let's see where we at. Sergio's in the house. What's up there, Sergio? Appreciate you. Stefan, hey, Dr. Jim, hope all is well. Time for the do opposite game. That's correct. And I gave you a very clear one with my being bearish on gold. So you know what to do, Stefan. And I know that you know exactly what to do. And so I appreciate you. Joe, hey, Dr. Jim, I know you're a big fan of the do nothing strategy. I am. But in what scenario would you consider rolling up the uncontested side? Like our Palo Alto position. Yeah, so I mean, or even the IWM position is probably a better example. So this is a great question, Joe. So thank you. So number one, I mean, so let's kind of zoom out a little bit, right? So the tasty mechanics, just kind of writ large, generally speaking, like they started like way back in the yesteryear, Like they started, like when your strike was tested, you rolled up the opposing strike. So when one side was tested, you rolled up the untested side. So if you get tested on the call side, you roll up the put side. If you get tested on the put side, you roll down the call side. That's how it all began some number of years ago. Since then, the research team has done a lot of additional research kind of showing, the gimmies and the gotchas and the benefits and the drawbacks of doing that strategy, of potentially, waiting and being more patient, of potentially being more aggressive. Like, hey, once my deltas get to 10 or 15 or 20 or whatever in either direction, then I kind of recenter to rebalance my deltas. There's a ton of research out there, and you can just search, you can just Google like Tasty market measures strangle adjustments, and you're going to find a million different pieces that you can check out. For me, and this is what I love about the Tasty Network, by the way. This is what I love about what we do here. You have, 15 different traders on the network, whatever. We all agree on the same 5 or 6 universal principles, like selling premium, high volatility, high probability, blah, 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 blah. We all agree on that. But the way we actually implement like our own, view of those things is not exactly the same from one trader to the next. And to me, that's real. To me, that's authentic, right? If we all just kind of rotely copied each other and we all just kind of rotely read from the same PowerPoint slide and you got the exact same thing every time, it's like, this isn't even real anymore. Like, this doesn't even make any sense anymore because this is not how people trade. Like, you've got to kind of make this your own. You've got to kind of blaze your own trail. And so one of the ways that I do that you guys see here on the show is I am oftentimes a bit more patient with my adjustments than maybe some of my own brethren on the network are, to where I'll wait till the strike is tested or even a bit beyond that point before I adjust. Okay. When it comes to like, your strangle adjustments, Joe, again, you have to make the decision. I can't make the decision for you. There's lots of good reasons and resources for being more aggressive or less aggressive. When it comes to rolling the untested side, though, the tried and true default setting is when the strike is tested, you roll the untested side. When the strike is tested on one side, you roll the untested side on the other side, and you trim your directional bias by 30 to 50%. And so that would be kind of the default setting that I would point you towards to begin with. And then from there, you can make adjustments. From there, you can be more aggressive or less aggressive. Like, you can make up your mind when it comes to that. But for Palo Alto, if you were following that default setting, for Palo Alto at 197, we're not even tested yet. We haven't even tested the call side yet. And so I know we're only a couple points away. And so you're thinking, Jim, it's only a matter of minutes. And that might be right. But I would sit tight a little bit. I wouldn't necessarily adjust just yet. I think you can probably get away with waiting just a little bit longer on this. And, you never know. Palo Alto may sell off. Next thing you know, it's 190, it's 185, and you'll be glad that you didn't adjust. So those are my thoughts. Take them or leave them. And so let's see, that is Palo Alto. And then let's see. Ash says the Sosnoff bingo commercial is one of my favorites. Yeah, that's a classic. I mean, I remember being in the studio when all that was happening. It was so much fun. Being back at the Sangamon studios. That was super, super fun. And so Samuel, Doc, you plotting that revenge trade? Guess who's reporting earnings tomorrow night? Wow, are you serious? No. Oracle? No way. Wow, they're still in business? That's amazing. Up $7 today. Oracle, ORCL. It's tomorrow? It looks like it is tomorrow. Wow. Okay. Now, you're not going to want to miss tomorrow's show then. I mean, look at that, man. 9-9. There it is. And so, yeah, we're going to do a little something for Oracle. I'm not going to do it today, though, because we're just about out of time. We'll do it tomorrow for Oracle earnings tomorrow. But, yeah, that's some crazy stuff. And so thank you there, Samuel. I appreciate that. Let's see. Joel James says, Dr. Jim, we're having apple pie for dessert tonight. Should we put some tuna in it or just applesauce only? Yes. So obviously Joel James is talking about my tuna fish and applesauce story from this morning on the Skinny and Options abstract applications. I'm not going to retell it now because we're almost out of time. And now this gives you more motivation to go back and watch this morning show. And so tuna fish and applesauce, one of my classic bodybuilding favorites. And you can watch this morning show for more context around that. But if you're going apple pie, so this is where people make a big mistake with tuna fish and applesauce. The biggest mistake you could make is just getting started. But beyond that point, once you're in it for a couple of weeks, you want to make sure that you understand what you're signing up for. Again, we almost got through the show and I didn't say that. So thank you very much, Joel James, because you saved the whole season right there. You have to understand, what have you signed up for? When you go in for tuna fish and applesauce, you have not signed up for a dessert-like experience. You have not signed up for something that's going to be enjoyable. You are trying to, at this point, you're basically an inverted strangle. Like, this is not a desirable position. You didn't necessarily want to be here. You're just trying to figure out what's the way that I can potentially, minimize my losses. What's the way that I can potentially do the least amount of damage? That's exactly what a tuna fish and applesauce experience is like. But again, you're doing it for fitness purposes. You're doing it for, protein and muscle building and whatever. So it does have a myriad of gimmies. And so I would actually encourage you to actually separate them out, right? You go tuna fish and applesauce for dinner, the main course, and then you can enjoy your apple pie all by itself after the tuna fish and applesauce is over and done with. And so, but thank you very much for asking. Rancher's in the house. What's up there, Rancher? Andrew Cortado's in the house. What's up there, Andrew Cortado? Theta Trader's in the house. What's going on there, Theta Trader? What's going on there, Theta Trader? And then yes, there's Ash Finn with the Todd Marinovich pulled, which is pretty solid. Scrum Everything says, hi, Dr. Jim is about to add the Colts to his list. Nah, the Colts didn't look so good. Daniel Jones looked pretty good, though. Daniel Jones is my guy. And so let's see. Andrew Cortado says he does like the Dolphins, though. Yeah, once they get rid of McDaniel, I'm back. I'm 100% back. Brian Dowdy says the P&L Open Bros are winning today. Yes, they are, because now they have more ammunition that I just realized with obviously Chipotle and Starbucks now also in the mix. And so let's see. Where are we at? Theta Trader. Oh, the Dolphins made Darius Rucker cry. That's pretty funny. Yeah, they've been making him cry for many, many years now. And so let's see. Joel James, Dr. Jim, I thought I brought you the hymns, but the put only. You added the call and create a problem. See, there you go. That's 100% the way that it has to be. It's the way it's always been there, Joel James. Right? You bring me a trade, a good trade, a winning trade. I make it my own. Got yourself a loser on your hands. Like you got yourself something that's bleeding red. That's just the way it has to be, my friend. And so thank you so much for the short put idea in hymns. But yeah, we've made it our own. We've blazed our own trail, and we have since lit that stack of cash on fire. And so, but man, it looks like I think are we done? I think we're done. That's crazy, man. That is so crazy. And so, guys, I appreciate you guys. I appreciate you guys so much. If I can ever help you guys in any way, please shoot me an email. I'm jschultz@tastylive.com, or we can connect on Twitter. I'm at jschultzf3. I would love to hear from you guys on there as well. But stay tuned. We do have Jamal coming up next with engineering the trade. In the meantime, guys, trade them small, trade them heavy, and stay generous. We'll see you guys tomorrow.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that one-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
Dear Karen, thank you so much for the relationship advice. Of course, since you met your husband in high school, I should obviously just go back to high school. Can't wait to win the Nobel Prize for my development of a time machine. Signed, Regina.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live taunting.
You're mistaking me for someone who cares.
From the smart mouths at Tasty Live.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tasty Trade. So spread the word and earn rewards. Terms and conditions apply.
What's going on, everybody? Inflation reports are coming this week. Is it still high? Does anybody even care? Will it move the markets? I guess we'll figure it out. We also have two major IPOs coming this week, so we can talk about those two things and more. Kind of a quiet Monday. Markets are drifting higher here. Volatility is a little bit lower. And bonds are some of your biggest movers here, folks. Welcome to the most dangerous show on the Tasty Live Network. Folks, it's Engineering the Trade. I'm your host, Jamal Chandler. And everybody's favorite special guest, Josh Fabian. What's going on?
When you said that hi, you just said the word hi. And so over the weekend, my son, my older son, my 15-year-old, goes, Dad, you got to watch this. And he goes to YouTube, and he puts on the hypotenuse clip. And he's like, this is the funniest thing ever.
Yes. For those who don't know what Josh is talking about, there is a great Key and Peele skit about just Google Key and Peele hypotenuse. You'll see.
Oh, it was so funny.
So funny.
I was laughing at my son laughing at it. I'm like, all right, we're starting to get on where we can share things.
I know, man. I know. It's really kind of dope when you think about how, like, when you share things. Like, I was thinking about because there were some movies I showed him, but I feel like I share, like, whether it's music or movies, like, those are the things that you can share, and it doesn't really matter age, you know?
Right.
I mean, it does matter on some things, but you know what I mean? Like, you can find those commonalities, like, via movie or show or music. I think that's dope.
Yeah, it is. It's very cool. It's very cool. It's cool. Yeah, when he put that on, he was laughing so hard, and I'm just like, yeah, it's funny. I've known about it for a while.
What's up, chat? How you guys doing? Dynasty, how you doing, Rancher? Brandon H, my guy, what's going on, man? Hope everything's cool out there in Cali. Scramble Everything, what's up? Emmett Morrison, hello. How was your weekend?
My weekend was quiet. It was pretty quiet. Didn't do too much. I don't think I did. Watched a lot of football.
Yeah.
Yeah, so last night I'm getting into bed so I get up at like 4:30. And so I'm getting into bed and I've got the Bills game on. And it's 40-25 with 5 minutes left. And I'm like, it's Josh Allen. Like, normally I would turn that off, right? But it's Josh Allen. Like, there's a chance. Well, everybody knows what happened, how the game ended. By the time the game ends, which was, I don't know, like 10:30 maybe, I've got so much adrenaline pumping through me. I'm up till like 1 o'clock in the morning. I thought about just coming straight into the office. Like, maybe I'll fall asleep here. There's no sense in going to bed at this point. But that's all I did was football all weekend. How about you?
We kind of the same. Whether it was watching or my kid had a game on Saturday. What was really dope was the place we had the game was in Arlington Heights, and there was a.
Well, you're up by me.
Yeah, it was, and there was a golf range right next to it, which is great because I've gotten into golf more. Literally, there's a golf range right there, so going way out there, you usually have to be there like an hour at a time before these kids' football games, and so I was able to hit balls. That was kind of fun.
That's nice.
We won the game. I mean, I wouldn't say this if I thought my kid watched the show every day, but it's kind of cool. So the first game, I don't know if I tell you this, but he balled out. He had like a whole bunch of QB pressures. He had a couple of sacks, but I mean, he's a big kid.
You're big, yeah, he's a big kid.
He's getting it.
Yeah.
This game, he did not, and he was really frustrated when he got in the car, man. I mean, like I've never seen him like this. He was upset. We won the game 20-0.
He was mad with his own performance.
Yeah, but then I was like, dude, let's just calm down. I understand how you feel. And I could tell, like, there was a little back and forth between, like, stuff on the sideline. But nothing bad.
Right.
But I could tell he was frustrated about how the game went for him personally.
Yeah.
We look at the film. They game planned for him.
They what?
They game planned for him.
Oh, yeah. I was going to say, did you explain to him, like,
bigger kids blocking him?
Did you explain to him they probably double teamed you so that your teammates
They had one of their bigger kids
block.
blocking. My kid's 5'9", 150. The kid who was guarding him was probably like 5'11", like maybe 165. He was still pushing him back, by the way. But there was a chip block every night. He's 13. He's strong, bro.
5'11"?
Yeah,
13?
This kid, yeah, they were all 13, yeah. But there was a chip blocker, too.
Okay.
Most plays.
Yeah.
And they did not run to his side.
Yeah.
Promise you. And then there was another time where they switched out a lot of our front line, including him. First thing they did, they went to that side. No bullshit. So they were game plan for it. And I told him, like, and he watched it. And so he felt better. He realized, like, dude, if you have a good game,
you have to
these
realize
guys are going to
that,
see it on film. And they're going to game plan. But you're a game wrecker, bro. Like, you're a big kid. So he got it then.
That's cool.
I know it's kind of cool, right?
It's kind of cool.
I was trying to explain that to him, like, bro, like
it's tough to get your head
around. You're like
that.
TJ Watt. They're game planning for you, bro.
It's tough for a kid to understand that. Like, listen, you didn't get sacks, but your team.
We had 3 picks. We had 2 forced fumbles.
Yeah, because you took away a side of the field,
and we shut them down.
Yeah. Yeah, that's awesome.
It's good shit.
That's awesome.
You know what I mean?
That's awesome.
Let's pull up the platform. Let's see what's going on here today. I know one of the things that we were talking about. The day is going halfway decent. I've realized that I do have a lot of longs nowadays. That's just kind of where I'm going. Yeah, I do. This is not a 100% tasty methodology. I've been going with what I like. The zebras are fine. My zebras are further out. Most of them in November. I put on a zebra. No, I didn't put on zebra in JP Morgan. I put on some calendar calls. I'm long the earnings upside, and I'm short the nearer term, October 3rd, October 10 upside. I feel like with the news we got on Friday, the jobs report not being so great.
How do you trade that?
How do I trade the jobs report?
I'm kidding. This is a pre-show conversation we had. I shouldn't have said
I got an answer. I always got an answer. Look, basically, we're seeing the stock market go higher because we're expecting more rate cuts coming. And Friday's job report basically kind of confirmed that.
Oh, yeah.
See what we actually get. But for me, I started thinking, look, it's probably time to rotate out of some of the tech and get into some banks and get into some
I agree with you.
Stuff. Because once these rates come down, first of all, that's good for banks. Banks automatically do well.
Is there any environment that banks don't do well
You can
in?
make a case for it.
Like when we raised rates, everyone was like, this is great for banks. And then we cut rates, this is great for banks. It's like, what's not good for banks?
Yeah. Exactly. That tells you something, right?
Yeah.
What's not good for banks? Depression.
Depressions are bad.
Banks.
Yeah. Housing crises.
Those aren't good for banks.
Those aren't good for banks. Yeah.
Outside of that,
I'm in the same boat though. I've been looking at consumer staples. Same thought process of listen, this, we may see a rotation.
I think
tech
so.
I saw something since
not to the point where Nvidia goes to $20.
Right.
I'm not saying that.
No,
we
but
might see
still,
a rotation.
yeah. I saw something like since 2019, 59% of the S&P 500 gains are from 10% of the stocks or something like that. And now I have formed the opinion recently that I don't think a market can sustain a crash. I don't think it can fall and stay lower because I think there's just too much liquidity at this point. That's why I think we've seen these bounce backs. It's the only logical explanation. But at the same time, that doesn't mean you can't see a sector rotation from one thing to the other, and maybe we'll see that. But I think the banks thing, I was looking at those. That makes a lot of sense. I was looking at, like I said, consumer staples as well. Yeah,
that's kind of been one area I've been trying to get into. A little bit more of the bank stuff. I do believe the dollar bounces back at some point. I'm long the dollar right now via a short delta long put spread in the euro. Moves for the week. Let's see. This week they you know what? They keep moving the goalposts on some of these inflation reports at times. Sometimes
did you know? So PPI is Wednesday, CPI is Thursday. This is the second time this year because I remember that. I don't know.
Is there any rhyme or reason to that?
I was talking to somebody over the weekend, and I'm like, this is the second time this year because I know we talked about it when it happened, and it was a rarity. But the economic news, I'm not so sure it matters right now. The rate cut's coming. That's a done deal. So I don't think that 2 weeks ago I would have said that the rate cut could hinge on the economic data. Now it's no, it's absolutely coming. And the question is, are we going to get 2 or 3 cuts before the year's up? So I've sort of not lost interest, but it's not as enticing. I'm looking more at I think what's exciting this week on the calendar is you got a couple IPOs in Klarna and Gemini. And I think that to me might be a much more interesting trade than anything else I'm looking at the moment.
Well, Klarna definitely. This is an environment where Klarna is one of those lenders.
Buy now, pay later.
Yeah, buy now, pay later. And this is an environment where if the job market is starting to turn down, it's
layaway.
Yeah,
layaway does well. Layaway does well in a recession.
It's a signal that eventually maybe consumer spending, which is 2/3 of GDP, and that's GDP, and so therefore people might be lending more, and that stock could be interesting. What's the other one?
Gemini.
Affirm is
Affirm.
Too, right?
Yeah.
So that's kind of your guide, and if there's any guide to how it may end up trading, that's not the trading price, whatever. And then the other one is
Gemini.
Gemini, and that's I mean, I don't want to say not Oracle. I don't want to say it's the same as Circle. But I know Circle created stablecoin. Gemini is an exchange, though.
Yeah, it's the Winklevoss brothers. They finally figured a way. They lost the whole Facebook thing, but they came back strong.
The Winklevi?
The Winkle. I mean, don't they sound like criminal characters in a Batman movie? It's like, I gotta get the Winklevoss worm, or
I know,
it's like a kid. Dr. Winklevoss.
I met them very briefly because when SIBO started futures for Bitcoin,
did they come?
Because SIBO was the first. They did it, and then CME did it, and then SIBO I think got a little nervous about something, and like a year or so later, they got out of it. About a year, maybe 2. But I think it was December 2017, and they were at SIBO's offices. Tall dudes.
They're like 6'10".
Yeah, tall dudes.
Yeah.
And yeah, they were the exchange that initially SIBO was using or whatever to go through.
Yeah.
Seemingly nice dudes. I think they really, you know what? They really feel a type of way about how they were portrayed in that movie.
Oh, they were not portrayed well. They did not come out of that looking good.
They just always seem like they're always trying to like refute that.
Yeah. Oh, I would be too. Yeah.
It's kind of funny.
But that, again, it's.
Oh my God.
Say what you want forget about the exchange aspect or what either of these do. It's the fact that these are coming out. Klarna's going to be like in the mid to upper 30s is where they're supposed to price it. Gemini's supposed to be in the upper teens. I just think there's so much demand for stocks that are affordable, like that, the regular Joe can buy 100 shares of. That in and of itself makes them an interesting play to me because, you start looking around at what do I want? If you are a more traditional investor and you want to buy 100 shares of stock, what are you going to buy? You want to buy 100 shares of SPY?
That's too expensive.
I mean, that's a big investment.
No.
So a $16.
That's why people need to learn about leap calls.
You like leap calls. I don't do a lot. You do a lot in that.
I do those.
I don't as much, but I probably should. I mean,
I think there's a place for it in portfolio. Again, I think this is the reason why I have.
I'm missing a thing.
So you look so bootleg now. You see, nobody would have noticed it if you didn't say anything.
Well, I just noticed it, and it's really upsetting to me. Sorry.
I think when you do those leap calls, though, I think it's better to put, for those of us who are active traders, I think you need to put them in a separate account where you don't look every day.
Yeah.
Because then you'll just
it's like a static stock.
And it's just a set and forget it. Or the zebras that scramble everything. I do the zebras. Those are a little bit easier. I usually try to find those on names that are kind of down and are due for a bounce. Yeah. Then I don't have to wait as long. It's either still struggling, it's not going to get off the mat, and I'm out, or I start to see a significant bounce in a short period of time, and okay, cool, we're riding with this one. It is what it is. We can't. You're not going to trade those initially on the week, though. Klarna.
I might trade the stock.
Right.
I might
Where's the price? You have any idea?
Klarna's 36 to 37. I think.
So it's going to be trading 80. Got it.
Yeah. Well, that's exactly it. It's going to probably open at 70 or something,
100%.
and the Gemini is I think it was 16 to 17. So that probably opens 50.
Yeah.
And it's if you want to take a shot. That to me, even though it's not necessarily capital efficient, it's just as enticing as any other shot. It's probably a smarter shot than when I'm scalping. It's at least I can hold the stock forever if it's not working out. Whereas with the scalps, I'm sitting there and I'm looking at it and okay, I go through periods where my timing is impeccable, and I go through other periods where it's you couldn't time this worse if you tried.
It happens.
Yeah.
I know, I don't want to miss this question, but I know Andrew Cortado was asking how dangerous is a pairs trade between Staples Index and SP 500. It doesn't seem to be that dangerous. This thing is really, just over the past year, you can see where it is now. And you could definitely do something like that.
It's just that's an expensive trade.
It is an expensive trade, for sure.
Most people.
I was just showing the chart.
Yeah, you could definitely do it, though.
You could also... look at this is a similar type deal. Because obviously, you might as well just do this, I would say, if you really want to do that trade, because consumer staples basically rise when the market is doing well. I always put that in terms of people are buying the things that they don't need, right? Consumers, that's what consumers discretionary is. Versus consumer staples is the stuff that people need, right?
Yeah.
It's foods and all that kind of stuff. So
general.
You can do that. Interesting trade if you want.
Yeah. How about I'm sorry, I just saw bonds out of the corner of my eye.
ZB.
So I bought those. I bought those 113.29 last week.
And you got out of them, didn't you?
114.10. Thought I was a genius. And I crushed this one. I crushed it.
Yeah. That's how it goes. Sometimes. I got long bonds. Again, not the typical tasty trade, but I went further out and I went further upside. I'm looking for some upside in here. I think bonds have gotten the runway to go upside now.
This is what okay, well, that's an interesting point you bring up, because I get the short end of the curve, coming down with an expected rate cut. But the long end of the curve coming down as well, like, is this a flight to safety? Is this like, I saw somebody posted in the chat, stagflation. And yeah, that's probably my biggest concern, broad economy, is that we're in what looks like a stagflationary setup. So is this just a flight to quality, or is this the rates are coming down because, like, I guess I don't understand it.
The rates are coming down because we're going to cut because it's not a good reason. I mean, that's.
But the long end has come down substantially in the last week. Yeah. I mean, that's a big move.
The yield, you're saying?
Yields have come down huge.
They were the yields almost touched 5%
right
at the beginning of last week.
Yeah.
I think they did touch it. And I'm not exactly sure they are now, but I would imagine probably 4.8, 4.75. I don't know. It's not. They stopped. I'm not even going to pull it up. The /30Y used to be a thing you could look at, but doesn't seem. I guess because it just wasn't as much liquidity.
You can get quotes elsewhere for it, but
yeah,
I
think that's why.
It's just a huge move, which I don't think that is solely rate cut related. That to me is.
Well, I think it's all connected in some weird way.
It's connected.
But I think a lot of it is because we're going to cut rates because the job market is not good. That's not a good thing. And when we just watch. Over the next couple of weeks, that's what, if there's anything, if the reason why the market is down, it's going to be that, well, we're going to be cutting because it's not a good thing. It's not a good thing for the economy, the rate, we're losing jobs, and it's going to be all of a sudden it's a bad thing. But right now, it seems as though traders are looking at it like,
markets think
we're going to rate cut. Great.
Markets are looking at this like it's a free money rise right now, and it's. Okay, I am going to bring it up. You're going to have the revision of the jobs number tomorrow. And that's supposed to cut. They're expecting there to be a net loss of 600,000.
Why the hell do they revise these things, by the way?
Because it takes because people don't respond to the surveys in a timely fashion anymore. So the data is constantly way, way, way behind. So that's why they do these revisions, to try and get a more accurate picture. So, but I'm going to tie this back to a trade, because right now you do have this like this sugar high. Markets rallied off of the idea of this Fed cut being like, oh, great, earnings are good, we're cutting rates, everything's wonderful. Well, if this jobs number is as ugly as it looks like, then maybe the economy isn't all that great. This recent sugar high is just that, a sugar high, and sugar highs crash. And I'm not saying the market will crash, but I'm saying that maybe we're out over our skis a little bit.
Maybe. You wait for the market, you're saying?
For equities.
For equities.
Bonds, okay. Bonds I'm confused on, because bonds, this could be a safe haven play.
Yeah, which clearly I think it is.
Yeah. I think it's.
I mean, over these last two sessions, it's interesting to watch the bonds and the market moving up together.
Yes.
I will say that.
Yeah.
One of them is going to be wrong. And to your point, it could end up being equities.
Yeah. I don't even know what to do in bonds at this level. I don't want to get short them.
Yeah.
I don't feel confident in that. I definitely don't want to get long.
I don't feel confident getting short them. That's why
I feel more confident. I mean, I guess I can judge my confidence or what I think is going to happen. I don't usually scalp from the short end. And I noticed in the last week, the majority of my scalps were short end. So I guess.
I'm
selling them.
Short.
I'm selling them.
And then looking to buy them by cover back.
Yeah. And normally I don't do that.
Well, then why have you been doing it?
I guess on a subconscious level, I'm mad at my parents.
Kent.
I guess that I do think that we're overextended in the equities, and I think the greater risk is to the downside here.
Well, I mean, it seems as though we're sitting around 6,500. Like it's definitely a level that the market is struggling to really get past.
Yeah, that's the other aspect.
One of the big earnings this week, I think, is Oracle.
Yep.
Oracle has earnings tomorrow, probably after the close, I assume.
Yeah, it's after the close. Yeah.
No, what are we thinking here? Do we want to even do anything in here?
I'm not.
I don't even know what I'm doing.
What are you talking about?
I don't even know.
No, I'm not talking. You got Oracle and later in the week you have GameStop, which who cares? But you do have this meme mania thing going on again. It's not as pronounced.
What do you mean, like open?
Yeah, like some of these stocks I could see GameStop getting kind of crazy after earnings just because it's the OG of meme stocks.
Well, you know what I don't like recently is this just kind of, I think it's very damaging.
It was a real genius reference.
Yes, it was Theta
Good
Trader.
catch.
You are
Good catch.
the man. Nice job.
One of our favorite movies.
Nice job. Nice job. Nice job. Agent, what's up? Yeah, you're right. There's been a few names like this QuantumScape. I don't know why this thing is up big today, but that's up big. We're not even going to talk about this.
No, don't even bring that one. I forgot the ticker already.
Ridiculous.
I can't see the screen because of the glare right now. Don't even say the ticker again.
This is
I'll
bad,
watch it.
man. I don't like this. When I see stuff like this, I'm like, oh my
nervous.
God, we are close to a 3% down day soon. Like, seriously.
You know what Yeah. No. You know what we should take a minute though to talk about, and we haven't, and I can't believe I let it go this long. There is an incredibly important event taking place this week.
Yes, there is, isn't there?
Yeah.
Just as a quick aside, I was my best friend. I can send. He's just like you and I can send him quotes. He knows I don't talk about. I was like, yes, we are, aren't we? And I just literally did a Beverly Hills Cop thing, like when his friend got killed, and he knew exactly what I was talking about. It's funny. There is a big event tonight. Yeah, let's talk.
Yeah. I didn't even say it's tonight. I just said it's this week, but it is tonight. It's taking place about 15 minutes east of here.
Yeah.
It is the start of the Super Bowl run.
That's right. Yeah.
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 Yeah. I am.
Big game tonight.
Big game. I'm decked out. Tom made fun of this hoodie. I won't even tell you what this hoodie cost.
I can imagine.
I paid up.
Cream hoodie with the big.
I paid up
big
for this
logo.
one. Yeah, this one I paid up for because I needed a nice Bears thing for some stuff I was doing. But yeah, I'm. What do you like? I was excited going into this season. Ben Johnson
Line for this game tonight.
Bears plus 1.5.
1.5. Plus 1.5
at home against a rookie quarterback.
Okay. All right.
But then Green Bay. Did you watch that game?
I did watch that game. Yes, of course I watched that game.
I know your wife.
Fan.
Yeah.
It was on all over the house.
Okay. You could hear the air from the balloon going out, watching it. Like, holy cow, they look good.
I know. It's week one. The best thing, you can't overreact to week one. And wins or losses, honestly. I mean,
I agree. But Mike Parsons on that, and he didn't play that much.
Yeah.
And like, whoa, he's good. Like, we didn't get to see him that much in Dallas, like just because of geographically where we are, we didn't get all their games. But saw that, like, yeah, he's pretty good.
Well, they mentioned 5 people over time that were traded in their prime defensive players. I don't know if I remember all of them, but Champ Bailey was one, Charles Haley was another, Mike is another, Khalil Mack, and then there was one other one. And all the dudes that they mentioned, I mean, they had big impact. Oh, Darrelle Revis was the other. I got them all. How about that? And all of them they had major impacts when they got traded to their teams. And so, I mean, he's going to, again, you do that to somebody in their prime, and they're going to be amped.
You boost their confidence.
Yeah, 100%. And the team's confidence, right?
Yeah, that's what I'm saying. The whole, it lifts the entire.
I know, that is scary. Nevertheless.
I had that effect when I signed my contract. When they brought me into the wheelchair bearers.
What contract was that? Oh.
I get $20 per diem.
I thought it was your HIMSS contract. I thought that one was.
No. I get $20 per diem for. That was the contract. It was up from $20. It was up from $17.50.
Tonight, obviously, Bears are going to win. You know what? I'm not going to lie. I'm still interested in sports betting. I am boycotting a little bit.
The taxes.
Yeah, there is a 50-cent tax on every bet now. But I'll get over it at some point. I mean, it's no different than, I guess, well, they don't do that. No, they don't do that for every single thing, exchanges. No, they don't, actually. Just for their products. What are you looking at? You said you had a bet for tonight.
Oh, my God. I don't know where I came up with these ideas for my bets. I was just looking at them like, I've got like J.J. McCarthy throwing a pick, T.J. Hawkinson scoring a touchdown, Swift rushing for 25 yards, and what's his face, the running back from Minnesota rushing for 25 yards. Like, it's like these crazy, like normally, if you looked at my betting account, you would see like Caleb Williams throws for 6 touchdowns. Like, that's a bet that I'm like, yeah, that sounds like something I would do.
You like Hail Mary type of bets.
Well, Hail Mary, but are very biased bets.
I mean, 6 touchdowns. When was the last time somebody threw 6 touchdowns in a game?
Yeah, but you know what the payout on that is?
The one thing I forgot to mention, and we don't need to go back to the platform. We're good right here. But it is a 65.30 point move expected this week in the S&P 500.
65 point
move expected.
It's pretty small.
It's pretty small.
Yeah. We've had smaller, but
I don't remember our range last week, but
it was more than that.
The range for the week, was definitely more than that. So something to keep an eye on. Well, he did it on me. He's such a nice guy. It is something to keep an eye on, I would say. For the week, let me look. Let's look at last week. Last week's range was 172 points. And I think that was the biggest in a while because it was 79 the week before, 135 the week before, 117, 123, 214 the week of, a month ago, basically.
So that was a jobs. That was a jobs report.
That was a jobs report, yep. So, and we just had a jobs report week here, 172.
I knew it was
maybe it'll be small this week.
I knew it was small when I went to put on a 0 DT. I was at the doctor this morning, and I'm in the waiting room, and I was trying to put on the 0 DT trade, and I usually do the at-the-money straddle and $20 wide wings, and I can only get $12 for it. Normally, I can get at least 13 and change, maybe as much as 15, and like $12, like nothing's supposed to. And now I'm looking at the market, and I'm like, I should have done that.
You should have done that. Yeah,
$12 would have paid off.
Goes, right?
Yeah.
That's kind of how it goes.
Yeah.
I don't know. Basically the inflation reports this week, I'm expecting it to be somewhat of a quiet week. I was just looking back. The last time we had inflation reports, the week of August 11th, markets, the range on the week was 117. And the week before and the week after were a little bit more. So could end up being a quiet week, folks.
Would you sell the straddle for the week?
Yeah, just for smiles and giggles. Yeah, sure.
Where do you think the risk is?
Where do I think the risk is? I think the risk is to the downside. With people wake up and see like, oh my God, inflation is still rising and the job market isn't doing well. We're in trouble.
Yeah, I did too.
I do too.
I'm with you on that.
Especially since I'm long deltas. The risk is definitely to the downside. No question about that.
Yeah, I'm with you on that. Yeah.
Folks, thanks for watching the show. And as always, be smart, be patient, trade them small, and trade them often. We'll see you.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
Traders, start your platform. Tom Sosnoff and Tony Batista are hitting the road for their first ever live trading event, At Work by 11. It's unprecedented, unpredictable, and unlike any other financial event. Watch these masters make real trades in real time. Doors open at 8, the action starts at 9, and we'll have you back at work by 11. Sign up today at tastylive.com/events.
Tasty Trade has crypto, and you can trade with zero commissions. It's Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Traders, start your platform. Tom Sosnoff and Tony Batista are hitting the road for their first ever live trading event, At Work by 11. It's unprecedented, unpredictable, and unlike any other financial event. Watch these masters make real trades in real time. Doors open at 8, the action starts at 9, and we'll have you back at work by 11. Sign up today at tastylive.com/events.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
Hey everybody, Tim Knight. It's a new week and we have very little going on right now. The YM, which is what I tend to focus on, is up 0.09%. So, and it has gone nowhere for the past 12 hours. It's just little up, little down, little up, little down, net, nothing. The only kind of event of note this week is Thursday morning, an hour before the open, is the CPI. The PPI comes out on Wednesday. Maybe that'll give us a little bit of a clue. I don't know. Of course, we are way away from earnings season. It's going to be 6 weeks before it gets really hot and heavy with earnings. So as it is now, the market just doesn't know what to do with itself. But I've tried to pull up some charts that are interesting anyway, because there's always something out there moving. So let's jump in and see what's going on out there. Here's the spider. We are basically hanging out in the vicinity of that blue line. That just represents the former lifetime high here, which we beat on Friday on an intraday basis, and now we're just kind of hanging out as an inside day right now. So boring. Here's the diamond, and it's doing the same shtick. It had an intraday lifetime high on Friday, and it's just kind of hanging out in the middle where it was on Friday. Very, very little activity. The semiconductor index is up, and this was the lifetime high here. So thus far, we've got a lifetime high, a lower high, and a lower high. So it's the most modest of downtrends over the past few weeks. Now, with all the boredom going on in equities, not so with precious metals. We're still getting some action there. At the moment, gold is up $21.50 an ounce. Another lifetime high. Just to review here, this is basically this millennium of gold. We had a steady bull market in gold for the longest time, and that ended in 2011. And then it began to do poorly. Now, as of right here, it looked like gold was just a dog because it had lost a whole bunch of those gains. But now we can look in retrospect and see it was building this beautiful base. That base took a long time. It started hammering out in 2011 and didn't complete until not even a year ago. Actually, it was early last year, excuse me. So we had this huge cup with handle pattern, and it was totally complete in February of last year. And that's when gold was around 2,000 an ounce, which at the time seemed really good and really high. Little did we know it was about to double from then. So after the completion of that cup with handle, we have gone up almost another 100%. And most recently, we had this right triangle pattern, which was hammered out between April 22 and about 4 months later, late August, 4-month period to hammer this out, and then whoosh, up that goes. So yeah, gold's doing exceptionally well. Silver also up. I will point out the lifetime high was here. We beat it a little bit in 2011, and we've matched those prices here. So if that means anything at all, who knows? Knock it off, Duke. But we'll see. I suspect silver's in for a little bit of a cool down after this run up. Palladium is having a good day today. It's up $26.10, 2.31%. As I've said ad nauseum, I think it's got a great future. I think the months and even years ahead are going to be very good for palladium. I think percentage-wise, it's going to beat things like gold and silver. But it's much thinner, much more squirrely. I'm out of it at the moment. Maybe I'll regret that, maybe I won't. What I'm hoping for, and hope is not a great strategy, I realize, but we're going to see if it happens, is for gold to have some sort of ease back, and that'll really knock palladium down and we'll get back in again. But it's a little silly, I guess, to fine-tune it like that because it's a terrific looking pattern. As far as the ETFs themselves, here's GLD, which naturally is at another lifetime high. Like so, this was the resistance for a while, and it after August was over, it never looked back. It's just gone bouncing higher. Best hope I'm looking for is an ease back to that gap, and we'll see if it happens or not. I might not get a chance. Gold has a tremendous long-term run. Fizz, which is also gold, but just a different provider, a different financial instrument. Sprott Physical Gold Trust is also up to a lifetime high, and it's doing well, obviously. Also, SLV Silver. This was the target, which we have met nicely, and we are exceeding it a little bit. By the way, how is the target calculated? Very simple. I took this low and this resistance level, in other words, this entire pattern, and so this is just classic measured move. This is the spread between those two. And the idea is that that represents kind of the pent-up energy of the pattern. So basically take that value and add it to the top of the pattern, and you get your target. And that's what our target was right there, 37.64, and we're there. We're there, and by a few pennies exceeded it. So another victory for technical analysis. Thank you, Edwards and McGee. Couple others. Here's OUNZ, O-U-N-Z, which is another financial instrument. It's a concoction of gold and silver, both of which are doing well, and naturally, so OUNZ is doing well too. Lifetime high. The miners are also up. No surprise. Lifetime high. It doesn't bother me much to say those words lifetime high when it comes to precious metals. It's a good thing. So this continues to soar higher. But as I said, palladium kind of holding back on. Maybe it's a mistake. Maybe I should just jump in, cover my eyes, and forget about it. But we'll see on that. I will emphasize again, I think long term, it's just terrific looking. Over in energy land, while we're on the topic of commodities, that's weaker. This is XOP, and this has been sinking subtly for the past few days. 4 days in a row, we've been kind of easing back, like so. I'm not an XOP, and I'm not an XLE or USO. I only have a couple of energy-related shorts, and those are doing nicely. One is COP, ConocoPhillips, COP. And there's the topping pattern on it, kind of sloppy, although not as sloppy as XOP. And this has been sinking for the past few days as well. It's another nice drop on this today, 2.3%. And you can see historically here how this has a tendency to top and drop. 1, 2, 3, and now 4 instances of doing so. The other item is Oxy, OXY, Occidental Petroleum. Down not quite as much. It doesn't tend to be as volatile as COP. And zooming in here, this is the stop level, and a nice tumble today. So hanging on to those. I think crude oil could be in for some continued weakness. As far as some other short setups, and these aren't necessarily down today, but I do like these patterns just to thumb through them. Here's Abercrombie and Fitch, ANF, and same idea. We've got this history, this personality defect of topping and dropping. And so we seem to be doing that now. Tighten up the stop like so. Dollar General, DG, is off almost 1%. I'm kind of sad not to be in DLTR anymore because it keeps weakening. Of the two, DG and DLTR, it seems DLTR is the better short. Unfortunately, I'm in this one, but it's still going down. On semiconductor, ON, this is off about 1.2%. So slipping lower, like even with the SMH up, on is diminishing in value. Here's one we don't talk about hardly at all, Vistra, VST. This down about 0.5%. It's a younger stock. It's had 3 instances now of these topping reversals. And we're making progress. I've got a nice tight stop where that dashed line is. And what we want to see is a failure of this support level. I'll just mark that in green to make it a little more obvious what that's all about. So that is our support level, which was basically Friday's low, and we want to see that broken. Our old friend Cracker Barrel continues to do well, CBRL. This was a good opportunity with all the culture wars and the craziness about the logo. I shorted it during the midst of all the, we changed it back, sorry, and everybody's yay, buying back into it. I think that the kerfuffle over the logo is ancient history now. Now it's replaced by the woman stealing the ball in the Phillies game. So Cracker Barrel seems like ancient history. And so this is resuming what had been a multi-year scallop down with, top and drop, top and drop, top and drop, etc. And one last item over in the short portfolio, which is down today to Global Payments, GPN. I think I mentioned this for the first time on Friday. And this one's down, as I say, about 1%, principally because of that pattern I've highlighted right there, this very pretty head and shoulders pattern, the red dashed line representing the neckline, and also the stop loss level. So bonds keep getting stronger. Next week, I believe, on Wednesday. Is that true? Let me just peek. Yeah, it looks that way. Next week on Wednesday is the almost certain 25 or 50 basis point drop, as the economy and the jobs market seems to be doing badly enough for Powell to want to drop rates. So TLT is anticipating that. It has had a big, strong lift on, Thursday. Well, actually Wednesday, Thursday, Friday, today. Big power push higher. Corporate bonds, which we hardly ever look at, LQD, also doing well, as you can see. And our old friend IEF, which is not as up percentage-wise today as much as TLT, but I like it a lot better as a pattern. It's a cleaner pattern. TLT is just kind of like, it's undoing some of its years and years of losses. IEF looks like an honest-to-goodness, real, legitimate, classic bullish pattern. So I think it looks cleaner and sharper, and it is a much more manageable trade because it's got a very obvious stop loss level than the likes of TLT, which seems to be a bit of a runaway train right now. But I'm going to hit on the theme I hit upon so often. It's kind of our North Star, as they say, our guiding light, which is in some form or another, take any precious metal and any equity and divide the first by the second, and you're going to get a bullish looking graph. Or you can flip them, equity divided by precious, and you'll get a bearish looking graph. That is to say, the ultimate pair trade, I think, is some form of being long precious metals, which has worked. It's not just, this is not maybe it'll work one day. It's worked for a while now. Gold is beating the pants off of equities this year. This particular one I chose is GC, the long-term continuous contract of gold, divided by just the spider. Plain old boring SPY. And as you can tell, after a dreadful time for years and years and years and years, it has finally formed a nice base, burst higher, did a nice clean retrace, did a yeoman's job of finding support, and now finding that strength again. So I think we've got a full, complete reversal on this for the long haul. Okay, bottom of the hour, I shall leave you, and I'll see you here tomorrow. Thanks for coming by.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from tastytrade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. tastytrade. Download today.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to tastytrade. So spread the word and earn rewards. Terms and conditions apply.
Traders, start your platform. Tom Sosnoff and Tony Batista are hitting the road for their first ever live trading event, At Work by 11. It's unprecedented, unpredictable, and unlike any other financial event. Watch these masters make real trades in real time. Doors open at 8, the action starts at 9, and we'll have you back at work by 11. Sign up today at tastylive.com/events.
Got trader's block? We've got the cure. Get data-driven trade ideas with Cherry Picks, our weekly newsletter that gives you insights into the market. Sign up at tastylive.com/newsletters.
Dear Cheapo Airlines, thank you so much for sending my luggage on a magical side quest instead of my planned destination. I am glad that I had the sustenance of the single pretzel I was served on board while I was waiting for my bag to arrive. Looking forward to your reply, because surely the response can't be as delayed as long as my flight was. Warm regards, Bettina.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live taunting.
Every day I do God's work here.
From the smart mouths at tastylive.
If you missed the live show, here's our cherry on top weekly recap.
I went to the pool at the,
You went to the pool at the Soho House?
yeah.
And you didn't go to my pool?
Yeah,
Do you think he wore his Crocs?
100%.
100%.
You can't.
100%.
You
He
wear
wore
your
them.
jorts? You wear your booty jorts with like your ass hangs out just a little bit in the back? I'll gross myself out.
I just threw up in the back of my mouth a little bit.
Daisy Dukes in like a crop top with Crocs. Meow.
In the world of investing, a beast lurks between the numbers, ready to pounce. Some traders hide from it, some ride it. If that's you, join us on Tasty Trade. Genius loves company.
Ring the alarm, hey, ring the alarm, boys. Turn up the charm. Listen up, y'all. Get out the damn stall. It's the last call. Hey, the last call. The last call. The last call.
Tomas, we are back, my friend. And you know what that means. Time for a little bit more Tasty Live right now with the closing bell sound enough. Even the S&P is down near their lows, only up 4. NASDAQ up 91. Russell completely unchanged, down 50 cents, and the Dow doing the same, up $8. Volatility had been down all day long, down 30, 35 cents as we speak right now. But this is the lowest even the S&Ps have been in a very tight range. We talked about the expected range being $17 today. It's $5 for the rest of the close from now until 3 o'clock. What do you think, Sadnov? 17 was a good bet today. You think $5 is a good bet for the next 26 minutes?
Well, to be fair, 17 was not that far off.
Well, we're unchanged. I mean, it was right there. I mean,
yeah, I'm saying it wasn't that far off all day. Yeah, I mean, I thought they were very heavy looking this morning, except for obviously the NASDAQ, and that has been the case. Bonds super strong, notes not so much, but the bonds super strong.
Bonds up a full point, and some of these Nasdaq stocks, AppLovin is held up there all day long. It was $10 higher, but it's still up $56. Hood's up $15. It's trading near its highs. Crowd up almost $10. AVGO up $8. I thought I saw Apple a moment ago go red.
Apple's been down all day. Apple's maybe positive by 20 cents. Reddit was up $6 this morning, is now down pretty good. So Reddit had a nice little turnaround. That's kind of, Reddit's the one with the biggest turnaround today. Let's put it that way.
Yeah, down 7 right now. Reddit trade up.
Google also had a big turnaround. Those were the two that I got short this morning, Google and Reddit. We're still short.
How did you know, Saznov? Could you tell everybody what you saw?
The two stocks that were up there turned around. Those are the only two stocks I shorted this morning, a miracle. We also came in short Apple, so that worked. But that was the, I don't know, got lucky today with those three.
I mean, Apple opened higher. You could have got as short as you wanted, right? I mean,
Which one?
Apple opened unchanged, up 50 cents, 75 cents, something like that. I mean, you could have got as short.
It's been very soft all day, and but Reddit was up $7 this morning. Now it's down 7. That's the biggest turnaround. And Google was up, almost 2.5 or 3. You had to wait a while on the Google trade, but it finally came in. So yeah, those were the big turnarounds. But you're right. The stocks that were going in the S&P and some of the other ones, they didn't really turn around much all day.
No, they didn't turn around at all.
And there are other stocks like Costco that went from the downside to the upside. AVGO at one point today was up $17. It's only up 9 right now. Only.
We listen to you, only up 9. I mean,
Only up 9.
It's like he's only a little dead. I mean, only
Well, it's
a
a
little
$350
pregnant.
stock,
I mean,
so
yeah, just a little pregnant. Right,
yeah.
right.
He's only a little pregnant, right?
Yeah, for sure, for sure.
But I don't. This has been a pure stock pickers, game. There is no, don't try to. Anybody that tries to overthink this thing and thinking there's some big story here, there's some big giant macro story or anything else. There's nothing here. This is just swinging stuff around. They're slinging hash right now. On Friday, the Nasdaq was super strong relative to the S&Ps. That continuation stayed today. Bonds were super strong on Friday. That continuation stayed today.
Bonds have had a 4-day that will go down in infamy after being after flirting with 113.
Well, we had that call at least. Natural gas was up higher, sold off a little bit. Crude oil was up higher this morning, both of those. Gold hasn't moved all day. Silver hasn't moved all day. And
I mean,
the
gold's
euro
still up $22. That's a decent sized move.
No, it just hasn't moved all day. It was up 21 this morning. We did the show earlier. And as for the currencies, the yen rallied a little bit, the euro rallied a little more, but not much going on there. And Bitcoin hasn't moved all day. It's just this has been another one of those, those NASDAQ days. Those days.
Those NASDAQ days.
Russell didn't move, Dow didn't move, NASDAQ just, do we have to have them, Mr. Batista, and how? It's just this is a one-dimensional market, and every time somebody sells, like a couple days ago they sold to NASDAQ, and then 2 days later like, it was a mistake, I don't mean to sell, I gotta get right back in. So everybody's got to get right back in. Do not
took my profits, now I got to buy them again.
I don't want to miss this. I don't know what I was thinking. I just got out and now I got to get back in. So anyway, that's where we're at.
Yes, sir. Yes, sir. No earnings for today, so you don't have that to rely on. Sorry.
Yeah, no earnings tonight, and you don't really have any big kind of numbers tomorrow. Everything's a little later in the week. Well, Oracle's tomorrow night, but whatever. Everything else is a little later in the week. Your CPI, your PPI, your EPI, your whatever other PIs you got. Magnum PI.
EIO, that's correct.
Yeah, that's a good one. Yeah, CPI, PPI, Magnum PI. What's the other PI? There's a lot of PIs.
Why not? Why not?
Yeah. Well, we'll see. I thought that given
Wednesday you got PPI, if I'm correcting, and CPI on Thursday.
Perfect.
Initial jobless claims on Thursday too.
Beautiful. Love a little jobless claim. Let's hopefully we'll get a little I think that
what do you think the expected move is for all night from this moment till tomorrow morning at 8:30?
$15.
23.
I think that you'll see a little bit more expected move on Wednesday and Thursday, and we'll have a little fun with that. And then so later on in the week, it should be a little bit better. But things are going to start to heat up right now. You got bonds back in territory. You're going to have a lot of chatter going on. I think it's Apple, the big Apple thing is tomorrow, and they hit the stock before this. Totally a buy the rumor, sell the news. And so let's see what happens. I think they're heavy. I know we're record highs, blah, blah, blah. I think they look a little heavy to me. Not the NASDAQ, everything else.
Well, all right. So not the NASDAQ. Tell me what looks heavy here. This is the mini S&Ps. Tell me what looks heavy here.
I'm just watching the tape, okay?
Tell me what looks heavy here. This is the Russell. Tell me what, and here, this is volatility. Tell me what sign, what signal, what makes it heavy except maybe some short delta you might have in your overall portfolios?
No, I'm pretty nothing. I'm a big nothing burger here. I'm not happy with the size of my position. I need a lot more stuff to do. I am not I am not knee deep in positions right now. I just went through all my positions. Usually it takes me like 15 minutes to go through all my positions. Today, I think it took me 6 minutes. And I closed a lot of stuff. There was a lot of stuff where the IVR was in single digits. I'm going to tell you some stuff. Because this is interesting. Today, 10-year notes closed, Apple closed, Adobe closed, Costco closed, Dow Chemical closed. These are just positions that, I just took off today. It's just Nvidia closed, Shopify closed. So I think I took off I can't even find them all, but I took off 10 different positions today just because the IV ranks got down super low. I mean, Nvidia's a 2.
Yeah, no,
Shopify was a 9.
Right.
Intel was a 7.
Right. Well, you go across all of this list that Reddit's a 19, Tesla's an 8 with earnings in about 6 weeks or so. I mean, Apple is.
No, I know. I'm just saying.
There's nothing there. I mean, there's not a lot here.
Apple's a 12. It got out of that. The only one that had high implied volatility that I got out of was Adobe because they have earnings this week, and I want to recenter my position. I just had a put Condor, a put only Condor, which was actually a pretty decent sized winner after today. So I just took it off, and I'll reload this week. Let me tell you something about Adobe. It ain't good. It's better than Lululemon, but it's not good.
Okay.
Yeah, looking at our trades for today, just to see if we have any big movers. Our biggest loser might have been CMG, which is really weird.
CMG volatility is actually expanding a little bit in there. CMG, if you take a look at it here, this is the high option volume list. You can see over the last 5 days, the IVX 5-day change is up 4%. Volatility or IVX is 25. So volatility expanding and expanding over the last 5 days.
Okay.
All right.
I'm at your mercy. What do you want to do here? What do you got for me? I need positions.
Ooh, not a lot. Even the S&Ps are hardly trading. Might trade 1 million cars today. Doesn't.
Yeah. Well, they started off pretty busy this morning, and then it slowed up the whole rest of the day. I mean, I thought we were going to go negative a few minutes ago. When you go up, what were they up today? 25 was the max or something? I don't remember.
Yeah. Have you got any emails about this OCTO stock that was up 4,000%?
I don't know. What stock was it again?
OCTO. There's no options to it. And it's a hard to borrow stock. I mean, everybody who wrote me, the stock was in the 75 handle or so. I said it's a disaster waiting to happen. I put it out on Twitter too.
What was it? $2 and now it's 47.
Yeah, it was 75 earlier today. But you can't short it. It's a hard to borrow stock. It's a new issue. This is anybody who says they've done anything in here is a liar or was an insider on the opening IPO.
Well, I think some firms let you buy. I mean, you could buy it.
I can buy. Yeah, you can buy it. Right. Sorry.
I don't know. I never heard of this.
I wasn't. Stocks that typically go to $2 to $75 in a day is not usually my jam to jump on.
So this is an IPO today, or is an IPO some other day?
Well, it looks like September 5th. It was $2.82, and today it's $75.
So they discovered cancer or something.
No, I think it's nuclear or something like that. I don't
I have no idea.
To be honest with you.
I don't know.
Like I said, it was untradeable.
Untradeable. It traded 200 million shares today, so it's tradable. But
yeah. But you had to buy it first and then try to sell it. You couldn't sell it short. It's a hard to borrow stock.
Okay. Thank you, Mr. Acabano, for all that help.
You're welcome.
Just so you know, I'm not even putting it on my watch list.
No. It's not something that you would even do that. Ooh, even the S&P's up 11. How will history determine this day, Sosnoff?
I do not know, but
Oh.
as a non-event, I can tell you that much.
Uh-huh.
History will view this day as a non-event. What happened on September 8th, 2025? Nothing, honey.
Hey, they expected a very tight range of 17 points, and they got it.
This would be the definition of an inside day.
Okay. Yeah, I would be an inside day. Totally agree with you.
Yep. Definition of an inside day. I did make a bunch of trades today. I'm surprised. Somehow I made 55 trades. Not really sure, but
well, you closed a lot of the ones that had low implied volatility. I think that's how you got
I closed some with low implied volatility, but I also scalped a bunch of stuff. Scalped some bonds, scalped some S&Ps, scalped some Google, scalped some Reddit, scalped some calls in Google. I mean, I did a little scalping today. Little old school scalping. You know, they 2 days ago they goosed them up on the close. Then yet on Friday they took them up on the close. I don't see them taking them up on the close today. So I'm gonna have to sell them here.
just on the
basis of I don't see them taking them higher today on the close. I don't know if they're going to go anywhere, but
volatility creeping down on the 45 cents. You better buy these back right now while you got a scratch.
You better buy them back now before they take you out to the cleaners.
Before they take you out to the.
You better buy them back now before I tell your wife.
Okay. So you like the Bears tonight? A few people want to know.
I already bet the Bears tonight.
I know.
I bet the Bears tonight, and I didn't even think twice about it. I am all in on the Bears tonight.
Yeah, I don't see it, but whatever. We'll see. At least you got something to watch on Monday night.
Oh no, I got a big night planned. We're going to the game at like.
You're going to be a Bear. I mean, you were starting to be a Bear a little bit today, but luckily I was able to get out of your harm's way earlier today. But by tomorrow, you'll be a full out. What is this? What is this? 5 days in a row of going out? Thursday, Friday, Saturday, Sunday, Monday. 5 days in a row going out. You are not built for this. You're not built for it. You're not made for it, and you cannot do it. This will be horrible.
Bear down. I'm ready.
I think he lost his mojo. I agree with you.
Bear down. I'm going to get my. I'm going to go large tonight, Tony Batista. Large.
All 50.
Remember Mike North. 700 large. I love that line.
Oh, that's funny.
I love that line. Look at this little winner chicken dinner coming in. I think they mark them down tonight, but we'll see. I'm just showing you some tricks of the trade that you can't get this anywhere else. Just so you know, this is special stuff.
I like it. Hey, is one of the venues we're going to, is it called Antone's?
Yes, it's in Austin, Texas.
Do you know who got their start there? Somebody you love who's no longer with us.
I don't know.
Well, who's Houston? Houston, born and raised, I believe. Well, hopefully, I don't know. But you loved him.
What kind of music?
He's got an acronym. The kind of music you listen to. What kind of music do you listen to, Grandpa?
He's got an acronym?
He's got an acronym. He's a professional, but he has an acronym.
Professional musician?
Yep. SRV is his acronym.
Oh, little Stevie Ray Vaughan.
That's right. You're going to be on the same stage. You'll be sharing it with me.
You've been on a lot of stages.
Not according to Bloomberg if they come and write an article about you, but you'll be sharing the stage with me where Stevie Ray Vaughan was.
We've been on a bunch of stages where Stevie Ray Vaughan was, but he is. I'm gonna put him up there as next to Hendrix as the greatest guitar player of all time. Hendrix 1, Stevie Ray Vaughan 2.
Hendricks didn't have a long enough career for me, and I mean, I would go with Stevie Ray Vaughan or my boy John Mayer.
How old was Stevie Ray Vaughan when he died? Wasn't he 27 too?
Ooh, I don't know. Was he?
I think they were all 27.
Was he one of that group?
Hendrix
He was 35, you putz. You really are. I mean, he died in 1990.
I don't remember how old he was.
In a helicopter crash. You lost your mojo, dude.
Helicopter crash in Alpine.
You know what it is? You're spent. You went out.
Helicopter crash in Alpine.
Wait. Did the wife have tequila last night? Or the other night?
Yeah.
Saturday night?
Yeah.
She had tequila? Yeah. So she was in. Yeah, okay. Now I understand why you've lost a little bit of your mojo. You don't have all your powers with you anymore, Samson.
So yeah, helicopter crash in Alpine Valley. He hit the ski cable.
Is that what it was? Okay. All right.
Yeah, he hit the ski cable. He hit the cable on the chairlift, and crazy story. It was dark out. They didn't see it, and boom.
Yeah. Now I'm getting a lot of Jeff Beck from some of the old timers.
Jeff Beck? No.
Yeah, you don't know who he is?
I saw Jeff Beck.
What, on the street one day?
In the Syracuse War Memorial Stadium. Syracuse War Memorial Auditorium.
You can't even say it. Okay.
I couldn't remember the name. It's the Syracuse War Memorial Auditorium in downtown Syracuse. I saw Jeff Beck with I can't remember who he played with.
Nice work.
Yep. I was a freshman in college. It was good.
Sweet. Why didn't you go to class?
Because it was a Friday night.
All right.
All right, what do we got here? Let's bring on the gimps. We got the boys in the waiting room, so let's see what we got.
All right, who do we got? We got the overtime crew or something that resembles it? Sure, we do. What's up? There's my man Ilyas. Had dinner with him, Sadnov. I know you were too bougie to have dinner with us, but I had dinner with Ilya, and there's my boy Chris. How's everybody doing?
I can't have dinner with with the common folk.
I understand.
Aren't we getting dinner next Friday night?
Yeah, as long as you're not common folk, sure.
I'll wear a tuxedo just for you.
Okay. No, it's in 2
pictures, or it didn't happen.
Okay.
Yeah. No, we're looking.
I don't know, 6,500 pin on the even the S&Ps. What do you think for the night?
Sure, why not? I mean, it sounds good, right?
Sure, that'll give you your 2.5 points that you usually take on a spoo. So that'd be good.
But right now I have 25 cents.
You gotta hold out.
Yeah.
All
right, boys, what do you think of today? Nothing? Something? Are we missing stocks something? Don't look like they want to make up their mind at this point. It doesn't look like they're coming into the week with any kind of conviction. There's a bunch of inflation data. Obviously, the Fed's next week, so the inflation data is relevant. We'll see. It doesn't look like they want to make a break for it, but all of your kind of anti-rates, if you will. Gold is up again. The bonds are up again. So if you needed more kind of repricing dovishness, it's all here.
Mr. Vecchio?
I mean, I don't think stocks are all that interesting today. I do think it's the bond market that we should be paying attention to. Tom, now that we're close to 117.5, I guess my question is a follow-up to first call yesterday. Did we now reach a point where bonds are too rich?
No, they'll just do 50 basis points here and call it a winter.
50 basis points. The Tom Sosnoff Federal Reserve rates call, ladies and gentlemen.
I mean, it just makes it easier. You don't have to play games. So you do the 50 basis points. I don't know. I don't think that's necessarily bullish for the market. I think it's already priced in. If you notice, the notes today were pretty heavy. I think you can sell the note. I wouldn't sell the bonds here, but I think you can sell the notes here. I sold them short twice today. Made a little because they haven't only moved 4 ticks all day. But I think at 118.5 or 119, you could sell notes here.
Probability of a 50 basis point cut in Fed funds futures now about 12%. So if they go that way that'll be surprising. And I agree. I think it'll be surprising in the wrong way. I think the markets are going to look at that and go, uh-oh, it's an emergency. And freak out a little bit.
I don't know. I don't know. But I do think that they're fully priced here. The notes are, at least. I think the bonds, still have a little room to run. If you remember on Friday, we bought bonds and sold notes, and it was actually a really nice trade. I think you can still sell notes here. Probably wouldn't buy bonds, but you could still sell notes. Anyway, I don't think I disagree with you, Chris, in the one sense. You might want to watch the bond market, but there's nothing to do there at these levels. You're just, you're in no man's land at 117.5. If you're long bonds, you take your profits. If you're short them, that's the hard part. I don't know anybody that's short them now.
What do you guys, Tony, what do you make of this relative outperformance by tech today? Oracle, Palantir, CrowdStrike, Broadcom, all up more than 2%.
I don't know. For me, I look at volatility, 1640. We never had an uptick all day long. We never turned red on the E-mini S&Ps. There's no reason to think that anything is changing until we get some sort of sign that's changing. I'm surprised, Ilya, that you're as stubborn as you've been for somebody who looks for something to give you confirmation in a direction. We haven't had a downtick. I mean,
no.
Tom asked me early this morning, what do you think for the rest of the day? I go, you know what? They're expecting a $17 move with volatility contracting. I don't expect anything to happen today. I mean, you had some big moving stocks, which was nice, but that's the direction we've had. When the market turns, you'll have it exactly the other way. Right now,
good old stock pickers market.
Yeah, it seems like smooth sailing.
No, I think that's exactly it. We're sitting near the top of a range, but we're not breaking that range. So for me, it's the same risk reward it's been for weeks. It's okay, well, I can sit on a put vertical here. It's real cheap because vol is all the way down. If I'm right, I'm asymmetrically right. If I'm wrong by only a little because I'm wrong fast. So, okay, let's see.
Yep. Okay, I get you. Well, are we stumbling in the close here, Sadnov? Basically unchanged from where you sold them?
No, this is I'd like to call this a stumble, Mr. Batista, but I think that it's going to be, we're going to be doing a little scratch city.
You're going to try for sure.
Well, I don't care. It's close. It's going to be a scratch city here on the close and nothing else. And I'm not going to trade tonight. I promise you, I'm not going to be one of those people that goes to the Bear game and sits on my iPhone.
Oh, you got to enjoy the game, dude.
I know. I said I'm going to enjoy the game. I'm not going to trade.
You're not going to be like one of those, sorry, I have to make some hedging trades commercials.
No, I'm not going to pull a Tony Batista and walk into the bar with my trading jacket on and whip out my,
and whip it out. That's all you got to say. Trading jacket on and whip it out. That's right, Sasov.
I'm not going to walk into the bar with my trading jacket on and whip out my cell phone and go, oh, hold on, I got to make a trade.
Oh, hold on, let me whip it out. Gentlemen, thank you so much for your time. Thank you for not embarrassing me the way my friend Tom does over here. Thank you very much.
You're welcome.
Appreciate it. We're going to take a quick 90-second break. I hope you lose 3 points on these spoos. We'll be back in 90 seconds. We got more with the overtime next. Peace.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that one-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
I want to play a game. It's a relationship game. So I'm going to ask you each a question.
Who loves the hardest?
Yes, yes, yes. So are you ready?
Kentucky.
Who's more stubborn? Who's more public? Who's more patient?
These are two of the least. These are the least patient people I've ever met.
I'm going to say him just because he's a little older than me.
Who calls or texts more? And who do you think takes longer to get ready in the morning? Who's a better driver?
I drove a truck in New York City.
I can fly an airplane.
Who loves the bed the most? Who's the bigger spender, do you think?
Me. Yeah.
Who's the alpha in this relationship? Who is more spoiled?
Oh, him.
Who do you think is funnier? Who is the better debater?
I'm gonna give it to him.
Dylan, you think you're the better debater? Are you the master debater?
No, he's he's good because he doesn't answer the questions, which is great for debating.
Global markets never sleep. Explore them with Forex, now available on tastytrade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on tastytrade.
Tasty Trade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Snoozer for stocks, but not for gold or bonds. It's Monday, September 8th, 2025. This is Overtime. I'm your host, Chris Vecchio in New York, Ilya Spivak in San Francisco, Mike Butler in Chicago, here to take you through the rest of this hour as we wrap up the trading day. If you're on the platform Tasty Trade, on the website tastylive.com, thanks for joining us. Come over to YouTube. Tell us what you think of this market today. What could be the start of a slow week. There's not much by way of an economic calendar the next few days ahead of that inflation report on Thursday, although there are some bond auctions coming up this week that may draw our interest ahead and wrapped around the inflation release. Not like gold and silver are waiting, which continued their extension, gold at a new all-time high here today. But stocks didn't really get the memo. Some of the tech stocks trading a little bit higher, but generally speaking, it's a market that's modest to the upside. 0.5% of the NASDAQ, 0.2% in the S&P 500. Currency space, the dollar is still getting jammed up a little bit here as those lower rates kick in. Mike, I found this to be a pretty uninspiring equity market one way or the other today. Volatility didn't move. It's still an 11.3 IVR here in ESU 5. What's your give us your 2 cents here on this market as we embark upon this trading week? 80% of it left to go.
Like you said, it's been interesting for specific sectors, but on Friday, I had an overarching thesis that we will just chop until the rate cut actually happens. So I put on a 1 day. So on Friday, it was a weekend iron condor that I closed this morning. That was a nice winner, but I plan to do the same thing tomorrow. So tomorrow morning, I'll just place a 0 day iron condor. I just think until the 17th, I think we'll just get some chop until the market tells us, or I guess the Fed tells us that the market's been right. Or maybe wrong, but I looked it up today. Now we're getting a 10% probability that we've got a 50 basis point cut in 11 days.
It's
here.
12% now.
Oh, sorry. Yeah, 12%. My bad. But
it's been drifting. It's been drifting all day.
Yeah, but if I've learned one thing from you guys, a 50 basis point cut is no good, and it seems like there's a little disconnect between the equity markets that just are drifting higher and gold that's surging, which would imply maybe the markets are going to see some turmoil, and of course bonds and notes too. So what do you guys think about this? Sell-off incoming, Ilya?
I'm on the same boat as I've been since basically the beginning of August, which is the last time these stock indexes have done anything. And that's really the most interesting thing for me. I mean, if we go back to when CPI came out last time, middle of August, that was the last time that we had any kind of meaningful trend momentum for the S&P 500, say. NASDAQ hasn't even attempted to crack those highs. S&P has been a little bit more chipper. But we established a range top then. We haven't really tried to break it in any kind of consistent way, and we certainly haven't succeeded. And so my playbook has been the same since then. The market knows the cut's coming. That's not controversial. In fact, the market has been at 50 basis points, matching the Fed's stated cadence all the way back to December, at least since May. So the markets have known what the policy is for this year. The big question is next year. And next year, there's a huge disconnect between the Fed and markets. So I think the big thing from the Fed this time isn't going to be the move, unless, of course, they do decide to throw a grenade out there and make it 50 basis points immediately. I think the big question is what's going to happen next year. And there, the Fed's been saying only 25 basis points. The markets are closer to 80. So we're going to have to see some sort of movement on the summary of economic projections in a dovish direction, or I think the market gets upset. Because if you look at these dynamics and sort of the way that the S&P has behaved relative to the outlook for Fed policy through the end of next year, it's been as clear cut as you can possibly imagine. When you get the rebound in stocks from April's lows, the outlook gets, understandably, less dovish because the fear goes away. That ends by mid-May. And from there, the outlook for this year is steady. The outlook for next year is getting increasingly more dovish. We are now more dovish in aggregate than we were in May, than we were in April even, at the lows, and stocks drift higher. Could it be that this move in stocks was first, oh good, Liberation Day isn't a guarantee, but then a month later, okay, rate cuts. And if those rate cuts aren't coming in this kind of volume, that's a lot of upside momentum for stocks that all of a sudden looks mispriced. And sound.
Thanks for that. I always want to just mute the sneezes here. People don't want to listen to me sneeze, right? So we go to a market on Friday where obviously we have the big reversal coming into this week. Will we hold on to that? Will we find continuation? Or we really don't, Ilya. In a certain sense, it kind of reminds me of what happened at the start of August, where you had the big move on the Friday around the jobs data. Europe and Asia come take the baton for the start of the trading week, and they do nothing with it. And so then
they decide not to go. Yeah.
Right. And then U.S. equity traders today, they push up the market a little bit after Asian and European traders, again, don't take the baton and run it to the downside.
Yeah.
Looking at the sector performance here today, I don't think it's going to surprise anyone that the top two are GDX and GDXJ. But for the sake of equity index companies, SMH here is your top performer. Broadcom at the end of last week had a really strong performance. Today, it follows it up with a 3.26% gain. Mike, I'm looking at some of these individual companies that have been leading the charge to the upside, like your Broadcom, your NVIDIA, your Meta. Where's the volatility? I thought August and September were supposed to be the big vol months, according to my little abacus here. How do we deal with a 2.1 IVR in a stock if it's not just Broadcom, but any of these big names?
Yeah, I mean, the earnings this quarter have been pretty wild. Broadcom had earnings a couple days ago. They've had a pretty decent range over the last 2 days, but yeah, volatility has just been crushed in here. I think a lot of the implied volatility that was propping up the IV ranks is now gone because basically, obviously after an earnings announcement, you're going to get a vol crush across the board. And the VIX is low. So I think a lot of these companies pre-earnings had decent IV ranks, but now with nothing on the horizon in terms of a binary event, you have a bunch of these equities in the 30% range, which is always going to be a low IV rank reading. So yeah, it's tough to say whether these companies will actually find any reason to come down unless the overall market goes down with a vol pop, because the VIX right now not looking great, sitting at 15, and more importantly, the vol futures we've got significant contango right now between the V and the X contract, and both of those are under 20 now. So it feels like the market's telling us nothing to see here, but it seems like we think that maybe this is going to be moving around, at least when the announcement actually comes out, whether they're doing 25 or 50 basis points. For whatever reason, I feel like the market's going to sell off when they do the cut. In a rare turn of events, I think I'm in line with Ilya here, that when the rate cut hits, whether it's a 25 or 50, everyone gets faked out with a nice big sell-off.
Yeah. And yeah. And I mean, I think the reason for it will be that the cut's not anything like news for anyone at this point. And if the Fed doesn't come through and say there will be many more cuts next year than we said before, even just one more, even if they go from 25 to 50 and the market's at 75, if they at least see some movement in their direction, they'll probably find a way to say, okay, fine. But if there's no movement and the commentary is we're still more concerned about inflation than employment, especially while you get signs the economy is reheating. Look at the ISMs, look at the S&P Global PMIs, the tone of data, even just looking at the Atlanta Fed GDP Now model, it wasn't updated strangely on Friday. So you can actually see it up and just ahead of Friday. GDP expectations for third quarter are not anything to be taken at face value this early in the game, but you can see the tone of the data, and the tone of the data has been positive. That's not a situation where the Fed is going to go, oh yeah, let's be ultra dovish right now. So they'll give the 25, I think, and not the 50, but the more the markets get hopped up on maybe it's 50 and it'll be 75 next year, and the Fed says, no, actually it's 25 now and 25 next year, and then there's another one here somewhere in October, December, I think the market doesn't like it.
You know, it's interesting that you talk about the Fed potentially going 50. That is an idea that we've kicked around here for several months, right? If they're going to do it, they're going to go 0 or they're going to go 50, even though the market's only saying 12% chance. I would point to the inflation expectations that have been coming off the board. You can see the downtick only slightly here, but we've had a little bit of a pullback in recent weeks where forward-looking inflation expectations are starting to come in. And the Fed's own model of where like 10-year yields should be, for example, they're suggesting they should be a bit lower from where they currently are. The point I'm getting at, though, is that if you're the Federal Reserve, you could easily make the case that looking around the corner and how, again, the NFIB charts about job expectations, right, and how the economy looks 3-6 months out, individual consumers' expectations, the rise in consumer credit card debt, by the way. Did you see that today? Consumer credit card debt jumped to $16 billion. The expectation was for it to go from 7 to 10. So people are spending
and
money.
Inflation expectations went up.
Well, you could point to enough of a decline.
Markets. Not in the markets. The survey, and that follows the U of M one that jumped. In the markets, of course, break-evens have been pretty lackluster since they bottomed in April. And this has been the market's whole logic, that the Fed is wrong to worry about inflation, that they need to worry about the growth outlook. And that's been sort of behind this shift to ultra dovish expectations for next year. The markets have been screaming at the Fed, you're worried about the wrong thing, basically for 4 months now.
Maybe. The fact that 10-year yields could be breaking below 4% this week, I think, is noteworthy. The last time we saw that, of course, was in May.
Totally.
Excuse me, April, right around Liberation Day. So this is a different kind of move down here, of course. It's not like a panic. But if lower rates are coming, Ilya, that does cause a problem here for our beloved U.S. dollar, which, my exposure is Canadian dollar, euro. The euro's breaking out now.
I don't know. I mean, the only one that really looked like it broke out to me was the Swiss franc. Everything else is basically at its anti-dollar range extreme. Yes, if you put a sloped line on here, it does look like it's breaking out. But I trust sloped lines very modestly because it's all very much in the eye of the beholder.
You're horizontal, man.
That's
As
right.
Josh would say.
That's right. And when you look at this, you go, okay, well, we're at the top of the range. Are we actually going anywhere? The pound looks the same. The Aussie looks similar, though it's a different range top. The Canadian dollar looks probably the weakest of the bunch. The yen looks the same. The Swiss franc was really the only one that broke out higher last week in a very kind of convincing way. And this one I just got out of. Like, I was short this. I am no longer. I took a little baby loss of less than 0.5% of equity, and on we go. But everywhere else, I'm still long dollars because I don't think it's really made a move. And considering what the bond market is doing, I mean, yields are, I don't want to say crashing, but they're certainly moving lower in a hurry. And the dollar isn't breaking its ranges. It should be getting absolutely tanked, but it's not. And that, I think, is interesting. I'm not sold on the idea that the dollar is done bottoming here.
Well, I mean, you look at the positioning data right now in the market, Mike. I mean, I see a market that's still very short the U.S. dollar. Surveys show that it's still the most hated trade by institutional investors, being long the dollar rate. Most everyone is the favored short trade of the year so far has been dollars and remains U.S. dollars, according to Bank of America's fund manager survey. But I see some higher volatilities in the space, particularly in the futures options here. Maybe not in Tasty FX world, but at least here on Tasty Trade world. An 88.6 IVR in the Canadian dollar, the euro, which is way more liquid, still up at 36.1. Why not sprinkle in something like a directionally neutral, what have you, at 60 days out right now, Mike, and try to play for some more chop, even if maybe give some room to the upside if the dollar's breaking. These are pretty decent risk to rewards, risking a little bit less than 8 to make 4.5. That's better than a 2-to-1.
Yeah, I like the neutral trades when it feels like the markets are waiting for something to happen or a decision to be made. It feels better to place for sure. I'm long the US dollar for better or worse, but it's like really small. So I just use the Tasty FX products. We just look at daily ranges and we place some short euro dollar position, a long dollar yen, a long dollar franc. But those positions are so small that they won't really be meaningful anyways until they move in our favor if they do. But yeah, I think when you have this period of time, which we're in now, that basically suggests that the markets aren't moving anywhere or anywhere substantially until September 17th. I think a lot of these markets will kind of have a wait and see approach. But the big move to the upside, the huge bid in gold, I think is really interesting and maybe a little telling of what we can expect. I feel like the move in gold, unless I'm missing something drastically, I feel like the move in gold is more of a, we're not sure how the market's going to react to whatever's going to happen on the 17th. Let's just get into something that could see more upside if there is going to be more turbulence in these markets. But SPX implied volatility through September 17th is only 90 points. So that's a really narrow range for 9 days, in my opinion, with such a question mark still on the table. I feel like at this point we should be looking at what we were looking at last week, where you had a 98% chance of a 25 basis point cut, and now there's more uncertainty being baked in on the other side of the curve.
It's really interesting that you mentioned that about the only 90 points, though. Like, we're talking about under 1.5% trading range until next Wednesday Fed meeting.
Yeah.
You can see the jump up here. It's like 7 points, 5 points, 8 points, 4 points, right? The market's pricing in barely anything additional around the Fed itself the day of.
Yeah.
It's kind of wild.
It is wild. But these, like this, if there's a time, I'm going to put this money where my mouth is here. If there's a time to do like the 0-day neutral iron condors, I think this is an interesting time, because if it does pan out that way, where we just see really narrow ranges and low volume, the 0-day iron condors should be okay. So we'll be back in tomorrow.
Yeah, let's just put that up on the screen here real quick. So we want to do 1 DTE for this. I guess we're going to go to 0 if it automatically places us there. No, you're not helping me. So we'll just do it ourselves manually. We're going to go over to the 1s, Mike, because that would be tomorrow's expiry. The expected move, small, talking about 25.5 points on either end. So just straddling the 1 standard deviation expected move. If people wanted to do what Mike does, be like Mike. That was a thing from the 90s. 62% probability of profit, risking 3 to make 1. 130 gain, 370 loss. Buying power 370. It's just expecting the market to do nothing until we get a reason to do something.
Yeah. So I did this on Friday. I had a similar max profit, max loss. I got $1.90 because I had the weekend risk in there. But we were sitting at, my short option was at 6,500 today. We were sitting right there, and then we got a little bit of a sell-off intraday, and it went from a scratch to a $100 winner. So just make sure if you're doing this, you have your GTC order in to capture some profit, because it can happen quickly if you get a tiny move over the course of 5 minutes.
Mike, I like this. Let's just get this on the board so it can start working and send it in the next session. But yeah, this makes a great deal of sense to me. Tomorrow, Ilya, I don't see anything on the calendar that's going to meaningfully move us. Sure, there's something that could happen out of DC, but there's always something happening out of DC. It's become so much background noise for the market at this point in time. I could probably point to 4 or 5 news stories today that a decade ago we may have seen market movement on. So what's
tomorrow? By the way, the annual
note auction
revision for the annual revision for NFP comes out.
Yes, that's the one that last summer when it came out, we heard that it was proof that the prior administration was fudging jobs numbers to prop up ahead of the election. Okay, so like this is then something that's interesting for the market. What was it last year? Minus 818,000 jobs.
Minus 818 last year. Obviously, that was a huge revision. I don't know if we can even say that that's such a huge revision this time, considering not this past NFP, which was only revised down by 21,000. Which, by the way, that's a fun thing. You get a 22K rise in jobs, and the previous months were revised down by 21,000. So what, you added 1,000 jobs? That's nice. But anyway, the preceding month had a revision of 258,000 just for the month. Now, that's a big revision, and it's spread over a couple months of prior revised data, but you figure there's at least some kind of a level of acclimation in the markets to these big triple-digit numbers. I mean, if we get the annual revision here and it's, let's say, bigger than it was last year, let's say it's approaching 1 million jobs, let's say it's more, is anybody going to be that shocked? I'm not sure. I doubt it. The PPI numbers on Wednesday, though, that might be something because it comes out before CPI this time. Last month, it was the other way around. And this is where you've seen the tariff inflation really start to show. So if you get a sense ahead of CPI that more and more of these prices are getting passed through from the beginning of the supply chain down and towards retail, that's going to be interesting stage setting for CPI on Thursday.
Could be interesting stage setting for CPI on Thursday. We had we have CPI and PPI that came out last month. Ilya, they pointed to inflation that could be closer to 0.5%.
Yeah,
you just
PPI especially because the where businesses before basically last month were eating the tariff costs and saying, okay, let's not kill demand. This thing is, let's say, vague enough that we don't want to front run. They threw in the towel in July and basically said, okay, you know what? We're building our margins back out. You all pay for this. We're not going to do it.
Everyone's doing it. Even that lovely little Asian market in South Park, Colorado, Mike. Everything can be blamed for tariffs these days. I don't know if you saw the most recent South Park episode.
I need to check it out.
It's all about Labubus, which is just a terrible thing to have in your child's life.
The little like rat looking things. Yeah.
Yeah, my daughter got on that too a few weeks ago.
Mine too.
Yeah. There's a pharmacy in town that's selling them for $60 a pop.
Well, you know how everyone's
My
obsessed
daughter
with
is content to watching them on YouTube and then sketching them.
You know the
Smarter.
little gotchas, the little vending machine twister things? Yeah, you know. McDonald's just made little gotchas. So that's a genius marketing. Like that's when you know the pulse of society, when you've got McDonald's putting out little gotchas of like cash registers and soda machines. This is where we're at.
They're bringing gambling from mobile apps into the real life.
Yeah.
Where it's like spend $99 and get this mystery box.
Yeah.
And you're like, ooh,
They opened
mystery
a
box.
shiny new arcade in one of the malls here, and an entire section of this arcade is dedicated to mystery box machines of various size, stripe, and cost.
Yeah, they're everywhere.
Can we get that on the platform? PMRTY? Yeah. Pop Mart. Look what you've done this year. This is a Labubu company. Started the year near $12, now up at 37.
Classic.
PMRTY, Pop Market International Groups. It's the ADR. I digress from childhood consumption issues. So we have a market that's pinned, volatility even here after hours coming in a little bit. Top performers in terms of today. We were talking about SMH before, and then of course what was happening with GDX and GDXJ. But that's not the only thing that's happening in this market. I couldn't help but notice that XLU is coming in. Okay. Utilities have been a bellwether for the broader AI trade. Issues around electricity generation in the United States have been drawing a lot of attention over recent weeks, in part because there is a meaningful impact in inflation from these higher electricity costs. And so a lot of folks are coming out against it. I saw that not only are we watching XLU come in, but I got this great chart earlier today from Torsten Slock over at Apollo Global Management. AI adoption rates for larger firms starting to decline. It looks like we may be flatlining a little bit here. Mike, before Ilya says this is the adoption of the railroads in the late 19th century,
The Economist did a whole story about it this week.
My blood pressure's going up.
Telephones and whatnot.
Is this the new headwind for the space, Mike? That like AI is not delivering real results and real productivity boom, and we've all just been buying castles in the sky. Meta is 20% of NVIDIA's business right now. So if big firms are not adopting as quickly, isn't that a problem for the chip makers? Today's top performer?
I think we're in an interesting spot. I mean, we've seen firsthand how powerful AI can be, even on the tastylive network and at Taste Trade too. But yeah, I think the initial shock, it kind of reminds me of like a Tesla, where Tesla was talking about doing X, Y, and Z, and the stock was just mooning. And now it's like can't buy a bid because of everything going on there. But every story has its little I don't want to say bubble now, but every story that is just pure euphoria has its kind of bottoming out. Maybe eventually we just keep skyrocketing, but I think there's definitely some issues at hand in terms of the scalability of the immediate impact it can have. Like, of course, everyone can have an AI agent that helps their support team do X, Y, and Z and automate everything.
I tell you what I've had an AI agent doing. I created a custom email address just to test this out in, and I have it, and I gave it to two people, the email address, like, hey, I switched my email address, and I set up a bot there to respond to them at random intervals to let them know that I'm thinking about what they emailed me about, but I don't have an answer yet. And I forgot to set a limiter on it when I first set it up. So when I went in there the other day to like take a look at the conversations, I had emailed one of my friends 18 times in the span of like 7 hours to let him know that I didn't have an answer for him.
My God, that's amazing.
And I only found out because he gave me a call and he's like, I need to know what the plans are. Like, what are you talking about?
You're emailing me every 30 minutes saying you don't know still.
Nope,
I'm like,
still don't
okay,
know.
so
Nope, still
that
don't
new
know.
email,
Nope.
you may have been a guinea pig. I love you, bro.
That's incredible.
So we're experimenting around here.
Yeah. I mean, I think AI will change the face of a lot of the things that we see now or have seen in the past. But I think it's a kind of a similar story to crypto. Like the power of crypto isn't necessarily just buying Bitcoin and forgetting about it. It's kind of changing the way that things are processed under the hood. Like stablecoin funding. Like the fact that you can fund your Tasty account with stablecoin now allows international traders to bypass some of the international wire fees, and you get your buying power immediately, et cetera, et cetera. So it's like those kinds of things are, I think, going to be more impactful from a crypto standpoint. Just like AI, there's going to be things in AI that we don't necessarily understand yet that are going to be embedded in a lot of these companies' infrastructures. And, maybe that's it. We're in a figuring it out stage.
Well, the good news is that we did pass the Judgment Day anniversary. Skynet goes live on August 29th in that future, whatever it was. Now, granted, it was 1997, but still, nevertheless. You mentioned the cryptos, though, here, Mike. I do want to delve into this a little bit more. What's happening with the crypto space now? I've seen a lot of depressing feeds from people selling their Bored Ape Yacht Club JPEGs in recent days at massive losses. This is not something that happens when sentiment in the market is very high. And it makes me think that we're actually been in a little bit more of a drawdown here. Ilya, I know that you don't think the space is any sort of legitimate, but for those people who don't like, we don't like gotcha boxes, Mike, but we will play with crypto.
Yeah.
What's going on in the space right now? It feels like this is, maybe the chat has an opinion on this. Chat, you tell me, does it feel like something's off in crypto world right now, that vibes are bad? Because that's my read on it.
Vibes are not necessarily great, but I think one of the things that we've focused on specifically when we've had Ryan Grace from the Tasty Crypto team on every Monday. He's out on paternity leave, so congrats to him. But one of the things that we focused on was the Bitcoin dominance ratio. So Bitcoin dominance was super high 6 months ago, and everyone investing new flows was basically going to Bitcoin. This was all the while Ethereum was down at like 1,500, 1,600. And the trade was, if you believe that Bitcoin dominance is going to come down, where are the funds going to go to? Products like Ethereum, products like Solana. So we were talking about this Ethereum trade. I mean, it came to fruition way quicker than we may have imagined. But when you look at crypto as a holistic entity, there are certainly trades within that if you dig into it. So it's still funny though. Like we're talking about how Bitcoin feels like it's dead, blah, blah, blah. It's still at 120, 112K. And someone in the
Basically
YouTube
zero,
chat,
Mike.
Oh yeah.
Might as well be zero.
Yeah. Someone in the YouTube chat actually said, I forget where it was. Let me see if I can find it. It was something along the lines of, I think we will see interest rate cut hit, markets will drop, and gold and crypto will go up. So do you think that crypto could be a haven for equity funds that are leaving the equity space going to gold crypto?
Elliot, can I make a point before you jump in here?
I mean, I have a one-word answer.
Yeah, he just says say no. You can say
I know he's going to say no.
Simple answer is no.
I know.
Stop it.
Okay, so in terms of economic forecasting, you and I have touched on this a little bit, but now I'm blanking on his name, but Goldman Sachs chief economist was just won a distinguished award for his accuracy and predictions over the past 2 decades. He called the global financial crisis in 2008. He called the post-COVID market to a T. Okay. He pointed out that he just tracks the business cycle. So let's just simplify this for everyone here. Where are we at in the business cycle right now on monetary policy? Monetary policy looks like it's going to get looser, expansionary. Fiscal policy is expansionary. Maybe not for the 80% of the population, but for the top 20% that play around in the stock market and financial assets, it's certainly expansionary. Is that just the story we need to know, that monetary conditions are loose, that fiscal conditions are relatively loose, and deficits going up with low rates tends to be asset inflationary? I mean, like, why overthink this? in the spirit of a Dylan Radigan who's not here, why think at all?
Because I think we know all of these things, and this is what we've been looking at since, again, about mid-May. And so there's nothing here that needs to be priced in further. Unless, of course, the Fed decides to go the market's way. Now we have to find out whether the Fed is going to get off this inflation is our greatest fear thing and tell us next week that they're going to go the market's way on rate cuts next year. Then you have some validation. Otherwise, we're priced for it. Since mid-May, we've been at 50 basis points, give or take a few here or there, depending on what's going on in the markets for this year. The Fed told us that was going to be it since December, before the tariffs appeared, before the new administration even got into office. So that's non-controversial. The markets have been going up for certainly a combination of reasons, but one of the big reasons the markets have been going up is the markets, again, since mid-May, have increasingly diverged from Fed forecasting. The markets have gone more dovish. The Fed has gone less dovish for what happens after this year. The Fed revised in June from 50 basis points to 25. The markets revised over the same period. And now, because they've continued moving, the Fed's stopped all the way out to almost 80 basis points. So we are now at a more dovish outlook for this year and next year than we were at the absolute maximum pain point in April, and this year hasn't really moved. It's all next year. So, sure, I mean, don't overthink it. Just don't assume the markets are going to think this same thought in perpetuity. At some point, things do get priced in. And they've been, at this point, so priced in that the markets are now meaningfully decoupled from what the Fed is saying to the tune of at least 50 basis points. So if the Fed doesn't deliver, now there's scope for disappointment. And as far as fiscal policy, what loose fiscal policy? The president is out here touting this many $1 trillion in tariffs. That's a tax hike. What
we have 17
policy where?
We have $17 trillion coming into the country, Elia.
It's 17 now?
It was 17 over the weekend, yeah.
Why not just go the 20? Give us a number with a zero at the end of it.
That's too, Mike, if he's like, oh yeah, we raised exactly $20 trillion from tariffs, would that be believable? No, 17 trillion is a much more believable number, right? $17 trillion.
It's got to be 17.3 then to really nail.
That would convince me.
Yeah, I would be sold then. But I mean, what are we looking at? What expansive fiscal policy are we looking at? We extended tax cuts that already existed. No stimulus there. And we've introduced a giant consumption tax.
Well, there are more tax cuts coming for the upper income deciles for sure.
But they're not spenders.
You and I have talked about this. Like, we're both getting tax cuts from this
because we got SALT reconsidered in the big, beautiful bill.
So we're going to give California. We're going to give Californians, New Yorkers, people from Connecticut, New Jersey, Massachusetts,
homeowners specifically.
Okay, wealthy homeowners in rich states more money to spend. Right. What are they going to do with it?
They're not going to spend it.
Do you think they might put it in the stock market or gold?
Crypto, baby, Bitcoin.
So I'm saying, like, where does the money go? What are you said this to me earlier? Water always finds a level. Capital's like water in the global financial system.
That's right. Always finds a level.
Where's the level? Do you think that we should be investing in treasuries with the 10-year note at 4.05%? Is that enough?
I mean,
of a premium?
it seems like it's found a level, which is why you have now this disparity between the markets and the Fed. And the question is, did the Fed get religion between June and now? And you look at the FOMC minutes, you look at what Powell was saying, and the answer is no.
They didn't get religion. But hey, recession might be coming because when gold and bonds fly, that's usually what it means.
Yeah.
Right? Post non-farm payrolls would have been the two best performing asset classes. CB, GC.
Well, and you load up consumers with a giant consumption tax. They're going to be so excited about consuming. We already had the first 6 months of this year give us the weakest consumption since the quarter that was the onset of COVID, the first 6 months of 2020. Like, that's already occurred. And in related news, as it were, at the end of all of this, this week, we're going to get the University of Michigan consumer confidence data. Never mind the consumer confidence. It's already going down significantly. But more importantly, inflation expectations. They're rising again. They jumped back up to 4.8% in the last set of numbers. If the PPI numbers are telling us anything, it is that is only going to go higher. So we have an economy that, at the very least, is hampered by the fact that 68% of it is household consumption, and they have to pull a giant tax hike now, which is what these tariffs are.
Yeah, there's this chart I saw mocked up on Twitter earlier. It comes from Amanda, just make sure I get her name right, Amanda Goodall at the Jobnik. Don't know anything about her, obviously. Shares are not endorsements, but charts like this are. Credit card usage, revolving debt in the most recent report was up 9.7%. Debts otherwise are not really moving. And what have been the most recent interest rates for those debts that are rising? In the 20s. Okay, this is a big problem for people. Americans like to fund their lifestyles, and they continue to spend the money to keep the lifestyles afloat. We saw this in the Vibe session, Ilya, in 2022. Right? Everyone was miserable, but no one wants to give up the sense of feeling that they developed during COVID when they were getting stimmy checks and working from home and conspicuously consuming and ordering everything to their house, right? Like, how used did we get to, private taxis for our burritos, as the saying goes? And people may be losing their jobs and employment slowing down, but people are still spending the money. So, when do we run into that wall? Maybe it's another data point why we need a rate cut, although ratcheting of the interest rates doesn't help on the way down the way it does on the way up. Credit card companies aren't that lenient with giving you better rates very quickly. I don't know, guys. I walk away from this. Interest rates are low, so where are you going to put your marginal dollar? I feel like a total jagweed, Ilya, for not being on gold for the last $80, at least not through the options, because you know how much fun I have through them. Or is this just going to be a march higher now?
I'm still sitting long, and it's working and good.
And don't touch it. And don't make my mistake. Don't make my mistake.
I got tons of duration left in it. I'm not going to mess with this. It seems like it has done something that isn't necessarily even motivated by the Fed or rates. Only Friday did the bonds sort of start to validate this. Gold obviously started this move much earlier. And so, and the dollar, again, weak on Friday, a little bit more today, here and there, but again, not breaking any ranges for the most part. So this seems different. I think Mike said it earlier. It's more so a reflection of increased uncertainty than it is sort of defined risk aversion or defined policy outlook. It's more like, you know what, let's allocate more this way because there's a bunch of touch points ahead and who knows what happens now. In part, I think you turn to these Supreme Court cases looming and you go, okay, is it possible that after we've spent basically 5 months figuring out that the tariffs are going to be this or that and sentiment recovering from that, what would it do if all of a sudden now the lower court decision was upheld at the Supreme Court or even kicked back and the Supreme Court said, you know what, we're just not going to take this up. And the whole thing ends up being illegal. And most of the tariffs just fall apart. and then we have to pay back what, about 200 million? Sorry, 17 trillion. Wait, what? What was that number? Whatever. But we have to refund all of this money. It's just a ton of uncertainty, and I think that's what gold is responding to here. I don't see any reason to overthink this one whatsoever.
Global GDP is like 85, 90 trillion dollars from the most recent data that I've seen, Ilya.
Yeah.
So other countries are gonna just lob off 20% of global GDP and shunt it into the US economy over the next few years.
We're not going to have an inflation problem, even if that works, because magic fairy dust will fall from the sky and zap all the inflation on contact.
I don't know. This all just, where I stand on this, Ilya, from day one. So the fact that we're now going to like this now publicly, patently, absurdly just make up the numbers to convince people of a narrative kind of thing.
Yeah.
Hey, gold and Bitcoin still seem great from that point of view. Right.
Well, that's the whole thing, is not Bitcoin, because gold is surging and Bitcoin's not. In fact, it broke its range and it's coming down. So I've got a nice spread going de facto here. I've got a nice put vertical on IBIT, because you can trade short Bitcoin now with the right vehicle and not go crazy on the size. It's 4.5 to 1 risk reward in there if you want to take the short side. Very, very attractive.
You're doing the Peter Schiff. You're doing the Peter Schiff. Long
Basically.
gold, short Bitcoin.
Essentially.
I see.
That might be the first time Peter Schiff and I have agreed on anything.
Well, he's been short Bitcoin this entire time. So whenever you get long gold, you and him are in the same boat, I guess.
I mean, this is the first time I've been short Bitcoin or had any exposure to Bitcoin at all.
Mike, have you ever seen Peter Schiff and Ilya in the same room at the same time?
No, but it would probably be just popcorn-inducing entertainment.
I think they might be the same person.
Just get the conversation started on the Fed. You'll find out very quickly the distinction between the two.
All right, Mike, we got 10 minutes left here. To me, this is I don't want to say it's a dull market today, but it's kind of a dull market today. You get some more directional moves in the metals, which obviously is nice if you're long them. I'm still leaning long silver, been sitting on those $42 calls for several weeks now. There's still 40 odd days to expiration in here, 50 days to expiration in here. So there's really no reason to even look at it yet, as long as the line continues to go up. That's probably the best trade I have on the board right now, next to the directionally short crude oil, just expecting more chop around this like 63, 64 area. I've had some things that haven't worked. My Friday reverse iron fly mismanaged. I always say I'm a bad scalper, and it's because we touched the high of the fly, then we touched the low, and I couldn't make any money on it apparently. So sticking with what's working for me has been long metals, has been directionally neutral energy. Going to keep pressing those levers this week. Mike, what's been working for you, and what will you do less of perhaps in the days ahead?
What's
aside from the SPX Condor, of course.
Yeah. Those have been nice. Those have been great. But what's working for me right now? So 3 trades I closed this morning for profits were all related to buying the dip. So actually, Delta Airlines was a strangle. That was just a neutral trade. Rocket Labs, RKLB, that was just a high implied volatility. We call it the stupid. It's where you sell a put to finance a long call spread and you route it for a credit.
Yeah.
So you're
the
basically
double bull.
Yeah. So you're shifting your short put premium max profit to a debit spread max profit, but still routing it for credit. Microsoft, that was a nice trade. It was down like 13, 14 points on Friday. So I bought a call diagonal spread, long the 500, short the 510, October, September. That was like $130. But really what's the best trade I've had all year is just having short premium on in IBIT. So to Ilya's point, whether you're bullish or bearish, this product still moves and it still has an implied volatility. Even though IV rank is low, it still has an implied volatility of around 50 in the October, November cycles. So I've had a strangle on all year in here. started with a $500 credit. I've worked it up to a $2,300 credit, and it's marked at $400. So this is a $2,000 winner right now. With $2,350 in credit, I have a 65.75 strangle in October, which brings my break evens down to like 40 and up to 90. So unless something insane happens, this is going to be a great trade. But every time I roll, because it has high implied volatility, you get $1.50 or $2 each time you roll. So this is something I'll probably do into perpetuity. My whole thing is I don't want to have short delta in here, unlike Ilya. So if we get tested on the upside, instead of just rolling the put up, I just shift the whole thing up so that my short call tested becomes my short put tested. And that way you kind of just inverse your delta. And it's been a really powerful strategy. I think it's something that I've been talking about. Like if I had a couple $1 million, I would just sell a put in SPX or a couple puts in SPX and just have that be the core position. But kind of this strangle is really nice when you shift it higher, so you're not worried about having short delta in a market that's just grinding higher. But yeah, that's been the best trade I've had all year, is this IBIT strangle for sure.
It's a great idea.
It's well executed. I mean, Mike, you've been harping on me about like, oh, and I hear this from Nick too, directionally neutral in gold and Bitcoin since like May. And I've been some fool taking upside shots in here and like getting ever so close to grabbing that sun and it melting out of my fingertips and falling back to earth every time. So yeah, I'm still leaning long. This to me is the line in the sand, Ilya, for what it's worth. Right, we're kind of pinned up against that May high. We're hugging the low that we had in early August.
That's basically where I sold on the idea that there's a range break here and maybe we'll get some extension. So we'll see if it breaks.
Well, that's the story here.
Back into that range, then my trade's wrong and I'll get out.
Yeah, no, this is the thing. Like if we don't break back into the range here, then it's good night nurse for me. And I holding out hope. Downtrend broken. Maybe this is a little wedge in here, right? Fun with technical analysis, drawing shapes, right? There's your wedge, starting to break out of it. We need to get through 64.5 tomorrow in IBIT. So I suppose in the BTC world, right? What would give us confidence in the upside, get us back through 14,000 and then start to try to close that gap. This is a stupid gap, by the way. This was a stupid sell-off, by the way. Do you know why this sell-off happened? Here on the 13th of August, going into the 14th, it was announced that the Trump administration would not be revaluing the gold in Fort Knox to use the official markup proceeds to then fund a Bitcoin strategic reserve. And we wouldn't be taking out any debt to fund a Bitcoin strategic reserve. We would be using whatever Bitcoin we confiscate and we would be warehousing that effectively. Those would be our strategic reserves for Bitcoin. So the government's not going to spend an additional dollar you're issuing debt to buy Bitcoin. Okay, so there's a sell-off here. The market's a little disappointed. Uncle Sam's not opening up the purse. When does that wash out? I mean, this is as good of a place as ever for it to wash out for me, near 110. The highs that you have in December and January of last year, where we run into the rally in May, right? This seems like classic resistance turn support. If it is, it's time to prove it.
Right. And if you look at it, you can see that from April through to now, this looks more like the S&P or the NASDAQ than it does gold. So any kind of sort of thematic conversation about this is anti-fiat store of value, stop that. Just look at it. Just eyeball it with the naked eye. What does that look like to you? Does that look like the gold chart, or does it look like a chart of the S&P 500 or the NASDAQ? It's not rocket science, folks.
Looks like something that's about to rocket ship. Looks like it's coiling, ready to blast off to 150.
Or down. We'll see.
Or down. That's true.
Or down. We'll see. It does look like it's coiling. I think the step down through its range bottom that it took last week may be the start of something. And if it's not, then we'll find out soon enough. In which case, I'm going to get myself out of this position. But when the risk reward is 4.5 to 1, where you get to risk $200 to make almost a G, I'll take that punt. Sure.
I got a different punt for you, Mike. If we close above 64.5 tomorrow in IBIT, that means we're going to be through 114K in BTC. That sets us up, in my view, for a move back up to 125K. the equivalent there is basically 70 an IBIT. And thinking out structuring trades like this, risking 8 to make 400, so like 5 to 1, kind of in that neighborhood, close to it. That's the kind of upside shot I'd be willing to take in Bitcoin. If we can start to close the gap after this whole disappointment that the government's not going to send us tendies, as I saw on Reddit in August. I'm selling my Bitcoin because the government's not going to be propping it up officially. Okay, well, that was a good trade if you did it back then. But that's not is that why Bitcoin's been going up over the past year, 3 years, 5 years, 10 years? Because people think the governments are going to print debt to buy Bitcoin? I've never heard that argument.
For excuses. Now we're just for excuses.
You're just making things up if that's what we really were basing our bullish thesis on. Okay,
so the whole thing was supposed to be the government isn't involved. That was kind of the whole essence of what this was going to revolutionize. How far?
I don't know about that. That's not my read on it. I watched this documentary a few years ago.
Not my read on it either, but that was sort of the cyberpunk conception, the people that invented this thing.
This is a long documentary. It's worth the watch. I swear by it. It's not a personal endorsement. I don't know the people who made it, but it's from Folding Ideas. It's called Line Goes Up, The Problem with NFTs. It's a 2.5 hour documentary. It's been viewed 17 million times on YouTube, so it's not like a little niche thing. And it talks about the origin and genesis of crypto. And one of the things that stuck out to me was when you look at the early conversations in the Bitcoin chat groups from the 2009 era, it was really all about hey, the banking system crushed us. Wouldn't it be better if we had our own system that we were in charge of? So we want to wear the boot. We don't want the boot on our neck. We want to be the people wearing the boot.
Exactly.
Fascinating.
This whole thing was anti-establishment in its conception. And now we're praying that the government is going to put a bid under the market.
How about this, though? How about if we over the next 9 days, up until the 17th, if we get a move from Bitcoin from 112 up to 120 and we see gold continue higher, to me, that just screams whatever they do on the 17th, the market's going to sell off.
Oh, yeah. Stocks are going to get clanked 2%, 3% loss easily.
Yeah.
But
yeah.
Hey, time will tell. And until that point, I will be selling 1 day or 0 day iron condors.
Mike, I'm in line with you.
You're a wiser man than me, sir.
I'm in there with you for tomorrow, which I suppose is a good time as ever to say with that, overtime is out of time. We'll be back tomorrow, same time, same place, 4 p.m. Eastern, 3 Central, right after last call. So for Ilya Spivak in San Francisco, Mike Butler in Chicago, I've been Chris Vecchio in New York. Good luck trading. Don't go anywhere, though. Tasty Live at Night coming right back at you, starting with, Ilya, Macro Money up next.
See you there, everybody.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're number 1 for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
Traders, start your platform. Tom Sosnoff and Tony Batista are hitting the road for their first ever live trading event, At Work by 11. It's unprecedented, unpredictable, and unlike any other financial event. Watch these masters make real trades in real time. Doors open at 8, the action starts at 9, and we'll have you back at work by 11. Sign up today at tastylive.com/events.
Global markets never sleep. Explore them with Forex on Tasty Trade. Get in on 80+ Forex pairs, 24 hours a day, 5 days a week. FX marks the spot. Trade it on Tasty Trade.
What's your sleeper pick for the second half of 2025? Is there anything that you're particularly high on nobody's talking about?
My sleeper pick. I think Ethereum is an interesting play. It's still a lot. It's near the lower end of where it's been trading at 2,500-ish. If you are bullish on the crypto space, which I am, and I think the blockchain technology is a huge part of that, I think that Ethereum has a little bit of a catch-up trade, and you can now trade it via the ETFs. ETH-A is the Ethereum ETF, which is now accessible for option traders. So I think that's an interesting play.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
The future of trading is here. Join Mike and his whiteboard, plus the Tasty 2 live crew for 90 minutes of probabilities, punchy portfolio mechanics, and trade tactics. It's totally free and unreasonably fun. Come early to enjoy a drink with the crew and stay for a Q&A after the show. Space is limited, so register today at tastylive.com/events.
In the money. It seems pretty easy to understand. If I'm in the money, I must be profitable, right? Not quite. In the money is in reference to the option's strike price relative to the current price of the stock. An in the money option is an option which has intrinsic value. For a call option, that represents an option with a strike lower than the current stock price. For a put option, that represents an option with a strike higher than the current stock price. Being in the money is a good thing for long options. It's not so good for short options.
Well, it was a quiet start for the markets on the first trading session after that very disappointing jobs report on Friday. We don't ultimately go very far, at least as it touches the stock market. S&P 500 kind of idling here, a little bit higher, but ultimately not going anywhere relative to where it closed on Friday. A little bit of a nudge up for the NASDAQ as well, but also well within its familiar range. A lot more of a fireworks display still ongoing in gold and the bond market. So what are we going to do this week with the Fed looming just a week and a half from now? That's what we're going to tackle here on Macro Money. I'm Ilya Spivak, head of Global Macro here at Tasty Live, and we have no shortage of meaningful event risk that's on the board this week that can very potently influence expectations for what happens when the Fed does finally pull the trigger. So, is this going to be the calm before the storm? Maybe so. And by the way, that storm can be bullish, it can be bearish. We just know that the 17th is a major touch point for these markets one way or another. But will we have a sort of period of drift before? Well, maybe not, because the assortment on the calendar this week is, let us say, non-negligible. First, here's how we fared last week. We can see stocks still relatively listless, 0.3% gain after a 0.2% decline. Not really going anywhere on the S&P. NASDAQ had a little bit of a better week, up 1%, but still within familiar range bounds. A much more spirited performance in the bond market, yields cratering, down 3.7% in the 10-year, down 3.1% in the 2-year. Most of that happening courtesy of the U.S. jobs report, which we'll get to in just one moment. Crude oil still kind of doing its own thing, down 3.3% last week, but That's after an upswing the prior week and still kind of idling near the midpoint of its longer-term multi-month range, going all the way back to the middle of last year or so. So kind of off and away by itself, crude oil. Gold higher again, 3.9% last week. The dollar, though, interestingly, holding up relatively well, down only 0.1% against the euro for all of Friday's fireworks, and up a little bit against the yen, 0.4%. Bitcoin up 2.9% last week in all, but that's after a 6.9% drop. So over a 2-week period here, we get a large sell-off and a small rebound to retrace, but certainly the mood in Bitcoin still looking relatively heavy. Here's what we saw on Friday, thanks to that jobs report. S&P 500 down a little bit, 0.3%. NASDAQ flat. Yields taking a big hit, and of course we can see where those big weekly declines come from. Obviously, we can see that the lion's share of those moves seem to be on Friday. We likewise get a very convincing rise in gold again. The dollar is down 0.6% against the euro, 0.7 against the yen. Bitcoin gets most of its gains on Friday for the week, and the dollar would have had an up week across the board if not for these setbacks. So what happened with this jobs data? Well, we can see here that the headline number was vastly lower than expected. Only 22,000 jobs added, which is a pittance. 75K was the expectation, so it was already low, and now we've really undershot. The revisions were netting out to down 21K for the preceding month. So what have we learned here? Ostensibly that we added 1,000 net jobs in the latest iteration of the figures, which of course is not encouraging in the slightest. And the jobless rate in line, as expected, 4.3%, still relatively low by historical standards, but also the highest since 2021. So that much came in as anticipated, but that headline payrolls number clearly caught the markets in a tizzy, and we had first the markets jumping to celebrate that this would mean that more rate cuts are coming. The S&P initially rallied, then selling off, and ultimately, as we can see here, ending the day with a small loss, whereas it had been a large one earlier. Markets apparently don't think that 1,000 net jobs added in a given month is a good thing, or 22K even isn't a good thing. Shock of shocks, this starts the smack of recession risk, and so the markets are displeased. Now, we talked all of last week about how U.S. economic data has actually tended to surprise on the upside recently. Certainly the ISM numbers were a case in point, as were, for the most part, the other kind of contemporaneous indicators. And so we get this jobs report that's clearly on the weak side. Maybe what we're looking at is delay in sort of the usual way that jobs data tends to be lagged. Maybe we're looking at a kind of pickup in activity that hasn't spilled over into the labor market. We've heard the Fed talk about how the labor market is in a kind of strange state here, where there's not really aggressive firings, nor is there meaningful hiring. We're in a kind of equilibrium approaching situation where there's not demand for new hiring that's really powering a strong increase in payrolls, nor is there a shedding of labor forces. And so there's almost a kind of standstill. And this data would start to show us that, especially over the past 3 months or so. Not encouraging, but certainly not anything that necessarily tells stock markets this or that thing. And ultimately, it looks like that's why you get, despite a relatively strong showing for a bunch of other sort of Fed adjacent assets, obviously a strong showing for bonds, a strong showing for gold, a strong showing for currencies not named US dollar. That's why you seem to get this kind of soggy thing for stock markets on the whole. What's interesting then is that, at least on the rate side, the markets have clearly taken the hint. You can see now the likelihood that we don't get a cut is non-existent at this point, even a minor likelihood for next week's meeting. We're looking at a significant level of conviction at this point that there's going to be one cut, 88.2%. That there will be a cut of any kind is now a 100% likelihood, because there's now an almost 12% chance that we're going to get a 50 basis point cut this go around. Now, this much is probably non-controversial, at least that there's going to be some kind of a cut and that it's likely to be a 25 basis point cut. Markets have known this for quite some time at this point. Moreover, we can see that the way the markets are now setting up for this year and next, if anything, they're a little bit out on a ledge for next year now, having been essentially anchored around 50 basis points here since about the middle of May. Now we're slightly in the direction of a possible third rate cut this year. We've baked in 13 basis points out of that extra move from 50 up to 75. So about half of that move is now in the market. So we're basically saying, okay, we're about 50-50 chance on a third cut. But we've been at similar levels here, so it's not unheard of within this sort of range. But the Fed has been saying since December of last year that they're looking for 50 basis points this year. And we can see that the market has basically been anchored around that level, give or take some fuzz this or that way, since mid-May. Why is this significant? Well, we can see that at the beginning of the year, stock markets sold off and the Fed outlook got more dovish as we had this tariff rollout fuel concerns about economic growth. And we can see that right here. So this is a fear about the economy. In the dark line here is the S&P 500. Everything is going down at the same time. Now, you notice in early April, this is where you get Liberation Day and markets freak out. The president then comes out and goes, whoa, 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 90-day pause. The markets have gotten, quote unquote, yippee. And so the markets go, oh, okay, so I guess the White House is amenable to market discipline. I guess it does adjust what it thinks when the markets go haywire and signal you're doing the wrong thing. And so there is a sort of sentiment recovery. And you can see we come off the most dovish extremes here. Stocks do as well. And that takes us right into the middle of May. And this is where we get back to baseline. 50 basis points, as the Fed would have signaled it. Moreover, on stocks, we come back to the site of the break. So if this right here was the consolidation range near the top at the beginning of the year, and the break from that was somewhere around here, we'll look at where we come back to being just as we get this recovery here. And so what is that saying? Well, it seems to imply that whatever follows thereafter, once we get here, is no longer about an improving economic outlook or certainly a diffusing of the need for easing. Because we can see here for this calendar 2025, the markets basically return to where the Fed was at the beginning of the year. 50 basis points. This is where we started. This is what the Fed signaled in December. It's where the markets were before this move. It's where they come back to. But notice what happens thereafter. From there, it's the outlook for 2026 that starts to blow out. The sum starts to build out to a more dovish setting, and stock markets drift higher. So it seems like the rally for the better part of the past 5 months has been about little more, in this context, certainly. Surely there were some other influences too, but the most convincing story seems to be that it's about oncoming stimulus. It's about cheap money. And at this point, if we consider where we are numerically, we're already starting to exceed where that April bottom was. So, on the whole, the vulnerability here is the markets have become very dovish. The Fed is widely expected to do at least some amount of easing, so that much is non-controversial and probably not going to move the markets this way or that. The big question becomes, will they move their forecast? Which again, in June, had from 3.9 to 3.6 in 2026, just one rate cut. This is a move of 0.3, obviously rounded off from 0.25. This is a single move. Whereas for the Fed, in contrast with the markets, the gap is almost 50 basis points. A little bit more, in fact. And so this now sets up the risk in this Fed policy announcement coming out of last week, that the Fed isn't going to go the market's way. Now, why would that be? Well, maybe we'll find out this week, courtesy of U.S. inflation data. And we can see there's quite a bit of it on the menu. We already got an uptick in this survey of consumer inflation expectations. But the meat really is Wednesday and, of course, Thursday. Wednesday, we're going to get the PPI report. Thursday, we're going to get the CPI report. So this is wholesale inflation, retail inflation. And we can see here, we're expecting a relatively modest further increase in PPI, only 0.3% after 0.9% last month. The year-on-year figures here seen coming in a little bit, at least for the core, from 3.7 to 3.5. Headline seen holding unchanged. This will be very important stage setting for the CPI report to follow, because we've already seen in this PPI report this very significant jump in the July figures that told us we are now starting to see wholesalers really pass the cost of tariffs down to consumers. This mostly reflects rebuilding margins after this period of weakness here at the start of the year, where businesses basically said, we're going to eat the tariff costs. We're not going to pass it on to consumers. We're going to take the tariff costs out of our own profit margins, and we're going to insulate consumers lest we destroy demand for our own stuff without knowing what the tariffs are really going to do. Well, now it looks like they've decided they have enough conviction to say, you know what, consumers, you pay for it. And so margins have built back out, and so you get this sharp jump in wholesale inflation. We'll see if that continues to surprise higher in this go-around. And of course, if it does, it'll be good stage setting for this, the main story. The headline inflation rate seen going up from 2.7 to 2.9. The core rate seen holding at 3.1. We can see that here. If this were to surprise on the top side, then, of course, the likelihood that the Fed would meet the markets where they are on this expansive 2026 outlook would be significantly diminished. There'd be a lot of consternation, perhaps, about a Fed that surprises on the hawkish side, not because it doesn't cut, but because it doesn't endorse this expansive dovish outlook thereafter, beyond the calendar turn to 2026. And certainly if the PPI numbers are hot going into the CPI report, the concern would be that this too would start to roll up and get the Fed into a more sort of concern about inflation becoming sticky were they to act with more conviction. And we see that in the sort of last bit of data here for the end of the week. We're going to get the University of Michigan Consumer Confidence Survey, and that's got an inflation expectations component, in particular this one-year inflation expectations component. It was 4.8 last time, which is a rebound. We'd started to come down from kind of April's peaks where there was that freak out around Liberation Day. That was a peak of 6.6. And we can see here that really since the COVID inflation scare reached its peak and the Fed started to really hike rates in early 2022, and until this tariff spook, the trend has been lower inflation expectations, improved consumer confidence, until we get into the beginning of this year. And it's here that we start seeing, tariffs, inflation expectations come back up, consumer confidence falls back down. We'll see how overall consumers' mood holds up. Of course, we've already had very weak consumption in the first half of this year, the weakest, in fact, the weakest 6 months since the first 6 months of 2020, which is the COVID recession onset. And so already there is a sense that consumers are feeling the pain, and the pass-through, as we just saw, is only just getting started. If that continues, then indeed we might have a further pickup in inflation expectations. The Fed would certainly worry about that becoming entrenched, and that could limit their scope for easing next year, at least in their mind, which would be at odds with where the markets are. And that, of course, creates a significant risk for stocks. I mean, if you thought that much of this was contingent on what's going on here, at least to some extent, at least let's say for half of the move, well, then you have a meaningful discount here if these expansive expectations are not met. And moreover, if we consider what the dollar is doing, it's of course a little bit down in the wake of the jobs data on Friday, but it hasn't made a lower low of consequence since the beginning of July. Meanwhile, as we just saw, gold is surging, bond yields are cracking lower in earnest. The outlook for the Fed is becoming ever more dovish, but the dollar strangely seems like it's done declining. It hasn't found the impetus for a rally. Certainly, if the Fed were to leave the markets hanging on next year's rate cut outlook, that would start to look like a reason for the dollar to go up in earnest, especially if it were powered by risk aversion as well as a rethink on Fed policy expectations. So we have a situation where the market seems to be sniffing out something. Maybe a turn in stocks, maybe a turn in the dollar, and this inflation data is going to be critical stage setting for what may happen then next week to really catalyze these changes. Outside of the U.S., we've got a monetary policy announcement from the ECB. We see here no changes being baked in. So the current rate here, the baseline deposit rate stuck at 2, and we can see through the rest of the year, these month-based Ionia futures are telling us we're shy of 1.75. In other words, there's no cut that's baked in, and we can see that here. The change here, only about a 5 basis point cut that's baked in. For next year, again, a pittance, only about 8-9 basis points in a cut that's priced in for next year. In other words, we're looking at stasis on ECB rates. We'll see what they say. We'll see how that influences the equation here. But of course, it's coming out the same day as the CPI report, so this might be something of a non-event this go-round. We're also going to get a bit of data out of China, in particular the inflation report coming on Wednesday ahead of PPI in the US. So perhaps we get a little bit more maneuver there. And what's interesting is that year on year, we're still expecting ongoing deflation for wholesale prices, but for CPI, we're expected to come in from flat to, again, negative 0.2%, essentially saying there's no demand to speak of in the world's second largest economy still. It's now been mired in economy-wide deflation for 9 consecutive quarters. There's been some stirrings of activity, perhaps, but consumers over there still seem perfectly content to stash their money into savings accounts, and there's really no demand to speak of to power the economy forward. So if the U.S. economy were to falter, we really don't have a plan B. Europe is at standstill, as evidenced by stasis at the ECB, among other things, and China still can't get the engine revving, going on 2 years now. So as we look at what's going on, then it really is all about the U.S. Over the weekend, we had some data out of China on the trade side, which we can see gave us cooling exports and imports. So it really is about the Fed. It really is about the U.S. economy, because without that, we don't really have much of a global business cycle catalyst to speak of. As far as positioning goes, still familiar exposure, not really much to update here. Still long the dollar, looking for it to bottom, long it against the Aussie, so short that, the pound, the euro, and the Canadian dollar. Still looking at long gold, short the put there in GLD at 330, and of course it's working a bit here. Short a bit of Bitcoin, these puts very cheap, and so looking for that to essentially be a little bit of a kicker on this general risk-off bias, looking for stocks to maybe start to look for a top here, or at least the risk-reward on that to look attractive. So still holding these put verticals in the NASDAQ and the S&P 500, and enjoying the rebound in bonds. This is finally working. I was sitting in these positions for 2 months before there was any kind of movement in them, but these call verticals in the long end of the curve finally working, and no reason to get off the boat now, much like gold, until at least there's some kind of a downtick. And that is macro money for today. As ever, here Monday through Thursday, right after overtime, a show I co-host with Dylan Radigan and Chris Vecchio, looking at the Wall Street close and where things may go therefrom, commenting at Ilias Pivac on former Twitter and on Blue Sky. If you're watching this on YouTube, like and subscribe. Macro Money is back tomorrow. Happy trading.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're #1 for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
Traders, start your platform. Tom Sosnoff and Tony Batista are hitting the road for their first ever live trading event, At Work by 11. It's unprecedented, unpredictable, and unlike any other financial event. Watch these masters make real trades in real time. Doors open at 8, the action starts at 9, and we'll have you back at work by 11. Sign up today at tastylive.com/events.
Global markets never sleep. Explore them with Forex on Tasty Trade. Get in on 80+ Forex pairs, 24 hours a day, 5 days a week. FX marks the spot. Trade it on Tasty Trade.
What's your sleeper pick for the second half of 2025? Is there anything that you're particularly high on nobody's talking about?
My sleeper pick. I think Ethereum is an interesting play. It's still a lot. It's near the lower end of where it's been trading at 2,500-ish. If you are bullish on the crypto space, which I am, and I think the blockchain technology is a huge part of that, I think that Ethereum has a little bit of a catch-up trade, and you can now trade it via the ETFs. ETH-A is the Ethereum ETF, which is now accessible for option traders. So I think that's an interesting play.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
The future of trading is here. Join Mike and his whiteboard, plus the Tasty 2 live crew for 90 minutes of probabilities, punchy portfolio mechanics, and trade tactics. It's totally free and unreasonably fun. Come early to enjoy a drink with the crew and stay for a Q&A after the show. Space is limited, so register today at tastylive.com/events.
Tasty Trade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
So I started trading in the equities market when I was 18. Real basic ETFs, mutual funds. I didn't discover options and really Tasty Live until about 2012. It made sense to me from a risk perspective. And so I started trading and never really have looked back. The people you see that's who they are. They're trying to be as open and clear as they can with the trades that they're putting on. Teaching a methodology, like teaching the logic behind things. It is tried, true, and tested. They back it up with research. They share that research. It's not just trust us and do this. Which is a very dangerous thing in the financial world. But learning about that in the Tasty universe, it starts to prove itself out, right? When you follow the methodology, you'll see those profits and you'll understand why a position did what it did. Sometimes the market wins, and sometimes you have a 90% winner, and you don't know, why don't I do this every day, right? This is easy. But you kind of have to reset that and just go, okay, close the trade and move on to the next one, which is really what Tasty's about.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
Class is in session. Dr. Jim Schultz is bringing the heat to Options Crash Course Live. This 90-minute show features Dr. Jim in his professional prime. All of the gimmies, none of the gotchas. Come early and grab a drink with Dr. Jim before class and stay for Q&A. The event is free, but space is limited. Register today at tastylive.com/events. It's not a lecture, it's a lifestyle.
Beat the opening bell. Get trade ideas and market insights before the open. From the creator, Tom Sosnoff, and our chief market strategist, Tom Preston. Every weekday. Sign up at tastylive.com/newsletters.
In the money. It seems pretty easy to understand. If I'm in the money, I must be profitable, right? Not quite. In the money is in reference to the option's strike price relative to the current price of the stock. An in the money option is an option which has intrinsic value. For a call option, that represents an option with a strike lower than the current stock price. For a put option, that represents an option with a strike higher than the current stock price. Being in the money is a good thing for long options. It's not so good for short options.
All right, we're back. Tasty Crypto Show. I'm Dan Cecilia, and today we've got Greg Magadini, professional options trader and head of derivatives at Amber Data, back on the show. If you're not familiar with Greg, he's a regular on the network and always brings us really unique insights and trade ideas from the crypto options market. Greg, it's a pleasure to have you here. Love chatting with you. How's it going?
Thanks so much, Dan. Happy to be here. Going well. A lot of exciting things happening. We got some interesting Fed rate repricing and some effects in the gold market and crypto market. So I'm excited to talk about all that stuff.
Yeah, for sure. And I think we'll just dive in. Obviously, I love reading your newsletter, love, the stuff you've been publishing over at Amber Data. So let's just get into that and just do, start off with a crypto market discussion. After last week's payroll data, there was a drop in that interest rate expectation that fueled kind of a bit of a rally toward the end of the week. But you mentioned crypto prices didn't follow. Do you know what the reason is for that divergence, or do you have any insight there?
Yeah, so it's very interesting because obviously gold is a lower volatility asset than Bitcoin. So gold vol, if you look at the GVZ, which is the gold vol index, it's about 19. DVol, which is the Deribit Bitcoin Vol Index, again, 30-day VIX style index, has about 37. And you had, almost 5% rally in gold and almost no movement in Bitcoin itself. So my base case scenario is that Bitcoin is a little bit of a mix of digital gold and risk assets. And I think it's a little bit of a tell to see the risk asset component underperform. So the first thing I just want to show here, if we look at the CME Fed Watch tool, that's showing us the implied probabilities of a Fed rate cut in September. So we can see here the probability of a zero rate cut is now 0%. It was about 14% last week. And if we go out to October, the probability of 2 rate cuts went from 48% to 71% week over week. So you're getting cheaper money being priced into the market. Now, what's really interesting about that is that markets are forward-looking, so the risk assets are rallying on the back of that. But once that's priced in, what's the safety net? So to me, seeing crypto underperform a little bit is a little bit of a note of caution. Obviously, the trend is higher, so you don't want to fight the trend, but we got to think about how can we hedge out sort of that risk asset component and maybe isolate the digital gold component. Just for context, the market cap of gold is about 24 trillion, and the market cap of Bitcoin is about 2.2 trillion. So Bitcoin's only 9% of gold. All of crypto is only equivalent to Nvidia's market cap. So crypto's still small. There's still a lot of upside. But that being said, it is a bit of a risk asset, and I have some vol data to sort of confirm that narrative. But happy to just pause it there and kind of take it from there.
Yeah, for sure. I think what's interesting is you kind of label this theme where there's this bad news is good news for risk assets. But I think what you're mentioning is we're starting to see Bitcoin's kind of a tell, right? Bitcoin isn't moving with gold. And it's, even with these rate cuts priced in, we're still, typically that's what positive and bullish for risk assets. We're not seeing Bitcoin and crypto move that much. So is that more of a tell to hey, maybe there's some risks here, or maybe it's priced in and we're just not getting, maybe it's time for a caution or time for pause. Do you think that's what it is? Is it kind of hey, maybe after September, we're not totally sure where things are going?
Yeah, I think there's kind of two things to look at that really paint this picture for me. So let me show you this chart right here. I think this is very interesting. Okay. So this is 180 days till expiration, 25 delta risk reversal. So that's looking at 25 delta call implied vol minus the 25 delta put implied vol. So when we're above zero, calls are more expensive. When we're below zero, puts are more expensive. So we could see back in the 2022 era when we had, a lot of interesting things. We had the FTX crisis, we had the Terra Luna crisis, we had Three Arrows Capital going bust, all those things. We were in that negative risk reversal zone. And then we had a brief dip here in the SVB banking crisis. Again, that was a kind of a moment for crypto as well, especially the stablecoin world. So we got a quick dip and then it just bounced back. And ever since then, the vol profile has been to the upside for Bitcoin. So the option market was pricing in positive spot vol correlation, which is the opposite of equities. Equities typically have negative spot vol correlation. Gold can go both ways. And so what we're seeing here in crypto is, as of, call it last week, the long dated relationship of the spot vol correlation being priced into the vol surface just flipped into the negative, not by a lot, but just by a little bit. So there's kind of two things I'm thinking there. One is, are people hedging? Are people essentially, feeling bearish? Or is it more that we now have institutional investors holding Bitcoin, selling covered calls, typical type of risk profiles that equity investors would put on in terms of options? And so maybe the investor base is the same investor base that invests in equity indexes, and they're just doing a sell the covered call, buy the put as security type of flows. But regardless of the reasoning, the outcome is the same. If the equity investors are kind of repricing the vol surface because they're selling covered calls and buying puts, and it's reflecting in that negative risk reversal, that still means that if equities crash, they're going to be the ones who liquidate. So I think it's kind of a tell to just see that long dated relationship start to become negative for the first time in almost 3 years, or I'll call it 2 years now, 2.5 years.
Yeah, that is a really interesting chart, and I think I do sense too, because like I personally look at a lot of like what's going on in the market sentiment wise, right? Like I'm big on Twitter. I'm listening to kind of like the talking heads of the space, and you're beginning to see that. I don't want to say chaos, but like, with all these announcements of these treasury companies, and now, I saw WorldCoin one just announced today. There's all these like altcoins that are sort of establishing themselves with these treasury companies. And, on the back of that, we had some of this, economic data that didn't really come in that well. It gives me pause as somebody who's been in the market for a while, because it's just like, how many of these treasury companies can we support? How many of these tokens can we support? So it's just interesting to see that that's turned negative, that there's a signal there. And the last time we kind of saw that was something broke essentially, or some things crashed. So, maybe to your point, it is sort of just a short-term thing, or it kind of, maybe it dips below and comes back. But that term structure is, or the risk reversal rather, is an interesting one to take a look at. Anything? How about ETH? Because for a while, the last couple of times we've had you on the show, we talked about that relationship with implied to realized vol on Bitcoin, being that realized vol ends up coming in lower, so there's more premium there. But ETH, you mentioned you were bullish on ETH. So is there anything that you're looking at in ETH? Maybe the term structure, or just sort of ETH spot?
Yeah, I would love to jump into ETH because I think there's some really interesting trades. I think just before I jump into there, I do want to talk about sort of where VIX is at, because VIX is a really interesting way to hedge out risk on versus risk off type of events. And so even though Bitcoin is starting to price in a little bit of risk off hedges, where hedges are still cheap is the VIX complex. So let me just show you what I mean here. So first of all, if we look at commitment of traders, the CFTC COT report, we can see large traders are essentially short VIX futures to a level that we haven't seen in years. So the positioning in the VIX market is extremely short. So that's kind of interesting. Then if we look at the relationship between cash VIX versus front month future VIX, we can see it's kind of middle of the range. So cash is about, $1.50 below front month future. But what gets really interesting is if we look at front month future versus next future out, which would be September versus October, what we see here, and this is a 5-year chart. So this is weekly data on a 5-year chart. I mean, the contango extremity between September versus October VIX is the lowest we've seen in 5 years, essentially. Now, something that's really interesting to note is that the expiration of the September VIX future is on September 17th, which is the day of the FOMC rate decision. So the VIX is going to expire in the morning, and then at 2 p.m., we'll get the FOMC rate decision. So what I think is happening is that risk sentiment is at extremely bullish levels, almost complacent, you could say, because we're pricing in sort of that rate cut. So what's interesting is if you want to get long Bitcoin, but you want to hedge out some of the risk off uncertainty, the VIX complex is really cheap right now. So you can essentially get long Bitcoin and do a dirty hedge in the VIX complex and kind of do that type of trade. So I think that's an interesting positioning. The other thing that we just chatted about, or you were asking about, is Ethereum. So Ethereum, I'm still bullish Ethereum. The trend is still higher. We're right below all-time highs, but I think it's logical that we consolidate a little bit below the 5K level. Prices have to trade here to make sure that they're concrete, so to speak. But what we see is we have an extremely flat term structure in terms of Ethereum. So if I look at this chart, let me just show you the term structure real quick with a live chart. So we can see here with a live chart, let me take off the forward vol. So you can see, forget the dailies at the very, very front, but if you just go to, September 19th, so that's next Friday versus end of year, I mean, it's basically the same vol. So the reason why that's interesting is if we jump back to this chart, this is showing us term structure richness. It's showing us the average differential between key expirations, 30 days, 60 days, all the way out to 6 months. And so when we're below 1.0, we're in contango. When we're above 1.0, we're in backwardation. And right now we're at this very, very, very flat term structure. So in my mind, this is kind of an interesting setup. I can buy, say, October upside calls, call it a 25 delta call, and I pay 65 vol. And then I can sell the September 19th 25 delta call and get paid 65 vol for that. And the idea here is that as we sort of consolidate that short diagonal call, the short September contract is going to fall off, or as days go by, I pick up deltas as that short contract kind of decays pretty quickly. And then if the market rips, we have a good stop level. We know that breaking past that 5,000 level is a time you would take off that trade. But the hope is that time goes by and then we kind of break out after that first front month contract approaches expiration or actually expires. October is going to be key for Ethereum. We're going to get, it's rumored that we're going to get the SEC approval or denial of staking ETFs, staking yields. Okay. And so if we get staking yields in Ethereum, that's a catalyst for higher prices, in my opinion. So that's a really interesting sort of setup.
Yeah, no, that is interesting. So let me just take a step back just so we can kind of go over, because there's a lot of stuff here. So the first one I want to go back to is getting long is the VIX Bitcoin trade that you talked about, where you could be long just spot Bitcoin, right? Or whatever Bitcoin ETF, but you're hedging that by buying buying calls on the VIX essentially to kind of hedge that risk if VIX spikes. So if risk off spikes.
There's a few ways you could do it, but essentially, yeah, you want long delta exposure. So you could do that by doing a couple things. You could sell, put spreads on UVXY or UVIX or some of those ETPs a little bit out of the money. You use that premium to buy some of that long dated Bitcoin call that's trading at a discount compared to puts. That's kind of an interesting structure to play. You could just buy Bitcoin outright and buy a couple calls or call spreads on VIX, with the idea that if Bitcoin dips, you're going to get some sort of rally in the VIX as well if it's a risk-off move. So those are kind of two things you could do. So yeah.
Okay, and would you do that in the October expiry?
Yeah, I think the October expiry is really interesting. So September, so there's kind of two things here. So September is pretty cheap right now, so I wouldn't be surprised if there's a little bit of an up move towards mean reversion in the September futures, which would help out those ETPs. But I think the true move is going to be a pretty firm VIX in the month of October after rate rallies have been fully priced in, and then we see what happens.
Gotcha. Okay, cool. And then, so we can do any number of those things, just using VIX kind of as that risk-off hedge. And then ETH, in the past we talked about this, and I actually put this on. We talked about that micro strategy, sell the premium micro strategy, go out and buy ETH, ETH ETF. But for this one with this, the flatness of this term structure on ETH, what are you looking at there? Is it just 25 delta call in October because you think that there's this catalyst for the staking yields getting approved by the SEC? Do you think is that a catalyst you think to push ETH above 5K or, play for that basically?
Yep. So I would look at something like selling the September 26th expiration, the 37.5 call. And then I would go to like the October 24th expiration and buy the 42 call. So that's about delta neutral between the two. I think that spread's about 33 cents. And the idea here is you put that spread on. The worst case scenario is differential between these two strikes. So if ETH starts to break above the 5K level, that puts the ETF at about $39. That would be sort of the worst case outcome, and you would take a loss. If we kind of just hang out here and continue to consolidate and sort of grind higher into October, that front month contract should roll off before we get to that 37.5 level, and then by that expiration, you have kind of a fully outright call, and typically I would take some off at that point and maybe let a couple ride.
Gotcha. Okay. So we're looking at September 26th, selling the 37.5 call, and then buying the October 24th 40. You said 40, 40-ish? 42.
Yep.
Yeah. Okay. So we're looking at 30 cents, 31 cents. Yeah. Okay. Delta neutral. It's about 0.3 delta. Yeah. Okay. Yeah. That. So and you're just waiting. And basically what we're doing here is hopefully that front month just kind of rolls off and we play for that up move in October.
Yep.
Okay.
So
awesome.
My thinking is October remains firm, sort of because of that catalyst. My thinking is that the front month vol comes down because we kind of consolidate below all-time highs. ETH finds its footing. And so each day that goes by, I pick up deltas.
Okay. Awesome. Is there anything that you could see that might kind of, I guess, nullify this outlook? Is it more bad data? Is it, I don't know, they pause interest rates? Is there anything on the horizon you're like, maybe we take a step back and, maybe not go? Yeah.
So the wild card is inflation data. So
Okay.
We got PPI tomorrow. We got CPI on Wednesday. If we're starting to get hot inflation prints, rates are going to reprice the other way, which will be great for that VIX hedge. But it's going to change the profile of the path of rates.
And okay, and have you been tracking that? Like, is there anything you're looking at that could give us an insight into this inflation, or do we think that's why the probabilities have shifted to rate cuts, 2 rate cuts? Is that? Do you have a sense of inflation?
No one really knows, but obviously Powell kind of shifted towards labor market being a little bit more important versus inflation on his Jackson Hole speech. But obviously, the inflation data depends how it comes out. The one thing to keep in mind is that a year ago, when the Fed cut 50 basis points, inflation was lower. And today, rates are lower and inflation is higher. So if we get bad inflation prints, it's going to look tough for rate cuts in a rate environment. But we'll see how that goes. The one thing that is cheap is energy. I think sort of the Trump policy is to do deregulation on energy and do negotiations with energy trading partners. And so we've seen, gas, WTI be pretty low, natural gas be pretty low. So I think his thinking is that if I keep energy prices down, that should combat any sort of inflationary forces. But we'll see. It's hard to tell. I don't think anyone knows.
I would love to actually dig into some of the energy. Do you trade that at all? The future energy futures or like oil future?
No.
Okay.
No, it's not something I look at.
Yeah. Okay. How about gold? Do you think gold's telling us any? I know we talked about this a little bit earlier, where that divergence between gold and Bitcoin could be a tell, but is gold telling us anything about inflation? You think?
So yes, I think gold is telling us quite an interesting story about inflation expectations. This is a gold rally that I haven't seen in my trading career, really. So
yeah,
it's
yeah.
That's why I do think the gold profile is bullish for Bitcoin. I do think it's relevant that gold has such a bigger market cap than Bitcoin. But yeah, it's something to keep in mind. And the risk reversal in gold is positive right now by about a full percentage point. So that 25 delta call is about 1% more expensive than a 25 delta put.
Gotcha. Okay. And then because, and I know like in your newsletter, you have, you kind of follow some of the institutional flows in Bitcoin options, ETH options, crypto options in general. Is there anything you've looked at? Like, is there any big noticeable structures or anything, positioning that is interesting or standing out to you? Block trades, anything there?
Yeah, actually. So when we look at, if we look at the risk reversal in Ethereum, ETH tried to get, to that $5,000 level back in August 24th area, 24th, 25th, got instantly rejected. That flipped that risk reversal into negative territory. And we haven't been able to kind of get back into that positive territory, which that's why I'm thinking there's a little bit of consolidation period here. And if we look at the gamma exposure, so how dealers are positioned on Darebit, dealers are short a lot of gamma around 4K to 4,200. So that's typically the street buying put options around the 4K level as a significant level. And then they're also short the 5K level. So that would be the street buying 5K calls. So that's really where, lines in the sand are being drawn right now. And sort of that put buying action is what's causing that risk reversal to be so negative and the front end of the term structure to be so firm.
Gotcha. Okay. And what is that like if they're short, if dealers are short that 5K gamma and then they're long buying puts essentially in that 4K, if we get to those levels, does that like, do you expect like violent moves down? Does that kind of cause any type of move in the price? From that positioning.
So I'd say dealers are short on the 5K and short at the 4K level.
Sure.
In the street would be long on those. So typically the option market is big enough to like cause sort of acceleration movements in those type of zones. I would say crypto vol is still relatively small compared to the underlying market caps. So as of this point, I don't think the gamma rebalancing is necessarily an accelerant, but it's a good sign of sentiment of where sort of option activity is being drawn. And so in my mind, what I'm seeing here is that this sentiment helps explain the vol surface and how people are looking at potential price movements in ETH in the short term here.
Gotcha. Okay. Yeah. So we got about a minute left, Greg. Anything else you want to add in or let the viewers know, or just, where they can follow you?
Yeah, absolutely. So if anyone wants to check out some of these charts and look at IBIT volatility, Coinbase volatility, MicroStrategy, or Darebit vol, or anything like that, you can go to our application, pro.amberdata.io. And then if you want to read our weekly notes on the vol market and what's going on in the space, you can go to amberdataderivative.substack.com.
Awesome. Well, that's Greg. We love having you on. Appreciate you joining the show. We'll have you on again in a couple weeks. Obviously, we want to take a look and see how everything shapes out over the next couple weeks here. Obviously into October. Appreciate you coming on, and we'll chat again soon. So that's all we have today. Yeah, that's all we have today. We'll see you guys next time. Peace.